well in the World Cup are not doing well. Hardik Pandya, Bumrah and all that. That is another factor. So I think, and to expect them to just come out there and be geniuses every time is also unfair. So I think, just God forbid, if till the time Virat Kohli is playing, if Virat Kohli goes down and he's not playing, then the viewership will drop by 50%.
Right. It's very true. But perhaps the biggest message from this conversation is that the IPL is not facing a crisis of popularity. It is still very, very popular. But there is a challenge of reinvention over here. Franchise cricket remains enormously powerful. But when the calendar gets very crowded, the spectacle starts feeling repetitive. Even the biggest sporting property in the country cannot take viewer engagement for granted. The real challenge, of course, is whether the IPL can preserve competitiveness, have that unpredictability about it as well, and emotional stakes before the fatigue actually begins to harden into any kind of indifference from viewership. That would be dangerous to the franchise model of cricket. But thank you, Atul Vasan, Nikhil Paramjeet Sharma. Thank you for joining us with your perspective on the show tonight. And those are the debates that we are tracking. Of course, two completely different pitches. One is in Beijing, one is closer home, but very important developments that we are tracking, and we'll continue to do so. This is The Big Question. I'm Vikram Oza from me and the team. Good evening.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers.
US President Donald Trump is in Beijing for a highly anticipated summit with his Chinese counterpart as well, with tech leaders like Elon Musk and Tim Cook accompanying him. All eyes will be on talks on trade, Taiwan and Iran war. Meanwhile, Iran's Foreign Minister Saeed Abbas Araghchi arrived in the national capital for a high-stakes meeting of BRICS foreign ministers hosted by India ahead of the bloc's annual summit later this year. With global leaders being engaged in high-profile parleys, the business world is waiting for the outcome and potential relief from geopolitical turmoil. US futures advance while Asia trades mix as well, and oil steadies as investors eye Trump and Xi talks. The Wall Street too would try to gauge the implications of Trump-Xi meet as well, with eye on oil and supply chains. Nifty snaps a losing streak yesterday to also close with marginal gains, but it needs to still be seen if it can continue that streak today. Amid rising concerns over Middle East crisis and supply chain issues, the government has banned exports of raw, white and refined sugar with immediate effect until September 30th to safeguard domestic supplies and contain inflation risks. Good morning. You're watching Markets Today with me, Shreyansi Singh, and over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. In fact, let's begin with just that. Take a very quick look at the handover coming in terms of the events that you should be watching out for and key commentary. US President Donald Trump, in fact, is in Beijing for a high-stakes two-day visit, holding talks with his Chinese counterpart as well, amid sharp global tension. So that's the entire backdrop that you're looking at. This is Trump's first official engagement in terms of the ceremonial welcome with Xi at the Great Hall of the People, followed by bilateral talks and a state banquet later this evening. So what you're looking at is tariffs, tech rivalry, as well as the Iran war and Taiwan that are going to be on a packed agenda for the two superpowers that test their red lines in this visit. And there's been a lot of focus on this particular visit. Trump has arrived with the top US tech CEOs, mind you. So that includes Elon Musk. And, you do have a bunch of this push also really coming in for greater market access. That's something that you could be watching out for. And this visit, of course, was delayed by the Middle East conflict unfolding against a more confident and assertive China positioning itself as a stable global power. So that's the entire backdrop. What's going to be on the agenda very clearly that we know for sure is tariffs as well as tech. And that's very clear with the CEOs also arriving in Beijing as well, with Trump as well. And in terms of what else you're watching out for, there's really any kind of commentary that comes out in terms of the Iran war as well. That's something that Trump highlighted, that there's going to be a lot more to talk about besides the war, but that's also something that's on the agenda here where there could be conversations around this as well. But with that, let's also move on and take a look at some of those shots also coming in on your screens. Mind you that those are live visuals right now, and you do have this particular meet. Look at that very powerful handshake also coming in. And this is two superpowers right now that are, talking about what they're going to be looking at in this high-stakes visit. Like we told you earlier, tariffs and tech are going to definitely decisively be on the agenda. Other than that, there's a lot to talk about, and there's the entire ceremonial welcome that you're seeing right now at the Great Hall of the People. And that's something that's very important because it's going to be followed by those bilateral talks that are very important to really watch out for. A state banquet as well that you're also penciling in, and it's going to be all of those leaders that you're seeing on the screens right now at the Great Hall of the People in this ceremonial welcome. It's the tech rivalry that's going to be in the spotlight. It's the tariff picture that's going to be in the spotlight, and any sort of commentary that really comes in from this particular conversation between those two superpowers and that powerful handshake, where that really takes the relations between US and China. That's going to be something to really watch out for. So the two-day high-stakes meeting has really kicked off decisively and looks like on a positive note. Lots to discuss when it comes to this particular meeting. And of course, you do have the high-stakes meeting. In terms of why it matters, it's the first visit to China by US President in nearly a decade. So this is long time coming. This is something that we've been waiting for as well, and it was delayed by the war. And Trump had, mind you, last visited China back in 2017. Right now, you do have the Iran war and ceasefire concerns that also loom large over the meet as well. And that's also something that really delayed this particular meeting. And in terms of commentary coming in from President Trump, like we told you earlier as well, what's really important to note here is that he had said that there's much more to discuss besides the war. And that's also something that was a key comment also coming in, that, there's going to be a lot more on the agenda. So, there's rare earths that could be discussed. There is the entire tariff picture that has to be discussed. Other than that, trade in Iran would be the centerpiece here when it comes to this particular meeting as well. And it's going to be a very high stakes meeting. And that's something that the market has really also been waiting out for, because Trump had sought China to really persuade Iran to open Strait of Hormuz. Right now, you do have a very decisive, assertive China right now, because, the visit, since it was delayed, since then things have really changed drastically when it comes to the positioning of US. There's a lot of optics that the US is going to also be looking out for, and a lot that you're watching out for when it comes to this particular visit. So look at those two superpowers really making their way to talk about all of these agendas that they have for this particular high-stakes meeting. And this is a two-day visit that you're looking at where you could want Trump indicating that, he wants China to open its markets to American companies, increase some of the investment as well. Job creation in the US is something that could be in the spotlight as well. And maybe even American agricultural products such as soybeans as well. And that's going to be important to take a look at as well. In fact, the US recently sanctioned several Chinese companies for buying Iran oil, and that's also something that you're looking at aside from agricultural products and soybeans, like I mentioned right now. In terms of what the Chinese side could be expecting, there could be some concessions that they could be seeking when it comes to Taiwan and, of course, tariffs, or at least no new duties to keep trade flowing between the two countries as well. And there you go. So that's a very close look coming in at that ceremonial welcome as well. And it's going to be a very important visit, tariff and truce, that fragile truce as well. That's something that is going to be top of the agenda here when it comes to these two superpowers. And that's a very powerful handshake that you saw coming in. But let's also move on and keep it going with some of the diplomacy as well. New Delhi is hosting a steady flow of foreign ministers ahead of the BRICS foreign ministers meeting, with senior representatives from Iran, Cuba and Thailand arriving in the capital as well. You're looking at this two-day meeting that takes place against a backdrop of heightened global tensions, and that's something that we've been talking about, including sharp differences over the Middle East conflict as well. And External Affairs Minister S. Jaishankar is going to be at the hem of this, chairing all of these talks as well. The Ministry of External Affairs says that the discussions are going to be covering anything from global and regional developments to security concerns, economic cooperation, as well as reforms of multilateral institutions. And a separate BRICS at 20 session is also scheduled, mind you, on the second day, that is May 15th as well, in terms of what is going to be discussed on the longer term issues such as resilience, cooperation and global governance. Other than that, of course, you do have Arakchi, who's visiting India primarily to attend this particular summit as well. And the Iranian foreign minister is also set to hold wide-ranging bilateral talks with his Indian counterpart, focusing on some of these escalating tensions when it comes to Middle East, and the situation surrounding the Strait of Hormuz is also expected to feature prominently. The Indian side is likely to press for the safe passage of remaining merchant vessels as well through the strategic waterway. With that in mind, quickly moving on to Wall Street in terms of the handover that we have right now before we get to the FNOQs this morning. Wall Street ended on a mixed note with fresh record highs, also something that you saw being set now. S&P 500 as well as NASDAQ, as you can very clearly see on your screens. NASDAQ is the one with that 1.2% gain coming in, leading the charge. And S&P 500 about 0.6% uptick coming in there. Dow Jones, that's the one that's on the back foot with that 0.1% downtick also coming in. But when you talk about the US futures picture, that is also quite interesting at this point in time, because it's a mixed bag that you're looking at even there as well. So NASDAQ as well as S&P 500 gains coming in, and Dow Jones yet again, even for the US futures picture, down about 0.2% thereabout. Let's also quickly take a look at Asia as well, and it's looking largely higher. Of course, you do have that important high stakes meeting, and that's something that could be dominating the gains for Asian markets. That's something that the Asian markets definitely are going to be watching out for. Nikkei up about 0.7%, Hang Seng up about 1.7%, so decisively higher there, and leading gains for the entire Asian pack, and Shanghai up about 0.5% as well. Now that said, let's quickly take a look at the oil picture as well, because rates are still elevated, but a little bit of a pullback is what you're seeing when it comes to Brent as well as WTI, with that almost 0.1% cut coming in, but managing to stay well above $105 a barrel. That's Brent for you right now. So that's largely the sort of outlook that we have coming in. And the kind of global cues that we have, let's also put all of this into the picture and talk about the F&O cues as promised. And Puneet, there's a very interesting handover, and of course you did see that ceremonial welcome to superpowers, that very powerful handshake, also something to watch out for.
Well, most certainly, and when you look at the Indian markets, though, a lot will be focused on earnings today as well, and largely big reaction expected for the broader market stocks as well. So implied open indicates a start of almost 70 points. We are above the 23,500 level. Continue to monitor how much it's sustainable at this point of time. But yesterday's move was very surprising on the positive side, where the second half saw a large number of the Nifty players getting into the green. So you'll hope for this trend to continue as well. You also look at, of course, that today is the Sensex expiry, so there is some volatility expected for those 30 bunch of stocks as well. But Bank Nifty yet again very, very sluggish at 53,400 and doesn't show you any kind of conviction at this point of time. So we continue to monitor this index as well. Apart from that, the cash market has been the other factor that foreign investors continue to sell over the last few weeks now, where you've not seen any kind of buying in the cash market yet again. So even though small bouts have been very, very small, minuscule to form a trend, and the long, basically the longs which we track for foreign investors in the F&O market, that has actually further slipped below to just 10.8%. So even though we saw some recovery in the markets yesterday, the FI is continuing to sell, as well as their positions being trimmed on the longs is visible in this particular number. The open interest distribution also might show you this trend as well, where you've now seen 23,000 as a huge, put open interest, showing as well. While in terms of the other levels that we are watching out for, 23,500 continues to be one that we are monitoring at this point of time. Finally, in terms of stock-specific action, we've seen that Keynes Tech and Coal India were the ones where longs are now starting to build up on Keynes Tech. This stock will definitely be under pressure today, and we'll get to that in just a bit of why that might be. But Coal India short being built up. Godfrey Phillips also is the other one. While on the open interest loser side, you've seen SAIL as well as Dixon Tech. Dixon Tech was up almost 9.5% on the back of results. So shorts were being covered with rigor yesterday for Dixon Tech at this point of time. But these are some of the cues. Of course, a lot of these individual stock-specific action, as I mentioned, will continue to be in focus yet again today.
No, absolutely. And since you were talking about Keynes Tech as well, the silver lining is, of course, the strong revenue growth that you're looking at, but the guidance has been missed, and you're looking at, that margin slip also coming in. Let's talk about Keynes Tech then.
Well, most certainly, I think at this point of time, the stock is expected to be under serious pressure. And now that's because twice the guidance has been revised, and despite that, it has not been met. So revenue is up 26%, EBITDA is up 15%, and you'll show the other numbers as well. But let's go across to the next chart, because that will tell you what it's all about on the guidance side. Now, company had revised the FY26 guidance to 4,100 crores versus 4,500 crores at the end of Q3. So there was already a revision there. But despite that, post the Q4 numbers, the actual figure is at 3,600 crores. And the street's not going to take this kindly at this point of time. When you also look at the Q4 numbers specifically, you've seen 1,700 crores was needed to meet the guidance, but only 1,284 crores was reported, and hence the stock will be under pressure on this first count. The second count is on cash flows. Now, they had mentioned operating cash flow has come at minus 600 crores versus a guidance of a marginal negative to a positive guidance. So what has changed in March is something to watch out for. But even at the end, so working capital essentially has risen from 87 to 125 days versus a guidance of 85 to 100 days. And the company had confidently said that it will be sub 100 days for sure. Clearly not at this point of time. When you also look at, the downgrades, now the con call is scheduled at 10 a.m. But one of the key brokerage firms, Nuvama, of course, has downgraded the stock to 3,550 versus 5,550 earlier. So it's a 2,000 point cut on the target price. And in terms of what they mentioned, of course, missing the guidance, 11 to 17% miss on revenue as well as profits, according to the estimates of Nuvama. And finally, they've mentioned as well that they are cutting the guidance on the EPS estimate by almost 22 and 20% each for 27 and FY28 as well. Finally, what do you have to watch for in the con call? Reasons for this guidance miss is something to watch. Could be geopolitical tensions, but the company had stated in March that they are confident of achieving it. Outlook on the cash flow will be something to watch. Expectations of growth, what could it be, will be something to watch as well. While update on their OSAT facility as well as the revenue targets, it was expected to start by this quarter itself. So that's the view on Kaynes Tech, a stock that certainly will be under pressure today.
No, absolutely, Puneet. And that's very interesting in terms of what we're looking at here. Let's also quickly take a look at the brokerage verdict coming in from for TVS Motor as well. Of course, there's Tata Motors that's also in focus in terms of that strong revenue growth as well. Let's also talk about that very quickly, both of these.
Well, in terms of TVS, the results came during market hours yesterday, a very strong set of numbers for the company as well. But when you look at the brokerage view this morning, we've seen Kotak just slightly trim their target price, to 3,925. They said that it was a strong quarter on expected lines, but this was driven by higher than expected average selling prices because of the higher share of premium scooters as well as lower than expected other expenses. They also believe that the two-wheeler domestic market trend is something to watch because they are expecting that it should sustain in the coming quarters, as well as highlighting that they expect TVS to continue to outperform as well as gain market share across the segments. You've also seen the other brokerages also continuing to maintain a positive view. Morgan Stanley at 4,327 mentioned that commodity costs could be a headwind in the near term, but they're positive on volumes for the company. The management also confident of both domestic and the export growth across regions of Africa and LATAM, and they've flagged off a 3 to 5% commodity hit, but some of them has been passed on. Capacity expansion is the other key factor. 1.5 million expected to be added over the over 8 million capacity that the company has, and Norton launch is expected to be in Q2 of FY27. Finally, in terms of what we've seen in the other brokerages also very quickly, we can pull those up. Jefferies is the other one. Now we've seen that they have the highest target prices amongst the ones which we are covering at 4,500. The franchise as well as the near-term margin headwinds is something that they are lagging off, but feel confident of TVS, and that's why penciling in a strong 22% EPS growth at this point of time. Just want to quickly highlight Tata Motors CV as well. If you can pull those numbers up, came after market hours. Revenue growth was, of course, strong at 22%. This was driven by a 23% growth in volumes. Margins also improved in this particular quarter. That was another healthy key positive trend. And heavy commercial vehicle sales rose 29%. They need to do some work on the small commercial vehicle space, where they've lost some market share as well. And they saw improvement. So let's pull up those numbers very quickly as well now. Of course, FY27 investment continues, as they mentioned, but strong numbers, 24,000 odd crores in revenue. EBITDA margins also, which we spoke about as well, has been very strong, 3,300 crores. And, at 13.5%, one of the highest that the company has said they've guided for FY27 to be in the teens. So expecting between 10 to 15%, but a strong number for the company nonetheless.
Absolutely, and thank you so much, Puneet. Lots on your plate right now, and there you go. So that's 3 companies that you're looking at that we've highlighted for you this morning. Add to that a Cipla that's also in focus, and that's announced a weak set of numbers. Revenue declined about 3%. Varsha is joining in terms of what the brokerages are talking about when it comes to Cipla.
Well, revenue was in line though. EBITDA and profit did miss on estimates. Let's see what brokerages are saying. So mixed reviews when it comes to the analyst. Well, Goldman Sachs have maintained neutral, though they've hiked target price, and according to them, Q4 results were below estimates. India, South Africa business beats. US pipeline is focused for FY27. Now, US business have faced Revlimid headwinds, and One Africa gathers momentum. Talking on Kotak, well, they maintained buy, and according to them, the numbers were in line. They are expecting robust H2 FY27, a tad softer FY27 margin guidance according to them, and the US guidance brings a positive surprise for the brokerage. Lastly, MS, let's see what they're saying. Well, they've maintained underweight. They've cut target price though. Weak earnings according to them. FY27 remains a transition year. What they're saying, EBITDA margins down Q on Q. quarter on quarter, this is due to high staff cost, while sustainability of gross margin improvement and launch timeline of peptides assets will be a key thing to watch. Lastly, the US pipeline is strengthening according to them, and multiple filings across peptides, respiratory and complex generics are some of the key things to watch out. So overall, a mixed set of reviews coming from the brokerages, but yes, US, the guidance for the US actually was a surprise in the con call as well.
No, absolutely, and thank you so much, Varsha, for helping us out with that entire outlook when it comes to Cipla as well. So that's one sort of company that's going to be in focus. Management is also looking to look beyond its current traditional image as well. But let's also move on and talk about India banning sugar exports till September and or until further to cool local prices amid the Middle East crisis and supply chain issues as well. Let's talk about why this move is also kicking in, because the tightening overseas shipments is something that you're looking at, and that's amid domestic supply considerations. Now, in terms of the key updates, you do have this ban that applies to raw, white and refined sugar. And it also marks a shift when it comes to policy from restricted to prohibited, and the prohibition. Let's talk about that as well, because it's not going to be applying to EU and US under the tariff quota and arrangements that are currently in place right now. When you talk about the impact also, majority of players were not exporting anywhere. So, the major impact is not something that you're penciling in right now. Domestic prices almost at par or premium with global prices as well. So, that's a strong footing that you're looking at right now. And global sugar prices are also, when you zoom out and look at global sugar prices as well, they're elevated on the higher crude. Other than excluding sugar mill prices as well, you're looking at somewhere close to 36 to 39 rupees per kg for domestic as well. So that's something that you're looking at when it comes to that sugar ban. But that's all the time that we have on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Everyone sees a house. I see decisions. Why this location? Why this timing? Why this buyer? Some properties make headlines. Others quietly change lives forever. I break down every detail. Purpose, profitability, potential. I travel where ambition lives, meeting the people who turned a purchase into their greatest decision.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Very good morning. You're watching India Market Open. It's an interesting day and an interesting time because all hopes of the world are settled in on what happens in Beijing. And I wonder if that's really going to be the takeaway. Some thoughts that maybe the West Asia crisis and the Strait of Hormuz get sorted in, amongst other things, between this Trump-Xi talk. And that's going to be the big focus.
Yeah, you would argue that's probably the only thing from our perspective that will matter. The other, of course, I mean, so many global publications talking about if there is a thawing of the relationship. Frankly, I doubt it. But the real thaw of a relationship between US and China, what it could mean for India as a strategic play in the Indo-Pacific region. I think these are long games.
Yeah, but the fact that Trump has turned up there with his A-team.
A-team is
with
what I was
his
going to talk
A-team
about.
talks a lot about how that equation stands.
There are a few memes going around about Jensen preparing for the trip in a bed filled with jackets and boots, the same color.
Why not?
Yeah.
So much to unpack today, but let's start with how the US markets were overnight. It was a mixed day of trade in US markets with the S&P 500 and the Nasdaq hitting record highs. The Dow was muted though in trade. Let's pull up those indices for you. And there you have it, the Nasdaq really powering things to percent up. In fact, I believe we have Trump speaking at that high stakes talk. Let's cut it.
Relationship, we've gotten along. When there were difficulties, we worked it out. I would call you and you would call me. And whenever we had a problem, people don't know, whenever we had a problem, we worked it out very quickly. We're going to have a fantastic future together. Such respect for China, the job you've done. You're a great leader. I say it to everybody. You're a great leader. Sometimes people don't like me saying it, but I say it anyway because it's true. I only say the truth. And I just want to say on behalf of all of the great delegation that we have the greatest businessmen, the biggest, and I guess the best in the world. We have amazing people, and they're all with me. Every single one of them, we asked the top 30 in the world, every single one of them said yes. And I didn't want the second or the third in the company. I wanted only the top. And they're here today to pay respects to you and to China. And they look forward to trade and doing business. And it's going to be totally reciprocal on our behalf. So I really look very much forward to our discussion. It's a big discussion. There are those that say this is maybe the biggest summit ever. They can never remember anything like it. I can say in the United States, people aren't talking about anything else. But it's an honor to be with you. It's an honor to be your friend. And the relationship between China and the USA is going to be better than ever before. Thank you very much. Thank you.
Okay, so we cut in just in time to that conversation or that statement that Trump was making and speaking in glowing terms actually about Xi Jinping, saying it's an honor to be your friend. I call you a strong leader. People don't like it, but that's what I do. So, we were talking about, we should pull up futures actually. Let's pull up US futures and see how they're doing, because a lot hinging on this conversation and this meeting in the US. US futures actually pretty much mirroring what you saw in trade yesterday in US markets. Bond yields, meanwhile, have spiked as the producer price index rose by 1.4% in April versus expectations of a 0.5% uptick. The 10-year was at 4.46%. Oil prices are staying range bound as all eyes are on that meat, isn't it? Let's pull up the latest on the Brent at about $105 a barrel. Has actually cooled off a tad bit on hopes that there's some kind of a resolution there. Let's pull up Asian indices for you and talk about what's happening there. All up in the green. Look at the Hang Seng, up about 2%. And the India implied also showing us a good start of the day that we could see, about 81 points up. But I'm going to quickly go across to Sharad to talk about what is the agenda and what really is the plan here.
Well, yes, the overall agenda and the plan is on the tariff. And before that, instead of saying good morning today, I'm going to say all of you, ni hao.
Oh, not bad.
And that's what Trump is also saying to Xi Jinping. But let's understand, what is the total conversation all about? And, first of all, he is coming with a barrage of a lot of CEOs, from the America inclusive. Now, this is the first visit to China by a US president in almost a decade. Last time it happened in 2017. The Iran war looms over the trade talks, but definitely the more conversation is there expected from the trade perspective. Apart from this also, let's look at the key takeaways which we should be focusing on. There will be trade deals and strategic tie-ups. And also the AI and the Taiwan angle is definitely there, and that is where the conversation will most likely circle around. Apart from that, look at the CEOs who are accompanying the US president. This includes NVIDIA's Jensen Huang, Tesla's Elon Musk, Apple's Tim Cook. But not only that, there are other CEOs also who are making it to the list. You name it, from BlackRock, Blackstone, Boeing. He has taken literally half of S&P 500 with him in that plane, it looks like. But interestingly, looking at the CEOs, there is a huge expectations on the corporate tie-ups. And now we also have Micron and Qualcomm making it to the list. Earlier, we never used to discuss these companies, and look at that now. Apart from this, let's actually look at what he had stated before he had left. He had stated that he'll give him a big fat hug when he gets there. And of course, it seems like he has given one. And also importantly, they are focusing much more on the trade tariff front, but also the Iran aspect might be discussed as well. And if that happens, there will be some kind of matter coming in. But remember, the fragile tariff truce is there with China and US, and this may actually help also when it comes to the ceasefire, if any positive news flow comes in. And China, remember, is Iran's biggest oil customer. So there is a lot of things at play. But the US recently sanctioned several Chinese companies also. So some issues are there, and the Chinese officials have publicly called to have stability in the markets. But in all this discussion, what does it mean for India? It's largely neutral, or you could say slight negative. There is a potential US-China G2 trade deal which could be slightly adverse for India. And if in case any positive commentary comes on the ceasefire front, then these sentiments will be positive for India going ahead as well. So this is the entire picture with Trump and Xi Jinping in focus today. Okay, we will have to learn more than ni hao to push it through as we cover this through the day. Thank you for that, Sharad. Seth Freeman with us this morning. He's Senior Managing Director, Glass Ratner Advisory and Capital Group, and welcoming Deep Pal, Dr. Deep Pal, Director, Geopolitics and Policy at Coan Advisory Group. I'm going to start with you, Deep, since you're an old friend and a former colleague. So nice to have you on the show as an expert. Tell me what you think will really come out of the Trump-Xi meet.
Likewise, Tamanna, wonderful to be here and great to see you guys. So I think there are 2-3 things that would be on top of either side's agenda. Obviously, from Trump's end, he's heading into midterms, so he would want to be able to take back some kind of commitments, purchase commitments of one, agricultural goods, soybean and such stuff, because that would play very well to his core constituency back home. The other would be perhaps, again, commitments from China on purchase of Boeing aircraft. That again would play very well, promise of jobs back home. Apart from that, he would want some kind of, he's talked about the Board of Trade, Board of Investment concepts, some kind of a trade architecture between the US and China to manage bilateral trade, bilateral investment, open up the US market for solid, concrete commitments from China to invest into or to buy into. That is something that he would look at. As far as China is concerned, their priorities, I don't think they're going to really talk about Iran, even though obviously Iran and China have been close. So there have been talks about China assisting Iran with intelligence and other things. I don't think the Iran war is going to be pretty high up in the agenda because China for itself has a number of other priorities that it would want to talk about. One would be some kind of stability in the tariff system. They would also want less obstructions in being able to import chips. I mean, Jensen Huang's last minute jumping into Air Force One from Alaska was an indication that there would be conversations about that. And I think they would want a slowdown in the various kind of legislation that we are seeing being introduced in the US. Obviously, not most of them are not law yet, but the conversations around trying to stop China's progress in AI and other tech-related matters is something that China would want to discuss. And separately, not entirely connected to the US, they would want, not really in the list of priorities for the US, they would want the US to soften their language on Taiwan's independence, which would give more of a normative advantage to Beijing in the Taiwan.
Okay, so there's quite a bit that's on the agenda. Seth, I do want to come to you on this because as much as Donald Trump has said that the Iran war is not going to be a priority when he's speaking to President Xi Jinping, the fact is that overnight you had producer price index data that came out and it's at 6% year on year. And it didn't give Wall Street pause. If anything, there was a bit of a rally. The reading there is that bad news is often good news on the geopolitical front because it will force the administration to make the right moves, particularly if it's seen to be causing what is happening with the PPI. Do you read it as that?
Well, I think it's unavoidable to talk about it because of oil. And China is affected as much as any other country, if not more. So I would imagine it may not be in public, but it must be a concern. The inflation and the prospect for more inflation is really an interesting situation now that that Warsh was approved by the Senate to become the Fed chairman. So there's a lot that's going to be up in the air. What's very interesting about what we've been seeing on TV in China is whether, is this a trade mission or is this a political trip? And it looks a lot more like a trade mission.
Well, and it can morph into either of those two things depending on which side of the bed Donald Trump wakes on and where Xi Jinping wants to smile as well, because we've seen that he's hardly returned any of the flattery that Donald Trump has said. So, well noted, said. Deep, come in. What is the India angle here? If indeed the US and the China warm up sufficiently, could it cause if you will, any kind of concern around India's role in the Indo-Pacific? Are people thinking that far, really?
I think for India, there are 2 or 3 things. One is obviously we have seen the relationship not be at its best over the last year. That's the India-US relationship. And if US and China figure out some way, a bilateral way of working on the critical issues, whether that is trade and tariffs, whether that is rare earths exports to the United States, and other technology-related issues, that basically leaves India at risk of having to navigate the difficult situation by themselves. Also, something that you might have noticed is that there have been export control measures from both sides, both the US as well as China, over the last few months. which increasingly pressure companies operating, let's say, sourcing out of China and selling in the US or elsewhere in the West. That kind of puts them in a difficult position about having to abide by both sets of export control measures. Now, Indian companies that source out of China, sell to the US or to Europe, they have been feeling the pinch as far as that is concerned. Now, that might just continue if the two sides figure out a way to work together, leaving the rest of the world on one side. So we'll have to look at things such as the Board of Trade or the Board of Investment announcements if they come about. What the US, if the US managed to get in concessions out of China in terms of rare earths sourcing. Remember in the Busan meet that happened in October last year, both sides agreed for a 1-year concession, right? So China decided not to impose its export control measures. And the US decided that it was not going to impose its affiliates list measures on Chinese companies. So these are some of the things that India will have to look at. Also, again, going back to semiconductors, what happens to the question of chip sales to China, and which is connected again to the rare earths thing. What does that mean for investments in India's ambitions to have making facilities in India? So these are some of the things that we would need to keep an eye on.
Absolutely. Deep, Seth, on that note, thanks so much for taking the time. Pleasure speaking with you.
Likewise. Thank you.
All right, let's talk about what happened in trade yesterday. And equity markets recouped some of the losses after 4 days of selling, and primarily I'm talking about the benchmark Nifty 50. It clawed back about 33 points after losing over 950 points in 4 sessions. And the Nifty Bank actually underperformed in trade yesterday as well, with cuts of about 0.2%. Foreign institutional selling continued, with net sell figure of 4,700 crore rupees or thereabouts, and the selling likely concentrated in large cap counters. In fact, the mid cap as well as the small cap outperforming. By the way, the India VIX remains elevated at over 19, and the broader markets, as I said, outperforming. The mid cap index gaining about 0.6% in trade, and the small cap index up about 0.33%, as a result of which the market breadth was tilted in favor of the advances. 3 gainers for every 2 declines in trade at the end of trade yesterday. Metals, defense, oil and gas all outperformed. In fact, for the last cohort, you had HPCL results that came as a bit of a surprise and aided the OMC pack. All of those stocks were up and about. HP, BP, IOCL, all of them. IT continued to sulk with the index down another 1.1%. There were a few surprise moves. Dixon Tech, it wasn't the best set of numbers, but the joint venture with Vivo seems to be causing quite a bit of excitement. The stock ended higher by close to 10%. Of course, it's been beaten down in the recent past, and so some of that ground being recouped.
Yeah, and therefore, yet again, the trade setup doesn't change from what was the case yesterday. It just kind of stays true because, well, crude prices also have stayed just about that 104, 105, 106 level. So the formation of lower highs continues to effectively reflect supply pressure at any elevated zone. And by elevation, I don't mean really 1,000 points higher. It probably happens 250 points higher on the Nifty. That is essentially the pain point. But selective buying in the SMID space definitely continues. Now you're seeing signs of profit booking in not just the index, but various stocks as well, right? I mean, blockbuster numbers by, for example, the CDMO company yesterday, but after starting off about 8 or 9% higher, the stock completely cooled off. So in some sense, you're seeing that selling pressure come into a number of names. Newland was a classic example yesterday. That's the one that I was referring to. But NBFCs per se are starting to draw favor from market participants, and you're seeing signs of that across various names, across various categories of NBFCs as well. So keep that cohort of stocks in mind. And we'll talk about Airtel in great detail, so I'm not going to spend time there. But Telecom very likely could be the sector of the day, buoyed by, yes, led by Airtel maybe, but also Vodafone Idea. There is a board meet on Saturday. If indeed there is some further investment that comes in from the promoter entities there too, then I think you see in the sector starting to see some participation after a bit of a hiatus, and that could actually augur well. So you keep that a set of stocks in mind for sure today.
You know, I think the fact that this meet has taken focus and oil has at least shown directionally a cool off will be some relief to all Asian markets and India included, which is why you're seeing the Nifty implied possibly in the positive. Nifty did manage to break a 4-day losing streak on Wednesday as well, but the recovery was fragile at best. Sell on rise remains the strategy throughout the day yesterday. Buyers defended the 23,250 to 23,300 region, but sellers aggressively emerged in 23,550 to 23,600. That means the market is currently trapped in a fragile range with bears still controlling the broader trend. The bull case, bulls need to defend 23,400 and push past the immediate wall at 23,500 to 23,600. Sustained move above 24,000 is required to declare the bearish trend over. Support and resistance, well, resistance at 23,540, 23,620, 23,740. And support levels at 23,300, 23,220, 23,100. That's a critical one. For the bank Nifty, the banking index continues to underperform. Key resistance at 54,000 and 54,200. Key supports at 53,000 and 52,675. I think the other big overhang is when the trigger will be pulled and petrol diesel prices will go up. I mean, it's now a given that it's going to happen. I wonder if you think it's already priced in what we saw in the last couple of days of trade? Because you saw a bit of panic in the markets after the Prime Minister spoke not once but twice about tightening the belt, so to speak. Do you think that price hike at the pump is priced in, or we'll see another reaction when it comes in?
For the markets, no, I don't know really, but
not too much of an impact.
No, I don't think so.
I think it's more. I think the reaction was more on account of the expectation of slowdown in activity. Or the fears of slowdown in activity. Of course,
which will happen if you have a significant hike.
So more so. I don't think that the price increases are priced in. If that, I think HP, BP, IOC will react based on the quantum of the hike that is announced in pockets. So therefore, you'll see different reactions in different pockets.
I suppose the market's also wondering what's next, because you've already seen the gold and silver duty hike. What happens next, which goes beyond now just an advisory of don't do this, don't do that? Do we need to now have more measures? So that remains, I think, one
very
question
quickly,
mark.
We'll talk about this more, but Tata Motor CV, for example, the numbers in Q4 were good. We'll talk about that, but then the outlook may not, because you would expect that flow through on energy prices will affect fleet as well.
Yeah, so the big, I think, unsaid story right now is when those price hikes happen. But let's look at what's happening in the F&O space. Puni joining in to set up this morning.
Well, thank you for that. It's definitely one which has seen essentially lack of triggers, lack of momentum. You can take your pick, but just yesterday's trading session saw almost 200 to 220 point uptick from the day's low. Now, if that is yet to sustain, is something to watch. But at 23,500, we're back above that 23,300, sluggish momentum that we've seen, but hasn't been sustainable at this point of time. So we continue to monitor those individual moves for the benchmarks, while largely the fag end of Nifty earnings as we go into that aspect. So really a tricky position of where the index is. Today is the Sensex expiry as well, so you'll see some volatility coming into this picture as well. For the Bank Nifty, it's been just a laggard in that sense. Whatever momentum that we've seen on Nifty is clearly not visible here, and only macro triggers, if any, could drive the momentum. But at these levels also, 53,400 odd, 53,500 odd don't have any kind of support in the near term, nor does it have historical evidence. So we continue to monitor this index, and selling by foreign investors continued in the cash market, and that's why they've hit a new low in the longs that they hold for in the F&O market. So at 10.8%, it's the lowest that it has been since April, start of April as well, where it was hovering around 19-20%. So just halved their longs in the last 6 weeks. And open interest distribution also shows you that as well. But when you look at individual stock-specific action, you've seen not too much change in open interest. Keynes Tech yesterday was seeing long build-up before the results, but could be one of the key casualties of the day in that sense, because management had revised the guidance post Q3, and even that has been missed. So you continue to monitor the stock. Coal India saw short build-up as well, so that Godfrey Phillips longs being built up yet again on this counter. But in terms of the open interest losers, Dixon Tech saw short covering from the bottom end base of commentary that came in the conference call, and so did SAIL, where shorts were being covered as well. So overall stock specific action continues to be triggered, but the misses might take a little bit more knock today, and one of them would definitely be Keynes Tech.
I agree, and that's on my list as well. But I'm going to start off with Bharti Airtel. It's overall a thumbs up, and here are the highlights really. Broadband and enterprise businesses have shown, while the mainstay India mobile segment reported muted numbers. India mobile growth was muted owing to lower ARPU, that's average revenue per user. It was lower as the fourth quarter had lesser number of days compared to the third quarter, 2 days lesser actually. 4G and 5G subscriber base grew faster than overall subscriber base. The 4G and 5G to total subscribers grew 2% and 1.3% respectively. So that means 4G, 5G subscribers grew 2%, total subscribers grew 1.3%. Broadband reported strong growth owing to strong subscriber additions and stable ARPUs. The direct-to-home business reported weak numbers and the EBITDA was lowest in at least 23 quarters, but the enterprise segment EBITDA and EBITDA margins were highest in at least 23 quarters. Here are the overall numbers. Consolidated revenue up 2.6% at 55,383 crores versus 53,982 crores. EBITDA was up 2.3% at 31,492 crores, and margins were down 10 basis points only, so it was pretty much flat, 56.9% versus 57%. Net profit was up 10.5%. But overall, a thumbs up on Bharti Airtel. For Keynes Tech, it's going to be a painful morning perhaps. Revenues were up 26%, 26.2%. EBITDA was up 15.4%. But margins were down 140 basis points, and moreover, they've not really hit their guidance figures. The net profit was also down 21.5% at 91.2 crores. Here's what Nuvama says. They have downgraded to a hold and cut the target price to 3,550 versus 5,500 earlier. So a sharp downtick there in the target price by Nuvama. They've said the company has posted largely weaker than expected Q4, missed our estimates by 11% on revenue and 17% on PAT. They've cut the FY27 estimate by EPS estimate by 22%, and for 28 they've cut it by 20% to reflect a weak Q4. They're not ruling out a modest cut or delay in its earlier stated guidance on revenue and PAT growth and cash flow parameters. Expect some pain here. Of course, we have so much to unpack with Keynes Technology Management, so we're asking them to please come and speak to us. I think your investors and the viewers of NDTV Profit deserve to understand what's happening with this company, which has been highly valued. So we urge you to come speak with us today. Balaji Amines is the other one that we're talking about. It's a thumbs up. Beaten estimates, lower other expenses and better mix has supported margins. Cost efficiencies and operating leverage is clearly visible. Strong operating leverage supported profitability expansion. Here what the numbers are looking like. Revenue up about 12% at 395 crores. EBITDA up nearly 40% at 94.3 crores, and margins up 480 basis points. So healthy bump up there at 23.9%. Net profit was up 57.6% at 63.2 crores for Balaji Amines. So that's going to be one that will possibly have a positive reaction.
Interesting. I was mentioning Tata Motors CV at the start. I mean, it's called Tata Motors. I am calling it Tata Motors CV just to make that distinction. But the numbers in the fourth quarter actually look pretty good. It's registered a strong 22% growth on the back of volume growth in the fourth quarter. There's a margin improvement as well, 130 basis points on account of an improved mix that took place. Heavy commercial vehicles saw strong growth of 29% volume terms in the quarter gone by. The company actually saw improved realization sequentially as well. So all told, good set of numbers. The only thing is that the outlook might be turning negative. So the thumbs up or the positive rating on this is on account of the fourth quarter numbers, but don't necessarily expect that that's going to mean a gap up opening and a sustained up move over the course of the day. Look at the key numbers. 22% uptick in revenue. EBITDA is rising as much as 36%. The margin is up and the PAT is up. They've also declared that the acquisition of that entity, Iveco, which has been on the cards, most of the approvals are in, and they expected to complete the acquisition in the second quarter of FY27. Bear that in mind as well. The second stock on my list, actually, before that, we've got a bite from the conference call. Girish Wagh, the Managing Director and Chief Executive Officer, talking about Iveco. Listen in.
For the proposed acquisition of Iveco, most regulatory approvals are already in place, with the pending ones being actively pursued. We expect to complete the transaction by second quarter of FY27. the board has recommended a final dividend, and I think therefore we are still positive that we would see a single-digit growth for the entire year FY27.
Okay, so watch out for Tata Motors CV in trade. Metropolis Healthcare stands out. Strong set of numbers for this company as well. Strong revenue and EBITDA performance. It's seen a 9% patient growth in Q4. The B2B and B2C segment revenues have both risen by as much as 15%. And the improvement that they've seen is on account of an improvement in the mix. And that is because of upselling. They have specialty tests. So essentially when somebody walks in, you effectively convince them to get specialty tests as well. And the revenue from that has gone up by as much as 17%. So take a look at some of those numbers. The revenue is up 23%. The margins have expanded by 740 basis points, coming at 25.4%, as a result of which the PAT number is more than doubled to 50.9 crore rupees. Now, Care Ratings is the third stock on my list. I have pointed this out in past quarters as well. Another strong set of numbers in the fourth quarter. But there was a disruption on account of the West Asia crisis. Bond issuances have actually cooled in the fourth quarter, likely in the month of March. We saw that. And for the fourth quarter as a whole, it's a drop of as much as 11.3% in terms of bond issuances. Remember that 89% of the revenue of Care Ratings comes from the ratings segment. This is companies seeking ratings ahead of bond issuances. So if the issuances have cooled, and they've actually cooled further in the month of April, then there's an issue for Care Ratings in FY27, or at least at the start of FY27. For the fourth quarter, though, they had an improved margin performance, and that has aided the PAT growth. As I said, the outlook remains cloudy. Don't be surprised if the first quarter sees an impact on account of the West Asia crisis.
Okay, and that could be true for so many companies, right, which have maybe shown a good number, but Q1 could be different. Let's wait and watch. IKS, though, from all the tech-related names which have kind of had an issue, IKS is on the other side of the spectrum, right, benefiting greatly from this whole AI tech transfer piece as well. And their Q4 numbers, look strong. Revenues were up 18.5%, but their EBITDA growth was significant, 32.8%, as a result of which the operating profit margins were up 380 basis points at 35% versus 31.2%. Profit after tax up 39% at 206 versus 148. Good numbers, steady quarter, improvement in margins. It's exactly what the street generally likes in steady companies. So this should augur well. Let's wait and watch. NLC India, blockbuster numbers, really. Look at those numbers. Revenues were up 31.5%. At 5043 crores versus 3836 crores. Operating profit margins up 1270 basis points at 35.2 versus 22.5%, and profit after tax at 1394 crores versus 482 crores. So keep an eye out for that. You know, the third one, I don't know who, but somebody had met me and told me that look at ADF Foods, because their supply chain to US is intact. They are able to send dry fruits. And I was like, listen, India imports almonds from America, but apparently no. And well, the numbers look pretty good, because clearly they have been able to do some exports there seemingly, because revenues are up 23% at 196 crores. It's a small company, but I'm highlighting this because of the numbers. Operating profit margins up 190 basis points at 17.4 versus 15.5, and profit after tax up 57% at 25.9 crores versus 16.4 crores. So keep an eye out for these three. And then there is, of course, Sagar Cement and so many. But guys, just before we take that break, I wonder if both of you agree that Telecom could well turn out to be the sector of the day today. Airtel numbers, the share swap.
Yes, the Africa share swap, another important bit that, you know, Somit will come in with a more detailed piece on it as well. But essentially, it is the family that is also taking in a bigger position, and that's why it becomes more important.
And at a higher premium.
And at a higher premium. The brokerages are weighing in, saying that it's a better share swap than was previously anticipated.
For minority shareholders, that's true. Vodafone has anyway been in focus ahead of the Saturday board meeting.
Exactly,
as well.
right. And that's a positive read-through. And if indeed the rumor mills, which is that Kumar Mangalam Birla invests, then that's another promoter investing in one more company after Airtel is doing that. And all of this is a positive read-through for Indus Tower as well. So in some sense, Telecom, the sector of the day today.
Yeah, there are only 3 stocks, but not
But
too many.
kya kare?
Three and a half.
3.5.
Reliance Jio as well, which
I
is
think
part
you
of our
actually need a lot more. But we have so many stocks to discuss, and we're coming back after a very short break to talk about all of that and more. Plus, you will have Parag Thakkar and Kush Bohra's strategy for the morning. So stay tuned. We'll be right back.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the story.
Welcome back. You're watching India Market Open. Let's quickly pull up the implied for you. You're looking at a bump up of about 85 points. Remember, it was a fragile uptick in trade yesterday. Will we see another sell-on rise is the question. A lot of hopes on the Trump-Xi meet. But apart from that, India now looking specifically, or Indian equity looking specifically at the numbers of results that have come through. Parag Thakkar, Kush Bohra with us this morning. Very good morning to both of you. I'm actually going to start with Kush first today and get an index view. Kush.
Not so great.
Yeah.
Not so great. But I'm going to give you something very interesting today. You've heard of the book, the famous one, The Tale of Two Cities. This is going to be a tale of two markets, right? If I can just quickly request the team to pull up the Nifty chart, right? Look at what's happened there. 3 months, negative returns, firmly, very clearly trading below, the 50 and the 20-day moving average. If you look at the recovery, about 40% of that recovery, from that April lows has already been given up. Now, look at the Nifty Midcap 100, okay? Look at the kind of moves that it has made over the last 3 months. Positive gains, trading very comfortably above the 50 and the 200-day moving average. And if you look at the recovery from April and the last few sessions where Nifty's actually cracked quite a bit, this actually looks like a very simple, seedha sada bhola bala profit booking kind of a dip, right? This alone is enough to reiterate, reaffirm, confirm the fact what we've been talking about for the last week or so at least, is that the index is in pain. You can very comfortably avoid the index trades, if at all. Focus on stock-specific action. In fact, just to add to this point, even if you saw the volumes, which I usually speak about on a lot of stocks, even if you saw just the volumes on a lot of these mid-cap names on the way down, they weren't really something exciting or to write home about. So very clearly indicating that this was a dip on, on profit booking basis only on the back of very thin volumes. So strength remains. So like I said, focus on stocks, index not doing too great. By the way, one interesting fact, here also, who would have thought that a day when Bank Nifty, Nifty IT, these indices are down and Reliance is also down, Nifty will end in green. Of course, the other stocks pulled their weight. But right now, the structure remains weak, lower high, lower low formations. In fact, PCR recovered from oversold territories of 0.69 to 0.93, which only creates further room on the short side when the Nifty rises. Multiple resistances at 24,600, 23,600, 23,800, 24,000. So any reversal will happen beyond these levels. Up until then, the texture remains weak on Nifty.
All right, so that's the index view. You said go stock specific, so that's the cue. What are the stocks you're looking at?
Yeah, 3 Gs today, incidentally. All on the long side, Grasim, GMDC and Gabriel India for very different reasons, right? Grasim is one stock that we've discussed. I think Parag Bhai stamp is also there on that stock. 3,000 was a target that we discussed some time ago. That's been hit. Stocks still trading very comfortably, in the green, consolidating with a positive bias. So stay long on, strength like Grasim. So 30303090 immediate targets, 2880 is where you keep that stop loss. GMDC, like I said, one of those candidates which saw profit booking on thin volumes yesterday, some recovery along the way. So positionally, 685, 707 are your targets, 640 is where you keep that stop loss. And Gabriel India, this is also a stock that we've discussed in the past, 2-3 sessions of profit booking, but it's not really broken key support zones. So this one remains a buy. In fact, the risk reward ratio becomes that much more attractive now. 1130, 1160 are your targets, 1070 is where you keep that stop loss.
Okay, the 3 Gs, I like that. Parag Thakkar, but it's only about 1B for you, Bharti Airtel.
No, of course, G also, Grasim.
Grasim also.
So Bharti and Grasim and Ultratech and ICICI Bank, these are my top holdings.
No, that's generally in life. I'm talking about today. Today is about Bharti Airtel.
Yeah, so Bharti, see, one important thing why the stock corrected was capital allocation issues. And that was, this was when this thing was announced on 10th May that they are going to acquire this stake in Africa, the promoter stake in Africa business. It was being feared that it will be EPS dilutive and 28,000 crore will go out of Airtel's balance sheet, and so debt will increase and so on and so forth. But all these fears are now subsided. They have done it very intelligently. The share swap ratio is in favor of Bharti Airtel. So Bharti, in fact, Sunil Mittal is going to get shares at 1923, which is 5.5% above last closing price. If I do the maths, my EPS number for FY27 is now 64, which is 2.9% higher than earlier number. And for FY28, it is 81, which is again 2.9% higher than the last, before this deal. So it is EPS accretive deal. So I would say that a company which generates above 60,000 crore free cash flow at such low ARPU and annuity cash flow, right? No matter war, no matter oil, nothing can change this. And the subscribers are just adding up. This quarter also they have surprised with subscriber addition, 47 lakh subscribers, while the estimate was 31 lakh.
You're not worried at all about the ARPU staying flat?
That is, see, there was no tariff hike.
Sure.
So and there were short days were shorter, plus seasonally it is a weak quarter. So I would say that it's I would not look at telecom companies or regulated ROE power companies on a quarter-on-quarter basis. This is a business, you have to take it like this. It is a 11 lakh crore market cap, which generates 65,000 crore free cash flow, which is only going to grow in line with ARPU, right? And plus the data consumption is increasing, no doubt, at 30% CAGR.
What is fair value in your opinion for Bharti Airtel?
About 2250 for sure. About 2250 for sure. So 20% upside for sure, 20-25%. And plus remember, this is one of the very few businesses. You have seen the results of Cipla, you have seen the result of Dr. Reddy. Even in pharma, it is faltering. So as pharma as a safety net, only few stocks can protect you. So this is one of the space, and FMCG is also affected because of the rising crude oil price and so packaging costs going up. This is one of the few businesses which is insulated from all this. And now management has done phenomenally well in terms of share swap deal, where it is EPS accretive deal. and promoter stake has gone up at a higher rate, 1923. So I would say that all positives in my view.
Yeah, you may not be able to buy your favorite treat, but you can watch a sad movie and cry about it.
Why? What is happening with you, Alex? This is something very worrying.
I didn't know. I'm saying the cost of your...
He's having this parallel story in his head. What treat do you want, Baba?
I'll ask you to buy it for me, but the cost of your favorite treat has gone up. You won't buy it. But you can still...
I don't know what treats Alex wants. We will guess later. On charts, Bharti Airtel is a buy.
No, because the stock has fallen. Kush can't give a buy. Now I can become a chartist.
You can
become a chartist not by looking at the chart, by looking at Kush's face.
You are a Kush tracker now.
I'm a Kush tracker. So I've got 2 out of 3. अब बस आपका ही बाकी है. I know Alex tracks my stocks very closely. अब उनको पूछते quiz कर दे तो भी बराबर पता होता है. And Neeraj is starting to give views पहले before I do. So no. But okay, so look, it's not bad, but I am not as passionately gung-ho about Bharti as Parag Bhai is. Falling trendline resistances, lower high, lower low formations, supports at 1740, 1750 odd levels. That's been tested yet again yesterday. So yeah, if you have a medium-term view, long-term view, definitely go with what Parag Bhai is saying. But from a near-term perspective, I would want some levels to be taken out, some resistance to be taken out, and these lower high, lower low formations to be broken for it to become a momentum trade. So I will remain a little skeptical. Risk-reward ratio, very favorable. So from a medium to a long-term perspective, yes, you can consider a tight stop loss, I would suggest at 1740.
Very quickly, we got to go to Rakesh Arora for metals as well, but very quickly, I want to just supplement Tamanna's question. If Airtel starts off higher today, which very likely it could today, right? Then is there a trade forming there? Part 1 is that. Part 2, very quickly, Kush. What about Vodafone and Indus?
Excellent. This is a stock which I am happy to buy if it goes higher.
Above which level?
See, I mean, so actually the resistance comes in at 1825, 1830. अगर उसके ऊपर निकलता है तब तो very comfortable buying. Vodafone, the trend right now is positive, so maybe about till 12.5, 13 it can move. But the first pick in this space will definitely remain Bharti. Indus Towers also consolidating. Watch for 390, 400 levels on the downside, not to be broken convincingly.
Okay, let's talk metals. Metals in the spotlight with the Nifty Metal Index nearly 20% up so far this year. Can this rally continue? Should you be looking at metals more closely? Rakesh Arora, founder of GoIndiaStocks.com, joining in for more on this. Rakesh, very good morning. I know you're on your way to work, so we've got you on the phone line. Thank you for that. What do you think has been the reason, the key driver for the shine in metal stocks, and can it sustain?
So the key driver, not just for metal stocks, but for global stocks is also AI. AI has come up in such a rapid pace in last 3 years that everybody was, caught unprepared. And there's one estimate that, we will need to mine as much copper that we mined in last 10,000 years in the next 18 years to meet the demand coming out from AI-led data center and power requirement. So that is the quantum of shift which we are talking about. And, mining is difficult. It takes 8 to 10 years to develop the mines. So clearly, mining capex was insufficient over the last few years.
Rakesh, good morning. So that's a strong case for the non-ferrous plays, and particularly copper. But what about the ferrous? And you're hearing conversations about flat steel products getting price increases. This is a worry, of course, for the companies that use it. But what's the outlook for ferrous?
So, before ferrous, I just want to talk about aluminium, because aluminium is a kind of a proxy for copper in a lot of use cases. Aluminium, I'm seeing, a lot of capacities coming up in Indonesia. So in second half this year, we have almost 1 million ton of aluminum capacity coming up. And in next 3 to 4 years, Indonesia is repeating what China has done. They are targeting between 10 to 15 million ton of aluminum. These are all Chinese, companies who are putting up plants in Indonesia. So aluminum, I'm not that bullish. I would want to, warn investors that they should be wary of getting caught at the higher end. The fair price for aluminum is around $2,600, $2,700. We are at $3,580 or something like that right now. Now coming to ferrous, what is really playing out is that in this year, China has reduced their exports of steel, and for the first time, we are seeing producer prices going up in China. So steel, the margins are normalizing. A large part has already played out because of the safeguard duty which was extended by the government. So from here on, I don't see too much increases in steel prices, but margins will continue to remain strong into Q1.
Okay. Thanks so much for that quick view. Unfortunately, the line is not as clear as we would have liked, Rakesh, but we got everything that you've said in order of preference. So thanks so much for taking the time. Copper, then aluminium, but there's a warning on aluminium, and then finally he's also spoken about ferrous. So it's quite a bit that you have clarity on. There's an interesting strategy note that has been shared by Jefferies India, and this is of course from Mahesh Nandurkar's desk. He's speaking about persistent foreign portfolio investor selling that has weighed on several stocks' performance, and this is amidst an unfavorable valuation growth scenario for Indian stocks versus Asia. We've been speaking about this for some time. Foreign portfolio investor flows may take some time to turn. It's important to screen stocks or screen for stocks where enough hands have changed from FPIs to domestic institutional investors, and that he's also believing that it could soften the impact of further potential FPI selling. Among such stocks, he's liking Eternal, Kotak Bank, JSW Energy, Indigo, as well as Godrej Consumer. Kush, you got quite the reaction. Which of these stand out?
None.
Yeah. I am a little surprised. I mean, of course, there are fundamental triggers behind all.
Mahesh Nandurkar is talking about fundamentals.
That's that's what I said, right? So, okay, so
Indigo also, you don't think has
not from a near-term perspective. Look at the kind of headwinds that it's had, plus the kind of selling pressure that keeps coming about every now and then. The stock tries to go up. Eternal also, I've spoken about multiple times that it's lost favor in the market. आप देखो selling 260, 270 उस zone पे consistently आ रही है. So right now I would be a little skeptical. कोटक वैसे पर्सनली कोटक वैसे मेरी लिस्ट में नहीं आता. मतलब हम HDFC ICICI जाते हैं ज़्यादा से ज़्यादा फेडरल बैंक एंड that just skips the entire gun. So from a technical standpoint, there is perhaps some pressure, but yeah, of course, this is what makes it a good fundamental buy, I suppose.
Yeah, and also the fact that some of these stocks are available at the valuations that they are available for a reason. The charts will obviously not be favorable from a trade perspective, but yeah, maybe you get Indigo at 15, 16 times only when crude is at 105.
And the argument actually is that it has already changed hands from FPIs to domestic institutions, and obviously there's a raft of selling that has taken place, pushing the prices lower.
Yeah, most certainly.
So obviously the technicals look weak.
Yep.
Okay, let's go across to Somit Sarkar joining in with all the chatter from the dealing room. Somit, what's on your plate this morning?
Not much, but a few stocks that dealers have highlighted. Firstly, it's Fractal now. The stock was down in trade yesterday, but dealers are indicating that a large prominent HNI has started to accumulate this counter lower in trade yesterday. For KFin Tech, there were sell flows on the PMS, on the large HNI desk, and the buzz on the street was that one of the large contracts of KFin Tech was getting repriced at a lower rate, which could be negative for the company's financial. And then there was sale. The stock was up nearly 14%, its biggest intraday move that we saw yesterday since July 2020, and the stock was trading at its 15-year high. Now, what dealers are indicating for this counter was that yesterday there was overall buy flows on the metal space. Along with this, there was some short covering move that happened, which triggered this kind of an up move in the stock, given the fact that sale was in a ban, and also dealers are expecting sale could be one of the potential entrants in the next MSCI rejig. So these were the potential reasons why sale was gaining in trade. And on May 8th, we did indicate that Paramount Communication remains in focus on the back of preferential fundraise, and large HNIs have shown interest. And yesterday the announcement has come in where names like Abacus, Madhukela have entered into this counter.
Okay, Somit, since you track Bharti Airtel so closely, and this is something that has been a conversation since we started the show as well, tell us what stood out for you from the results?
Well, the results were pretty much in line, nothing negative, nothing positive on that front. The India mobile business was largely muted. Broadband segment was stable and good compared to what Street was expecting, while the enterprise and DTH segment were also largely in line and on the weakish side. So nothing great on the result front, but the announcement that the company made related to the Africa reorganization, that was quite positive given the fact that there is no cash outflow coming in there. So this deal is largely positive for the minority shareholders because of first reason, no cash outflow. Second one, Bharti Airtel is acquiring this stake at a discount to the current market price of Airtel Africa, and also Bharti Airtel is issuing these shares to the promoter entity at a premium compared to the current market price. So whole in all, it's a positive deal coming in for the minority shareholders, and obviously Airtel Africa is in a growth phase. So this deal is largely EPS accretive as well, around 4 to 5% is what analysts are indicating. This deal will be EPS accretive at this moment.
Okay. So Bharti Airtel in focus, but so are sugar stocks. Frankly, India has banned sugar exports till September end or until further to cool local prices amidst the Middle East crisis and supply chain issues. Sharad Dubey joining in with more details. Sharad.
Well, to be honest, this is sentimentally negative for the sugar stocks, but not as much as what the street might be thinking about. This is because already the Indian prices are on the higher side. The realizations is what we speak about, and that we compare it with the global prices. Of course, with the rise in the crude prices, it makes sense for even exporters like Brazil to divert their production to the ethanol segment as well. But nevertheless, the sugar exports banning is there only till September 2026. And remember, this ban is applying to raw, white and refined sugar. But this does not include US and the European Union market as well. But nevertheless, the ex-sugar milk prices is something which you should be watching at. That ranges between 36 to 39 rupees per kg. And that hasn't moved a bit as well. But really, the realizations are on the higher side. So yes, it's a production some kind might be impacted. But overall, net seems slight sentimentally negative for the sugar stocks.
Okay. Thanks for that, Sharad. Mr. Atul Chaturvedi, Director of Sri Renuka Sugars with us. Mr. Chaturvedi, one would sense that some bit of these moves would come in. Anything which is a fairly high weightage on inflation would see preservation, if I can use that term loosely. What do you make of this? Does this have a material impact on earnings of sugar companies, including yourself?
No, I don't think it will have any material effect, because in any case, sugar exports out of the country were pretty lukewarm. In fact, out of the 1.5 million tons quota which the government has released, our back of the envelope calculation tells us that only about 8 to 9 lakh tons has physically moved out or is in the process of moving out. And as far as the government's action is concerned, we were anticipating this for quite some time, because the production in the country was much lower compared to what the earlier estimates were. In fact, the earlier estimates were that India would be producing more than 31 million tons of sugar. But in the final analysis, what has come out is that Indian production is about 27.75 or thereabouts. So overall, sugar deficit, I don't think India will be facing, because our consumption is also more or less matching the production this year. But in any case, with 8 to 900,000 tons of sugar going out of the country, which has already gone, your closing stock might come off a bit, and as against the comfort level which the government thinks is of 6 million tons, as the closing stock this year might be closer to about 3.5 million tons or thereabouts. So it has nothing really to do with the domestic sugar industry.
Sure.
In fact, we feel that the sugar industry should be benefited indirectly, in the sense that the values could start looking up.
Okay. So the other aspect, and I understand that we primarily wanted to speak to you about this measure, but since you're speaking about the domestic trends, let me ask you about ethanol, because with the focus on traditional fuel sources, the expectation is that you're going to have to gird against or protect against higher fuel costs. So ethanol consumption could go up. What bearing does that have for you? And have you made any headway in trying to increase the price of ethanol at sourcing?
I don't think any headway has been made as far as
ethanol pricing is concerned. In fact, the industry has been clamoring for having a even field compared to maize ethanol, which is currently being sourced at around 72 rupees a liter, as against sugar cane juice ethanol at around 65 or thereabouts. So I think as far as sugar diversion to ethanol is concerned, more or less the season is over and done with. So nothing much is going to happen till the next season, which starts in October, November. So industry is also waiting patiently, and we feel that this time around the government might bite the bullet because the cost of crude is going through the roof, and but the trouble is the government will have to keep balancing between food and fuel, because food prices also in the world look elevated and likely to be elevated going forward with the kind of disturbance. Yeah. So it will be a tight walk.
It will be a tight walk indeed. Okay, thank you so much for that perspective, Mr. Chaturvedi. Really appreciate your time this morning. Okay, lot of stocks in focus, by the way. Keep that in mind. We might have a flattish start, maybe marginally green, but a lot of, by the way, today was marked by a lot of very good numbers to watch out for. But I'm going to go to Parag Bhai with a number which is slightly difficult. Parag Bhai, Keynes Tech, and a miss on its own guidance. Will it hurt the stock? What is your view?
So, first of all, I don't own the stock, and generally I don't like to buy this kind of businesses where actually earnings are very unpredictable, as it is reflected from this result, right? That they themselves miss their guidance. So I would say that margins also dropped. So I would say that for this kind of business which is unpredictable, to pay 70 PE on a trailing basis, that is not my framework, at least. So I think it should react negatively in my view.
Okay, and you're not a buyer then? Too,
no,
right?
no.
Okay, fine. Perfect. There were some very interesting numbers. Did you get a chance to look at the numbers of either NLC India or Balaji Amines or Inventor's Knowledge Solutions?
So Inventor's Knowledge Solutions keeps doing well. That is a company which is very interesting. That and Sagility. These two companies in this particular space, which is related to insurance, BPO kind of thing. In the earlier context, we used to tell them BPOs. Now it is different.
Call center.
I haven't heard that in so long. I have a quick quiz for Gen Z viewers. Do you know what a call center is? If you do, tell us on our socials.
Without Googling it.
Without Googling it, that's true.
So Inventor's numbers are good. NLC, of course, see, in power, regulated ROE power companies, I would not look too much into quarterly results. They will grow in line with their capacity additions. And of course, some of these companies have these lignite mines and all those things which have become very precious now. So I would say that it continues to be a good stock. But Inventor's is something which is keeping me excited.
Okay, interesting. Is Tata Motors CV keeping you excited? Reason being, it was expected to be a strong Q4 that has panned out, but the outlook might be turning a little negative.
So that's why in cyclicals you have to trade. I think that's why we have discussed earlier in the show. It was my very top large cap buy, if you remember, at 400. I sold at 490. That also I said on the show. Now it is 397 or 390. Now, all auto EMs, forget about Tata Motors CV1. See, steel prices have gone up, aluminium prices have gone up, copper prices have gone up. Now petrol, diesel will go up. So your margins are under pressure. Now petrol, diesel price will go up. So your demand will be under pressure. So there is no reason to be very bullish on auto EMs till this Strait of Hormuz thing completely solves itself. And
extended to auto anchs? The same theory extended to auto anchs?
It gets extended automatically. Even if you don't want to do it, it gets automatically, right? Because people think that, of course, if petrol, diesel prices go up, the demand will slightly come off at least. Plus, they want to increase prices, right? All auto OEMs would need price increases to set off for their commodity inflation. So, everywhere there is a pressure. Plus
so if the demand slows down, then auto anchs automatically get hit because they don't get as much.
Plus overall middle class consumer discretionary will be under stress because your petrol, diesel prices are going to go up.
Yeah. Also the GST base effect goes away from November. So in some sense, that is also a hit that comes in.
Good point.
So companies are fantastic. Tata Motors, CV, TVS, Motors, M&M, all are great. Maruti for that matter. But they are going into headwinds. Until this, if the Strait of Hormuz completely normalizes, oil falls, then it's a different thing.
Okay, so that's OEMs. On my list, I also had CARE ratings, okay?
Achha.
I looked at the numbers. I don't know if you've seen the numbers, did you?
I have not seen the numbers, but I will tell you, CRISIL, ICRA, both also reported good numbers. So I'm assuming that CARE will be good.
Was good, yes. But they've actually highlighted in their press release that they saw bond issuances drop by 11% in the fourth quarter. They're expected to drop further as well. I've spoken to people in the secondary markets for bonds,
That is why
corporate
you're seeing
bonds.
higher credit growth for banks.
Yes, exactly. And so that's hugely negative for CARE, ICRA and CRISIL because 89-90% of the revenue comes from rating bonds.
Yeah. So I was also surprised. CRISIL numbers were also good. I think ICRA also I saw it was good. At the CARE you are saying is good. So something to and these are great businesses, right?
Yeah.
Again, I would say infinite ROC businesses.
Yeah. Okay. This is what's going to be on the watch list this morning as we get into the pre-open session. And first, rates are on. And quick recap of everything that's been happening. There are companies that have a good set of Q4 numbers. Metropolis Healthcare among them. Let's look at what that company is doing pre-open. If the rates are up yet, Balaji Amines is the other one. You're overall seeing, of course, the Nifty and the Sensex looking okay, but Signature Global, GK Energy, NLC, ADF Foods, Sagar Cements are some of those that you should look at. What are weak numbers? DLF, Man Infra, Interact Building, Keynes Tech. Look out for dairy stocks today. I'll go a little slower. Look out for look at Keynes Tech, 10% down as we start off. Dairy stocks because Amul has raised milk prices by 2 rupees from May 14. So you're seeing some of those dairy stocks up there. Key order wins, NBCC, PNC Infratech, Bajel Projects. Look at some of those and see if they are showing some buzz in the pre-open session. Bajel is the third one I talked about. And then let's look at metal stocks. Where you have strong technical setup. We've looked at some of those and had a conversation as well. Not looking bad at all. Hind Zinc, Hind Copper and Tata Steel all up in the green. Sugar stocks we talked about. There is export ban and you're seeing a bit of a downtick as was expected. So you're going to see some kind of an impact on sugar. But I think Keynes Tech, we'll have to talk a bit about it on the charts as well. You're seeing a 10% drop just in the pre-open session, and they have their conference call actually at 10 o'clock. So we'll wait to see what the management has to say about it. Is there any way you would look at a buy call at lower levels, Kush, Keynes, and let's see what Dixon is doing as well this morning while we're at it. What both those segments are doing. Dixon's doing okay this morning, but what about Keynes?
9.7% yesterday.
Keynes, not a chance. I would avoid it. In fact, it's opening precisely at that support zone of 37.60. Could get worse from here. I think the only one stock that you have to look at in this space, obviously Sirma, has had a good run, last 2 sessions of profit booking. Once that fall comes to a halt, starts to consolidate is where you can consider. But Keynes Tech, not now.
There's a sales note from a brokerage. I don't know which brokerage it is, but I think what they are highlighting a couple of other things beyond the numbers as well. So on the guidance front, Tamanna, you mentioned for Keynes. Yes, sorry, I should have highlighted it for Keynes. They're saying that the 26% revenue growth versus expectations of 50%, full year at 33% versus initial guidance of 65%, plus sharper deterioration in working capital because receivables surged to 42% of trailing 12-month revenues from 21%, and operating cash flow has turned negative of 600 crores despite a 1600 crore fundraise, and provisions for doubtful debts have jumped to about 72 crores. So there are a lot of red flags out there, and everybody who's written on it expects a sharp reaction. No doubt we are seeing one.
Yeah, I mean, and working capital clearly. I remember a conversation that they'd had with NDTV Profit, Tamanna Neeraj, but they had guided for moving it lower, but it's actually gone up in that interim, Keynes Tech.
And I think this Nuvama note, right?
That's the Nuvama note that we saw, which had that kind of negative.
22%. EPS cut.
22% EPS cut. That's what we talked about. Shrikant Chauhan joining us this morning, Executive Vice President and Head Equity Research, Kotak Securities. Shrikant, do you want to talk about Keynes Tech or do you want to talk about the Nifty? Let's start with the Nifty.
Good morning, Tamanna. Good morning, everyone. So while looking at the setup of the market, it is very clear that the market is going to spend time within the range of 23,600 and 23,300 on the downside. But today on the dismissal of 23,600, we can expect some short covering because yesterday there was good amount of shorting has happened between 23,500 and 600 levels. So on the dismissal of 23,600, we can expect short covering up to 23,800. But while looking at the entire setup and the structure of large cap companies, I am of the view that we need to be again stock specific in this market. Stocks like HDFC Bank or maybe other large heavyweight stocks, they are not participating whenever there is a uptick in the market. So I think we need to be very, very stock specific in this market, and it is better to buy if there is any correction instead of participating at any rally.
Okay, let's talk about individual stocks, and even if it's not in your list, I want to throw in Keynes Tech because it's expected to open gap down, could be under tremendous pressure. What would you do with that one as well, Shrikant?
Yeah, for Keynes Technology, see, like on daily chart, it was bouncing back from the lowest low of 3,400. And after hitting the levels of 4,400, 4,200, we saw again double top sort of formation, which we can say it's a bearish sort of formation. And based on that, again, we can expect stock to move towards the levels of maybe 3,600 or 3,650 in the near future. Technically, I'm not still convinced because already the stock has given the pullback from the levels of 34 to almost 44. Now, again, it is going to take some more time, consolidate between the range of maybe 4,000 and 3,600 for a longer time.
Okay, stay on with us. Shrikant, going across to Sharad Dubey for the big brokerage call of the day. Sharad, you have Meesho on your radar, and for a change, the view is very different from what it usually is in the recent past on Meesho.
Exactly, Tamanna. The stock has actually run up a lot, and that is why a little bit of concern is coming in. And this is one of the first reports from the broking house coming in from Kotak, where they have initiated a reduced rating with a target price of 195 rupees per share. And they've stated that most of the positives are priced in at current levels. But nevertheless, let's list out the positives also. It's a large horizontal platform, and a good growth is coming, at least in their operational parameters. Now, it's asset-light and value-focused as well. And the broking house is modeling at least a 28% growth in the net merchandise value, NMV, that's what we call, over the next 3 years, and EBITDA is expected to be break-even by FY29. Now, there's a healthy long-term growth potential, and a steady profitability improvement is something where the bullishness is still there for the street.
All right, Sharad, thanks so much for that. Question specifically for Parag Bhai right now. If you're looking forward to FY29, do you have the patience to wait that long for a break-even?
No, I don't have patience. I have patience if company is making profits right now. Okay. At the EBITDA level right now, I'm seeing 255 crore loss. Market cap is 89,000 crore. So I would like to see operating profit at least for me to get interested in the stock.
Okay, on the charts then, Kush, Meesho, do you have enough to talk to us about it?
Fairly limited, but from a near-term perspective, it was on the cusp of a rounding bottom formation breakout that gave way. So, maybe you could wait a while before, you enter Meesho.
Okay, it was perhaps too early to look at the initial ticks on a couple of these stocks. So pull up Metropolis. It's up about 9.5% from what I can see on my screen in the pre-open session. Let's pull up Tata Motors CV. It's up about 4% or thereabouts. Care Ratings is doing reasonably well as well. Okay, it's about 2.5%. Okay, Care Ratings up 5.7%. Kush, on the charts, particularly for the diagnostic stocks, that entire pack went up very, very fast. So the question is, if you get a massive up move today, use that opportunity to take money off the table?
120%. All of these, especially Vijay, I mean the leader of the pack in that sense, in the kind of run-up that it's had, massively overheated. Look at Metropolis as well. Already overheated, and with this kind of gap up, it'll go further into that territory. So my suggestion, if you have a position in these, not a bad idea to book substantial amount of profits, and by that I mean maybe 70-80%. You might want to hold on to the rest, because if there is momentum and it takes that stock higher, then that little extra profit might help you in the next diagnostic test that you get done. But for now, it's a good idea to take some money off the table in some of these names. Consider at declines.
Okay, let's take a look at some of the other movers this morning. I also want to look at Oil India. I want to look at DLF. Some of these companies have also reported. Let's see how they're faring as we get along, because results have been a bit of a mixed bag. DLF actually optically looked much worse than what the stock is doing right now. and that's perhaps because of pre-sales, etc. Let's look at Oil India as well. Oil India was a sharp set of numbers. Stock is about 3.5% up. We were speaking earlier in the morning, Parag Bhai, about the possibility of increase in petrol diesel prices and the question about whether the reaction to it has already been priced in by the market or we will see a sharp one. Wanted to get your view on that.
So basically, my view is that OMCs, IOC, BPCL and HPCL, if crude remains above at this level, and if there is no petrol diesel price hike, they will have a 1 lakh crore loss in this quarter. So there has to be a price hike for sure. Otherwise, who will bear it? So basically, there has to be a price hike. Plus, you want to disincentivize consumer from using more petrol diesel, right? Because your dollar goes away. So that's why some sort of hit consumer will have to take. So I'm expecting petrol diesel price hike. It might be coming if oil stays at...
Is that priced in?
In IOC, BPCL, HPCL, you can say that, see, for example, in HPCL, yesterday it moved up because of good result. But the result was good because of low priced inventory.
Yeah.
So in those cases, in some cases, it is not priced in. So for example, petrol diesel price hike is happening, but it has to be meaningful. It cannot be just 5-7 rupees. Then the reactions, if it is a positive reaction, I'll be surprised.
So it will be positive for your OMCs once it comes in specifically.
But it should be very high level, totally.
Will that not sour the broader market sentiment?
I know. Inflation will go up.
Consumption.
Will go up, discretionary middle class pockets.
So the broad question is, no, it's not been priced in yet. If it's a sharp, steep one, we will see that big hit coming in from the market right
absolutely.
now. Shrikant, Oil India, if you have been tracking, let's look at an Oil India, let's look at a Metropolis as well on the charts.
Yes, in fact, the stock has been consolidating within this range of 520 and 460 for a longer time. And now it is on the verge of breaking that. So we can expect some more upward activity in the near future. That's the view, and which is concerning because whenever we see breakout or some upward activity in ONGC and Oil India, most of the time we see rise in crude prices. So I think market is more smarter than what the actual things are happening right now. I think based on current formation, yes, the stock is heading for at least 530, 535 sort of levels. And in case if there is any retracement, any pullback in the near future, close to 500, we should look for adding some long positions. We also like ONGC, there also we have a target of 330, 340.
Okay, just some news coming in. I want to pull up Mahanagar Gas. MGL has decided to hike retail prices of CNG by 2 rupees per kilo. In MMR, the new rate is 84 rupees per kg effective today. And then this is in NDTV Flash, which is also talking about how auto unions are intensifying demands for fare hikes consequently. So you are going to see that cascading effect come in one way or the other. If we had to look in particular at sectors which will be worst hit by a fuel hike, which we know now is imminent. The math is not mathing without the fuel hike. Which would be the top ones? You talked about OEMs a little earlier.
Yeah, auto OEMs for sure. Everybody will be hit. Everybody, and every sector's consumer middle class demand will be hit to some extent, I would say, to some extent.
Transport costs go up. So therefore, obviously, everything will get hit.
I would say that, in many cases, you should not extrapolate March quarter numbers because you are heading into a significant headwinds in going into Q1. Unfortunately, because this conflict has extended and whatever has happened.
So it's actually quite concerning, actually, if FMCG companies have also guided to a certain volume growth in FY27, that's going to be challenged, isn't it?
See, FMCG is a day-to-day consumption, so it depends on category to category. If it is a discretionary category within FMCG, then of course it will be impacted. But if it is a day-to-day need, then for example, I gave you an example, right? Last year, parachute prices have gone up by 60%, but the volume degrowth was just 2 to 3%. So there are some categories which are not that price sensitive. There are some categories which are price sensitive within FMCG.
There might be some down trading.
So Tata Consumer saw 16% volume growth, right? Tata Consumer. Now Tata Consumer tea, salt, that category will not see. Of course, if they are guiding for 15%, it might come to 13%.
So FMCG is a safe bet?
FMCG is a safe bet,
Yeah, more the staples. Top pick, Shrikant, after the pre-open session, before we get into the opening rates?
See, like metal stocks, they should do well. And there we are bullish on steel stocks. JSPL, which is currently around some 1245, 1250 sort of levels. From here, the stock can move towards the levels of 1300 or 1330. We can keep a stop loss around 1225 for the same. So there we are bullish.
Okay, we'll take Kush Bora's top idea in a bit. Maybe it will help viewers to try and stay in export-oriented names or companies which do not get impacted from this higher fuel, like maybe Telecom. Let's wait and watch. But the markets for now are starting off okay, aided by, of course, global cues and the fact that we've fallen quite a bit, really. I mean, we are at 23,555 after a 0.5% uptick. I mean, 24,000 is long gone yesterday. Mid caps and small caps too looking okay because the market breadth is positive. Mid cap index 0.6%, small cap index 0.76%. Really strong show, really, by the small caps as well. So a lot of stocks moving around. Like we said, today actually was a day full of very positive results and some of which can be extrapolated. The IKS is kind of for the world. But let's get the heat map up on the screen and show you what is moving and what is not. Fair degree of green, very little red. IT yet again taking the stick. And well, that is that one index which has really been taken to the cleaners. But what is doing well? Cipla, 6% higher. What a big bump up there. And we spoke about it briefly. Maybe we'll talk about it in detail. Adani Enterprises, another 3% higher. Airtel, 1.26% higher. Rather subdued a reaction, I must admit. Adani Ports, about 1.3% higher. HDFC Life, yesterday too, the Adani Group stocks actually had a very strong recovery. And I think it's playing on today. Maybe the rest of the group also could be doing well. We'll just mark that maybe. Tata Consumer, HDFC Life, M&M, Coal India, etc. That is the set of names which is doing well. Cipla is big bumper, 7.5. It's moving like a mid-cap stock, really. But look at that kind of a gain. And just before Tamanna comes in, or as Tamanna comes in, can we just get some of the other Adani Group stocks? In case Tamanna is marking it, fine. But otherwise, let's just show Adani Green, Adani Total Gas, etc. And just see Adani Energy is up 1.6%. Adani Green is up 2.7% as well. Standard disclaimer, of course, the Adani Group owns NDTV. There's some undercurrent here, Tamanna. Yesterday too, there was a strong move here.
Yep. So just the broader markets as well, Neeraj, also looking quite positive, and that's a relief, really. 150 points up on the Nifty mid cap, 150 on the small cap as well, about more than 0.5% up, nearly 0.75% up. Let me just pull up India VIX quickly. The advanced decline is also looking quite positive, 1803 to 367. This is a good figure, nearly 5% down, 4.5% down on the India VIX. So all things considered, at least the market is settling after a rough and tumble week. I would say most of this week has been quite tough. Let's pull up the sectoral heat map for you and see what's happening here. Pharma sector will be up there thanks to Cipla, possibly. See, healthcare is up there. And Nifty Pharma up there, 1.5%. Nifty Healthcare also up there. These indices are not that widely populated. So if you have one star of the show, it's going to pull the whole thing up. Nifty Energy about 1.5% up. Defense stocks doing well this morning, as are infra, PSU banks. The only one really sulking is Nifty IT, down about 1% today in trade. The Nifty IT, they're seeing a bit of a muted start. But let's look at specific stocks while we can. And results is what is going to be top of mind. We're still in that season. There's some good, some bad, and some ugly numbers which have come in. Let's see how they're reacting. Keynes Tech 10% down at start. Missed guidance, EPS downgrades, a whole host of problems there. We're hoping that the management can come and clarify what's been happening there. Good set of numbers for Metropolis. 7.5% up. Balaji Amines is the rock star really this morning. 18% up on the stock. As we move forward, you also have NLC, IKS. Let's look at some of those, all of them doing well. NLC about 13% up. IKS also up in the green. ADF Foods about 6% up this morning. Tata Motors, CV, Oil India, DLF. Let's look at all of them. DLF was a muted set of numbers. The others are doing fairly well. I want to look at some of the sugar stocks. Exports have been curbed. It's a negative for some of these companies. We had one company come and say it doesn't make too much of a difference, but clearly the street feels it's going to be a bit of a downtick. You're seeing sugar stocks largely down in the red. Order wins have come in for NBCC, PNC Infratech. I think Bajel will also see a bit of a spike over there. Yeah, there you have it, about 6% up. MTAR also focused in focus this morning. Let's look at Parag Foods and Dodla Dairy, because milk prices have gone up, but the stock's fairly muted. A bit of action in the pre-open session, but yeah, you do have some big hits there as well.
You do, Tamanna, and what's actually looking good is the breadth. Because I look at the 500 stocks of the Nifty 500 and it's mostly green, over 400 in the green at this moment, and you've highlighted a few of the top gainers. I want to add to the list though. You have First Source Solutions that's up about 7.8%, one of the top gainers in the broader markets, that's doing reasonably well. Alkyl Amines is doing well. Inox India is doing well. These are stocks that are buzzing in trade. Zydus Life is up and about. Not a stock that you see very often. Bombay Burma is up 3% in trade today as well. I'm looking at the downticks and some of them stand out. Of course, we've already highlighted Keynes Tech. It's the accident of the day, if you will. And HPCL, a cool off taking place very quickly after yesterday's up move. And I wonder whether the rest of the oil marketing pack is also seeing similar cuts. So pull up BPCL, pull up IOC as well. No, not too much. So HPCL seems to be where the focus is. So a couple of cohorts that I want to focus on. Shrikant Chauhan, the Adani Group stocks. Something seems to be working here and building on strength that has come through in the last few sessions. Would you add to them, and which one would be your preference?
Yeah, technically, if we go through with the Adani group related stocks, most of them have crossed their long-term resistance levels. And it clearly indicates that the overall trend, short-term, medium-term, long-term, is like positive for all the stocks. And we can expect further more activity. But in that specifically, we like Adani Ports, which is around 1770, 1775 sort of levels. There we have a target of 1950 or 2000 sort of levels. See, all these stocks we should look for adding with a positional view, because in the near term, in the near future, even if we consider last 2 days, they have rallied a lot. But if we consider the period of, let's say, next 2 to 3 weeks, then all these stocks are trading. We also like Adani Enterprise, which is around 2590, 2600. There we have a target of 3000. Adani Energy Solutions, there also 1700, 1750 can be possible. And Adani Power is something which is like really doing well in this entire pack. And there also we have a target of close to 300. So based on technicals, we like the stocks.
Okay, a few more stocks in the broader markets. I'll take a quick view from Kush. Kush, I mentioned First Source Solutions, and by the way, you're welcome to comment on any of the stocks that I've mentioned in the past 5 minutes as well. Inox India, I'll throw that in as well. And HPCL specifically, big downtick very quickly after that uptick yesterday.
Let me start with Inox India. The reason for that is that this stock was about a month and a half ago our weekly pick. Did phenomenally well, profit booking now and on the way up. So it definitely remains on my radar for a long position from here on. 1440, 1445, that's a support zone. So that should act as your stop loss if you're going fresh longs on this one. Won't be surprised to see that, catch this same trajectory and move to 1550, even 1595 kind of levels, on the upside. First Source, nothing to write home about. And as far as, HPCL goes, again, this cohort of stocks has not really been, top of my list. The same view continues. And I will give in a quick view on the Adani stocks. Adani Enterprises is something that we discussed. We don't discuss this enough, but we discussed this at 2300, that yahan se breakout banta hai. Even if it's risen quite a bit, I think this has not done anything in a while. Yahan se 2700 seems fairly easy. I think about 2950 also very much on the card. So if you have a position, don't book out now. If you want to buy, you can. 2450, 2400, that should be your positional stop loss.
Credit where due, even Parag Thakkar for that matter mentioned some time back about these things and why Adani Enterprises was something that he was comfortable looking at, and the returns have been
I look at right issue price of 1850 when promoter brought in money, right? So 1850 almost it was bottom.
Yeah.
It is incidental, but I am saying that sometimes you have to look at these factors, and plus this whatever assets they have got in Jayaprakash associate deal, I think those assets are huge. So I would say that plus that airport business is expanding. New Mumbai airport EBITDA will be visible next year.
Yeah.
So at that price I was constructive, of course. Now though it has rallied significantly. That too for a large cap stock.
Okay. All right. Let's go across to Varsha, who's talking about Cipla. Cipla could really be the stock of the morning with how the results have worked out. Varsha, were the numbers as good?
So I would say revenue was in line, but EBITDA and PAT was missed. But the reason why Cipla is buzzing is not because of numbers, but because of the commentary of the management, and of course the brokerage is being bullish post the commentary. Well, the company is expecting strong launches which will help to aid growth. EBITDA margin expansion is on the cards. US business is expected to do well. Now, talking about the brokerages, well, let's see what Goldman Sachs has to say. They've maintained neutral, though they've hiked target price. Q4 results, according to them, were below estimates, but India, South Africa beats US pipeline in focus for FY27, and One Africa gathers momentum. Kotak has maintained buy with target price of 1,625. According to them, the numbers were in line, but domestic business delivers strong at 15% year-on-year growth. Robust H2 FY27 is expected, and US guidance brings a positive surprise. While MS has maintained underweight, though they've cut the target price as well. According to them, the earnings were weak. FY27 remains a transition year. EBITDA margins down, sustainability of gross margin improvement and launch timeline of peptide assets will be a key thing to track, but the US pipelines is strengthening. So overall, all the brokerages and investors are, betting on the US pipeline, and of course the new launches and the capex will also go down, which will help the operating leverage, and hence the EBITDA margin will also improve for the company, and hence you are seeing the stock is buzzing in trade today.
Interesting, very interesting. Thank you so much for that, Varsha. Parag bhai, just on Cipla, because the numbers on the face of it were okay, but this is more of a forward-looking kind of excitement when it comes to it.
I think company has guided aggressively for FY27. There are mixed set of views on those things. Some people are saying it's a very aggressive guidance, although they have lowered their margin guidance. So I would say that this is a stock which has not done anything. I think the positioning might be such that there is a good rally. But I would say that the numbers were not that exciting, guidance was not that exciting. One of the key products is being pushed out to next year. And Revlimid sales are falling off. So I would not read too much into today's move.
Yeah, it's already cooling off actually.
Oh, really? So Cipla, if you hold it, would this be a good opportunity to exit? Would Cipla not be a top pharma pick?
Again, it's a good company, but I would say that for somebody who is holding it, will have to hold it for at least next 1 year. Next 6 months are not going to be that exciting for this company.
Actually, can we pull up the 1 year chart for Cipla, because it did go through a phase where it cracked very, very, very sharply, and I won't be surprised if it's not recouped that. There you go. It's just about, to a certain extent, recouped some of those losses. So, Kush, you want to comment on the levels that you would watch on the upside and whether it would face resistance at very close to where we are at right now?
Absolutely. 1440, that's the first level to watch for. And 1500, massive consolidation around that level, as you can see on the charts as well. See that, the initial part of the graph where that 1500 level was being maintained for a long time. Now, anyone who's been holding on to this will come on to sell, right? Once the price reaches that level, more psychology, right? So this is how technicals also work. So I wouldn't really buy a fresh, but if I had it from lower levels, 1440, 1500 for these levels, I'd continue to hold. On the downside, keep a stop loss at 1370, 1375 zones.
Two stocks which will be in focus today, and we'll have the managements there. One is MTAR Tech, a large order win yesterday too from the lows, because they raised the guidance, the stock bumped up, and today too doing well. So Shrikant Chauhan, MTAR Tech is one. And the second one is Paramount Cables, which is actually sulking despite the investor names out, simply because the preference issue price is much lower. So Shrikant on the charts, MTAR Tech, Paramount Communications.
Yeah. So Neeraj, if we go through with the technical pattern of MTAR Tech, it's a parabolic rise that we saw, and it is like consolidating, let's say for a few days, and again it breaks into the breaks on the upward side. This time also it is signaling the similar sort of pattern. It has spent close to 7-8 days within the range of 6,800, 6,900 on the higher side, 6,000, 6,200 on the downside, and now again it is breaking back. So broadly, I am of the view that till the stock is in the trend, and as it has broken the important level of 6,800, the next level to watch out for would be 7,500 or 7,600. So I think even at this price, around 7,200, it's a buy with a short-term view. we can keep a stop loss at 7,000 for creating any long positions with a target of 7,600 on the higher side. For Paramount Communication, there means I don't have any idea because I have not seen that particular chart. But broadly, I am of the view that in this market, most of these stocks, they are doing really well. But I think fairer stocks, I think there we can expect a lot of activity even from current levels, especially JSW Steel and Jindal Steel and Power.
Okay, thank you so much, Shrikant, for joining in today. Thank you, Parag Bhai and Kush Bora. But we want to focus on another buzzing stock, which is Balaji Amines, and Varsha joining in to tell us what's working here. Varsha, the numbers looked good.
Yes, absolutely. So the number did beat estimates. We have seeing a sharp margin rise over here. This is on the back of product mix and the operating leverage. Cost efficiencies have also led to this expansion because there was the other expenses have lowered down, and the operating leverage is supporting profitability expansion. Now over here the story is because of the West Asia crisis and all the amines prices have also gone up. So there might be an inventory gain that Balaji Amines has been enjoying, number one. And number two, because of the shortage of ammonia, the productions were halted. So we need to watch out how Q1 FY27 will be played out for the company. But overall, the numbers look good, and the volumes in the amines are also looking good. But we need to wait for the press release also. And we have an interview at 12 today. So a lot of things will be cleared.
Okay, interesting. You look at alkyl amines and some of the other stocks as well. Everything is moving because of this. Do you think Balaji Amines and alkyl amines, Shrikant, if you get an opportunity, is this a profit booking moment?
No, I think after a very long time, these stocks have started pulling back to their recent sell-off that we witnessed. Alkali amines was somewhere close to 3,000, 4,000, 4,500 sort of levels. From there, all the way it fell to 1,200. So now it's a pullback rally that we are witnessing, and furthermore, upside is very much possible in the near future. We are targeting somewhere close to 2,400, 2,500 for alkali amines from current levels. So we should look for hold on to it. We also like Balaji Amines. There also the formation is more or less similar, and there also we have a target of close to 1,900 or 2,000. So both these stocks are showing a lot of strength, and furthermore activity is more likely in the near future.
Okay, so Balaji Amines in focus. This morning is also turning out to be interesting because of the positive breadth that we're seeing more than anything else, and the Nifty holding up above the 23,575 mark. Shrikant, now that we've had some stability in the markets, about 15 minutes of trade coming in, what is your Nifty outlook looking like?
No, I think market broadly is going to spend time within the range. That's my view. And even after dismissal of 23,600, we can expect a rally towards 23,800, which is like nominal up move that we can expect. But yes, while looking at the entire setup of the market, I am of the view that downside is limited for the market. So in case if there is any, let's say, bad reason, then in that case also, I am not expecting market to sustain below the levels of 23,000. So in the near future, I'm expecting market to remain within the range of 23,000 and 23,800 on the higher side. In case if there is any dip because of any reason, look for adding some long bets on stocks. And for the day specifically or with the intraday view, 23,600 is the level above which we can look for taking some long positions.
Okay, Shrikant, thank you so much for joining in today. And, before we get you more stocks that are buzzing, guys, I don't know if you're seeing what Xi Jinping is saying right now. And some of these flashes, we'll put them on our screen as well. He's obviously talking about Taiwan being the most important issue in the US-China talks, saying China-US ties can be stable if Taiwan issue handled well, but goes on to say China-US ties can be dangerous if Taiwan not handled well. I'm just wondering if one more front in what is turning out to be global geopolitical, misalignment has opened up with Taiwan. Xi Jinping has put Taiwan on the table.
Yeah, and I think, Tamanna, one would expect that to definitely happen. But for the usage of words, the choice of words used on day one of the summit, is very, very interesting.
For me, what stands out is the stark difference in tonality between the two world leaders. You have a situation where Donald Trump is talking about his great friend and the possibility of positive talks on trade and on business. And on the other side, you have President Xi Jinping making a very clear statement: geopolitics first, sort out the Taiwan issue first, and then we'll talk about anything else that you want.
Yeah, saying that talks are going to happen at my pace.
Yes.
And according to what I want. We heard the Trump speech. We didn't quite hear Xi Jinping, so I don't know about the tone or if we could understand it. But the words speak very, very loudly for themselves. Okay, another one which is in focus and corporate action which deserves to be looked at is Swiggy looking to overhaul its governance structure as it eyes Indian-owned and controlled company status under foreign exchange rules. Why this is important is it's also moving to an inventory-led model following competition like Blinkit. Hiral joining us for more on this. Hiral, we were having this discussion. I don't think it's very well known that Swiggy was not already on an inventory-led model. This was on a commission model. They want to switch it up.
Absolutely. They are looking to switch, Tamanna, in terms of an inventory-led model. And this is a step, where they've come in closer to transition to this kind of a model, specifically when it comes to Instamart. And to achieve this is why they are looking at this corporate action, where they've reworked their board structure. Now, what they've done is they've proposed structural changes to its board nomination framework. And the aim is to transition to an Indian-owned and controlled company. Only once they do this and they get the approval, from the governing bodies, that's when they will be able to move to an inventory-led model. Now, they're aiming at achieving IOCC status under the FEMA regulations, and the focus will be on Indian shareholding as well as getting board control as well. Now, what the government change rationale is, they're aiming to restructure and rationalize their legacy board nominations. They're ensuring a steady board-level representation also for the core leadership team. And they will look at safeguarding the taking local control when it comes to supply chain as well. Now, moving from there on, if you have to look at the inventory-led model, they are actively, pivoting to this model. And in May 2026 is when they had made this announcement as well. The reason why they want to do this is because even competition has moved there. If you talk about Blinkit, in September is when they moved to an inventory-led model. And due to that, if you see their Q4, their revenues actually grew 4 times. So you are seeing results from a financial perspective as well. Very lastly, if you have to see why the shift, 1, their margins will improve. 2, there is better control and quality. 3, in terms of competition with Blinkit, they will be able to fill in the gap quicker. And you have the average order value also that could potentially go up for a Swiggy. And in terms of the steps taken, they've already hived off this quick commerce vertical into a separate subsidiary, and they've called it Swiggy Instamart Private Limited. And they've also actually hived it off into a separate app. So all of these are actually coming in place. Once they get an approval, it'll be interesting to see how FY27 pans out, because you will see good revenue growth coming in. If Blinkit has seen the 3 times, let's hope a similar kind of performance from an Instamart as well, and your margins will also improve.
Got it. Okay. Thanks so much for that. And keep an eye on the stock. The stock currently trading with gains of about 0.5%. Remember, we were talking about Eternal in the same breath, of course, for different reasons. The stock was under a tad bit of pressure earlier, but it's trading with gains of just about 0.33%. Now, a very interesting regulatory piece coming through from the perspective of the Reserve Bank of India. This whole conversation about upper layer NBFCs has just got a little bit more interesting, pertaining to the government non-banking financial companies, things like Power Finance Corporation of India. Exclusive information being picked up by my colleague Piyush Shukla about that, and the fact that they're tapping the shoulder of the Reserve Bank of India seeking exemption. Why is that, Piyush?
Good morning. That is correct. There are these government-backed large NBFCs, over 1 lakh crore of asset under management. They have actually sought exemption from the RBI from coming in the upper layer category. Essentially, when a NBFC is promoted to an upper layer category, they have 25% ceiling on large borrower group exposure. So some of these NBFCs like PFC, REC, IRFC, these companies do a lot of of large ticket lending to infra projects. IRFC, for instance, has just one client, which is the Indian Railways. So it is not practical for them to diversify so much in the time period that has been given by the RBI. So that is essentially the reason that they are seeking an exemption from being added in the upper layer category. There is one more aspect to this, that the RBI said that standalone NBFCs with up to 1 lakh crore loan assets will be included, so they can actually hive off also some of their loans into another NBFC. But that negates the purpose of this whole upper layer classification. So it is an interesting aspect to watch. 1 lakh, there are a lot of government-backed NBFCs which will come under the upper layer category as per the RBI's draft norms, which had come out in April.
Right.
And we are picking that the large government-run NBFCs are concerned on this particular aspect.
Got it. Okay, Piyush, thanks so much for getting us those details. Really appreciate your time. Let's go across now to the first management of the day. Paramount Communication, plans to raise capital, the mix of shares and warrants. The cable and wire makers, it's a cable and wire company, remember, raising some money. First, let's get in Varsha to talk about this development before we get in Mr. Sanjay Agarwal, the chairman and CEO of the company. Varsha.
Well, company plans to raise 122 crore. This is via equity and warrants, and will issue 2.2 crore equity shares at 42 apiece. Now, additionally, company will also issue 72 lakh warrants worth 30 crore. Now, the interesting point over here is the proposed allotee includes a backers, diversified alpha funds, Singularity funds, and the warrants are proposed to be issued by two promoters also, Sanjay and Sandeep Agarwal. So overall, interesting fundraise, considering the backers, diversified alpha funds and Singularity fund will also participate in this fundraise.
Got it. A backers, diversified alpha fund, Singularity fund, and others. Sanjay Agarwal, thanks Varsha for that. Sanjay Agarwal, chairman and CEO of Paramount Cables Johnson, right now on the show. Mr. Agarwal, thank you so much for joining in. Interesting time
and
to be doing.
Thank you for having me.
No, pleasure is entirely ours. Just tell us, actually, before we get to that, just tell us a bit about your business. You are in the cables and wires business, but do you largely export? And if so, is it to the US or other geographies?
You see, we have a large export percentage of our revenue. I'd say roughly it varies between 30 to 35%. At one point, it had touched nearly 50% also, some 3 years back. But we want to keep it steady around 30-35% in the coming years.
Okay. And this export is to the US or which other geographies?
Yeah, now for the last few years, we've been focusing on the US because it is one market which is unparalleled in its size and depth, especially for the cable industry. It's roughly $30 billion worth of imports every year into that market. And to have a strong presence and to have a recognized quality name in that market is a huge advantage.
Mr. Agarwal, thanks so much for that clarification. And so let me jump straight into the fundraise, which is 120 odd crore rupees, mix of warrants and equity. You've got warrants issued to the promoters. You've tied up the investors as well. What are the timelines that we're talking about, and what is this fundraise for? What is it going to be used for?
You see, we are basically going in for a greenfield expansion project at Narmadapuram near Bhopal. It's around a 32-acre piece of land. And we are proposing to spend around 300 crores over the next 2 years. In the first phase, we plan to spend around 150 crores. And the fundraise, we are going to use partly for our working capital and partly for the project.
Okay, so this capacity increase that will take place, just give us a sense of the timelines of the completion and the integration into your existing facilities, and what are the heads that it will cater to? Because you've got power cables, railway cables, telecom, house wires, and pipes and others, right? So it's a pretty diversified set that you have. Will all be manufactured at this new facility? And what do your existing facilities have with regard to capacity utilization?
You see, our existing facilities, we have got 2 factories, one in Jharsuguda in Haryana, the other in Kushkeda in Rajasthan. Both have been practically running at 100% capacity utilization for the last 4 years. And we have been, progressively increasing our capacity. We have invested around 120 crores plus into the capex into these existing 2 plants. But we are running out of space in these existing 2 plants. And that's the reason for our setting up the new plant. As to your question about the capacities that we are looking at in the new facility at Narmadapuram, we expect to do roughly 2,000 crores at the end of the expansion when we have invested our 300 crores approximately into this project.
Mr. Agarwal, quick question. Now, your numbers and the growth that you've shown over the last 2 or 3 years has been strong. A couple of queries here. One, because of this capacity expansion plan, what does it do to growth? Let's say, because you have a 3-year project in mind, but it comes up in phases, I'm presuming. What does it do to growth? FY27, FY28, any thoughts here?
You see, FY27 might be slightly less than the continuous progress that we have had in the past few years, because the existing factories will be, having a limitation on their capacity a bit. But still, we hope to do reasonably well, maybe 25% plus or 20-25%. Over the next 3 years, we hope to again double our turnover, which we have done in the past also. And that's a track we wish to, plan to follow, to double every 3 years.
I hear you. Just a small follow-up there. So therefore, you've done very well on the revenue front, EBITDA front, profit after tax front as well. You've doubled, but your EPS hasn't, right? Simply because I presume, and this is my presumption, I do not know, but I presume that you've done some share issuances, and as a result of which the earnings per share hasn't done. And you're doing one more share issuance. So is this a business which consistently requires capital? And therefore, would the EPS growth lag the profit or the EBITDA growth over the next 3 years?
Yes. You see, we are doing a very limited dilution right now. It's just 120 crores odd. And a good part of the overall expansion is going to come out of our own funds or through out of debt. You see, we are barely leveraged. We just had 110 crore debt on our books as against more than 700 crore plus of net worth at the end of the previous year. So there is enough space to have debt on our books. It's just that we wanted to, have a more solid footing while going into the expansion and to have some prominent investors on board.
But so the question your minority shareholders might ask, Mr. Agarwal, is that if you have so much space on the gearing ratios, why not utilize a portion of that? Because and therefore, incrementally, are you likely to fund future expansions with debt? And what are the levels that you see them going to, the gearing ratio perhaps, over the course of the next 3 to 5 years?
You see, the gearing ratio, I would say we would be comfortable till, it's roughly 1:2. Beyond that, we'll have to be a bit more careful. But you see, there are various other ways to, fund your working capital, including, tightening your debtors and all. So all of those aspects have to be looked into, and we have to try and become more and more efficient in use of capital over the years.
Leave it at that. Mr. Agarwal, all the best for the quarters ahead and the expansion plans. Thanks for taking the time out.
Thank you so much. Thank you. Bye.
All right. To what is arguably one of the key stocks of the last so many days, if you will, because of what one technical chartist told us as well, the parabolic rise at MTAR. And remember yesterday, after starting off lower, once the management raised the guidance, the stock actually did even better yesterday. And now, today we learned that the company secured a new order as well from an international client. Before we speak with Mr. Parvat Srinivas Reddy, the MD of MTAR, Puneet Johnson to set up the chat for us. Puneet.
Well, 200% return, Meera Justin, this year itself is up 377% in the last 1 year. And as you rightly said, the 2,200 crore just announced today at 9 a.m. Now, they've not given too many details of the client because of confidentiality reasons, but as well as the timeline. So those will be some of the key aspects to start off this conversation. But 67% growth in revenues, profits are also, up 3x at 44 crores for this quarter. Just two key aspects also was that the FY27 guidance has been raised again. So they are now penciling in an 80% growth in FY27 versus a 50% growth earlier. And the second key aspect is that the order book now is expected to be at 5,000 odd crores versus the closing order book of 2,600 odd crores at the end of March 2026. So I think 2,600 crores plus the order which we've gotten today at 2,200 crores. That's the calculation. I think that's the management will also speak about. But those are some of the key numbers. Parabolic, just the right way to describe them.
Yeah, parabolic. Okay. Mr. Reddy, I wonder if he agrees with that description. Managing Director, MTAR Technologies with us. Mr. Reddy, thank you so much for joining us. Let's speak about the latest news coming in, which is this 2,279 crore order that you've got from an international client. What can you add on this? I know you can't maybe disclose all the details of who the client is, etc. But what is the detail or the color that you can add to this?
I won't be able to add much on that, more than what we have said, but it is part of our normal course of business, the way we are growing as such, and whatever we are trying to do. And it's all the effort done over the last few years or number of years that we're able to take this forward in this manner. But I won't be able to disclose much because of the confidentiality agreement that we have.
Fair enough. What is the kind of client concentration that you have now? Because your largest client has a lion's share of your revenue. Is there an attempt to now diversify further? Can you give us some sense of that direction and your thought there?
Yes, absolutely. If you look at, obviously, there has been a remarkable increase in certain areas in our revenues, but also at every vertical that we are working on, whether it's aerospace and defense, nuclear energy, we're looking at oil and gas moving forward as well. So the absolute numbers are going up phenomenally well, and that's a very good sign. And we have been focusing on every vertical as equally as possible in comparison to the clean energy sector that we are working at this point in time.
What has fired for you in Q4? You've had a robust set of numbers. Which of your segments do you think have performed the most? And is Q4, in a sense, indicative of what we will see? The world has really changed between Q4 and Q1 of this financial year. Should investors be looking at your Q4 numbers and seeing it as indicative of sustained performance?
Absolutely, yes. That's what I've said clearly. I've upped the guidance to 80%. If you remember, last year we had a weak first half of the year, but this year we'll have a strong first half and even better second half. So that's a clear indication the way we're moving forward.
Mr. Reddy, good morning. This is Alex here. So I want to stick to or talk to you about that guidance improvement, 80% versus 50% approximately earlier. If you can talk about the mix therein, because you've also guided to EBITDA margins around that 24% mark, if I'm not mistaken. So is it because you anticipate that the mix of projects that you will be taking up will be relatively higher margin?
Absolutely, yes. Not only the relatively higher margin, we have, we're going to execute a lot more nuclear orders in the current year, as well as the operating leverage, which kicks in with the higher volumes as well. We have analyzed this very carefully, and we are pretty confident of achieving the required margins for this year.
Let me ask, so you mentioned nuclear, Mr. Reddy, but there is also for your company an AI data center play. And one of the new orders stands at 35 crore rupees. Of course, the order book is significantly higher. So I'm just wondering, what is the kind of exposure to data center as a business, and where do you see it going perhaps in FY27, FY28?
I mean, that's a very interesting part of the whole story, because it's another customer which we are working with, and that's just the first article you're talking about, which is 35 crores. But over the next 2-3 years, we're looking at more than that, increasing to about 450 to 500 crores. Basically, we're going to supply mainly to the data center infrastructure requirements in terms of the various assemblies that they require for implementation of the data center projects. And that's something which we would love to do. And it's actually moving in the right direction. We already received the order. We're also going to sign a long-term agreement with the customer shortly. And that would take us to the where I've mentioned around 450 to 500 crores for the next couple of years or 3 years.
Okay. So, Mr. Reddy, I presume the exit order run book at the end of FY26 was healthy. You added a new order today and maybe some others in the last few weeks. And you're talking very healthily about the data center business order book as well, I presume. What's the anticipated order flow for FY27? I'm just trying to understand what's the visibility that you would have for execution and growth for how many number of quarters or years?
No, we'll have visibility for a couple of quarters normally, and the orders that are released, or even sometimes even more. But by the end of the year, probably we are looking at almost. I have clearly mentioned that we'll have a closing order book of 5,000 crores, and we are pretty confident on that. And that's also on the kind of conservative front.
Conservative front, 5,000 crores, which is a significant order win considering the execution that you have and the fact that you were at 28 crores of order book at the end of 9 months. The second quick follow-up that I have, Mr. Reddy, is on margins. I know you answered that briefly, but just want to understand at the end of quarter 3, you are maintaining your guidance at about 21%. Now you're talking about a step-up jump, 24% over 21% for FY27 is a big shift on margins. I presume it's because of the mix, but is that the new normal that you would operate at, circa 24%? And do you expect that you could take them even higher over the course of the next 2-3 years?
Absolutely, yes. So if you look at the current year, we're going to have margin improvements quarter-on-quarter basis, the way we are ramping up in each quarter. And then we'll end up with that 24% level. But moving forward, this would be 24% would be the base minimum margins that we are going to work with. And then there will definitely be further improvements over the next 2-3 years that we can look at.
Just one last piece, Mr. Reddy, which is lumpiness, if at all. And I just wonder if FY27, the tendency to look at quarter on quarter is there. But would you warn against doing that and to perhaps look at a longer time frame for your company, or do you think that there's unlikely to be any lumpiness in FY27?
Absolutely, there will not be any lumpiness. The reason I've said is we're going to have a very strong first quarter and even better second quarter, right? So there will not be any lumpiness, and we will do better quarter-on-quarter basis, and based on the kind of order book we have and the execution plan we have on hand.
Got it. All right, Mr. Reddy, thanks so much for taking the time and wish you all the best. Look forward to speaking to you once again.
Thank you so much.
Now, all right, take a look at the markets very quickly. We've come off the high point of the day, but
cooled off quite dramatically, really, the markets have. And this is the typical issue, right, from the last several sessions, that you have a rise and then a whole host of sell calls coming in. Let's get to Jake's N. J. Kumar, MD and Group CEO, Prime Securities, with us this morning. Jake's, always a pleasure to have you on. Are you looking at what's happening in Beijing very closely, or wondering what's going to come next from Delhi in terms of, I don't know, broadly calling it austerity measures? What do you think is the biggest factor to look at right now?
Well, I think the one factor that I'm looking at is the long bond in the US. The 2-year has just about inched up to a new big figure. The 4.4% has been breached on the 10-year. And we have a situation where the 30-year has now gone above 5. As markets feel more and more comfortable at these levels, we have a big risk that refinancing becomes a huge issue and a real issue as far as the US markets are concerned. So to my mind, that's the one point that we need to look at. And every time these levels have been tested in the last 18 months or 12 months or thereabouts, you've had some policy action, some talk of de-escalation, and some almost, 1 to 2 week kind of measure, which cools yields down to 10, 15 basis points lower. To my mind, that's the one thing that we need to look at, because those are, the bond markets in the US are the deepest, most liquid, and almost most independent markets in the world. You can't talk them up, you can't talk them down. They react to what they see on the ground, and I think that's the single biggest important thing to look at.
What is the indication that you're reading from how bond yields are moving, Jakes?
I think they are pushing for de-escalation. They're pushing for some stability in the Middle East. And, whether it's Scott Bessent or it's Trump, I think if there's one thing we can't take away is their absolute riveted focus on the bond yields. And my own assessment is that China may well provide that sort of magic wand, if you will, or a platform or a shoulder on which you can actually talk about a de-escalation. You can talk about some measures which will bring down, whether it's actually opening up the straits, I'm not sure, But yeah, to some extent, they will get opened up. And I think China may well turn out to be that pundit which Pakistan has been unable to perform the role as.
Jakes, good morning, Neeraj here. Is the deck stacked against India for the time being, per se? Because despite the valuation drop off, I mean, and despite the parabolic performance of South Korea, that's the term we're using this morning for a lot of things, it still trades at what, high single digits or very low double digit multiples, and the earnings growth is real in those AI plays as well, right? So crude high, AI not a play. Are we sandwiched in right now in an unfavorable place, and will it take some time for us to move away from there?
You know, if you look at markets from an allocation perspective and a flow perspective, maybe that's true. But what's really happening is that foreigners are only able to sell what they own, which is heavy on financials, heavy on technology, etc. My assessment is slightly different, which is that we are products and animals of the Indian market. And we need to discover spaces here that give us comfort and, in fact, can actually feed off the tailwinds coming from, unintended as they might be, feed off the tailwinds from whatever is happening right now. And we'll talk about a few of those. But I think the real issue here is not so much Korea and others. The allocation money isn't coming in here because foreigners have lost, whether it's on the equity markets or in the currency market or in the bond markets, they've actually been losers everywhere. So from that point of view, it seems like it's like a climaxing of all these multiple negatives, if you will. This can last a little longer, sure it can. But I think it's also true that at 96 rupees to a dollar or 112 rupees to a euro, there are tremendous, only currency related exports sectors that are there. I think good quality engineering exports, we waxed lyrical on pharma, especially generics. But even today, whether it's in terms of textiles and others, the adjustments that take place in terms of the contract terms almost happens instantly. I mean, you just have to go back in time to see that at 60 rupees to a dollar, the margins that they talked about with growth in the IT services, today they're talking about the similar margins and declining, and the businesses got disrupted. So I think as I've always maintained in the last now few quarters, that pharma could well be the next IT in terms of having those characteristics and growth, but without the headwinds of a disruption that IT is witnessing. That's one. Engineering exports, I think PLI schemes, those industries that are looking to manufacture domestically and export could be beneficiaries. I'm not of the camp that necessarily says that because the rupee is weakening, that exports will take off. But sectors that have been exporting consistently, and there are large pharma companies that are doing close to 25,000-30,000 crores of exports and more, are actually significantly benefited by the tailwinds of this. Telecom infrastructure, big beneficiary of this. Yeah. Telecom infrastructure, especially expansion of some of these infra players into other parts of the world like Africa, etc., or whether it's cybersecurity, data centers. Wow. So there are themes that are beneficiaries of this, and so I don't think there is all doom and gloom.
Yeah. I kind of understood that. Jakes, just a disclaimer, the stock of the morning for the wrong reasons, unfortunately, is Keynes Tech because of all that's happened. So the con call is on, so we'll have to cut to it at some point of time while the conversation is on. But having said that, interesting point that you made about pharma, and just want to pick that, right? Not getting disrupted, but you were amongst the earlier identifiers of CDMO, right? And that's done really well. Is that the theme that plays out, or do you believe generic exporters now stand to benefit? The likes of Cipla, Sun Pharma, etc.
I think generics more than a CDMO, because I think a lot of manufacturing is actually now slowly moving into the US markets also, given certain incentives, etc. This may come back to haunt or pare down some of the CDMO businesses, especially over the next 2 to 3 years. So I think generics is the way forward. It's also price competitive. It's also being able to, supply medicines at an affordable price to the countries that are importing. So given that, that's of course a theme we've played out. Its weightage is still low. It's underinvested, etc. So given all that, I think we are in a situation where we could see a scenario where the weightages for some of these companies will continue to grow, and we could have a scenario of this being an unexpectedly big beneficiary. But the unfortunate thing of what has happened is oil has got reset to an 8,500 scenario rather than 65 to 80. Interest rates in India have moved up. Exchange rates have moved up significantly, against the Indian rupee. So some of these are structural changes that have happened, which I think sectors like I talked about could benefit hugely from. So, we need to be sector specific, maybe even company specific, far more than we've ever been. This is not a market where you can say that allocations will increase and MSCI flows or others will come through. I think we may still be a few quarters away from that.
Okay, and that's exactly what I want to ask you about, Jakes. Alex here, morning. From what you've described, it's not all gloom and doom, and there are pockets of relative strength that you can pick. But let's face it, there are macro challenges at this juncture that could potentially get worse. And ultimately, for a large part of the last 1 year, one of the major challenges we faced as a market is a sentiment against the up move, right? To say that it's not justified more than anything else. And so therefore, if the view on the India market as a collective remains negative for the next 3 quarters because of macros worsening, even those pockets that you've identified that could potentially benefit on the earnings front may not actually see a significant up move. Should you be prepared for that?
I mean, it's a generic question, and pardon the pun here, but my feeling is that some of these macro factors are way outside the pay grade of anyone to predict or have any control over. So I think no point getting into that. I think we are seeing the macro worsening already playing out in terms of the currency, in terms of interest rates, in terms of the FIO being at 2-decade lows, etc. So it could play out a little longer. Nobody can call a bottom in that sense. But I think local liquidity...
Jakes, I must apologize, but we want to cut to the Keynes con call, because that is the stock of the morning. We need to hear what the management's saying. Let's just go across and listen to that.
Players. We respect those expectations. We are conscious that when a company scales at the pace we have scaled, execution has to mature equally fast. That journey of institutional strengthening is underway, and we remain fully committed to improving consistency, predictability, and delivery against the confidence placed in us. There has been some top management restructuring and role realignment in this phase. Such transactions naturally take some time to settle, particularly in an organization that is expanding across multiple technologies, manufacturing, and strategic platform simultaneously. However, these changes are intended to sharpen accountability, deepen execution ownership, and build a resilient operating architecture for the next phase of scale. The organization is adapting quickly, and the leadership team is fully aligned to match with the market expectations. In core EMS as well, our diversification strategy continues to hold strong. As discussed in the earnings call, growth is increasingly broad-based across automotive, EV, industrial, aerospace, and railway-related segments, with lower dependence on any single business line. This diversified vertical mix gives us confidence that near-term volatility is one area will not define the long-term trajectory of the company. I am pleased by the trajectory of our 2 new growth engines in OSAT. Unit 1 is fully operational, and Unit 2 is in commercialization by Q2 26. These business strengthens Keynes further by deepening backward integration, adding technology depth, and expanding our presence in high-value manufacturing. In OSAT, the order outlook for both the current year and the medium term remains strong, with revenue visibility of over INR 25,000 million over the next 5 years.
So that's the management of Kaynes Tech. The stock is down about 17.4% at the low point of the day. Jakes, you were making a point and we had to cut you off. Please do complete that point.
No, I was just saying that one of the fallouts of this has been, at least for the medium term, a near structural re-rating in 2 or 3 levels. So where crude used to trade in the 65 to 80 range, it's now moved into the 8,500 as being the sort of range at which, especially if you build in some discounts, etc., that you can get. Number 2 is interest rates, which should have been logically tending towards the 6s, is now comfortably above 7%, the 10-year treasury in India. And the currency is now, instead of being in the mid-80s, and in fact more, should have appreciated with a weakening dollar overseas, we've actually depreciated against every currency in the world. So there's been near structural de-rating of some of these aspects. Having said that, one of the things that's happened is that the banking system now has got tremendous amount of capital that's walked in. Banking, when I say that, I mean banking and NBFC put together. You know, the spate of deals announced aggregate almost $8 to $10 billion of equity capital. And if that were to get leveraged, even 4 to 5 times between the NBFC and the banks, which is closer to 8 to 9 times, you're talking about nearly $60-65 billion of fresh lending that can take place over the next 18 months, which means credit availability could be dramatically higher. It's unfortunate that the credit availability is happening in a scenario where interest rates have moved up. It's also happening at a time when actually foreign capital through the FDI route has walked into these spaces. Most of this is international PE firms, banks, strategic investors, etc. So there is that disconnect that maybe we can take some solace from the fact that the same oil price shock, if it had happened 5-7 years ago, the disruption or the impact on the GDP could have been higher. But because of our dependence on solar or wind or cleaner forms of energy, we've actually reduced that impact on GDP. So now credit availability is there in the system. If interest rates were to even hold at these levels or come down, I think reinvestment, which is what even the Prime Minister talked about and some of the industry leaders have, reinvestment or investment thesis itself should actually take off. So I am firmly of the opinion that what has happened may be more than just a hiccup. It's actually a bit of a structural negative that's crept in. But it's also happened at a time when equity capital on the FDI side has walked into the banking and financial services space, which is not a bad thing from an investment point of view. I think a lot more PLI schemes, balance sheets, for instance, of corporates are far, far better.
Sure.
So there are positives here.
Yeah.
So we'll need to play this out and go sectorally from a stock picker's perspective.
Okay, speaking, and you were referring to the banking and financial services space. So let me ask you this. You were talking about interest rates. There's now one view that you could see interest rates go up by as much as 50 basis points in the next cycle, starting from December. Not very soon, but implications for the BFSI, and you're talking about earnings that could actually have an improvement on the NIM at least.
I would say that interest rates actually, in a sense, get front-loaded. So movements that you see overseas in India are a function of not so much a demand or supply of money in the short run as much as sentiment. And people move quickly into these markets which are deep and liquid. So can interest rates move up another 50 basis points? Sure, a lot of things can happen. I am actually in the camp that 7, 710, 715 may be well the top end of the range for now. And were resolutions to happen in the Middle East, we could actually have the interest rates. In fact, logically, they should come down to the 6.75, 6.8 range. So, in fact, I am of the camp that we may be at the top end of the interest rates, at least in India. And given refinancing, $37 trillion of debt in the US, I would be of the opinion that they can ill afford any kind of escalation in yields there. And this would now have to be done in terms of hard policy and hard, whether political steps or in terms of economic steps. You can't just talk down interest rates. So, whether Wash comes in and tries to just cut interest rates, which I don't think will be immediately doable. But ultimately, steps have to be taken to de-escalate the Middle East for interest rates to come off. Otherwise, you could be talking about a near permanent, at least for the next 3 to 4 quarters, hike in interest rate levels, which could dramatically impact everything, including the AI mania that's going on. So please understand that many of the Max 7 companies and some of the new companies, the infrastructure space there, are now beginning to borrow. Not beginning to, they've been borrowing for a while now. Borrowing costs have gone up. In their bid to announce orders, they are dramatically expanding their access to the debt markets. And if interest rates go up there, I don't think some of these borrowings will be tenable. So right now, the markets are only reacting to order wins and order giving. And some of this could also be circular, as multiple erudite WhatsApp forwards have indicated, that some of these could be A, giving orders to B to C, and C coming back to A.
Yeah.
So keep that apart. So I think we may be at a beyond a mania level there. Valuations will drop off. But in India, which now it's probably fashionable to say that we've not been part of the AI move and therefore, we've not attracted capital. That's not true. People, I think a lot of activity in the private space in terms of FDI is happening. Situation is not as bad as it's been made out. But of course, the warning and the cautionary note, which has been struck by everybody, especially and including the Prime Minister, indicates that if we tighten our belt, we, in a sense, go back to the old Indian habit, the old Indian, pardon the sexism here, the housewife habit or the housemaker habit of saving in difficult times. And I think that housemaker approach may well be the way forward, both in terms of portfolio construction and otherwise. It doesn't mean you put all the money and put it under your bedside when you go to sleep. It just means you're a little more careful about where you spend.
Yeah.
And I think there's nothing wrong with that in my opinion.
There isn't. Absolutely, Jakes. As always, a pleasure speaking with you. Some sound advice there. Thanks so much for taking the time.
Thank you.
All right, you might have seen some of those visuals of the Foreign Minister or External Affairs Minister Jaishankar, and he's actually meeting with key leaders. Among them, you had the Foreign Minister of Iran, Araghchi, that was in frame out there. And this is, of course, at the BRICS meeting. We'll get you more details as they emerge. We have to slip into a very quick break. We'll be back on the other side with more, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us. Welcome back. You're watching India Market Open, and you've seen a bit of a sell-off from the top. We're hovering very close to that 0.4% higher mark for the Nifty 50. 23,500 is what you're flitting with at this juncture. And the broader markets have actually lost ground and then come back just a tad bit. So the small cap index trading with cuts, the mid cap index coming back to the green, up about 0.2%. Let's zoom in on Sharda Cropchem. On the back of its earnings, it was a strong set of numbers, volume-led growth and sharp margin expansion as well. We're going to speak to the management about the outlook going forward and whether the trajectory in Q4 can be sustained in the new financial year. But before that, let's set the context with Varsha. Varsha, what are you picking up from the numbers?
Well, overall a strong set of numbers which was driven by, volume, and we have seen the EBITDA margin expansion as well, also as guided by the management in the last con call. Better product mix and cost control has led to this expansion in margins. Well, West Asia crisis, is one of the key highlighting away, because that's the impact that we want to see how this is going to impact Sharda, because higher freight and supply disruption can impact margins and deliveries. Well, onto the adverse weather impacts from output is also one of the key aspects that one should also watch out, which may lead to weak agri demand and lower agrochemical volumes. Onto the cabinet MSP, where the higher minimum support price has been set to support farmers' income, which will boost crop protection demand and is also positive for agrochemical companies like Sharda. So overall, a lot of triggers, yes, working for the company. We need to see how FY27 will look like. Will it be a volume-driven growth or a pricing-driven growth?
It's actually a very good question to start with. We've got Mr. R.V. Bubna, who is the Managing Director of Sharda Cropchem, joining in. Sir, thanks so much for taking the time and for speaking to NDTV Profit. Let me start with that question. It's been a good Q4, but everyone's worried about FY27 because there are so many headwinds coming through. How much of the growth is going to come from price, and how much of it is going to come from the product mix shift?
Better growth will come from the product mix shift, and also partly because of the price.
Okay, that's what panned out in the fourth quarter. Can you explain in FY27, just give us a sense whether this is going to accelerate, and what are the kind of numbers you anticipate on account of this?
Sir, I would hesitate to use the word accelerate. I would say it will grow.
Okay, so if you say, so how much, okay, say if you say that pricing is something that is sustainable, you have the MSP that has been announced, right? Are you worried at all about the fact that this is a year that is going to have a massive El Nino effect? There could be a headwind with regard to domestic demand. Is that something that worries you at all?
Sir, it does not worry me at all.
It does not
because we are selling our products to about 70 to 75 countries around the globe. This El Nino may affect few countries, but that will not affect our total business.
Yeah, I saw that. In the fourth quarter as well, you have pretty strong numbers coming through from Europe. Your revenue was up 20%. The contribution now increasing to as much as 70%. You have rest of the world revenue that was also up 77%. So that's quite considerable. Fair point, Mr. Bubna. I wonder about margins. You've had pretty strong margin growth as well. How sustainable is this 23 to 24% margin mark? Is this the peak or the new normal?
It is sustainable.
And what are
I won't say it is a peak. I would say it will become normal, but nobody can predict about the future more accurately.
That's fair. So freight costs, etc. You're talking about the West Asia crisis, Mr. Bubna. It's affecting a lot of entities that have business in countries around the world, and you pointed out 70 plus countries, right? So what is the kind of impact that you're seeing on freight?
Not much. I would say almost negligible. Because freight constitutes a very small percentage of our total costs and prices.
What is the percentage of...
It's very easy to pass it on to the customers because they are fully aware what is happening around.
Understood. So just for our understanding, can you tell us what the percentage of impact has been, and you've been able to pass it on already? Have you done so in price increases to your export customers?
Sir, we do it every day.
Okay.
I won't say that. This is a very normal process for us. And I want to tell you one more thing. Our products are not freely tradable products. They have to be registered, and we have limited competition, and our customers are fully aware of it. They have to source the products only from registered sources, and registered sources are limited.
Okay. Absolutely, Mr. Bubna. So things are looking up in FY27. You say that the margins can be sustained and the business looks good. Thanks so much for taking the time and wish you all the best in FY27.
Thank you so much, sir. We need your blessings and good wishes.
Absolutely, sir. Let's go back to the earnings con call of Kaynes Technologies, the stock under pressure today. Let's listen in.
Yeah. See, what happened is while we have got the indication from an LOI from the customer, we started ordering the material. And in fact, if you ask us, we have started even the pre-manufacturing activities of this, which gave us the confidence that yes, we will be able to deliver. If you see, more than 50% of the manufacturing of those activities also has been on the pipeline. As I said, it is not a denied order, it is a delayed order. We sincerely apologize for that this has happened. But I'm sure that you'll all trust with me that it is beyond our control. And going forward, we will take this input in terms of committing for the future numbers. We are committing for our growth based on what market can pull in. And one of the reasons that you will see that going forward, we will be better is, like when our executive vice chairman said, our dependency on every vertical, we are bringing it down. So we are taking into many other verticals so that the impact on one business will not have an overall impact, but we will definitely keep this in mind and make sure that in future we will be better prepared for mitigating these risks.
Fair enough, your answer. Sir, yeah, please.
Our type of business, we also depend on customer inspection, accepting it. I hope you all appreciate that.
Sure. Sir, which is a fair enough point for the P&L side of you. But sir, OCF 600 crores of negative, I think that is a bigger disappointment, especially when you kind of guide that you will be just about a neutral or slightly negative, sir. So you would have known that, and sir, why have we not been able to turn that around, sir?
Okay, I think it's a fair question. The operational cash flow, I think there was a little misunderstanding. I was also in the call during that time. The two cash flow that we were talking as a standalone EMS business, I wanted to bring it to all your notice that as a standalone EMS business, our cash flow was 250 crore positive when compared to 65 crores last year. However, as a consolidation entry, 65% of our revenue today comes from EMS business where we are cash flow positive. The metering business, which is a specific model, this is the first full year we have taken and we are getting matured into this business. One of the things that happens is, this business model is a strategic acquisition for Kaynes in order to make ourselves getting matured towards a product-based company rather than an EMS assembly company. I just want to bring it to all your notice that prior to acquiring metering company, we have been supplying them the EMS business. So the entire revenue is not new to us. At most 50% of the revenue as an EMS business we have been supplying there. But this is a unique acquisition where it is not only making the meter, but also installing the meter and also maintaining the operation maintenance of providing the software. We are the only company which has got a unique combination of all the three, and that's the reason for why Kaynes has committed and moved into this acquisition, which has definitely brought back the good amount of insights on product development, as converting ourselves, Kaynes, into a product company and putting us maturing into launching no more new products in that segment, like whether it be a water meter or gas meter, we are on the pipeline. Having said that, we should have anticipated this well. There were a lot of government delays and the payment comes based on the inflation. With various activities of the various state governments releasing the tender for supplying the meter, installing the meter, going to those houses and installing, there was a little delay. I would request you all to appreciate that as a standalone Kaynes EMS business, our net working capital has come from 64 days to 54 days. However, the total number has gone up because of this. 65% of our revenue comes from EMS business, where our receivables is only 35%, whereas 25% of the business comes from EMS, where the receivables is 67%. We have worked out a strategy as a management team on how to mitigate this. We've been working with various organizations to see that how this business model can be mitigated. Rest assured, ladies and gentlemen, we'll be able to bring it back at least to a level of a reduction. I think the inflex point has stopped and we'll come into the reduction, and we will come back in 3 quarters with the positive results on specific this entity. But on EMS business, we have demonstrated our ability of how to bring back the net days. by both working on supplier side and also on the customer side and brought it back. The numbers are available in the list. I think you can see from our opening receivables of about 399 crores in the EMS business. By end of the year, 379 crores, but the end of the year we have come to 399 crores. Even though we've grown the EMS business at 30%, our outstanding or receivables have gone up only by 20 crores, which clearly shows how we could be able to manage this business efficiently. Ladies and gentlemen, trust us, in the years to come, we will manage the metering business and demonstrate our ability to manage the product development, which is going to be a strategic shift in the Keynes organization from moving an EMS provider to a product provider.
Okay, so certain messages being sent out to the analyst community asking to look at the next 3 quarters and the trajectory on certain business lines, EMS in particular, but the stock is still pretty much at the low point of the day. That brings us to the end of this edition of India Market Open, but I'm sure that you've got questions on individual stocks and you can ask them on the show that is up next. That's called Ask Profit, and stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards, honoring excellence, coming soon.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India.
Welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me today is Soumya Sarkar, and we also have Kush Bora in the studio today for solving all your tech queries. Kush, thanks so much for joining in. We are also being joined very shortly by a fundamental guest, Mr. Chokalingam, who will be giving us all your views as well. And here he is, the man himself, giving us his stock-related queries today. But when you look at the markets before we start taking all your stock-related queries, it's been kind of like a decent run today, almost 100 points on the Nifty 50. Been sluggish. 23,300 continues to be a stubborn level that we continue to monitor at this point of time. But overall, broader market led by earnings is also the other key factor to watch. Now, we've seen in terms of the heat map for the Nifty 50 that one of the key stocks today was Cipla. The numbers were weak yesterday, as expected, came during market hours. But when you look at the heat map, that'll give you that perspective for the other gainers as well. So you've seen that Cipla continues to be one of the biggest gainers for today. You've also seen that apart from that, of course, the commentary driving in for Cipla, but the Adani group of stocks continue to be the other top gainers for the Nifty 50. While we've seen tech yet again bearing the brunt of the bottom. So you've seen HCL Tech, you've also seen Infosys and TCS being some of the key losers in today's trade, while Eicher as well as Maruti, those are a couple of stocks are also down in trade today, but seeing a green skin largely positive at this point of time. Sectorial heat map also gives you that perspective where you've seen yesterday as well that the Nifty Metal continues to be the other one that's rallying almost, and the top gainer for today, up 1.6%. While the IT is down almost 2% now. Nifty Realty also down in trade, while we are seeing some positive move on healthcare and the pharma sector. The advance decline ratio, though, this one has been a very choppy one since the trading session started. You've seen that in terms of the advances, up almost 1200 at this point of time, but the declines have now, so you've seen a crisscross pattern coming in there. And the same visible on the BSE 500 as well. Some movers that are doing well in trade today, some have been led by earnings. Keynes Tech continues to be one, which is a big casualty right now, down 15%. Balaji Amines, on the other hand, is up 20% at this point of time. NLC India up 15%, while Alkyl Amines is the other player, up 12.3%. So Balaji Amines, led by earnings, is doing well and taking along its peer with it as well. But let's go across and start taking your stock-related queries, and it's the first one from Prashant, and this is pertinent right now. His question is on Dixon Tech as well as Keynes Tech. If it's a good time to hold for the next 2 to 3 years, and Kush, I'll come to you as well for a view. But Mr. Chokalingam, weak set of earnings for Keynes yesterday. Dixon also wasn't the greatest, but you saw the commentary. Potential Vivo JV also, those comments I think drove the markets. What's your view on both these stocks now? How are you viewing this space?
Yeah, this is a problem with these kind of fundamentally sound but strong momentum stocks. When any negative development happens, they crash. So that's why I stay away. But then that is also not a perfect approach, because these other stocks sometimes create wealth also. Now, coming specific to Keynes, I looked at the number. Operating profit growth is only 15% year on year, despite sales growing at 26%. So there is a pressure on the margin. So my only point is that should we want to pay more than 50 PE when the profit is growing only at 15%? And so therefore I see some more room for correction in Keynes. Similar is a view for Dixon. It may not fall badly, but it might take more than a year to give a meaningful reward from current level. For both, the only one concern is that the L&T giant is getting into EMS business. I think once they enter, it's going to be very tough for other players, considering the balance sheet size and experience of L&T and the success rate of the new business they launched in the recent times.
Got that view, Mr. Chokalingam. So, Kush, most certainly on the fundamentals wasn't the strongest. So what's on the view on the tech on the charts right now?
First of all, very good morning, guys, to Mr. Chokalingam and viewers as well. There's a long-term double top formation on gains. That's been a problem. It's given up those gains massively from 8,000, 1,700 odd levels. The neckline support for that actually came at about 3,800. That's also been broken. Immediate support at 3,300, but with the kind of ferocity with which it is falling, I won't be surprised if that is also taken out. And to 2,800, that's the level to watch for on the downside. Dixon, on the other hand, is consolidating, awaiting a breakout, but if you have to pick between the two, obviously Dixon makes the cut, but here too, because of the missing momentum, I wouldn't really buy into it right now.
But you said 2,800 on the lower side for Keynes, and that's a near term that you could see that stock going there as well?
Absolutely. See, because 3,300 was the recent lows that it tried to...
and then it bounced back.
It rebounded, right? Correct. But this is the third, in fact, the fourth attempt at holding on to that level. Now with the kind of news flow coming in, the volumes on the downside and market being what it is, market is not going to reward. Any kind of such news or such actions. So I think 3,300 breach is quite likely.
Yeah, got it most certainly. Well, it's a difficult one to imagine as well for Keynes Technology. Stock was at almost 7,000 just a year ago. 2,800 could be one to watch out for. But let's go across and take our first caller for today. This one's coming from Gurugram, and Manav has a stock query for us. Manav, very good morning. Welcome to Ask Profit. What's your query?
Hi, good morning to everyone. So today I have a query on DLF.
Okay.
So I've been holding these 50 odd shares for a little more than a year now at an average price of 730. So yesterday or day before the earnings were out, and the revenue was also down by more than 40%, and the profit was also like nearly flat on the flattish line. So would it be advisable to to hold on for another 2 years or maybe more than that period? I have no issues in holding on, or should I book losses and move to something else?
Got it. Mana, very pertinent question as well. Mr. Chokalingam, what's your view on DLF? Because as he rightly mentioned, has been sluggish, and but in terms of collection and pre-sale, it's the only one, right, which matches both of them. But what's your view on the stock now, and should he buy? Given that it's at he bought it at 730, so is it a good time to average?
I also looked at Q4 results. It's a little disappointing, but one fact is that sometimes a DLF results, have a wide volatility on a quarterly basis. So that should not be taken as a guiding force for its medium to long term growth. Because if you look at last 3-4 years on an annual basis, it has reasonably done very well, and stock price also corrected a lot. So I am afraid that it may not give a very attractive return next 6 months or even 1 year, but beyond 1 year it can definitely give, because it's sitting on a lot of land. Through subsidiary, it has got a leasing business model, which is a play on inflation. As inflation rate remains positive, the leasing rental income will also keep growing. So I find it quite attractive for medium to long term, but not expect much return within a year's time.
Got it. Well, that's the view on DLF. It's down almost 20% in the last 1 year. So it comes at a very interesting juncture, this question as well. But Rohini from Bangalore has the next question on SBI. Now she's holding shares at 1,043. And Kush, of course, sitting in losses right now and asking a 6 to 12 month view, but she's asking a chartistic view. What should she expect?
Yeah, so you can hold on to this one. The stock's actually, yes, given up some gains, but if you see the last 4 sessions, that 975 support zone that we spoke of happens to be a technical support level, also the 200-day moving average. Also on the morning show, we've spoken about this a couple of times. So here it's consolidating, and probably a lot of corrections already done. So could remain under some pressure, but with a 6 to 12 month kind of a horizon, I think you should continue holding on. Stop loss on this one, 935.
Right, an important flash coming in. In fact, Siemens' parent company yesterday reported their numbers, and in the conference call, the management has clearly said that they're looking India growth at around 21% for the March ended quarter. Now, do remember that the street estimates for Siemens for the March ended quarter estimated a growth of just 6%. So quite a strong growth is what the parent company has reported for the India business. Mr. Chokalingam, any view on Siemens India, or would you want to stay away from it given the fact that the valuations are quite on the expensive side?
But definitely valuations are expensive, but unfortunately or fortunately, it always remains as a very costly stock. Rarely the valuations swing badly. So with a small correction now, I would say that it is better to hold for a medium to long term, because the Indian stock market also now focusing more on power and other infra valuing better as compared to the traditional sectors like IT, FMCG, etc. So I would give a hold recommendation for medium to long term on Siemens.
Right. The next is a caller query coming in from Hyderabad. Anjali, you can go ahead and ask your query.
Hi, sir. Good afternoon to all of you. Actually, I'm having a Oracle Financial Services holding 110 shares at the price of average 8,200. So shall I add further, and what is the support and resistance and long-term and short-term view on this? I wanted to check with Kushbura, sir. Actually, all the analysts are good, but I have been waiting from last week. I missed my call. So please, ask Kushbura, sir.
Okay. Kush, any view on Oracle?
That is so sweet of her. Anjali, thank you so much, for those lovely words, for those kind words. And I'm so sorry that you had to wait for one entire week for this query to be answered. But that's really sweet of you. For now, I think you should continue holding on to OFSs. In fact, in the entire space, this is a standout stock. Yes, I know you're probably hurting because you saw those 10,000 odd levels on that stock, 9,900, and now it's slipped quite drastically. But if you see, the fall has been on very thin volumes. So I won't be surprised, once this fall stabilizes, the stock starts to move up again. So my suggestion, don't look to average, as you would have probably guessed, I will perhaps be saying. But hold on to this, keep a tight stop loss at 8,450. That's the level. Even if the stock goes to those levels, you'll still be making profits because that is above your buying price, right? But on the way up, the stock has a good potential to go to 9,300 and 9,600 levels once again. So my suggestion, hold on to this, don't average, keep a stop loss at 8,450.
Got that view, question. Definitely one of the most, active stocks at this point in time in investors' portfolio as well. We've been getting so many queries on this one. Has given decent returns for investors who've held on to it for some time. The next one coming from Vijay from Chennai, Mr. Chokalingam, he wants to know between HDFC and SBI for the next 1 year, which is a better pick, or would you suggest that either of those can be invested in equal proportion? What's your view?
Right now, post results between HDFC and SBI, I think SBI can give better return in 1 year because SBI is growing its credit much faster than HDFC Bank, and post correction it's also available at attractive valuation of 1.7 times as compared to HDFC, which is more than around 2 times. So in the short to medium term, SBI will do better, but for a very long term, HDFC Bank will do better.
Got it. Well, that's the view from Mr. Chokalingam. The next question coming in now, it's on BEL. Kush, our viewer wants to buy into these shares at 415 odd levels, and what would you recommend? Is it a good time to add?
Already bought it or wants to buy?
Wants to buy.
Oh, not a bad idea. 415, very good levels. I'm sure they're very good with their analysis on this one. Multiple technical factors emerging at that point. So kudos to you on that. 415 is a good level. Only hitch there is that the momentum is missing. If you have seen in the recent past, the stock has actually not crossed those 455, 460 levels meaningfully, seen rejection from there. But if you're playing for those kind of returns and those kind of levels, then 415 is your ideal level. I would, however, suggest a stop loss on the way down at about 390, 395 odd levels. So the risk reward ratio becomes attractive. Immediate targets would be on the upside 445 and then about 465. So yes, when you buy at 415, the stop loss at 390, 395 zones, risk reward ratio becomes attractive, but you might want to exit at those levels because it's been taken some time or rather some effort to cross those levels.
The next query is coming in from Raj from Bangalore, and it's on Tata Motors commercial vehicle. The company reported its numbers yesterday. They were a bit cautious on the outlook. Now, Raj has around 550 shares at a price of 410. What's your technical view on this, Kush?
I'm going to have to suggest an exit on this. The stock had run up quite a bit. It is seeing selling pressure. Yes, it has seen some recovery on an intraday basis, and it's not too far away from your buying price. So I'm assuming that the loss is not very deep, but the selling pressure continues unabated. And even now, after having fallen so much, the volumes on the way down are still relatively high. So my suggestion would be exit right now. Maybe you can consider again at lower levels.
Got that view, Kush. The next question is from Mohit, and it's an interesting one. He's asking if what are some of the correct time to invest into the energy, power and the coal space for the next 2 years. Mr. Chokalingam, what would be your pick?
Coal space, yes, Coal India, if somebody wants to invest for beyond 1 year, because a phenomenal amount of money being spent on expanding the coal capacity and also renewable energy capacity and also getting into coal gasification projects. And not only that, it's getting into critical minerals as well. And also the management has proposed to list another 1 or 2 companies in the current fiscal that will enable Coal India to maintain, good dividend yield also. So short term, there is a concern. Q1 results may not be good because of recent cost hike and management commitment not to pass on fully to the consumers. But if somebody wants to wait beyond 6 months, this is the one good stock. Power stocks, most of the power stock, energy stocks have rallied. One can wait. On declines, one can consider Tata Power.
Okay. The next query is coming in from Gautam. He has 10,000 shares of Jio Finance, bought at a price of 300 rupees, currently sitting on a loss of around 20%. Kush, should he continue to hold this counter or sell?
Is there a time horizon that he's mentioned?
12 to 18 months.
Yeah, then you can continue to hold because yes, the near to the medium term structure on this one is a little iffy. The stock has seen selling pressure, below the 20 and the 50-day moving averages. So all of those things not really working for it and, substantially low from his buying price. But given the kind of time frame that he has, there's a good chance that the stock could again find support at those 205 to 215 zones and, attempt a rebound. So with that kind of a time horizon, I would suggest a hold, tight stop loss at 205.
Got that view, Kush. But the next one coming in on Tata Steel, and the metal pack has been flying in trade over the last few weeks. Now, Bala Subramaniam actually bought into the shares at 156 and he's holding on to 70 shares of them. Mr. Chokalingam, he's mentioning that he's a long-term investor, but asking if it's a good time to book profits or continue to hold. What would be your opinion?
I believe it is a good time to book profit as it starts improving further from current level. The steel company quoting around 22 trailing PE is slightly stretched. And secondly, the rupee depreciation and war conflict in West Asia all contributed for steel and metal stocks to rise. But I think this is going to be temporary. I am very still optimistic. I believe within a couple of months, a conflict would end. Otherwise, the global economy will fall very badly. And therefore, when such thing happens, all this metal and steel will correct substantially. So therefore, my research view is sell on further rise.
Next query is coming in from Bindu from Hyderabad and it's on Sansera Engineering. She's holding 50 shares, bought at a price of 2,415. Should she hold more? Should she continue to hold, add more or sell? What's your long-term view on this, Mr. Chokalingam?
Long-term view is good, but I'm not comfortable with the kind of valuation of 53 PE on a trailing basis. So probably if it corrects at least 10%, then only I would consider Sansera Engineering.
Got that view, Mr. Chokalingam. The next one coming in from Anwar from Andhra Pradesh. He's bought 500 shares of Lenskart, Mr. Chokalingam, at 539. Asking if he can add more at the current range. I mean, it's not cheap in that sense, Mr. Chokalingam, and really you need to wipe your glasses essentially to look at that kind of valuations over the next couple of years, 3 years. Is this a business that you like? What's your view?
I can't like such company. That is my problem. So the investor should seek somebody else's review because hundreds of PE I normally don't touch.
Kush, you have a view because I know it's a very recent listing, but one of those investor favorite counters in that sense.
Yeah, I like your wordplay, by the way, on that. Very smart one and unexpected at that. You rightly said limited data, but from whatever data is available, 480 was a level it was trying to defend. Given that up, near-term trend has turned a little bearish. I wouldn't really stay invested in this for a long time. So I would perhaps book profits right now. Maybe at lower levels you can consider, but for now the trend seems a little bearish.
Okay. The next query is coming in from... he hasn't mentioned his name. It's Shrikant from Bangalore and it's for you, Kush. He wants a short-term view on Sirma SGS. He can invest up to around 4 lakh rupees in this counter. Should he do that?
Thank you, Shrikant, for that query. If you heard me on the morning show, I said from this entire pack, Sirma being the standout performer that it has been, remains on the list for buying. My only hitch here is that for the last 2 days, it's been falling. Today is the third day, and right now, as we speak, it is at day's low, which indicates that the selling may not be over. although the volumes on the way down are now starting to reduce, so they could be abating, but the price action is not suggesting such. So I would suggest wait up on this. Definitely the stock to keep on your radar, maybe around the 945, 950 zones. If it comes to those levels and halts, becomes a good buy. In that case, keep your stop losses at about 915.
Got that view, Kush. But let's go across and start the rapid fire round in this edition of Ask Profit. Viewers as well as Kush and Mr. Chockalingam, you know the drill. The first question, is it a right time to accumulate Texmaco Rail for the next 1 year is what Sanjay is asking. Mr. Chockalingam, would you recommend that?
Yeah, one can consider buy.
Padma from Bangalore is holding 152 shares of KFintech, bought at a price of 927, currently sitting on a loss. Should she continue to hold this counter for the next 2 years, Mr. Chockalingam?
Yeah, hold.
The next question coming in now, it's from Satish on MobiKwik. He's bought into this Kush at 229. But he's holding 5,000 shares and asking a short-term view.
Continue to hold. 180 is a strong support zone. If that is broken, you want to exit.
The next query is for you, Mr. Chockalingam. It's from Ramanna from Bangalore. He wants to know whether is it a good time to enter Voltam Transformers for the next 1 year.
Yes, one can buy after a steep crash in the stock price.
Britannia bought at 5,350 and asking what's a good target price here, Kush?
A good buy price. I think you can hold on to this one. Prices would be 5,500 and about 5,650. But more importantly, a stop loss at 5,250.
Venkat Raman from Bangalore. The next query is for you, Kush. 500 shares is holding of SAIL and Tata Steel, currently sitting on a profit. Should he continue to hold or exit?
My suggestion, book partial profits on both of them and keep trailing stop losses about 3 to 5% lower from here, both of them.
Pramit from Pune is holding on to Infosys at 1353, question asking if it's a good time to buy the dip.
No.
The next query is from Surya Prakash from Visakhapatnam. He wants to know whether should he enter Tata Capital at current levels. Mr. Chockalingam, any view?
If somebody wants to hold for 1 to 3 years, yes, it's a great buy.
MCX Kush, is it a good buy for the next 2 to 3 months is what Viswa is asking.
Overheated. If you get it around 3,000, 3,050 odd levels, then yes.
The next query is for you, Mr. Chockalingam, on Balaji Amines. Rajesh Maheshwari from Indore is holding 85 shares at an average price of 2,485. He wants to know whether should he continue to hold this counter or exit.
I'm sorry, I have not analyzed the stock recent time.
Okay. The next one's on Vesuvius, bought at 522, Kush. Our viewer AK Bhalla asking a short-term view.
Sorry, what's the price? 582. 522. It's consolidating and right now in the middle of the range. I would suggest a hold, but a tight stop loss at 440.
The next query is for you, Mr. Chockalingam. Soumya from Bangalore is holding 30 shares of Kalyan Jewellers, bought at a price of 416 rupees. Currently sitting on a loss. Should she hold, sell or average?
One can hold. I mean, these stocks will come back after a year or so.
Ramesh wants to know a technical view, question on Spark, Sun Pharma Advanced Research Company, is bought at 181. But would you advise to play into this counter?
You can hold because the risk reward ratio is extremely favorable. Needs to take out some key levels, but I would suggest a stop loss at 155.
The next query is for you, Mr. Chockalingam. It's on Zaggle Prepaid. Giridhar from Bangalore is holding 168 shares at an average price of 270. Should he hold or sell?
Hold.
Last query for the rapid fire on Motherson Sumi Wiring. Mr. Chockalingam, our viewers bought it at 44. And Ramesh is asking if he should buy more now at 39. It's not a cheap stock. What would you recommend?
If somebody wants to hold for 1 to 3 years, then one can buy. Otherwise, leave it.
Got it. Well, that is the end of the rapid fire in this edition of Ask Profit. But a lot more stock-related queries on the other side after this very short break. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit, Business Leadership Awards. Honoring Excellence, coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets.
LIC Housing Finance is in focus on the back of Q4 numbers. Mr. Tribhuwan Adhikari, MD and CEO at LIC Housing Finance, joins in. Mr. Adhikari, welcome to the show. Always a pleasure to speak to you. This is Hiral on the side. My first question coming to you is, let's talk about the net interest margins, a 2.8% number in the fourth quarter. Sequentially, there is growth, but compression on a year-on-year basis. What's the outlook then looking like in terms of FY27?
Well, it's going to be a difficult to predict, actually, honestly, here at the moment now, with the West Asia crisis on, the economy under stress. You never know how these things are going to play out. Right now, what we are witnessing is an elevated cost of borrowing when compared to Feb and March. So honestly, going forward, we will have to see how the geopolitical and the economic scenario plays out, and then probably give you a fair idea. Yeah, for the quarter, I think I would hazard a guess and say that the margins would be between 2.6 to 2.7 for the quarter. We would try to retain it where they are. 2.68 is where we ended for the year, or 2.8 is for the quarter only. So 2.6 to 2.7 is the guidance I'd like to give you for the quarter. And then when we meet again in July, let's see what the situation, the West Asia situation and the overall economic situation stands at, and then probably give you a guidance for the entire financial year.
Okay, so that's with regards to where net interest margins go, and it's fair to actually understand that yes, there is impact of the West Asia crisis, and that's what industries are grappling with to ascertain what the impact could be. The other concerning area that I see is in terms of the loan growth. Now, the annual loan growth, if I see for FY26, 4.2%, which is contrasting with the high double-digit expansion that has been reported across the, Indian housing sector. A 4% AUM growth is what you've seen on a year-on-year basis. I mean, analysts are saying that this could be a key overhang as well in terms of the stock. How are you looking at the annual loan growth rate and AUM?
Yes, honestly, 4.4% loan book growth, slightly disappointed. Beginning of the year, we had given a guidance of a double-digit growth. But I had, at the beginning of the year, I had also said that the year is going to be very challenging in terms of competition, in terms of the rates at which we lend. And that is exactly how it played out. And in the beginning of the year, I had said that if I had to make a choice between book growth and protecting margins, I would prefer to protect the margins rather than going for a book growth. That I think we've been able to do that. Margins have been fairly, I would say, protected. Yes, slightly disappointing, was wanting more. Probably as a growth of around about 7 to 8% would have satisfied me. But in view of the intense competition in the market, you'll have to understand that LIC HFL, about 80% of the business 85% of the business we do is individual housing loans. And again, in individual housing loans, these are all prime customers with CIBIL scores of 750 and higher. And this is the exact segment which coincides with what the bank sell to. So our intention, competition is entirely with banks. Banks slightly advantaged with a lower cost of funds And in fact, the other part of it is that we borrow from banks. So basically, we are competing with our borrowers, our lenders, so as to say. So it becomes a little bit tough. But yes, in the fourth quarter, quarter four, we have been able to ramp up our business, and we've been able to show a 10% growth in business. The same has continued in the April month also, where we are showing a 20% growth in business. So hopefully this year, we will be able to overcome the shortcoming of a low book growth and come to double-digit figures.
Okay, so FY20.
Well, that was the management of LIC Housing Finance. Disappointing year in stocks, reflecting that underperformance as well. But on the flip side, though, Metropolis reported a very strong set of numbers in quarter four. And to just get a quick perspective, we have now been joined by C. Surendran. He is the managing director of the company. Mr. Surendran, very good morning, sir. Thanks so much for joining in. It's Puneet this side. Just in terms of your quarter four performance, we've seen a very strong growth in revenue, but the EBITDA growth actually has been much higher, almost 70% at this point of time. But could you give us some perspective of it? Was this largely led by volume growth, by upselling, by more expensive tests in that sense, seeing a much higher volume? Is that how you would describe the quarter gone by?
Good morning, Puneet, and good morning to all your viewers. On the revenue side, the upside that we got is largely on the basis of patient volume growth. We could almost get about a 10% patient volume growth in the last quarter, right? That's something which has really driven our revenue growth. And of course, please remember that we also had acquired entities this year on the numerator, whereas in the last year it was not there. So about 8 to 10% of revenue growth is coming because of the newly added entities. Right. So otherwise, organic business growth is about 15% and about 8% is coming from acquired entity. Let me clarify that. And secondly, on the margin side, see, remember last year in quarter four, we had a one-off. We had booked about 20 odd crores of expenditure on account of this money that we spent on acquiring or 2 or 3 new entities. Right, so that came on the denominator. So hence, if normalizing that, normally you see about 30 to 34% of margin growth this year, but still 34% margin growth and a 23% revenue growth is a very strong performance and a good way to end the year.
Right. So was that, in fact, your EBITDA number, obviously it was aided, the number looks higher because of one-offs in the base quarter. But despite that, the numbers were much ahead compared to what the street house was anticipating. So is it because of higher specialized testing that has happened? Is this margin level sustainable even going forward?
No, so we have beginning of the year and we have initiated a lot of actions around correcting our margins and improving it further. Right. And what I can tell you 2 or 3 big items is like one, of course, we have stopped the rapid lab expansions in the last financial year itself, in the year before. And in the last 1 year, we did not add any new labs. So the erosion happening because of the new lab expansion is almost, getting over now. And that is aiding the margin for us on one. And second one is we have undertaken a lab platform change and modernization across all the labs in the country. And as a part of the process, we upgraded the lab platforms and we did some vendor consolidations. And in the process, we got some gains in terms of material consumption, which is helping us to improve the gross margins, right? So that's other sustainable action that we have taken in terms of getting margins better going forward. And also many other productivity initiatives in terms of automating our processes and digitizing our other platforms, etc., is reducing our spend on people, right? And all these put together, we are getting good traction on the margins, and these are all sustainable action, not one-time actions. So we hope to see the margins getting further improved during this year and the next 2 to 3 years.
Got it. So, Mr. Surendran, as you talk about the margins and the effort that's gone in, which will be visible in the next 2 to 3 years, what's your expectations for revenue then for FY27? Could we expect it to touch roughly around 2,000 crores? You're already at 1,650 odd. And do you feel that the margin growth will be coming in more from the specialty contribution, which is already at 37? Do you expect that to go in the medium term to over 40, 45%? So if you can give us just these two perspectives for now.
Well, I think the estimate that we have for the future is the next 2 to 3 years is like our revenues will definitely grow in the range of 14 to 15% year-on-year basis, right? That if you just to add that up, it may not reach up to 2000 if you the number that you put across, unless until we bring in another acquisitions in the year, which is very unlikely for this year. And as far as the margins are concerned, we ended the year with about close to a company level 24.5% and the group level. So we believe that we will be able to take up the margin to 27 to 28% in the next 2 to 3 years. In terms of the testing volumes, what we are seeing is the growth is coming largely from the specialty testing. The oncology segment and the neurology segment is definitely giving much higher traction. And we also introduced genomics in the last 2 quarters, and we set up 2 labs, one in Gurugram and one in Mumbai, our genomics labs. And we also started seeing good traction on the genomics side. The specialty testing is what is largely going to take the volumes up, and also the True Health, which is your preventive healthcare. That's also, continue to do well, which is in the range of 22% year-on-year growth. So these are the things which are going to help us in terms of, getting higher, revenue growth in the days to come.
Right. Thank you, sir. Thank you for joining us and giving us the way forward for Metropolis Healthcare. Well, that was the management quite confident on growth going forward. Well, moving on to our next query, that is a caller query coming in from Yogesh, from Jaipur. Yogesh, you can go ahead and ask your query.
Yeah, I can speak in Hindi also.
Yes, anything is fine.
मेरी क्यूरी है कि मेरे भी 500 शेयर आईटीसी के लिए और अभी मई 12 मई को लिए। ये पहले भी मैंने लिए थे 15 अप्रैल को, और फिर मैंने 16 अप्रैल को मैंने बेच दिए थे। 300 में लिए थे और 316 में बेचे थे। सेकंड टाइम आई एम बाइंग दिस थिंग। और अभी जो न्यूज आया है कि गवर्नमेंट कभी हर फिक्र को धुएं में उड़ता चला गया, तो धुएं में उड़ता चला गया, इसका मतलब आईटीसी इज गुड फॉर मी, दैट आई एम थिंकिंग अबाउट, दैट आई एम आस्किंग।
आपका शॉर्ट टर्म व्यू है लॉन्ग टर्म सर?
मेरा लॉन्ग टर्म है, बट एक्चुअल में मेरे को शॉर्ट टर्म दे रहा है, दैट्स व्हाई आई एम टेकिंग रिस्क।
अच्छा, तो मैं कुछ से एक क्वेरी लेता हूँ। कुछ, आपका क्या व्यू है?
बड़ी इंटरेस्टिंग क्वेरी थी, आई हैव टू गिव हिम दैट। देखिए, स्टॉक फिलहाल वैसे तो कुछ नहीं कर रहा है, बट अगर किसी ट्रिगर से यहाँ पे कोई मूवमेंट आता है तो मेरे हिसाब से स्टॉक में इतनी क्षमता है कि 312 से लेके अबाउट 320 तक जा सकता है। अब अगर इनको इन लेवल्स के लिए खेलना है तो मेरे हिसाब से बिल्कुल खेल सकते हैं। उसके बियॉन्ड जाने के लिए थोड़ी मेहनत लगेगी स्टॉक को, तो यहाँ पे आप बिल्कुल अगर आपने बाय किया है तो होल्ड करें। 295 के आसपास का यहाँ पे सपोर्ट जोन है, बट जैसा मैंने कहा वैसे कोई ट्रिगर है नहीं, वैसे कोई मोमेंटम है नहीं, बहुत लंबे कंसोलिडेशन फेज में है, तो होल्ड का व्यू रहेगा। 295 का स्टॉप लॉस।
Got that view, Kosh. But let's go across to the next question from Reenu from Bengaluru. Her question is on Cello World. Now, it's a stock that's continued to underperform over the last over the last 1 to 2 years. So let's pull up the 1-2 year chart as well, and it'll give you that perspective. Now, Mr. Chokalingam, she's bought it actually at 534. Stock's trading at 400 now. What would you recommend her for the next year or so? Because the growth just seems to be very absent, even when you compare it to DOMS that's been performing much better.
Yeah, unfortunately, on an annual basis, last 2-3 years, it's stagnating. Revenue and profit, not much growth. But that is partly in price also. So at around 28 PA, I would give a hold recommendation and sell hold.
Okay. The next query is coming in on Sandur Manganese. It's from Rajendra. He wants to know whether he's holding around 2,000 shares at a price of 240. He wants to know whether should he hold or exit. Any view on this, Kush?
You should continue to hold on to this one. It's had a good run. The resistance is actually at 235, and hence you're seeing the stock consolidate around that level for the last couple of sessions. I think a good clean break above that will push the stock to upward trajectory of about 255 and 270 plus levels also. Healthy volume accumulation over the last few sessions. So I would suggest a hold. Stop loss on this one should be placed at about 215, 218 zones.
Got that view. But next question, that's coming in now. This one's an interesting one. So we've seen that specifically on Azad Engineering as well as on GE Power. Now Azad actually has done very well over the last few months. We've seen that on the aerospace side of stocks have started to see a lot more traction. And Subha Rao from Iluru actually is asking if he can buy into this counter right now. So within this, Mr. Chokalingam, within Azad or GE Power, anything that you like from the space?
GE Power looks better purely on the basis of fundamentals. Azad Power is a strong growth company, but valuation comfort is not there.
Okay. Coach, the next query is for you, and it's from it's on Imami. Sayan from Kolkata, he's holding around 100 shares at a price of 440. Should he average out or continue to hold this counter for short term?
No. Exit. Very weak structure, has been an underperformer for a while. Every rise there has been a selling opportunity. Luckily, it's a little far from his buying price, but not too much. I would suggest an exit. If he wants to consider something in this space, I would suggest Marico on declines.
Marico on declines. Got it. Well, the next question, coming in now. This one, it's specifically, yet again, Kush, for you, wants to invest between PG Electroplast as well as on Praj Industries and NetWeb. Anything that you like on the charts for Anil Singh?
So, PG Electroplast was attempting, an up move. With the entire sector doing what it's doing, that rally's been fizzled out. So I wouldn't suggest, investing in a PG Electroplast. Like we've discussed some time ago, Sirma, once it takes halt, of this fall, you can consider. Praj also ran up, but now seeing sharp profit booking, so would avoid that also. And the third one, I suppose, was NetWeb, correct?
Yes.
Yeah. So here you can consider, but again, support immediately comes in about 3770, 3775 levels. So maybe around those levels. So not really, very gung-ho about all the three stocks picked. So I'd be a little wary on these.
Okay. Next is a caller query coming in from Hyderabad. Aruna, you can go ahead and ask your query.
Yeah. Hi, sir. Good afternoon to all of you. Thanks for taking my query. Actually, I wanted to invest short-term and long-term in transformer stocks. So I'm requesting Kushpuro sir to suggest one short-term and one long-term stock to and with entry and prices.
Okay, Kush.
First up, this is very lovely. Thank you so much for that query. In this space, there's already been quite a bit of run-up. I think what you can do is, yes, you can consider Tarrell, itself, because the run-up's been, or rather the fall's been quite steep and the run-up's been very gradual, and you want that kind of a move. You don't want a V-shaped kind of a recovery on the stock. So Tarrell is something that you can consider from a long-term perspective. The momentum is missing, but the gradual recovery offers a good risk-reward ratio. So buy Tarrell, keep a stop loss at 275 odd levels, and on the way up, you can expect a rise up until 350, even 375 odd levels in the next few months. So that is something that you can consider. One stock which has run up quite a bit and you can consider on declines is actually BHEL. Like I said, not now. From a short-term perspective, you can consider BHEL, but let it slide to about 375, 380 odd levels. Let the cool-off happen, and then you can consider BHEL from a short-term perspective. But let me reiterate, not now, around 375, 380 levels.
Got that view, Kush. The next one's coming in from Raju from Tirupati. And he has a question actually on MTAR Tech. He bought these shares at 4850. We also had another query on a similar stock. And the viewer actually, Vanita Bara, was asking if it's a good time to enter MTAR Tech for the next 2 years. So, Mr. Chokalingam, again, one of those rank outperformers, but the run-up also is strong, but they've guided for almost an 80% growth in revenue for next year. What's your view on this stock now?
I find it difficult to justify the current valuation. Even if the revenue grows at 80%, the stock is trading at 225 PE on trailing basis. So I may be wrong, but personally, I find it very difficult to justify.
Right. The next query is coming in from... the next query is coming in from Vijay from Chennai, and it's on M&M. Kush, he wants to know the short-term target on this counter.
The entire space is going through some pain, and M&M also, despite the kind of standout performance that, it has given in the recent past, is also seeing some pressure. My suggestion that, you want to hold on to this one, which is fine. There is a rising trend line support, gradual uptick on this one, tight stop loss around the 3050 mark. On the way up, however, the stock has a potential to go to about 3275, and if that is taken out, 3400, but it could take some time.
Got that view, Kush. But the next one, Mr. Chokalingam, it's a small counter. Rajesh Power bought at 870 by our viewer Sunny. By any chance, do you track this one? Almost 1800 crores in market cap.
No, I'm sorry. I have never tracked it.
Any on the charts, Kush, that you might have?
No, I'd give it a miss.
Got it. Well, let's go across and take a caller then from Hyderabad. And Aparna has a stock query for us. Aparna, very good morning. Welcome to the show. What's your query?
Yeah, very good afternoon to all of you, sir. I wanted to check with Quality Power. So what is the, view on this on short term and long term? Is there any price to enter? I wanted to check with Kushpura, sir.
Got it. Well, Kush, on the counter, what would you recommend?
This is why I love Ask Profit and especially those viewer queries. Aparna, this is so sweet of you. Thank you so much. I think we've spoken in the past, and at least we've certainly spoken about Quality Power on the show. And I remember, the Pan Mahima made about how Quality Power still has quality, correct? Yes. I think this is still a good stock. You can consider this. It's already run up quite a bit, and hence the profit booking. So I would suggest you can consider it, but let it slide a bit more. Maybe around 1090, 1075 odd levels. The risk reward ratio becomes very attractive. What you're seeing in the last 3-4 weeks is mere profit booking rather than any structural shift. So I would suggest a buy on this, but close to 1100, 1090, those levels. In that case, your stop loss should be at 1040, and on the way up, the stock's already shown that it has potential to run quite a bit. So about 1250, even 1325 are the levels that you can track on the upside. So buy around 1100.
Right, the next query is coming in. The viewer hasn't mentioned his name. It's from Lata, and it's on Ashok Leland. She wants to buy Ashok Leland for the next 3 to 5 years. Mr. Chokhalingam, should she do that?
Yes, certainly. But this morning also we saw the most reputed rating agency giving positive outlook on CV growth. So one can buy for long term.
Got it. Well, the next question coming in now, it's on a recent company is Seshasai Technology, and Sharat from Tirupati is actually holding on to this counter at and wants to know if it's a very good long-term bet for the next 5 to 10 years. Mr. Chokhalingam, by any chance, any view here?
I just looked at the numbers, very poor return ratios, extraordinary P valuation. I am not comfortable.
Okay. The next query is from Vedant Garg, and it's on IIFL Finance. He's bought few shares at a price of 506 rupees. He wants to know the targets he can continue to hold this counter for the next 3 to 5 years. Mr. Chokhalingam, any view on IIFL Finance?
Yeah, good. For 3 to 5 years, definitely the growth momentum will continue. It's a good stock for long term.
Got that view, but let's go across, take the next caller now, and from Hyderabad, and Murli is joining in for a stock query. Murli, good morning. Welcome to the show. What's your query?
My query is to Pushbora, sir, on Varun Beverages. I have about 100 shares in 2 years at an average of 220.
Okay.
Should I hold it for another couple of years?
Okay, so you bought these shares at 220. And when was this? How long have you been holding on?
For 2 years.
Okay, for 2 years. Okay, got it. Kush, on Varun Beverages, I don't remember when was the last time it was at 220, because those levels seem very attractive. But anything on the charts for Varun Beverages?
Sure. First up, Murli, thank you so much for this query, and you can drop this, sir. Kush or Kush Bora is just fine. But kudos to you on buying this, holding on to this for now. I'm sure you're probably hurting a bit because you've seen those higher levels of about 600 plus, and now at about 500. This stock has been on my radar. This is now attempting a rebound, now a more meaningful one, because there was a long-term, medium-term falling trendline resistance that has been broken. The 200-day moving average, which it was resisting around for a while now, that's been taken out. So yes, it is on the cusp of a breakout, attempting that. So it's not a bad idea to continue holding on to this one. However, I would suggest that you keep a stop loss around the 425, 450 zone, because if it fails and if it falls again to that level, then this entire recovery could fizzle out, and you don't want to be losing out on those profits that you're making right now. So right now, hold a steady recovery underway. You just want this to continue for some time. Stop losses around the 425, 450 zones.
Okay. The next query is from Ankit, and it's on Enviro Infra Engineer. He has around 250 shares, bought at a price of 160. He wants to know whether should he add more at the current levels of around 180, or should he continue to hold what he has? Kush, any view on this?
The buy price you said was 160?
Yeah.
Yeah, no, don't add more. 200-day moving average resistance massively playing out, massively. It's not been able to take that out, and market's not helping its cause either. I wouldn't suggest averaging either. I normally don't. But I would suggest continue holding on to this, because this consolidation breakout could happen if there is any bit of support from the markets. So yes, you should continue holding on. 160 is your buy price. 180, in fact, should be your trailing stop loss. So I would suggest a hold, trailing stop loss at 180.
Got the view, Kush. But time now for the rapid fire round in this edition of Ask Profit. Kush, as well as Mr. Chokalingam, you know the drill. First question coming in on Cohance. Manoj has bought shares at 500 and he's holding 200 shares, Mr. Chokalingam. You've seen weak results, but there's been a big management change. Umang Vora coming in. Would you believe in the stock?
The problem with this stock is a good quality stock, but EV to sales was highly stretched. One can at best hold it now.
Shankar from Dubai wants to know the targets on Hindustan Copper and Hindustan Zinc. Kush?
For Hind Copper, good move. I would hold on to this one. Immediate targets about 635. And once that is taken out, 655 as well. That's a good move. I will continue holding on to this. Hind Zinc, slightly differently placed. Seeing some negative resistances on the weekly setup, but you can still hold on to this, has that metal momentum. 705 and about 730 are your targets.
G. Varnova Kush bought by Surya from Dubai at 4650. He's asking us 6-month view on the stock.
Yeah, had a good run, profit booking right now. Keep your stop losses at 41, 41.50, 41.35 levels, but you can continue to hold.
The next query is for you, Mr. Chokhalingam. Prakash is holding 300 shares of Wari Renewable, bought at a price of 1,040 rupees. Can he hold this for the next 2 years?
One can hold it. If one receives a capital invested or even marginal profit, one should exit a solar company like this.
Got it. Mr. Chokalingam, you like Coal India, but on Bharat Coking Coal, Murthy is holding shares at 38. For the long term, do you have a view?
Long term, it should do well because of a huge shortage of coking coal. Long term, it will do well, so one can hold it.
The next query is for you, Mr. Chokhalingam. It's from Shrijit from Bangalore. He wants to know whether should he add Bellrise Industries for long term in his portfolio.
Sorry, I'm not an analyst.
Got it. Well, the next question coming in now, it's on Avantel, Kush, and a viewer, Ansh, actually holds shares at 153. He's asking what he should do with his 3,000 shares.
If a quick word I may on Bellrise, the structure from a near to medium term is positive. You can hold. If I can, just going to quickly address that. Avantel, I would continue to hold. Consolidating, attempted breakout failed, but that attempt happened right on back of good volume. So hold, stop loss at 143.
The next query is for you, Mr. Chokhalingam. It's from Rajan Iyer and it's on JM Financial. He's holding 500 shares at a price of 136. For the long, should he continue to hold this counter for long term or switch to Vedanta post demerger?
Long term, it's a good JM Finance.
Avinash Naidu from Bangalore asking on delivery, Mr. Chokalingam at 269. Should he still continue to hold?
I would not hold it. I will sell on rise.
Kush, the next query is for you. It's on NLC India. Tarakaram is holding few shares. Should he continue to hold them? He hasn't mentioned his buying price.
Right now, book profits, maybe consider again at about 350 odd levels, but right now, book profits.
Got it. Well, the next question coming in now, this is from Harsha, holding on to Persistent, Mr. Chokalingam at 5,450, asking what she should do with this counter. Is it a good time to add more now or sell out?
See, it is one of the best quality mid-size IT stocks, no doubt. Credible performer. The pain is only from the industry outlook. So at best, one can hold it for medium to long.
The next query is for you, Kush. It's from Baba Saab from Karnataka. He wants to know whether should he buy NHPC 5,000 shares at a price of 78. Is it a right time to enter for short term?
Again, it's consolidating. The range is 72 on the downside and about 85 on the upside, bang in the middle of the range. So if you want to do a range play, then perhaps a little lower, closer to 75, you can consider stop loss at 72.
Sunil from Baroda is asking Mr. Chokalingam, what are your top picks in the hotel space?
Hotel space, my top pick is East India Hotel Limited, EIH Limited. I like the stock most.
Got it. Well, that is the end of the rapid fire as well as this edition of Ask Profit. Mr. Chokalingam, Kush, as always, thanks so much for joining in, giving us your views on a whole host of queries. But viewers, out of time on this edition of the show. KYC comes up next and all the stock related queries at 2 p.m. So we'll see you there.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and this is one of the best KYC shows where we get you hidden gems, interesting stocks, anything which is trending, and if any alpha can be made or not. But before that, let me give you some hint. Try to guess the company. Of course, it will be a bit tough for you to guess. It's recently listed. It's a workforce and an infra support company. That's the first hint for you. दूसरा हिंट आपको देते हैं, कंपनी हाल ही में लिस्ट हुई है March 23rd, 2026. It's just been 1.5 odd months and the stock is still down 29% from its listing price. It's pretty much interesting for you to understand which company I'm talking about. The company's name is Innovision. Of course, this is a North India based company and this is the company which we'll be talking about. But why have we got this company in KYC? इस कंपनी में ऐसा क्या खासियत है या क्या न्यूज़ आया है जिससे हमने इन्हें KYC में बुलाया है? First question. Let's see why this company is coming in. Of course, right now a lot of order flows are coming in and that's where my interest came in for this counter. I checked that the company was recently listed also and it was not covered in KYC. So what's the exact business model? Is it a toll player? Is it a manpower service player, or is it both? And there's an angle of drone also in it. The recent order wins is something where my interest came. So we'll be understanding the order book status and the outlook going ahead. But also let's talk about the other key questions is the digitization of tolls. So we have heard about that news. How much does that benefit and that infra pick up? What does that happen? Of course, this looks like partially like an IRB infra, and also the strategic growth outlook for the security manpower business. What's the growth looking like? We already have Quest Corp and TeamLease, so you can understand a little bit of that business model as well. And overall, the long run growth, especially coming on the revenues and margins, because the first time the company came out with its numbers in Q3, but we need proper clarity on the future outlook. And to understand more, we'll have Lieutenant Colonel Randeep Hooda, the Chairman and MD of Innovision, giving his views on the queries asked by us, and to discover this company, what's this all about. That's what the focus should be on, innovation. Lekin ye company karti kya hai? I've given you two hints. Manpower is there. There is of course a toll infra at play. But let us go a bit back. This company was founded in 2007 by defense veterans. That's an interesting company to feature in KYC. That deals with the workforce and toll infra solutions, but there is some more layers to it. I'll come to that. 14,000 plus workforce members across 23 states and 5 union territories. That means they have coverage. But what are the key services for this company? Manpower, toll plaza I spoke about. There is also skill development services and the emerging drone services. This is where a lot of interest is coming in the street. The company operates as a B2G dominant platform, यानी कि government को ज़्यादा services देते हैं, So there is of course a little bit of risk there. 80% of the revenue comes from NHAI, central and the state government. This is how the picture looks. Recently IPO आया था and the IPO proceeds are likely to support the bidding for the next 3 to 5 additional toll plazas in FY27. So that's something to talk about, and a 31 crore toll order win was there from NHAI. Recently the company announced post its listing. Apart from that, a couple of more orders were there. There was a manpower award coming in from Chhattisgarh State Marketing Corporation, and also if you look at it, there was a 13 crore NHAI fee collection order as well. So a lot of order wins are coming in post the IPO. But let's look at the operational data, how things are panned out. We have taken the data from the toll management business. There's roughly 12 active businesses in this NHAI segment, and the revenue which has gone up, that collection was roughly 281 crore rupees, and this is for the last 2 months, December 2025 to January 2026. This is where the collections data has come. But one thing which was very interesting was the drone service business. That's where my attraction came to this counter. The commercial ramp up is expected in FY27. The margin target as per the company estimates, that's roughly 40 to 50% versus 5 to 6% for manpower. And if they move towards this side, that is where the margin outlook starts improving. And FY27, the revenue target for this drone service business is set at 50 crore rupees. So very interesting and a very developing setup. But what are the positive triggers for this stock? That's what we need to understand. Improving operating leverage. We need to give it a little bit more time. If 3 quarter का ही number आया है, 4th quarter numbers are expected to come in. The DI exposure remains strong for a company जिसका market cap is around 700 to 800 crore rupees, around 5% of that stake. DIs are having 9,000 crore market opportunity for the drone service. So that is something we will definitely have a big conversation about, and a structural surge seeing in the toll outsourcing. So this is something which we are looking out for. It'll be pretty much interesting to speak about it. It's of course a little bit asset heavy play as well. Manpower demand for the infra space. That is where, if in case the infra push happens, that's where the momentum lies. And Street is expecting overall strong Q4 numbers as well for innovation. So we will be tracking this company and understanding the entire picture. But to understand a company in KYC, we have 8 parameters where we judge the company, how the company is doing and what's the future outlook looking like. So I'll just mention you: income statement, balance sheet, cash flow and return ratio. These are the 4 important ratios we track on terms of numbers. But apart from that, we also see the shareholding, what has moved. याद रखिए सिर्फ 1.5 महीना ही हुआ है. So the history is quite small, so we need to take our analysis with a pinch of salt, be it for street cred. And interestingly, valuations also, we'll try to figure it out with which business model does the company fit. Most importantly is the outlook. That is what the street wants to know. It's recently listed, untracked, and that is where we try to find any hidden gem if it's there and get you more details. And that's the speciality of KYC. Let's talk about the first parameter, and that's the income statement. Of course, a lot of data has come in from the RHP. H1 numbers, look at the revenue, that's around 510 crores, 893 in FY25. And even if you double this up, this comes up to 960 crore. That's what the estimation is looking like. This is just the H1 numbers. I'll get you the Q3 numbers. But net, look at the strength coming in these numbers, and that is showing good. Margins also, you see, it's holding up almost 6% odd. And looking at the Q3 numbers, largely, if you see the year-on-year basis, there has been a good improvement, especially in the bottom line operational numbers and the bottom line numbers. That is where a little bit of bullishness is coming. Is there an inflection there or not? And of course, from that 6.4 in FY23, it's back to its higher levels in H1 FY26 as well. So margin play is coming good. Operational numbers are improving. So net income statement, I'm going to give this a strong thumbs up. Let's talk about the balance sheet. What's happening here? They recently had in the IPO also a little bit of borrowings reduced, but the way they are expanding, I explained to you, this asset heavy model as well. So borrowings are definitely there. That's what we'll try to understand with the management. Are they reducing it, or is the focus going to some other businesses or not? The cash is pretty decent, as around 55 odd crore rupees, and it has increased each year. And comfortably it's sitting at the end of H1 FY26. So it's a kind of a neutral rating right now. Let's give it a little bit more time. Since it's in an expansion mode, there might be a little bit of pressure. So income statement was strong, balance sheet was neutral. Let's see what's there in cash flow. And always remember, whenever there's a company in the B2G segment, Cash flows at times will be an issue because it's coming in from the government. There might be a delay in receivables, and that is what the reason is. Look at the cash flows, it is not very uniform. So this is a business model itself. It's not a flaw, it's the feature when you judge these companies. So largely it gives an infra company vibes, but manpower, of course, receivables is much stronger. So we need to get more time to understand that. But as of now, on this data, I'm going to give this a thumbs down when it comes to the cash flow segment. But interestingly, the return ratio is something which caught my eye. The ROC numbers we speak about, of course, this is before the listing. This is around 20 to 22% kind of a business. But after that, there's been a good up move coming in. Of course, there are some capital adjustments from the IPO, but currently it's at 30 plus in the ROC number. So net, a strong performance when it comes to the return ratio. So I'm going to give this a thumbs up as well. Apart from this, let's talk about shareholding. और shareholding में ज़्यादा समय नहीं हुआ है, बस एक ही बार का जो है shareholding pattern आया है. So right now net we see promoters are holding a decent 74% stake. 75% is of course the SEBI cutoff, so it's comfortably below that. But interestingly, what I liked is the DIs. They have done a good participation, and around 5% of that equity is amongst DIs and almost 2% coming in for FIs. Roughly the remaining 19% float is with the retail. So it's a neutral rating. समय देते हैं. That's why we have just kept this a neutral one when it comes to shareholding. But let's talk about street cred. Company को 1.5 महीना हुआ है listing के. So we need to give it a little bit more time. Of course, market conditions are also, you could say, impacted. So from the IPO price and the listing price, there has been a big downtick coming in. Of course, the listing price itself was down 10%. After that, a little bit sell-off happened. And of course, stock is flattish, for the last one odd month. And of course, company is coming out with 3-4 important orders also. So the street is looking for the Q4 numbers. That's where the clarity comes in. And that's why I picked up this company in KYC to give you a first-hand view of any chance of alpha being made. So net, let's give it more time. So I have given this a benefit of doubt and a neutral rating when it comes to street cred. Let's talk about the valuations. Ki dhanda iska peer kaun hai? And that's where the confusion a little bit happens, because innovation has the toll management business also. Innovation also has the manpower business also. But let's see how the valuations stack up. We have taken the trailing P ratios. It's around 23 times. That's what the number is coming as per our calculations. We compare that with IRB Infra, it is cheaper at 31 times. But if you talk about the other players for the manpower segment, that's where TeamLease and Quest comes in. That's around 14 to 17 times. These businesses do have good cash flows also. Over here, that cash flow gets used in toll and asset heavy announcements as well. And companies, of course, doing other businesses also. So net, in our analysis, I'm going to give this a neutral rating as well. But let's talk about the outlook. What is there? Is there any change happening here? How's the things looking? There's a large order win expectation in the security surveillance theme. That is where everybody is talking about. We have seen companies like RNIT AI also in the small cap space doing well. The beneficiary of expansion of toll infra, that is where some little bit of alpha is lying, and the government is pushing hard for that. Now they're growing advanced drone and smart monitoring solution. That's also one of the key takeaways which the management had mentioned in their IPO discussion. Deeper penetration across tier 2, tier 3 cities. That is where the movement is happening of the key products. So we'll be looking out for. So net, as of now, outlook looks strong. लेकिन आइए आपको पूरा KYC rating बताते हैं InnoVision का. क्या आंकड़े हैं? What should you be focusing on? And the income statement has done really well, but a concern comes from the cash flow, and of course this the business model as such. Return ratios are improving, and if you look at the street cred and shareholding, that itself also, it's largely, you could say, a neutral rating, and the valuations also, the story remains the same. The one thing which is good is the outlook. That is where the outlook, it seems like there is some inflection in the business as well. So the final rating, do market, that's around 5 out of 8 we have given for InnoVision. It's largely in line to slight positive on the average ratings which we give in KYC. But we have an interesting conversation, and very rarely this management comes from the armed forces. We have Lieutenant Colonel Randeep Hundal. He's the promoter and chairman of MD at InnoVision, and a very interesting snippet about him is he began his career as an officer in the Indian Army, and that's of course a matter of pride. Over 15 years of experience he has in manpower services, And interesting, snippet about him is that he's also a DGCA certified remote pilot training instructor. So of course he's running a business and he's a qualified person as well. So it'll be a very interesting conversation about it. But we'll speak to the management just after the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani,
Welcome back to New York Company. We are joined in by Lieutenant Colonel Randeep Hundal. He is the Chairman and Managing Director at Innovation. Good afternoon, sir. It's always a pleasure to have you in our show. And it's a very new company, recently listed Innovation. Just wanted to understand a little bit more about your company and what's the exact motto of your company? ये आपकी company करती क्या है और अलग कैसे है?
Yeah, firstly, thank you for having me on your show, Sharad. So, Innovision Limited, we have 3 major verticals in the company. Though when we started, we being from the armed forces, I was a short service officer. So when I left, and I also, come from a post-generation army background. So the first thing when we started the company, we started purely as a guarding company, and we started with 2 guards. And today, as we stand, we have more than 17,000 workforce across India. We are present in more than 23 states and 5 union territories. So that is what from 2007 till date we have been able to achieve. So starting from manpower, then we slowly graduated into skills development. When in 2014, then when the Ministry of Skill Development and Entrepreneurship came into being. So that was the time we saw this as an opportunity where we started, these programs, skills programs were sponsored by the Ministry of Skill Development. So since we already have had an infrastructure in place, so we started training the security guards. And very quickly we realized that there is a lot of opportunity in the other sectors as well. Now, since there are more than 42 sector skill councils in the country, so we are affiliated with all sector skill councils, and we are carrying out skill development training in across the vertical, whether it is logistic, retail, security, BFSI, and so on. So this is how these skills development vertical started. In 2018, we were already providing manpower to these toll operators, and that was the time when we realized that since we are already doing the hard work of training the manpower who are managing the toll plazas, so as well understand the entire holistic business of toll management and get into this. So 2018 was the first toll plaza that we bid under the EPC model, which happened to be a very profitable toll plaza for us. And that's how the tolling journey for Innovision started. And from, one plaza, so far we have more than 35 toll plazas across India.
Mr. Hundal, you explained us about the toll plaza entire ecosystem. So that is where the manpower is something which you are giving in the infra space. So that's an important clarity coming in. But there is also a digitization of toll plazas which is happening, government is pushing. How does this benefit your company? And of course, if you could just give us a little bit about the order book regarding this.
Yeah, so see, the digitalization of toll plaza has already happened with the adoption of FASTags, and for an organized company like Innovision, it has stopped the pilferages, it has enhanced the collection efficiency of toll plazas. Now, in this financial year 26-27, we have already secured 125 crores of contract with us across Uttar Pradesh, Madhya Pradesh, Tamil Nadu, and Pondicherry. We have 25 existing toll plazas, so the revenue from these toll plazas is also going to be carried forward. And as far as digitalization is concerned, we ourselves have started now developing integrated traffic management system for smooth mobility of traffic. So I think another 2 or 3 months we will be able to bring out this technology, and we would start the validation of this technology on our existing toll plazas. So as far as the market is concerned, we typically operate, as of now, we are operating under EPC model with NHAI. And under this model, the market size is almost around 55,000 crores. Typically, there are more than 850 toll plazas across India. So there is a strong bidding pipeline already in place for this ecosystem.
Right, so there is a strong bidding pipeline coming in. Apart from this, of course, there is a lot of B2G exposure. You know, whenever the company is having a B2G exposure, of course, the questions arises on the receivable front. What are the payment cycles looking like in your business? What are the risks involved here?
So if I talk about toll management, now here, the cash flow is very positive because we collect on a daily basis and we remit NHI on weekly basis. So there is no gestation period of cash as far as tolling business is concerned. There is a gestation of around 45 to 60 days in manpower business. But B2G, if you talk about tolling is cash positive. In manpower segment, I would not say that there is a problem from B2G, but generally, by the time you raise the invoices and the monies are realized, the gestation time is around, anything between 30, 45, 50 days.
Right, but apart from these businesses, thank you very much, Mr. Hundal, to explain us the payment cycle. Because Street was having a little bit of concern on the B2G segment. So just to put that in perspective, manpower business will have 40 to 60 days of gestation period, and mostly your cash flow collection. So the tolling business is on the same day itself. Of course, a 1 week lag might be there here and there, but trying to understand the drone solution also. And interestingly, you are a certified instructor also. Just wanted to understand drone solution as a service. How nascent is it right now, and how big of a market can it open for you? Because there seems to be, a move to a high margin product also. I was just trying to, connect the dots. It's a newly listed company, so we have less information. So I just wanted to know from you.
Yeah, so, this is a fairly new initiative. So we have a subsidiary by the name Aerodrone Robotics Private Limited. And when we started this company, we started purely as a training, company for pilots. So we are a DGCA certified remote pilot training organization, wherein we train pilots and issue them the remote pilot certificates, which is basically the license to fly the drones. Now, after, when Ops Sindoor happened, now that was the time we also realized that there is a lot of, the entire warfare of, the Indian Army has changed, and it has become a drone warfare now. And we also saw this as an opportunity, and we quickly gotten our new R&D team in place. And I'm very proud to, say that within a span of, 6 to 8 months, we were able to bring out the products, 4 good products, which are drones, which have already passed the trials, defense trials, and as we speak, we have already started supplying these drones to the armed forces. So other than, training the pilots, manufacturing drones, we also saw this as an opportunity with the drone as a service. So it also complements my security business. So we are providing drones for perimeter security. We are also, in talks with a lot of oil refineries where the drones can do perimeter security. So this is how, the Aerodrone Robotics, and it's a high margin business for us. As we speak, we have more than 24 crores pipeline in place. And by the end of the year, I am very, very bullish that we will be able to cross 50 crores.
Right. So that's the target coming in, 50 crores of revenue from this segment. But I just want to understand the IPO portion. There were some proceeds which are going to be used for the bidding for toll plaza. I just wanted to understand what are those numbers looking like if you have to bid for these toll plazas and what's the timing of it?
So, since, now for the financial year 26-27, we are looking at high margin, businesses. Now, for us, toll plaza management is a high margin business. So, most of the IPO proceeds are going to go into tolling vertical. Manpower vertical is going to be a steady growth. And though we are with the new technology, which is the AI-enabled electronic surveillance system, which we have introduced along with the physical security, we are looking at improving the margins of physical security. And this electronic surveillance system itself is a very high margin vertical the technology for us. And drone, any which ways, so going forward, these are the verticals in 26-27 that we are going to focus on these high margins.
Right. And Mr. Hundal, just wanted to talk about any numbers or the growth or margins, any aspirational numbers are there which you could share for the next 2 to 3 years? What's going to happen? I know the Q4 numbers are not out yet, but in case if you have to give, a range of what growth numbers are looking like, you mentioned 50 crores for revenue for drone as a service, but for the other businesses or as a combined business, any kind of a growth outlook?
So, see, if you look at my past deliverables, we have been able to deliver more than 50% of growth year on year. And going forward, and this was also when, the biggest problem we had, faced was the working capital problem. Yet with that, problem, we've been able to give this kind of growth. Now, after the IPO, after, raising the working capital, we will be able to give at least, if not more, 50 to 60% of the growth year on year. And now we are really looking forward, to scaling all our verticals, which we are very, very bullish about. And we are looking forward, to these exciting times, which is financial year 26-27.
Right. I just have a last question from you, Mr. Hundal. This surveillance theme, it's very much important, be it border or even oil segment. And also a lot of government schemes are also promoting it. We have some listed players also. How do you see this space going?
See, now this is for all the sectors, especially for defense. Now, drone is the futuristic thing. Even for I being part of the armed forces, I'm also serving with the territorial army. So I have myself been inducted in Ops Sindoor. So I've seen firsthand, where now the entire warfare has changed to drones. Even in security, we are looking at the requirement of our clients, wherein the manpower is being replaced by the drones. So this technology going forward is drone technology. If you look at it, is going to come into every sector and majorly, the defense, and that is where the most of the focus of Aero Drone Robotics is.
Right, so that's important. Drone will be coming in defense. That's an interesting take and a very interesting company as well. It's always a pleasure to talk with you, Mr. Hundal, and best of luck for the future.
Thank you, Jared.
So that's the management of InnoVision. Interesting company, and just to give the clarity, most of the working capital issues are sorted in the toll road segment, and the management was bullish when it comes to the overall drone service and the defense segments. Of course, there are this industry has payment issues as well, but something to wonder and understand, and also stay tuned to NDTV Profit for these new companies getting discovered in KYC.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the
US President Donald Trump expresses optimism about great talks with Beijing. Trump is in China for a highly anticipated summit with his Chinese counterpart Xi Jinping, with tech leaders like Elon Musk and Tim Cook accompanying him. All eyes will be on talks on trade, Taiwan and Iran war. The Lal Street cheers optimism signals from high-stakes Trump-Xi meeting. Benchmarks hover close to day's high, with the Sensex gaining more than 800 points. IT is the only sector trading in the red. The rupee hovers close to a record low of 95 rupees 94 paise against the dollar and amid global uncertainty. Currency pressure comes after India hiked the import duties on precious metals, with US-Iran tensions and the Trump-Xi meeting adding to the market nervousness. Sugar stocks are under pressure today amid rising concerns over Middle East crisis and supply chain issues. This after the government has banned the exports of raw, white and refined sugar with immediate effect until September 30th to safeguard domestic supplies and contain inflation risks. The spotlight will also be on Iran's Foreign Minister Saeed Abbas Araghchi meet with his Indian counterpart here with a high-stakes meeting of BRICS foreign ministers hosted by India ahead of the bloc's annual summit later this year. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and yes, markets are looking pretty today. Lots of global events are really impacting, and the most hope being built up with the historic meet of a US President Donald Trump really making a visit to China, meeting with Xi Jinping and also taking the global tech leaders. And that optimism of probably the Iran war, shadow boxing also being figured and coming up in those talks also is one thing something that is adding to the momentum and hope in the Indian markets. Over 1% up when we talk about Nifty 50 in 23,650 odd levels at the moment. If you really take a look at the sectors, it's an all-round participation really coming in, except for IT sector, which has been seeing a constant downgrade and also nervousness because of the AI thrust. But apart from that, a little bit of auto, but on the other hand, pharma, metal, defense, financial services, banks, these have been really contributing to the overall market momentum. When we really take a look at the other internals, take a look at how Nifty 50 is really panning out today. And remember that it's the banking blue chips which have been taking the onslaught of either nervousness coming in about the Indian economy, and also on good days, they are the ones really leading the charge. So HDFC Bank has been one of those trade-off plays in the investments into India or out of India. And today it is seeing a good day of trade, adding 75 points to Nifty 50 at the moment. Bharti Airtel, after its results and restructuring announcement, that also is adding quite a bit of momentum as the second important gainer for Nifty 50. ICICI Bank, RIL, all of them really doing well in trade. On the downside, it is mostly the tech companies which are really not performing and contributing to the market. All right, before we start on markets, let's also take a look at the conversation that will really set the tone for the markets today. Let's listen into what the US president had to say about the talks in China.
It's great.
Did you talk about Taiwan?
Great place. Incredible. China's beautiful.
All right, and External Affairs Minister S. Jaishankar says that the meeting comes amid flux in the global relations, which are shaped by, remember, conflict and challenges in trade and technology. With energy, food, as well as finance pressures really rising, emerging economies expect the BRICS to act as a stabilizing platform and also explore practical, diversified solutions. Listen in.
We meet at a time of considerable flux in international relations, ongoing conflicts, economic uncertainties, and challenges in trade and technology and climate are shaping the global landscape. There is a growing expectation, particularly from emerging markets and developing countries. Development issues remain central. Many countries face challenges on energy, food, fertilizer, and health security, as also access to finance. BRICS can help them respond more effectively.
All right, some big political global events really taking shape today, and markets are really keeping a very close watch on all of them. Let's get chatting with Sonam Srivastav, who's the founder and fund manager at Right Research PMS. Sonam, pleasure welcoming you on NDTV Profit. Given the global volatility and now there is some semblance of hope again being built up, and the market really reacting to that as well. Sonam, how do you look at the market in the current scheme of things, where a large part of damage with the oil prices and inflation has already been seen on the ground?
No, definitely. I think the damage has been done, and you're seeing a recovery from the bottom that we went into. I think we remain positive on the market. I think companies are at a very fair value. If you look at Indian market compared to a lot of their global peers, a lot of emerging market peers, we are quite cheap, and I think there's a good path ahead. But, like you said, that the geopolitical crisis is still going on. There is no conclusion that has come into place yet. And if there is no solution, then India definitely is vulnerable, because, we import a lot of oil. We're dependent on a lot of commodities from the global markets. And if something like that, keeps on going on, right, the crude prices continue to remain escalated, we could face inflationary pressure. We could face pressure on our current account deficit. So those fears are still alive. But I hope with this, new China-US visit, I think there are positive offshoots in the global market. And, if there's a solution that comes into place in the Iran crisis, that would definitely allay a lot of fears for India, and that could lead to continuation of the up move.
Right. Sonam, hold on to your thoughts. Of course, the rupee market is also becoming very, very critical in the larger scheme of things. And somewhere the markets are impacted or will continue to get impacted. Anindya Banerjee, who's the Senior VP of Currency and Commodities Research at Kotak Securities, also joins in. Anindya, pleasure having you add to this discussion. Of course, I spoke to some of the economists yesterday, and the worrying thing is that already it's being penciled in that 96 and a half rupees to a dollar is what is being penciled in. What is your in-house view and the factors driving it?
A very good morning, and thank you for having me. See, the entire trade of rupee continues to be on Hormuz, and Hormuz stays shut. And the global situation which is emerging, it looks like the way we are facing 12 to 13 million barrels per day of deficit. I think if this continues into June, the world could actually face shortages of products or crude oil. So that can lead to a substantial jump in the prices, something which even the global leaders are warning about. So I think a lot depends on how long this shutdown continues. We are hopeful that the current meeting between Xi and Trump, and also Lavrov is here. So I think all those things should pan out well and in a positive way. But the bigger issue is how long will this Hormuz shutdown continue? So if it continues, then oil prices rise.
Nindya, just hold on to your thoughts. Of course, Bharti Airtel management is talking about their numbers. Let's listen into that.
Opportunities. The first one being homes, enterprise and data centers, and the second being Airtel Money, where there is a potential for further value unlock with listing. This is a no-cash deal and value accretive to Airtel shareholders. Before I hand over to Shashwat, I would also like to talk about the impact of the ongoing geopolitical crisis. There are a few areas of our operations which are seeing impact, including international roping, capex on account of INR depreciation, restriction on gas supply affecting galvanizing industry, in turn leading to lower tower build-outs. The other obvious impact is energy price increase. Africa has already been impacted by it. Having said that, we are looking at all possible opportunities to mitigate the impact with amplified efforts through our War on Waste initiatives. With this, I will now hand over to Shashwat for an update on India business.
Thank you, Showman. Very good afternoon to everyone. I'll start by sharing an update on our ESG plans, followed by each of our business segments, and then our strategic priorities. Let me start with ESG. Our ESG progress is anchored in our strategy and in the way we leverage technology and digital innovation to drive sustainable operations with enhanced efficiency.
All right, so that's Bharti Airtel's management really talking about the numbers and the outlook as well. And that stock is considerably contributing to the overall market momentum after results, as well as the share swap to gain more stake in Africa. And that is what is really playing out, over 3% up. But we were speaking to Anindya about the rupee movement and the in-house view on the numbers being penciled in the present circumstances and factors impacting it. Anindya, sorry for the disturbance. We can go ahead again.
Yes, so if the oil continues to rise, I think we could see levels of even 98 on the USD INR over this month.
Right. And Sonam, looking at this particular, right now landscape, which the market is really treading with, where there are many pressure points and the upcoming outlook for the next quarter earnings, along with the lower than expected monsoons, how much of that is really being penciled in, and how are you really estimating the market momentum going forward?
See, I think, these things definitely will have a pressure on the markets, right? I think upcoming earnings, this quarter, you're seeing a decent earning come in, but upcoming quarters definitely will be impacted by the high crude prices. But, looking at the market, we continue to remain optimistic. Like I said, there are segments in the market, where you're seeing a very interesting, opportunity being played out. You look at stocks that are involved in the data center theme, the hyperscalers. You're seeing, strong movements in stocks like MTR Technologies, and even a lot of stocks in the power transmission sector. You're seeing metal prices actually, sustain a very strong up move. So I think, there's going to be a narrow market which will be positive, but I think there are other segments in the market. For example, your IT stocks in India, which are actually very negatively impacted by the news coming out of AI right now. So I think it will be a mixed market on the whole, but there are some opportunities which are very strong in this market.
All right, some opportunity is very strong. I'll pick your brain on that. But Anindya, just to focus on the kind of steps that are being taken by the government and the RBI to arrest the fall of rupee, that has really not impacted so far. Of course, there was a slight bit of recovery after the big treasury speculation was banned by the RBI. And after that, the rupee's downslide really continued. Now this gold and silver duty that has been increased by the government, how much of that will really impact, and by when do you see that strengthening rupee, if at all?
See, I think this import duty will have marginal impact as far as gold is concerned, because gold, the demand of gold comes from two major areas. One is investment, other one is consumption, which is jewelry. Now, as far as the jewelry demand is concerned, yes, that will get negatively impacted. But as far as investment demand is concerned, that I think totally depends on momentum, the international prices and its momentum. If the momentum comes back, we might see a lot of people entering the market to chase those returns. So it will have a marginal impact. That's why oil is the main thing as far as Indian rupee is concerned.
Right. And what more measures are required in India?
See, RBI has a lot more measures, but we have to understand the challenge which they are facing. Like on one hand, we have a higher import bill. So like 120 odd billion dollars was the import bill last fiscal. It is expected to jump towards 160 or 170 billion if things don't really escalate even then. Plus, we have FPI outflows which are happening from equity and to some extent in debt. So I think this pressure or this demand for dollars being met by RBI through interventions. They have measures. They have the FCNRB window. They can open an oil window. So all those things are there. But for the trend to change for USD, I think, again, I'll come back to the key point. The Hormuz has to open up.
Right, Anindya. So Hormuz has to open up, and so says Sonam Srivastava as well. So all the equity and money market both really want that. But Sonam, you also pointed to the opportunities that are there in the market. Of course, the downside that we had seen and the kind of sell-off pressure that we have seen a lot of. And of course, the larger market has also been outperforming the key indices on several days. So which are the pockets which are at good valuations for a slightly long-term perspective of 1 to 2 years?
Yeah, I think I mean the valuations you could discount in sectors like I said, the power and the hyperscale, the data center sector, right? So if you look at the recent news, also you would see Google has set up a discom in Hyderabad. We saw announcements of Uber doing a deal with Adani for data centers and for that infrastructure. So I think there's a lot of movement happening there, and you have a lot of stocks that sort of form the proxies of that development. So we talked about MTR Technologies, which plays a role there. We talked, you'll see stocks like Polycab, KEI. You'll see other, infrastructure stocks in that segment, which we think, which I really think can be a positive. If you look at the US earnings that came out for the software sector, you'll see that the companies which are doing AI in the US have come up with great earnings. Plus, the capex is going to be strong. So I think that is going to have an impact on the India data center sector. So I am really positive about that. Along with that, we're seeing, very good movement in the metal sector as well. You saw, I think JSW Steel is coming up with the results right now. You're seeing a very sustained up move in a lot of companies like National Aluminium, Hindalco, SAIL, Tata Steel, etc. in that segment. So I think, and if you look at the global steel prices also, there also seems to be sustained momentum. So I would be positive about that segment as well. I like a few stocks in the auto ancillary space also, and I think select names in the consumption theme also. So while the broader market might have its ups and downs, I think there are very strong themes that are coming into play, which will be very interesting, in the coming few quarters. And that is where we think that money could be made in this market.
Right, and as markets have normalized above $100 per barrel crude numbers, because it's still holding at 105 today and the market is gaining. So that showcases that a large part has been really built in at least these levels, which is actually a good news. Final word to you, Anindya. When we look at the rupee situation, the import bill, which is inflated because of crude, and the way we are being also downgraded in terms of our growth. What is the summation when we talk about the economic pressure points from your viewpoint?
One hand, it will be negative for growth. So the real GDP will get downgraded. Other hand, it's actually a stagflationary kind of a situation world over. Some countries are facing that pressure more acutely, some are less, but it's a stagflation globally, because globally there are no strong growth centers. India was one of the few, but India will also face the impact of the inflation. We just had the WPI inflation released. So this is higher inflation, which is going to ensure that the interest rates on real terms stay negative, and that will exert pressure on the Indian rupee. So that's something which will continue till the oil prices stay elevated.
All right. Thank you so much, Anindya, as well as Sonam, for joining in with all your take on the money market as well as the equity market. And of course, rupee is at worrying levels. Let's also focus on some big earnings. Pharma major Cipla really announced a weak Q4 with the revenue declining 3%. Varsha is here with a detailed report on what brokerages are really penciling in on the back of the Q4 Cipla numbers. Varsha, tell us.
So I would say revenue was in line, but EBITDA and PAT was missed. But the reason why Cipla is buzzing is not because of numbers, but because of the commentary of the management, and of course the brokerage is being bullish post the commentary. Well, the company is expecting strong launches which will help to aid growth. EBITDA margin expansion is on the cards. US business is expected to do well. Now, talking about the brokerages, well, let's see what Goldman Sachs has to say. They've maintained neutral, though they've hiked target price. Q4 results, according to them, were below estimates, but India, South Africa beats US pipeline in focus for FY27, and One Africa gathers momentum. Kotak has maintained buy with target price of 1,625. According to them, the numbers were in line, but domestic business delivers strong at 15% year-on-year growth. Robust H2 FY27 is expected, and US guidance brings a positive surprise. While MS has maintained underweight, though they've cut the target price as well. According to them, the earnings were weak. FY27 remains a transition year. EBITDA margins down, sustainability of gross margin improvement, and launch timeline of peptide assets will be a key thing to track, but the US pipelines is strengthening. So overall, all the brokerages and investors are, betting on the US pipeline, and of course the new launches and the capex will also go down, which will help the operating leverage, and hence the EBITDA margin will also improve for the company, and hence you are seeing the stock is buzzing in trade today.
All right. Thank you so much, Varsha. But now let's shift focus to another stock which is really having a great day of trade, over 18% up on this particular counter. We are talking about Balaji Amines, and D. Ram Reddy, who's the managing director of the company, really joins in now. Good to have you on the show. Welcome to NDTV Profit. My first question, which probably the markets are really very, very positive about, is the DME plant, which is an LPG substitution. Our market, our economy needs substitution. That has been the need of the hour. And this is one exciting bit. Can you give us more details about what the substitution means? And of course, the commissioning is in the first quarter FY27. And how will this work, and how soon can this be largely utilized?
See, we have
installed capacity of 100,000 tons capacity of dimethyl ether plant. And we are just about to commission. Maybe next 1 week, we are going to commission that plant. Only thing is, presently we got part peso permissions. That is about cylinders, small cylinders permission we have received. And now we are expecting the tanker permission. The moment we get the permissions, it will go in full swing. And actually, the BIS, Bureau of Indian Standard, has given a clear notification that around 20% can be blended in the LPG. In other countries like China and all, they are already mixing more than 30 to 40% of the DME in the LPG. So initially, we will be targeting the commercial establishments where the LPG presently used as a heating purpose.
Yes.
And,
so in
also
commercial
petrol.
use, yes, Mr. Reddy, in commercial use, you're saying you gave us the steps of how soon and what are the steps forward, but how soon can it be rolled out in the market? Is the back end tied up for that rollout to happen, for that 20% addition to LPG, so that the LPG pressure, shortage pressure is really eased a little? When is that going to happen?
That is left with the government. We have already requested the government to give the permission to the oil companies to blend this with the LPG. But in the meantime, we can reduce the pressure by giving it to the aerosol and some of the commercial, where there is no regulations that we can directly go to the commercial establishments like hotels and bakeries, like biscuit factories, where the LPG used for the heating. There, this can be replaced easily.
Also, Mr. Reddy, your numbers were good. How much of the revenue uptick is really coming in from the price versus the volume push? And on the other hand, how much of operating efficiency can be pushed? How sustainable are these numbers? If you can give us a guidance for this particular quarter, please.
See, presently, because of this geopolitical situation, we have faced a lot of problems. Still, we were maintaining almost some of the plants 80% level and some of the plants 60 to 70% level. They are operating. Because of the proper, perfect inventory management, we could manage these numbers. And as regards this margins, as I said earlier also, in our type of industry, specifically for the specialty chemical industry, 22% to 24% of the EBITDAs are the sustainable. And present, this last quarter is about more than 25, 26. But I can say 22 to 24% is easily sustainable for the coming quarters.
Right, 22 to 24% easily sustainable, and the stock of Balaji Amines is really doing well. All the best for your rollout of LPG substitute. Thank you so much, D. Ram Reddy, for joining us right here on NDTV Profit. All right, completely out of time on the show. Thank you so much for tuning in, but keep it with NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
You're a Malad boy. You started by trying to do something with sweets, pivoted to chaat, then pivoted to vada pav, then you've pivoted to vegetarian burgers.
When we started the Mithai brand, again it was a little too ahead of its time. Chaat never happened. We just called, Jumbo King was called the chaat factory for some reason. I love the name. I started with one store of 50 square feet. We are fully vegetarian, and my first reaction when we did vegetarian burgers, when we pivoted, they said burgers vegetarian comes down, right? A burger is basically...
It's like veg biryani.
Veg biryani.
Why is Jumbo King not only about vada pavs anymore?
Vada pav is a Mumbai product. Within Mumbai, this was like the poor man's food, or the my struggle ke days ka sathi. There is a problem in the name vada pav. The moment you call it vada pav, you can't charge more than 20 rupees. People will say that isme sona chandi thodi dala hai. Why should I pay more than this?
How many people told you कि MBA करके आप वड़ा पाव बेच रहे हो?
My friends used to joke around, tell us the truth. You've been disowned by the family. You're not telling us that. We have a family business. And I told my dad I don't want to join the family business. When Jumbo King started, it was seed capital of only 2 lakh rupees, which I borrowed from my dad. I said I don't need money because I had burnt about 55 lakhs in the mithai business.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey standing at the NDTV Profit Market Pit. Sharad, good afternoon. Markets at the day's highest levels, if you see Nifty 50 as well as Bank Nifty. And from where we ended in terms of yesterday's session, there was dilemma as to what happens. Now, is this euphoria on the back of, Trump and Xi Jinping actually meeting? Probably a resolution when it comes to the West Asia crisis is on the cards, and that's what the market is reading into.
Well, yes, looking at the markets, there's a sudden spike coming in and we are at the day's high levels. Look at that. It's almost, you could say, 300 points up coming in the day's trade. Nifty Bank also, the big spike is coming in and the reports are coming that the government might reduce taxes on the foreign bond investment. And that is what is cheering the markets. Look at that. Nifty Bank also up almost 1.5%. But what are the key triggers is the most important right now for the market. The report suggests government is considering to reduce the taxes from the foreign bond investments, and that is why we're seeing a good up move and you could say basket buying happening. But will this technical reverse hold up? That's the big question. Yesterday the strength fell off. We saw that a little bit of short covering was there. And interestingly, the Nifty support range, the immediate numbers, they are 23,300 to 23,400. That's the level we are looking right now. Also Nifty Bank, let's get the support range that holds between 53,000 to 53,200. That's the minor bump up which has happened. But let's look at the other key factors. What is important right now in the current markets? Pharma, metals are shining. But the IT segment, that's where the drag is definitely going to be there. And that's what we are seeing in the trade. Value buying continues in the small and mid cap space. It's not that bad as, compared to the overall indices, but the rupee has strengthened and the yields, they have also cooled off as well. So this is an important macro trigger as well. But globally, Trump and Xi Jinping meeting is still underway right now, but coming back to the earnings, that's where a lot of action is happening. We have 3 major earnings today: JSW Steel, Tata Motors PV and United Spirit. Before the earnings, all of them are in the green, especially JSW Steel, as we have seen a good run up in metal. But Hiral, the entire story right now is definitely there on the government's initiative. If it is announced, it will definitely be very positive for the FIs, because we have been seeing a lot of sell-off in the equity space, at least for the FIs.
Absolutely. I mean, the FI holdings has actually gone below your DII holding, and this has happened for the first time in 2 decades. So that is telling you what the mood of the FIs is so far. But let's quickly look at what the watch list is looking like. Cipla is in focus on the back of earnings and brokerages, which have gone ahead and hiked target price. You have Adani Enterprises. The stock is at a 7-month high in intraday trade. Partly Airtel, a solid Q4 broadband and enterprise business. That stock also seeing some smart moves. OpenAI's deployment model fears is what is spooking IT sector for a second or a third consecutive session, and that is under pressure if you have to look at Nifty IT at the day's lows. Hindalco is also trading at record highs, and this is that metal rally which has continued for all metal majors. NLC India, a strong volume buzzer. It's interesting to see how mines companies like Balaji and Alkyl are panning out, and this is a strong Q4 that has been posted by Balaji Mines on the back of the profit number that has come in. Godrej Industries will be reporting numbers tomorrow, so strong moves there. Care Ratings again buzzing on the back of earnings. MTAR Technologies, they've raised their FY27 guidance, and in addition to that, they've got an order win as well today, which is keeping the stock afloat. Keynes is a disaster. It's missed its guidance in the fourth quarter. In fact, we will be speaking to the management at 1 p.m. to grill them in terms of what has happened, what has gone wrong, and what's in store, because they did make promises in the past as well, which have not really fructified. So please stay tuned to NDTV Profit to hear out the management as well. Zaggle, the margins have contracted and office is trading under pressure. Sharda Crop, volume buzzer plus reacting to numbers. Zydus as well has acquired a US oncology firm. Swiggy is switching to an inventory-led model, and that's the path it's taking, and that's the reason why it's making the switches it has to. Siemens is also in focus because the parent guidance has been upgraded. So that's what is on our watch list. But Sharad, over to you to take the rapid fire with Ajit Mishra of Relicare Broking.
Thanks a lot, Hiral, for that. Good afternoon, Ajit. It's always a pleasure to have you. Just want to check up. Just a minor market check I just want to do for Nifty and Nifty Bank. Both of the good spike has happened. Any important views on that?
Yeah, good afternoon, Sharad. Good afternoon, Hiral. So yes, it's indeed a welcome relief, because after 4 days of decline, yesterday was a day of a breather, but still we couldn't see any major up move. And today we are seeing that Nifty is up by around 1% on the Sensex expiry day. So we are inching closer to the area where we were earlier taking support, which might act as a resistance. 23,800, 900 Sharad will be the area where Nifty might find resistance in case if this recovery extends. The good part is banking is at least contributing to the move, while IT is completely in the doldrum. Banking is at least contributing, so which is definitely a positive thing, because other sectors, if you talk about energy, metals, pharma, they were anyways doing well. So it's more of short covering so far is what the markets are indicating. At the same time, sector specific approach is something which is yielding better results amid all this choppiness. So one should largely focus on that. And for the index, in case if this recovery extends, one can look for shorting opportunity on rise around 23,800 to 900 miles.
Right, but coming back to the rapid fire, Adani Enterprises stock is doing really well, and the volumes have also picked up. Do you see further up move in this counter?
So in fact, if you see, Sharad, the entire group of Adani stocks, they have done exceptionally well in the recent months. And after this today's move, which is roughly around 7% up, and the volumes are also almost 3 times of the average volume so far. So this definitely indicates a promising a move to unfold further. So maybe close to around, let's say, 3,000, 3,100 is something that the stock might test. So with stop at 25.50, definitely one can look for long positions.
Right, there's a standard disclaimer for Adani Enterprises. But moving on, the second stock which is in focus should be the group of stocks, maybe the IT stocks. So second straight day, they are spooked on the AI developments. Do you see further fall in these IT stocks, or is there any value emerging in any kind of names, be it mid cap or small cap, Ajit?
So broadly, I still don't see any reason one should dampen into dabble into a fresh long position into the IT pack, considering that the overall tone looks bearish, and we are completely diverged to what we are seeing on the global front. So basis that, and plus the IT index texture indicates a possibility of further decline, roughly around 700 to 800 points down from the current level. So currently we are at 27,000 marks. So maybe close to around 26, 200, 300 is something that Nifty might IT test in the coming days. So basis that, one should refrain from any fresh long position. In fact, in case if the markets offer shorting opportunity, IT should be the preferred pick.
Right, short IT. Hindalco, another stock hitting its 52-week high levels. Good time to book the profit, or do you think there is more sustained move here?
So metal as an index, as a pack, is doing exceptionally well. We are at the record high. Hindalco is aligned to that move. In fact, we have fresh breakout from a very short consolidation range also. So I feel that one should continue to ride this move with the 1070 as a trailing stop loss and keep on trailing your stop losses on rise. Let's say once we reach to around 1150 plus levels, one can trail the stop loss to 1110 and continue.
I'll see India back on a good volume buzzer and a strong earnings also. Good time to at least do a partial booking of profits in this counter. Do you think there is further buying in this space?
Sharad, first disclosure that we had recommended this to our clients. We booked profit in the early trade today, and we feel that yes, the stock has potential considering the overall texture. Means it was a multi-month high that the stock multi-year breakout rather that we had in the stock, and that's why we are seeing this kind of move unfold. But fresh buying, one should wait, let the stock stabilize in this range of 350, 370 before any fresh longs, and partial profit booking definitely can be recommended.
Right, another stock, Godrej Industries. Tomorrow the earnings come out. Any pre-earnings positional trade here?
So Godrej very volatile, which is very not normal, especially considering the past data. And after this sharp move recovery in today's session, I feel the upside is capped. So in case if you have any existing position, you may consider booking profit before the event and let the stock stabilize above 1350 mark to re-enter fresh.
Right. Speaking about stability, there's a counter called Care Ratings. Interesting numbers. PAT also jumped more than 20%. And you're seeing a good buying happening. It's generally a very stable counter. How do you see this, and is there any trade to be made here?
So yes, after this gap up start, volumes are picking up. Stock is still holding in green. So with stop at 1650, you can look for long position. But for fresh momentum, we need a break above 1800 marks. So let's say once we do that, probably around 1900, 1950, the record high zone is something that the stock might test.
Right. Another stock, big breakdown, Zaggle Prepaid. Seems like a big overreaction on the earnings. Of course, they were slightly mixed to negative. But what is there on the charts? Any suggested stop losses here, or more further fall will be there?
Sharad, in my opinion, one should exit the longs because the trend is down and the stock was making an attempt of rebound. We couldn't surpass the long-term averages. And today we are seeing a very decisive break. 20% the stock is already in the lower circuit with very a strong uptick in the volume. So possibility of retesting the previous swing low or maybe inch lower seems high. So in case if you get an opportunity to exit in tomorrow's trade, early trade, you may consider.
Right, exit Zaggle Prepaid if we get an opportunity. Of course, apart from Zaggle Prepaid, we will be talking about Office Space Solution. That stock is also under pressure. Ajit, for any levels to watch out for, or you'll avoid this trade?
It looks more like a sideways thing to me, so it's prudent to avoid.
Right. And last stock for the rapid fire is Siemens. Their global parent arm has come out with a very strong guidance, and that is where a little bit of momentum has started coming in, especially in the last 1 hour of trade. I just wanted to get your views on it. Is there a good positional setup happening? What's looking like on the weekly or a monthly charts for Siemens?
True. In fact, post the ABP numbers, we were seeing that across the board, the profit taking was there, and Siemens also moved up very sharply in the recent past from 2800 to 3900. So after this dip, it seems like it has formed a fresh buying pivot, and once let's say we cross this 3660 mark, this will be the confirmation that the stock is set for the next leg of a rebound. So one can look for accumulation at current levels with 3450 being the stop and 3900, 4000 in the position targets.
Well, that's the important news coming in. But that's all, folks, for the rapid fire segment. But over to you, Hiral. What are you gathering in the Google trending stocks?
Thank you so much for that, Sharad. In terms of Google Trends, let's pull up the screen and see what's actually trending in trade, because last couple of days you've seen a diverse range that has come in. SAIL is interesting, HBCL for obvious reasons, Keynes Tech In fact, again, I'm reiterating, NDTV Profit will be speaking to the management at 1 p.m. as well. Vodafone Idea and Vidhi Speciality. Any views when it comes to Keynes Technologies and HPCL, Ajit?
So Hiral, very sharp cuts, means almost like 2 months of recovery, rebound, whatever we were seeing in the stock got engulfed in the single session. Volumes are, tremendously high, means almost 4 times of the average volume. So that clearly shows that the stock is in tremendous pressure. And once, let's say, we break the previous swing low close around 32.70, 32.80, then probably we may see a fresh leg of down move towards 2900, 2800 levels in the near future. So in case if somebody is holding long, chart indicates a possibility of fresh breakdown. So prudent approach is to reduce your position in case if it fails towards 32.80.
Okay.
And for Hind Petro, here also, like the entire OMC pack, we were seeing a bit of a rebound, but it's still struggling below the long-term averages. So no point arguing with the market until we see a decisive close above 410. One should refrain from any fresh long position. And in fact, if you have any existing longs, you may consider exiting and let the stock stabilize.
Okay, so that's with regards to 2 of the names on Google Trends. Thank you so much, Ajit, for joining in. Always a pleasure to speak to you. Let's pull up a HAL. Hindustan Aeronautics has just reported numbers. Their revenues have seen a growth of around 1.8%. 13,942 odd crores is what you're picking up so far in terms of the top line. EBITDA is down around 4.5%. 5,058 is the number that you're picking up. Margins is the one which has seen a strong improvement. EBITDA margins, this is a year-on-year number, but 36.3% versus a 38 is what you're seeing. But the profit number has seen a growth of around 5.5%. The stock is actually ballooned. It's at the day's highest levels. Let's just pull up that one on the screens. The stock is at the day's highs as we speak right now. I'm just going to try opening the release and see if there is any additional information that's coming in there. But the EBITDA is down 4.5%, overall in terms of as we speak. But we'll come back to HL numbers. Let's quickly listen in to what Sunil Bharti Mittal is talking about right now.
The telecom as much as possible. So to put a bit more granular sort of angle to it, Singtel had a difference of about 7%, or rather has 7% direct stake in Airtel, and it had about 6% to equalize. Now with this transaction, once this is done and shares are issued, this gap comes down to 3.6%. So first and foremost, we should see overall this gap dramatically reduces. And if Singtel, which has been on the path of a sell down of this direct stake, has to sell now much less than earlier. So 3.6% over the next 3 years or so, let's say 3-4 years, as a less than 1% a year, gets Singtel onto the equalization path that they stated in the last 2 years. And that brings us to equal stake. And then it will be during this period of effort, depending on how well Gopal, Shashwat, Sumen, and the entire management team delivers this wonderful cash flows. More dividends, more buybacks. Idea would be to keep using that, twin lever to get BTL above the 50% stake. That'll be my cherished desire. Our stake must go back to BTL. For that, I need a little bit more leeway in the hands of BTL, which I'm hoping will be delivered through continuously enhanced dividend, as you're seeing. And I think hopefully in the next couple of years, some buybacks in addition to the dividend. And that will give us the necessary capacity in BTL to buy more. If I could do it today, honestly, I will do my transfer to BTL now, but BTL needs a little bit more headroom on cash.
That's very clear, sir. Very helpful. Thanks for that answer.
Okay, so that's the word coming in from Sunil Bharti Mittal as we speak. But staying with HAL, I think the numbers are slightly above what the street was estimating, and that's the reason why you've seen the kind of spike that has come in terms of Hindustan Aeronautics. The 1 month, 15-16%. Let's just pull up the intraday chart and that'll tell you it's cooling off slightly from the day's highest levels, but categorically, in terms of the top line, specifically in terms of the margins are concerned, that is what has actually been above the street estimates, and that uptick coming in terms of HL. The stock is cooling off slightly right now. But moving on, MTAR Technologies, that stock is gaining in trade on the back of order wins and the management commentary as the company has raised its growth guidance. Let's listen into what the management had to tell NDTV Profit earlier today.
If you remember, last year we had a weak first half of the year, but this year we'll have
a strong first half and even better second half. So that's a clear indication the way we're moving forward.
Very interesting. Mr. Reddy, good morning. This is Alex here. So I want to stick to or talk to you about that guidance improvement, 80% versus 50% approximately earlier. If you can talk about the mix therein, because you've also guided to EBITDA margins around that 24% mark, if I'm not mistaken. So is it because you anticipate that the mix of projects that you will be taking up will be relatively higher margin?
Absolutely, yes. Not only the relatively higher margin, we're going to execute a lot more nuclear orders in the current year, as well as the operating leverage, which kicks in with the higher volumes as well. We have analyzed this very carefully, and we are pretty confident of achieving the required margins for this year.
Okay, let me ask, so you mentioned nuclear, Mr. Reddy, but there is also for your company an AI data center play. And one of the new orders stands at 35 crore rupees. Of course, the order book is significantly higher. So I'm just wondering, what is the kind of exposure to data center as a business, and where do you see it going perhaps in FY27, FY28?
I mean, that's a very interesting part of the whole story, because it's another customer which we are working with, and that's just the first article you're talking about, which is 35 crores. But over the next 2-3 years, we're looking at more than that, increasing to about 450 to 500 crores. Basically, we're going to supply mainly to the data center infrastructure requirements in terms of the various assemblies that they require for implementation of the data center projects. And that's something which we would love to do. And it's actually moving in the right direction. We already received the order. We're also going to sign a long-term agreement with the customer shortly, and that would take us to the where I've mentioned around 450 to 500 crores for the next couple of years or 3 years.
Okay, so Mr. Reddy, I presume the exit order run book at the end of FY26 was healthy. You added a new order today and maybe some others in the last few weeks, and you're talking very healthily about the data center business order book as well, I presume. What's the anticipated order flow for FY27? I'm just trying to understand what's the visibility that you would have for execution and growth for how many number of quarters or years?
No, we'll have visibility for a couple of quarters normally, and the orders that are released, or even sometimes even more. But by the end of the year, probably we're looking at almost I've clearly mentioned that we'll have a closing order book of 5,000 crores, and we are pretty confident on that. And that's also on the kind of conservative front.
Well, that's the management of MTAR Tech giving their views going ahead. But another stock, arguably the stock of the day, is Keynes Tech. Of course, a lot of promises are made by the management, but do they actually keep it? Now, to give that entire perspective, we joined in by Puneet.
Well, I think the 18% downtick just shows you that they're not able to keep it at this point of time. But what we've seen in Q4 results is that the revenue expectation was 1,700 crores to meet the guidance, and that has not come through. So at 1,284 crores, it's a miss on guidance for the revenue for the year. For the year, it was expected to be 4,100 crores. It has finally come in at 3,600 odd crores, and hence the downtick on the stock as well. We've also seen that the guidance, as I mentioned, has been one of the other factors, and so has the cash flow. That has also not met the guidance for this year. Now, just in Q3, the management had said that we could see the working capital days between 85 to 100. That has actually come in at 125. So it's a huge miss that the company has reported. Operating cash flow has also been at negative 600 versus the expectation of a slight negative to positive bias. So they highlighted that there have been a couple of government contracts that got delayed, and hence you've seen that what was expected hasn't panned out essentially at this point of time for Keynes Tech. But you already started to see some key downgrades. Nuvama actually downgraded the stock this morning to a target price of 3,550 versus 5,550 earlier. And just to in terms of what we had the conference call as well this morning, where they've said that they've had a management reject. Some measures have been taken essentially to address the gaps within the leadership positions, and they feel that the changes will have a higher accountability. And while the near-term volatility has been there, it does not define the company's performance. So those are some of the key aspects spoken today on the con call, but definitely stock's been under pressure today and has been all day.
Thanks a lot, Puneet, for that analysis. And just in the matter of 7-8 minutes, the management of Keynes Tech will be joining us at 1 o'clock, and we'll give you the entire picture of that. But we are joined in by CA Tapan Doshi. Good afternoon, Tapan. We have a shortage of time, but just wanted to get your views on these stocks. Especially Keynes, everybody's talking about it. Big sell-off is there. Is there any kind of a value buy opportunity, or will you be away from these high-value DMS companies?
Well, hi Sharad, good afternoon. Yeah, the results are quite disappointing. No, actually, we were expecting much more. And if you see the working capital cycle is increasing, again, if you see execution risk is there, and valuation at this level with this performance, it looks like high. No, if you see the other EMS companies like Dixon and Sirma, they have performed well comparatively. Again, the capex is near term now is on a higher side. So yes, the disappointment is that we'll want to see what the management is saying, but at this level, better not to buy. Just hold the stock because the stock has fallen a lot. So it is coming at a value level, but we have to see what management is talking, then only take a decision.
Technologies. Bharti Airtel is another one that is in focus as well. You're talking about restructuring in terms of Airtel Africa shareholding. Plus, you have the numbers which have come in. The stock at the day's highest levels, gains of 3.5% coming in there. In fact, we did hear the conference call as well, but a lot of takeaways have come in where they have indicated that, yes, there is a need when it comes to, tariff hikes is concerned, but this will be on the lower category ones. And they're cautiously looking at it. Yes, we don't know what the timing is going to look like, but we'll be watching out for pretty closely. Tapan, any view when it comes to Bharti Airtel? Because good commentary there. Price hike is the only concern. And to your Vodafone Idea also, which is ramping up, where people are talking about capex plans that could be funded through stake sales, etc.
No, it's a completely value pick. No, if you see, of course, 5G monetization, I think it will accelerating from here. And if you see, broadband expansion is quite good against Jio, and digital services also scaling rapidly. Tariff hike, yes, we have to wait and watch when it is going to happen, but it's going to happen. And that will add directly to the profitability. Of course, debt level is on a higher side, but as the 5G monetization will happen, there it will come down gradually. So competition pressure is there, but it's like a duopoly. So we can, competition against Vodafone Idea, I think Vodafone Idea is far behind. So at this level, I think, and because of the strong cash flow, it's a peak where one can keep it in a core portfolio.
Another stock is Zydus Life. Rarely do we see a pharma company announcing a buyback, but there are two news. One is buyback and one is an oncology acquisition. What are the key details on it?
Well, company is the subsidiary of Zydus is buying a company called Sectorial Holdings, which is a US pharma company focused mainly on oncology. So this acquisition will build an oncology portfolio for Zydus. Now the deal size is at $166.4 million, and Sectorial will be delisted from Nasdaq, and the deal is expected to close in FY27. Now talking about this will be all cash deal, tender offer first, which will be followed by merger to acquire remaining shares. This is a US based specialty pharma company, as I said, mostly focused in oncology segment, and the key product is Rolvedon. Onto the financials in FY25, if you see, company did almost $68 million of revenue, and mostly was from this single product. Now why Zydus is buying? Because this will help entry into the US specialty oncology market. Now oncology for Zydus contributes around only 9%, and this will build up the portfolio for them. Will get immediate commercial presence in US, 170 plus oncology accounts already in place. And also the other news, the why Zydus is buzzing, of course, the buyback which is expected. The board meet is set on May 19th, wherein company will consider this buyback and of course announce its results. So these are two reasons why the stock is buzzing as of today.
Thanks a lot, Varsha, for that analysis. But Tapan, just wanted to get your views also in Zydus Life. Stock is doing well. How do you see the medium term or the long term prospect?
Well, valuation of Zydus Life is okay. No, it's not too expensive. Again, the specialty growth will be there in coming years. A good, maybe double-digit growth, and margin expansion is expected in next 1 or 2 years. I think new launches which they are going to have that will drive the growth. And if you see domestic front, I think demand is quite strong. Of course, their R&D expenses are quite increasing, but I think because their EBITDA margin is strong and maybe improving, I think this is a stock now one can hold on to their portfolio, because still the valuation is okay, and one can think about buying also as and when it goes down.
A lot for your opinion, Tapan, on that, but we are out of time right now. From me, Hiral, and the entire team put together the trending stocks. That's all, folks. Stay tuned to NDTV Profit, and up next, there's a very important interview of Keynes Tech coming up at 1 p.m.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Good afternoon. You're tuned into Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets right now and look at that surge really coming in, whether you talk about Nifty or Sensex. Look at that 280-point uptick coming in for Nifty as well, and hovering close to the day's high right now. When you talk about Sensex as well, about 800 odd point gains also coming in, very close to the day's high levels, even Sensex. When you talk about the sectoral picture, that's actually tilted very, very sharply in the favor of green. So it's pharma that's leading the charge with that 2.5% uptick. PSU banks, metals also shining with that 1.7% uptick as well, and Nifty financial services and some of the other sectors, everything barring IT is doing great for itself right now. When you talk about some of the gainers as well, you're taking a look at something like an NLC India, Alkala Mines from the broader universe, but when you talk about just the Nifty 50 complex as well, you do have a bunch of gainers. The Adani Group companies, Adani Enterprises doing quite well for itself, 7% uptick coming in on that particular counter. Cipla, Bharti Airtel, Dr. Reddy's, HDFC Bank, all of those counters in good shape. What's not doing so well right now, perhaps from the losing side for Nifty 50 is some of those tech companies, the likes of Tech Mahindra, HCL Tech, Infosys. Some of those IT names make a comeback yet again. So IT is clearly on the back foot, 2.9% downtick coming in for HCL Tech, Infosys, TCS. Anywhere between 2.5% to 3% downtick coming in for all of those counters. But let's also talk about what's really helping the sentiment right now in terms of the key important cue that we're looking at when it comes to the markets. And that, without a doubt, has to be the Trump-Xi meeting as well. Let's also tune into the commentary coming in from US President Trump in terms of what he then had to say when it comes to this particular meeting.
Great.
Did you talk about Taiwan,
Great place. Incredible. China's beautiful.
All right, and so there you go. That's the word coming in from US President Trump as well in terms of the entire picture for the visit. So it's a little bit of optimism that he's really reflecting. He's saying that, you know, the country is beautiful and the visit thus far has been great. And that's the key takeaway that you're looking at. That's providing a little bit of optimism to the market as well. And the Wall Street is also looking at it that way. But, you know, when you talk about Blackstone-backed Money Prime Office REIT, that is in focus. That made a strong debut in the stock market, listing at a 3.5% premium as well. In fact, Puneet spoke with the management about the premium listing and what this really means for the company. Let's go across and listen into a slice of that conversation.
Money Prime Office REIT is the one that we are focusing on today, and we're joined by the management of the company. Hugh Andrew, the Chief Executive Officer, Ashish Shah, the Chief Financial Officer, also now joining in. Gentlemen, both of you, thanks so much for joining in. Let me first just pose the question to either one of you, can go for it, just in terms of the sector, because we've seen a few listings over the last few years. And within the REIT space, the growth outlook, especially for a lot of companies to go asset light at this point of time, has been the interesting key factor. Talk to us a little bit about Money, your focus on the commercial real estate space, and what do you currently see on the ground?
Sure. Firstly, thanks very much for giving us the time this morning. Look, you mentioned uncertainty. You know, we are very excited about today. This is the biggest REIT listing that India has seen so far, with a 6th REIT to list. So the market is maturing rapidly. And obviously the investor interest has been incredibly strong with that almost 25 times subscription. That shows market confidence and investor confidence in the sector. We see a continual demand from GCCs. And I think the whole real estate sector across India sees that demand. So you're right to say that there is certain geopolitical influences, but we haven't seen, and we don't predict to see, that affecting this asset class and the interest that the investors have, particularly with the Money Prime Office REIT, with over 20 million square feet of revenue generating and assets under construction, and an incredible growth opportunity with a ROFO pipeline of over 47 million square feet.
Just in terms of what we've seen, over the last few years, that the concentration has largely been in these tech hubs, which require a lot of headcount and hence a lot of space for commercial real estate. Just talk us through your portfolio, how that has evolved over the last few years, and do you expect to be concentrated in these set hubs? Currently, what is the exposure that you have across the country?
Thank you. It's a very pertinent question. Let's deal with the type of demand that the real estate sector is looking at, and particularly our portfolio. Because of the economic development of India and because of the talent pool that exists, not just in Bangalore, but across all of those prime cities, we're seeing that the type of use and the type of tech demand changing. It's gone from companies that were outsourcing to companies now that see India as an innovation hub and a research hub. 89% of our occupiers, our partners, our client partners, are GCCs across a broad sector of industry with a heavy concentration in technology and also in the semiconductor business. In fact, over 20% of our occupiers are in the semiconductor business, whether that's research, innovation, or manufacturing. So India as a landscape for business will continue to change and develop. And I think the biggest factor will be the continued improvement in infrastructure across the country, but also that fabulous talent pool that India has and that those GCCs want to take advantage of.
Alright, then there you go. So that's the update coming in as far as Bagmani REIT is concerned. But let's also move on and take the entire commodities spotlight also. Let's take a look at some of those factors as well that you're looking at when it comes to oil as well as gold. And when you talk about oil prices, they're remaining largely steady at this point in time. And you do have the Iran war that is, of course, keeping the global oil market tight. And that's the entire reason why you're seeing Brent also well above that $105 a barrel level. IEA as well as flagged severe supply shortages till the month of October, and that's also something that you're watching out for. And you do already have the Hormuz crude flows down, sharply since February, and that's also something that you're looking at as a very important factor. Now, when you talk about gold prices as well, that's also holding steady, currently holding on to their gains as we speak, but it's trading well close to that $4,700 per ounce level as well. Range boundary of trade coming in for gold as well. And right now you're seeing the Fed, the expectations in terms of the Fed holding rates higher for a longer period of time. And that's something that you're watching out for. Other than that, concerns are also persisting over Fed independence. And that has been in the past a trigger for gold as well. So that's also something that you're keeping on your radar in terms of factors to watch for both of these commodities. That said, before we get to some more insights, when it comes to gold as well as oil, let's quickly take a look at Bitcoin as well. That's slipped below $80,000. And you're looking at this decline coming in amid higher for longer US rate fears. That's also something that you're looking at. And other than that, the inflation impact that is keeping crypto pressured. But the headline really is the Clarity Act hearing, ahead of which you're seeing a little bit of caution really emerging when it comes to the entire cryptocurrency complex. The US Senate is going to be debating the landmark crypto regulation bill, and that's something to watch out for on the crypto front. Ahead of that 80,000 level, that's a key psychological level when it comes to Bitcoin, has also been broken. With that in mind, let's also quickly take a look at some of these insights also coming in as promised. And Ajay Kedia, Director, Kedia Advisory, is joining us on the show right now. Mr. Kedia, thank you so much for taking time out and joining us right now. When you talk about the entire complex for gold as well as oil, it's a very interesting setup that you're looking at. You have a high stakes meeting that has just been concluded. And when you talk about the cues coming in from that, how are you then looking at gold and what are you expecting going forward?
Yesterday was a big day, Sanjay. We have seen on domestic market looking to the concern which arise from the Middle East. We have seen our Honorable Prime Minister has already alerted about the gold not to buy for 1 year, and we have seen immediate action has been taken place. Domestically, yesterday we have seen 6% gain in gold prices, but on the contra, international gold prices are trading with the weakness only. Currently, prices are trading near to, we can say, 4,700 below. Timing, we expect with the inflation is rising around 3.8. There is a high possibility, whatever previously we were expecting a rate cut, aggressive rate cut from Fed, but now it's a high possibility that in the month of December, maybe there is a hint of rate hike. And that is why prices are expected to trade with a negative price. Yes, US and China meet is going to be more important because in last 1.5 years, we have seen the trade tension between US and China has impacted globally. And even Iran issue is been impacting very well. But let's hope if there is any positive talk, then definitely gold and crude has to come down. Otherwise, I think things would be awkward and maybe we can see Brent testing near 110 because logistical issues still prevailing as compared to the supply what we are getting right now. Shansi.
No, absolutely, and since there's a lot of volatility right now, Mr. Kedia, that you're looking at when it comes to gold, especially for the domestic market, right? How are you looking at somebody who could be looking at fresh buys, or if you already have chips on the table, How should they be approaching this? Should they be waiting for the dust to settle a little bit? Or what's the strategy that you would suggest there?
I think better would be better wait and watch, because one side already we have seen the appeal from the PM, and our love for gold is two different ends. So I think prices has already rallied very well. That has been already discounted. I am not so much bullish for next couple of months, because energy cost is been very important. It will impact your budgets. It will impact your logistic, everything. So maybe we can see price moving closer to $4,000, 4,100 would be a great level to re-enter. Because say in last 1 year period, we have seen rupee has depreciated to the tune of 14%. That has already been pricing in domestic market. Even a duty of 9% difference is also pricing. So I think on domestic side, if I get a level like 130, 140 could be a great level to re-enter for long term, because long term we are bullish on gold, but timing for a couple of months, unless until this geopolitical tension cools off, we expect gold can correct to the level of 4,000 to 4,100 level.
Absolutely. So some of it seems to be priced in is the view coming in here. But Mr. Kedia, just hold on for just a minute. We have an important update that we're looking at, and onto an exclusive. Then a big relief must be in store for OMCs. To give us some more information, you do have Shrimi's joining in with all of those updates that she's gathering from her sources.
Yeah, that's right. The government is considering a series of measures to boost foreign exchange inflows and strengthen the overall external position, as we've seen the tension in West Asia continue to keep global energy markets on edge. And what top sources indicating that center in active consultation with Reserve Bank of India is examining multiple proposals aiming at improving forex flows and even easing the pressure on reserve in case of this crisis further intensifies. Now, one of the key proposals under discussion is allowing state-run oil marketing companies to raise more foreign currency loans directly from the overseas market. Now, this could definitely help them bringing in additional dollar inflows at a time when crude oil-related outflows remain elevated due to uncertainties. And in fact, sources underline the fact that this is also going to help reducing borrowing costs for a lot of these OMCs, which are among the biggest buyer of dollars in the domestic market because of the India heavy dependence on the crude oil import. In fact, the other proposal which is also being discussed and being actively considered is the liberalized remittance scheme. Now, this is something they are talking about to how to sort of tighten so that the inflows, the outflows can be curbed. So exact contour of any tightening as such is still under being examined. The fine tunes are not being independently verified, but they are actively considering how to sort of curb the outflows through this LRS scheme which RBI has. Now, this discussion is coming as a series of meetings on the impact of West Asia crisis on crude oil prices, shipping costs, insurance premium, etc. And any prolonged disruption is kind of creating a concern among departments, among ministries, among government, that how to sort of curb all those, non-essential commodities, and one being increasing import of gold, which we have seen. So we will see a couple of more such decisions coming, soon, with regard to, boosting forex as well as curbing the outflows to sort of contain the overall import bill.
No, absolutely. Thank you so much, Shrimi, for joining us with that. So a handful of measures that you're looking at, some bit of fine-tuning on those finer details. That's something that's going to be worked out later as well. But before we wrap up, let's quickly take a look at some other updates also coming in. When you talk about oil prices, like we said, and we were talking about with Mr. Kedia as well, that Iran war is something that's keeping the global oil market tight. And you do also have IEA that flagged severe supply shortages till the month of October. Let's also get him back and try and get some of those insights also going. Mr. Kedia, just as we were talking about a moment ago, when you talk about oil prices, you do have elevated levels that you're looking at. So there's a little bit of pullback. There seems to be a little bit of a hurdle that you're looking at, close to $107 a barrel. When you talk about Brent, are there any levels that you're looking at that are acting as a key resistance level? And going forward as well, for this week to be wrapped up, what are you looking at for oil prices?
Yeah, I think the supply side concern is more important because, production has been there, but demand would be continue to be there. But important would be the state of Hormuz, whether it will be opening or not, because that is majorly impacted. So I think prices would continue to hold about 97, 90 106 level mark for Brent, and on higher side we are expecting 115 on higher side, because no further development has been seen in last couple of days. So we are also waiting to get an update from US and China whether they can trigger some new thing. But I think with the entry of Israel and UAE, one secret meet has been talk going on. So let us understand first, if geopolitical tension doesn't cool off, I think a supply shortage would be continue to be there, and maybe price can break 120 level, $120 mark also, if things continue to be there for next 15-20 days also.
No, absolutely. 120 is what you're looking at when it comes to oil as well. And I also wanted to try and understand if you're pricing in higher for longer oil prices as well. Is that something that you're keeping on your radar in terms of, the disruptions that we've seen and some of the supply shortages? It's quite the concern right now when it comes to oil prices. Are you looking at the lower level of prices, the lower band being revised in your outlook as well?
Basically, everyone will be expecting that whenever this type of moment comes, it will cool off. We have seen in 2022 when prices hit 130 level mark, and then we have came down to the level of $60 mark also. So it may possible that for next quarter, we may see prices are on elevated level. By Q4 and November, December, prices should come down again at 75 level. But we, to calculate that time, first of all, we have to see whether the war has been completing or not, because otherwise I think it will be very difficult to understand, because Black Sea area and this Strait of Hormuz are two different world, because 20% of global oil supply is from Strait of Hormuz. But as of now, we expect let everything settle down, then we can see price moving towards $75, $76. We are not expecting price to come down to 60 level, but before that 120, it can be 135, because things have been very critical as of now for the month of May and June.
Absolutely, and that makes perfect sense, in terms of how you should be looking at price levels as well, Mr. Kedia. But before we let you go very quickly, I just wanted to get a word in as far as sugar is concerned. I'm curious if you have a view when it comes to the ban until the month of September for exports for sugar as well, and if you also have a view there.
So I think FRP prices are already rising, ethanol demand is improving, and supply side concern would be there because this year El Nino impact would be there. So I think government has taken a precautionary step by banning the sugar export, and definitely this will, maybe we can see some more restricted steps coming in that will actually impact the global prices. We can see international sugar prices may see some more boost from here, but domestically we can see prices are almost at par with global prices. Maybe we can see some more upside. Important would be the monsoon and the ethanol price, how it will be moving further from here.
No, absolutely, and thank you so much, Mr. Kedia, for taking time out and joining us. So there you go. That's the entire update coming in terms of how you should be looking at oil prices, gold, as well as sugar going forward as well for the prices. Now, with that in mind, let's also take a look at some of these sugar counters as well that are buzzing away in trade, and some of the other stocks that are in focus as well. When you talk about any of your major sugar companies as well, you're seeing a cut anywhere between 2.5% to about 3%. For some of those stocks as well. There you go, 6.3% for something like a Dhampur sugar as well. But with that in mind, let's also quickly take a look at some of these other counters that are in focus as well. And let's also get in Shivam to take a look at some of the counters that make it to his radar. Shivam.
Well, yes, the first stock is the Zydus Life Sciences, which has been trading higher in today's session, around 4.7%. And this is mainly prior to the board meeting that has been scheduled on May 19, and it is expected that the board will consider a share buyback proposal, and also its subsidiary Zydus Worldwide is set to acquire Assertio Holdings for around $166 million. Now, talking about the Assertio Holdings, this is a US-based pharmaceutical company which mainly focuses on specialty and oncology supportive care therapies. Now, the company has a novel product which is named Rolvedon, and this aids in prevention of febrile neutropenia in adult cancer patients. Now, with this acquisition, the company will aid Zydus to secure an immediate US specialty oncology commercial footprint, and company will use it as a platform to expand as oncology specialty portfolio. Also, this acquisition is expected to be completed in the financial year 26 26-27. Next stock is Budget Projects, which is up around 10% in today's session. The company has secured a major order from Power Grid Corporation, and this order is worth around 200 to 300 crores. Now, the first order is the construction of 765 kilowatt AIS substation package in Pune, Maharashtra, and second is the extension of 400 kilowatt transmission line package that is to be executed within 21 months. And on this, the management has said that this will play a pivotal role in removing transmission constraints in Pune region and strengthen the Maharashtra region's grid. Third stock is Easy Trip Planners, which is up 4%, and the company has approved a 500 crore fundraising plan, and the fundraising will be done via the rights issue of equity shares. And talking about the record date, it will be determined later and notified subsequently to the exchanges.
Absolutely, and thank you so much, Shivam, for joining us with an update on all of those counters. So 3 of those counters really buzzing away in trade, and that's what you're looking at. But let's also talk about a key legal development as well in the Sona BLW promoter dispute. The Supreme Court has in fact stayed crucial board resolutions of RIPL, granting relief to Rani Kapoor and putting key agenda items of the May 18th meeting on hold as well. Nimit Dixit joining us with all of those important details. Nimit.
You're here again. Now, that's actually what the Supreme Court told the fighting sides in the Sona disputes case, the RK family disputes. The Rani Kapoor, the mother, after the death of her son Sanjay Kapoor, has been fighting with her children and the rest of her family over the assets, the RK family assets, which includes, of course, Sona BLW, big listed entity, the auto part manufacturer. Now, what is happening in the Supreme Court here is, on May 7th earlier, parties approached the court and the court allowed them to mediate the disputes. Former Chief Justice Chandrachud was appointed as the mediator, very high profile mediation underway. What happened after that was told in court today was that on May 8th, the Raghuvanshi Investments, RIPL, which is a strong part of this RK family group which controls Sona, has ordered a board meeting to take place on the 18th of May. There, among certain agenda items, including the change of 2 independent directors, appointment of 2 fresh independent directors, as well as change of authorized signatory to handle the bank accounts. Of course, who handles the money has the power. So Rani Kapoor, the mother, who's the majority stakeholder here, who's also claiming in a suit separately that her stake is being diluted fraudulently, came and said that I cannot have this meeting go forward because these guys are trying to push me out of the company. Now, without going into the merits of that situation and whether that is correct or not, what the court simply said was that you guys have gone to mediation right now. Mediation is ongoing, and when mediation is ongoing, things need to be clear, things need to be settled. So the court did not stop the board meeting, but the agenda items to change these, to appoint the 2 new independent directors, as well as to change the authorized signatory to operate the bank accounts, were stayed by the Supreme Court. Now the matter will be referred back to mediation and will be taken up after 2 months.
Absolutely, and thank you so much, Nimit, for joining us with all of those important details. So the family feud has in fact reached the apex court, and that's the word coming in from the court as well. But let's also move on and talk about pharma major Cipla that's in focus now. It's announced a weak set of numbers, but when you talk about the key tailwinds, you're looking at the domestic and Africa market really aiding, and even when you talk about the brokerage verdict, it seems to be quite positive. In fact, Varsha is standing by with just that update.
So I would say revenue was in line, but EBITDA and PAT was missed. But the reason why Cipla is buzzing is not because of numbers, but because of the commentary of the management, and of course the brokerage is being bullish post the commentary. Well, the company is expecting strong launches which will help to aid growth. EBITDA margin expansion is on the cards. US business is expected to do well. Now, talking about the brokerages, well, let's see what Goldman Sachs has to say. They've maintained neutral, though they've hiked target price. Q4 results, according to them, were below estimates, but India, South Africa beats US pipeline in focus for FY27, and One Africa gathers momentum. Kotak has maintained buy with target price of 1,625. According to them, the numbers were in line, but domestic business delivers strong at 15% year-on-year growth. Robust H2 FY27 is expected, and US guidance brings a positive surprise. While MS has maintained underweight, though they've cut the target price as well, according to them, the earnings were weak. FY27 remains a transition year. EBITDA margins down, sustainability of gross margin improvement and launch timeline of peptide assets will be a key thing to track, but the US pipelines is strengthening. So overall, all the brokerages and investors are, betting on the US pipeline, and of course the new launches and the capex will also go down, which will help the operating leverage, and hence the EBITDA margin will also improve for the company, and hence you're seeing the stock is buzzing in trade today.
Absolutely. Thank you so much for helping us out and understanding that entire takeaway coming in when it comes to brokerages as well. But let's also talk about something like a Sharda Cropchem that's trading under pressure as well. And when you talk about that 9.5% cut, that's despite a stellar quarter that you had for the management. That's also confident that the El Nino heat wave is not going to have any impact on the company's business. Earlier today, in fact, we caught up with the management. Let's go across and listen in to the key growth drivers that they're highlighting going forward.
It does not worry me at all, because we are selling our products to about 70 to 75 countries around the globe. This El Nino may affect few countries, but that will not affect our total business. It is sustainable. I won't say it is a peak. I would say it will become normal, but nobody can predict about the future more accurately. Freight constitutes a very small percentage of our total cost and prices. It's very easy to pass it on to the customers because they are fully aware what is happening around.
And then there you go. So that's the word coming in from Sharda Cropchem that's trading under pressure as well. Of course, the key headline that you're looking at in this day that you're looking at is the high stakes Trump Xi meeting as well. And on the screens, you do have some of these visuals also coming in. You do have a bunch of businessmen who've also flown in to China as well. And you do have Tim Cook, who's very visible in the frame as well. In terms of that update coming in for Elon Musk as well as Tim Cook, you did have, them talking about how they're going to be focusing in on tech, and that's been the kind of commentary that you've gotten. Of course, when you talk about the Chinese side, they have issued a very stern warning. But that's a wrap on this edition of Lunchtime Trades. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most insightful.
Welcome back to NDTV Profit. You're watching Small Cap Buzzers, and today we are putting the focus on one particular counter that's buzzing in trade today, and that's Keynes Tech. down almost 19% now, and this is after the company's quarterly results failed to meet the guidance that the management had stated. Revenues come in this particular quarter up 26% at 1242 crores versus the estimate of almost 1700 crores to meet the guidance. So that's one of the key factors that is having a negative reaction essentially on the stock today as well. Cash flow was the other concern, but we'll talk about all of this with the management who's now joining us. Muthukumar Narayanaswamy, Managing Director of the company, is now joining in. Mr. Narayanaswamy, very good afternoon to you. Thanks so much for joining in. In terms of, this is of course your first full quarter as the Managing Director, and it's a tough one to handle most certainly. So just some clarifications to start us off firstly on what was promised essentially by your predecessors in that sense for the guidance for this year for FY26, and of 4,100 crores, you've done 3,600 crores. Largely, any particular delay in recognizing certain orders, has that been one of the reasons for not meeting the guidance, and is that penciled in for the next year as of now?
Good afternoon, and thank you very much for taking the. First of all,
Mr. Kumaraswamy, we have a bad audio with you. We'll try reconnecting once again on that one. But I think from what Puneet is saying as well, if we can just patch that audio glitch that's coming in right now. It's a severe guidance, Ms. Puneet, that we're talking about in terms of the fourth quarter, where they failed their revenue targets. The profitability has seen a drop as well this time around. There is margin compression. And if you heard the conference call as well, the management has come out and given a justification saying that, it's the geopolitical disruptions for logistic blockages and weak execution during the quarter which has led to all of this miss. The question is, from here on, if they are even giving a guidance, Puneet, when it comes to FY27 as a year, will they be able to deliver? Because that's where they have failed.
Most certainly, and I think those are some of the key aspects that we want to watch out for and also get some perspective on, because there was, a lot of expectations going into this quarter as well. Now, you had expected that, 1,700 crores, while a very tall target, you would get close to around that 1,600 crore mark. That was the estimate, but at 1284, there was that miss, and hence the pressure on the stock straight away as we started trading today.
And I think, a similar thing happened back then when you had their CEO resign, when the management was very confident that things will be in place. We had seen a similar crash happen as well. But from there on, I don't think so things have improved to any possible way. Now, one, will they be able to take a close look at what's happening in terms of the execution? Two, in terms of the kind of subsidy that they're going to get from the government, I think it's a catch-22 situation for them right now, because only in terms of a certain deliverables is when the government gives them a subsidy, right? Till the time they are not able to execute, they will not get the subsidy. And that is what is creating that mismatch in terms of cash flow as well. So that deteriorating working capital and that crunch when it comes to the subsidies not coming in, which is putting pressure on the capex, is a key concern, because how are they going to resolve for that?
Yeah.
That is the question. And apart from that, I mean, there are corporate governance and accounting red flags also that were raised in the past over year. So there is capitalization gap that is coming in. Puneet, I think we do have the management back with us.
Yes, Mr. Narayanaswamy, I hope I'm audible to you as well. And just, let me just repeat the question as well, because we saw that the target of 4,100 crores was just revised in the previous quarter. If you can give us some perspective of, there was some delay in certain recognition with a particular customer or an order, and is that revenue delayed or revenue lost?
Okay. Thank you for taking me in the call. Can you hear me well?
Yes, sir. You're audible. Please go ahead.
Two things. One is the missing the top line. For a full year, I think we have grown at 33% and it has grown at 39%. However, during the last quarter, against our guidance, we have dropped it mainly because of a delayed order, not a denied order. One of the two bids that we have done, and we were supposed to get the product, we were ready to execute the product, and the last minute, what we expected, the order could not come. That will be taken up in the first and second quarter of this year. So it is only a delayed order and not a denied order. And that is one of the reasons why we have lost the revenue target in the year.
So is it Sorry, Mr. Muthuswamy, just a clarification. Sorry, Narayanaswamy, just a clarification. So is it that order basically that you are supposed to deliver? So it's the product is ready with you. It's just that you have to deliver it to the client and recognize the revenue. That is the one key aspect that has not happened. Or is it that you didn't receive the order and hence that was already penciled in, which couldn't be turned around?
The product was the proto sample submitted. The product approval is given. The first lot of schedules should have come and produced it, but the order was not released on time because it's a government order on 2 business. So it will be coming in the first week of April, first week of May, and we are likely to execute this. We are still waiting for this. The materials is available. The product is already approved and it is demonstrated. And that's the reason why we lost in that the last quarter, which is against our guidance that we are given.
Okay, Mr. Narayanaswamy, this is Hiral on this side. So my question to you is, let's break this up. You're saying the order that was lost will come in the current quarter. And if that is the kind of scenario, what is the kind of guidance that you have in terms of execution? Because with the current order book, how much of it will you deliver in terms of the next 12 months?
Okay. There are 2 things before I give a guidance. We have been reviewing this business, and which is one of the fast growing business in India. And while the country's growth is around 8 to 8.5% GDP growth, this market, very specifically on EMS business, grows at around 15%. So we are very confident with the products in the pipeline, with the very strong order board of 9,000 crore plus. We'll be doubling the market growth. I think that's an assurance that I can give at this point of time. There's a huge volatility post end of February, first week of March in terms of the materials, in terms of the incoming components, and of course, the consumptions of the customers. While the market is little stabilized in the first week of May, there is a high amount, the amount of prediction, particularly in the automobile market, has come down to single digit high in this year when compared to the mid double digit earlier. So we want to be a little cautious on this because I know that the market is looking at us. We'll outgrow the market and we'll definitely make sure that our growth is double of what is the market growth. I think at this point of time, I want to cross with this. But as far as the missed target of last year is concerned, it's very clear that we will be executing that order for this year for sure with more values, but it is a delayed order. And
Okay. So what we want to understand is right now, there is a disconnect between execution versus the actual accrual that's happening as well. Your order pipeline is really growing, and that's categorically seen from the numbers that you have. Now, the market is severely penalizing Keynes as well right now because it is unable to convert these orders into timely cash flow and revenue. And that is the concerning area over here. Please help us understand how much of your order book, apart from that delayed conversion, as you mentioned in terms of the order, is also because of a roadblock when it comes to supply chain issues or raw materials from a war crisis.
At this point of time, Keynes, if you see our numbers, we have quite good amount of stock that's available with us. That is one of the advantages why Keynes is able to convert the order into the business at the earliest. If you look at our market share last year, we have grown almost double of what we had previous year in automotive business. In spite of one of our largest two-wheeler OEMs, which is using an EV business, has dropped their business substantially, we could be able to grow at 29% when compared to the previous year in automotive market. In terms of aerospace, our growth is 49%. In overall, we grew at 33%. Of course, our guidance was much higher at 50%. And when it came down, the market expectation was high. We take it with the complete responsibility of it. And but nevertheless, for this year, we will be definitely growing this business because we have a very strong pipeline. Our plant capacities are available. The plant is capable of doing. And also, we are migrating ourselves into an EMS product, into the product selling. 30% of our revenue is going to come from new product, which we already launched, and also into the product. These strategies will take us into expanding our margin and at the same time sustain our growth.
Got it. Well, Mr. Narayanaswamy, so basically just, as we go into the cash flow part, I just want to get a sense of what you said. So you're saying you'll be growing double of what the EMS market is suggesting. So 15% is what the industry estimate is. You will be growing at 30% for the EMS part. So that point is understood. but you also have, the other business basically, which is of smart meters, and that is where the cash flow is getting constrained. So what is the growth that you are seeing for that business? Because you can't put a 30% growth on your current revenue, right? So if you can give us some perspective of just to analyze, and I know that you don't want to put a number for revenue for FY27, so we'll respect that part, but how do you see that growth? Because we don't want to just put a 30% on 4,100, get you to 5,300 right now for the next year. So what is the estimate of growth for the smart meter business?
Last year, out of the 3,600 crore revenue, 900 crore has come from the business.
Sorry to cut you. Mr. Narayan, sorry to cut you, but your audio just went as you started to respond to that question. So if you can just try once again for responding to the question, sir.
Okay. What I said, last year, 3,600 crore. 970 crores has come from the metering business.
Mr. Narayan, I think let me try once again, sir, if you can try once again, because I think when you're coming towards the screen, I think that's when you're audible. So maybe you can try doing that once again, sir.
Now?
Now, with a little feeble voice, but we'll take it, sir. Please go ahead.
Can you hear me well?
So now it's perfect. You can be close to the screen. I think that's perfect.
Okay. When last year, again, 3,600 crores of total revenue, our metering revenue was 971 crores, which is 25% of the business. But the catch here is the entire EMS for the metering business, we have been supplying as a metering solution earlier, which means 50 to 60% of this is the growth in the EMS business, and we have started selling the product. The metering business is a strategic acquisition for us. We wanted to migrate ours from an EMS supplier to a product supplier. This has given us a great amount of strategy in terms of the going into the product, and this has grown. But unfortunately, the business model is completely different. This gives us a product company. This gives us a expanded margins on this product, but this has given us a long working capital management. Having understood this, we have done the course correction for this in terms of selling the meter, in terms of the installation, and of course, in terms of the operating and maintenance over a period of years. So we have done the course correction to see how we can do this.
So, but how much of your current receivables are stuck in this slow-moving smart meter projects, and when will this be collected? Because that is going to have a bearing on your, capital cycle.
You are right. See, that's what I was just coming. So the second question on the receivables, if you look at the pure EMS business, which is my 67% of the business, my number of days has come down to 55 days when compared to what it was earlier. So we have done a substantial progress in these areas, and we, as a standalone EMS business, we have standard cash flow at 255 crores against 65 crores of last year. I'm sure that you would have seen this. But in terms of the metering business, our receivables has gone to 1,365 crores, which is almost, we are working on the next 3 quarters to clear it up to about 1,000 crores is what we are planning to get it out. In the next year, when we are going to do the business, we have clearly strategized how much we are going to sell it as a meter and how much we are going to sell it as a metering. But as a strategy of gains, this is very, very important business of getting into the smart meter, because it is not only in EMS space, in our product space, and of course in the data in terms of the operating meter. And these data are going to bring in a lot more value for our business in gains, which is going to set us to grow in the days to come. The consumer pattern, the consumer consumption, all these data are going to strategically help gains in the days to come in penetrating into more and more markets. And you have also seen, that's the reason when compared to our guidance, our profitability has grown up over a full year. Of course, the last quarter, our profitability was a little less, but in terms of the full year, for a 32% growth in the revenue, our EBITDA growth is about 39%.
So, Mr. Narayan, as you highlighted, and thank you so much for giving us that number of 971 crores for the metering business, as you mentioned. Now, the only thing that I think the street is not understanding, or if you can give us some perspective on, is what could be the growth expected from this business, because you've given us what to expect from the EMS business. The reason I ask is your cash flow, you are saying, well, over the next 3 quarters will come to a break-even kind of level from minus 600 from cash flow from operations right now, which is majorly dragged by your smart meter business. So how do both of those things come together for you in this year? Is it that you can expect at least market growth for the smart meter business?
We don't want that. We want to be growing in that business also.
You'll have to come just like tad closer to the screen again to give your answer, sir.
We would love to grow in that market also. We don't want to stop any market from growing.
Sorry, Mr. Narayan Swamy, I'll have to interrupt you once again because of some audio issue. I think you'll have to just be a little closer to the screen. I think, I know you're already close, but we'll try once again. I think we lost you, sir, at this point of time.
I think we'll just wait for the management to reconnect with us as well. But a couple of important points, Puneet, that they've already mentioned. I think two of the things that I want to still talk to them about is their negative cash flow, number one, and the elongated cash conversion cycle. Because the question is, how will the management prove that they are able to bill these orders on time without inflating that current 125-day working capital cycle? Because if that gets elongated, it's going to be a concern. Yeah. If your receivables are already at 134 days, so that also is a concern. So that is one of the major mismatches happening over there. And if you're talking about the capital deployed, that is something which is concerning. Mr. Narayan Swamy, are you able to hear us?
Yeah, I can hear you very well.
Okay. If you could respond to what Puneet just asked you as well, and then we will go to our next set of questions.
Okay. We will continue to grow in every segment because we want to de-risk the business. We'll be growing in automotive, non-automotive, aerospace, and also we'll be getting into the defense and space. These are the areas. So metering is a business we'll go. But how much of meters we will do as a meter sales and metering sales, which is including the O&M and things, is what we will do. And that is the reason why we are telling we will grow in the metering business and metering sales, which is including the O&M and things, is what we will do. And that is the reason why we are telling we will grow in the metering business, but because of the business model in 3 quarters, we'll come back to the normalcy.
Okay. My question apart from this to you is with regards to where your orders is concerned. Now, how soon will you be able to bill them? Because the working capital cycle is already at 125 days. And if I'm looking at your receivables, that has worsened to 134 days. So there is a major mismatch happening on that front where money is locked up in inventory, unpaid client invoices. So how do you plan to fill in this gap? Because that's what the street is concerned about right now.
Working capital. You are right, my collection days have gone up. But my EMS business, which is 75% of the business, my net working capital has moved from 83 days to 55 days in the EMS business. The metering business with next 3 quarters of materials, receivables to be collected and converting into a direct sales of meters will be improving the cash flow. That's why I'm asking up to standalone EMS business is cash flow positive, but cumulatively at a consolidated level in 3 quarters we'll come back to normal. This will give us a good set of capabilities for improving on our working capital requirement and managing the supplies.
To add to this, out of the 3,300 crore project cost, if I have to look at the other part of the, capex, you've deployed close to what, 1450 odd crores as on March 2026. Correct me if I'm wrong. Now, under the ISM scheme, you qualify for a 50% fiscal support, which is a subsidy from the central government, and alongside a 20% capex subsidy from the Gujarat state government, right? Now, there is a cash flow catch over here because the subsidies cover up only 70% of your project costs and they are disbursed on reimbursement basis after hitting specific milestones. How do you plan to fill in this gap? Because currently you're on a 600 crore negative operating cash flow.
We've seen already we started hitting our subsidies, what we have spent on last year on end of March. That means this year, almost about 60 to 70% of the capital funding we'll be getting back into the subsidies in both the entities what we have made. Now, we are very, very confident and we have a clear pipeline to fund our projects. And also we are going to start generating the revenues from the new capex that we have started working in. That is going to add up either to our top line or to the bottom line, depending on strategy. We are saying that we are going to use it for our internal consumption or going to sell it outside. So both the things are going to really help us in terms of coming out of the cash flow issue.
So, Mr. Narayanaswamy, you've been very upfront with us, and I appreciate your gather of your first proper quarter as managing director. So, because you also have to invest quite a bit, and you mentioned some of the points, right? I mean, in your next line of capex, because you're managing both your smart meter cash flow as well as your capex for both OSAT and PCB. So, just one question on what is the capex number for FY27? And is that largely being funded through whatever cash you have on the books? Will you be raising any debt? Do you need, and I guess that you don't want to raise equity at such valuations. Sorry, sir, I think it's me. I think when I ask a question, I can't hear you, but if you can try once again.
I can hear you well. We have enough funds in our QIP.
I'm just going to come in over here to say that if you can respond to what Puneet has asked you right now, maybe that does the trick.
I'm sure that you can hear me well now. We have the funds available from our QIP residues, but more than that, this year the smart metering peaking has already gone. So now we are going to get the collections of the last 18 months before what we did the business. So the funds is going to come back into that. And more so, our subsidies will flow back. And with these two things, we are pretty confident of managing the working capital management and come out of the situation.
Okay, so I think lots we have to watch out for as well. But thank you so much for joining in. Always a pleasure to speak to you. In fact, we would love to come and see the facilities and actually do an on-ground interview with you as well and the management ahead to understand exactly, what is it that Keynes is doing to show the viewers as to what's the progression that's happening. But we shall connect back on that very soon. Thank you so much for joining in. Always a pleasure.
We are to host in our Sanand plant, which was inaugurated by Honorable Prime Minister on 31st of March. The plant has already started, the phase 1 has already started commercial production, and phase 2 capex is in full swing. Our first samples have been approved by our customers at AOA in US. So we are all set to grow, and the PCB plant is almost in the finishing stage. We are in Chennai today, seeing the progress of the plant. The plant will be up in operations by next quarter. And these two things are substantially, we are going to be the only EMS company, an end-to-end, from PCB to OSAT to EMS, and migrating from an EMS supplier to a product management company is going to give a substantial leverage for Keynes, which I'm sure that you will see that how we are progressing in this year going forward. Thank you very much. And thanks for giving us an opportunity to communicate back. Thank you very much.
Looking forward. Thank you so much for joining in. Always a pleasure to speak to you. Over to you, Varsha. I mean, it's interesting to hear the management, but everything is going to depend on execution, Puneet.
Most certainly. At this point of time, it's the key one. I think the stock's having a way today, but a lot to talk about and think about from what management has said.
Absolutely. But, guys, moving on from that, let's focus our show on GK Energy. Well, the stock is buzzing on the back of Q4 numbers, and I think strong growth is expected in FY27. The stock is up 4%. But to speak more about numbers and what lies ahead, we are joined by Mr. Gopal Kabra, who's chairman and managing director at GK Energy. Mr. Kabra, welcome at NDTV Profit. Always pleasure to have you. FY26, I mean, especially Q4, you had a good quarter. Now, going ahead in FY27, what's the growth expected when it comes to revenue, and where can your margins go?
Thank you for inviting. Looking towards the growth number, so we are expecting the fantastic growth ahead, as the requirement for the solar pump is solar rooftop. Everything is going very fantastically. Demand has multifold. PM Kusum 2.0 is expected very soon with the great numbers. Magiltala scheme is growing up, and we have done the very fantastic business in that, as well as it's a decentralized business. So we are getting ample scope from various verticals. So we are expecting to have the almost double kind of the number in the coming year.
Okay, so you're expecting doubling of revenue in FY27. Am I right on track?
We are targeting that.
I got that view. And so what about margins? Currently in FY26, your margins are at 20%. Where this can go?
It will remain plus minus 10% in that range itself. So we may expect around 18 to 20% range. Looking towards the geopolitical scenario, we are expecting slight margin may get impact, but we have seen in the last year as well. Earlier margin was in the range of 12% till H1, but year ending we able to reach 14% because of the policy changes what we do at the company level. We have the strong OEM ODM partner network. There also we are able to change the some sequence where we are able to secure the more margins. So if procurement cost goes up, then we always identify the innovative way which can be implemented to keep and retain the margins.
Okay, so in FY26, margins were around 18% on a consolidated level, and you're expecting around 18 to 19% in FY27, maybe 1 or 2% here or there. Okay, and also, sir, when it comes to your order book stands at around 710 crore. What is the execution timeline, number one, and how is order book looking like? Maybe in next in first half of FY27, where this number can go.
Order book, what we have mentioned, it is as of now order book, and execution period is around 3 to 4 months for that. So majority will get covered in Q1, and Q2 also order will go in that, and we are expecting further order in Magiltala 5 as well as the PM Kusum. Then smart solar rooftop scheme, which is started in Maharashtra, we are one of the strong player in that as well. So there also we are expecting a fantastic order book that there we are targeting to reach at least 1 lakh household. That will give us the more network scalability.
And also, sir, talking about your receivables, which has increased, and now I understand you do have, orders from government as well. But just wanted to, have a view on where you're expecting, how you're going to mitigate when it comes to increasing receivables, and where you want to take that working capital days to.
See, right now we want to reduce 10 to 15 days of the working capital, the best what we can reduce, we want to do it. And in the government area where we work, where we have to do the installation, after installation, we submit the bill. And once verification is done, then the payment get released. So the whole process at any given time shall take 100 days. So 100 to 130 days shall be the standard timeline we should expect.
Right. Well, thank you so much, Mr. Kabra, for joining in and having a conversation with us. Thank you so much.
Thank you.
Well, this was GK Energy expecting doubling of revenue in FY27. But this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jan Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending in those queries on the WhatsApp number that's flashing on the top of the screen. You can also call us on the numbers, which is the landline number flashing on the top of the screen as well. You can speak to us as well as our guest who will answer those stock-related queries. But before we do all of that, just a very quick check of how the markets are doing, because we discussed about, of course, Keynes Tech at length in the previous show. That's one of the key stocks, but the Nifty 50 has now made its way to the highest point of today, up almost 330 points. When you look at the heat map also, while we've been discussing about Adani Enterprises and Cipla as some of the key stocks that are buzzing in trade today, you're seeing that breadth actually largen and widen at this point of time. So Bharti Airtel, after the conference call which was scheduled at 12 p.m. is now up almost 5%. HDFC Bank actually has seen a strong buying recovery from the lows, and DRL and Eternal as well as Max Health continues to help the markets gain. And so only just a handful of tech names as well as on HUL and Nestle that you're seeing some pressure at this point of time. The sectoral heat map also is the other one where you're seeing within the sectors and stocks, Nifty IT is continuing to be under pressure, but that's down 1.5%. But the pharma and the healthcare index, along with the metals that has continued to do well, is now up 2% each. The advanced decline ratio is the very interesting one for today. It was down compared to the declines at the start of the trading session, and now slowly and steadily seeing that reversing. So we are at a very interesting juncture for today for the markets, where you're seeing broader market recovery at length at this point of time. The individual names also very quickly, because there have been quite a few of them today. Balaji Amines has been one, and let's put up the Nifty 500 also. Of course, you are seeing the small cap index come back into green, mid cap builds up over 1%. But in terms of the BSE 500, you're seeing some top moves on Ameen names. So Balaji Amines, Alkyl Amines is up. NLC is up 15% right now. Godrej Industries up 10%, and we spoke about GNFC also. That's up almost 6% at this point in time. The losers, there are a few between the 3 to 5% mark, but largely 400-point gain on this index. Let me welcome in Neerav Ashar, the head equity research analyst at Ratan Manharlal Securities, and Jatin Gedia, VP Technical Research at Teji Mandi. Both of you, thanks so much for joining in. Let me take a first, just a quick question and start us off from Sandeep, who's holding onto Jindal Photo, bought at 19 point now. It's a counter that, Jatin, we've not discussed too much on this show, but do you have a view on the charts, what he should do going forward?
See, the trend for the stock is negative. In fact, if today we have seen a breakdown below its last 4-week low, so there is a scope for the stock to slip towards 960. So I suggest to exit the trade.
Deep actually has bought it at, I hope this is not a typo, at a very attractive levels, but currently, given the momentum, Jatin is recommending us to, exit this particular counter as of now. The second one, that we are putting our focus now on is Bharat Wires, another counter that's, not been discussed too much. And because of Rajendra, who's asking us this question, he's bought shares at almost 250 stocks, trading close to those levels now, but he wants a long-term view. Neerav, very good afternoon. By any chance, do you track this counter and any view that you can offer Rajendra at this point of time?
Good afternoon, and thank you for the invite. I think it will be better to shift to some known names. I think the frontline players, something like a Polycab or an RR Cables, or something like even like a Diamond Cable. Because I think the cable business overall has been doing relatively better as compared to the wires. So I think the advice is to shift to some better quality names.
Got that view. The next question, that's coming in now. This one's on Ixigo as well as on Nykaa. Now, our viewer wants to enter both of these counters, and this is Mr. Rao, and asking if it's a good bet for the long term. Nirav, sticking with you, between Nykaa and Ixigo, is there a preferred pick?
Yes, I think Nykaa would be a preferred pick at this point of time, considering the potential which it has got for the beauty-related business. And I think from a long-term perspective, one can also consider Honasa.
Okay, got that view. The next question now, and another very a name that we've not discussed too much is Tasty Bite, and our viewer Shriram is actually holding shares at 10,700. Jatin, he wants to know if he can continue to hold this counter or average down, book a loss. What would you recommend?
Yeah, the trend is actually negative in this stock. Yes, we have seen a sharp run up in the month of May, but overall an equally sharp fall has also been seen. So I suggest to exit. The overall trend is still negative.
Tasty Bite. Next one, it's on a recent listing now, Fractal. And viewers, you can also call us on the number that's flashing on the top of the screen. That's the landline number that I'm talking about for stock-related queries. Now, Ramanathan has actually bought 200 shares at 900 rupees, which was close to the IPO price. Now, what we've seen for Fractal, let's pull up the year-to-date chart. It's slipped below and then come back up again to the IPO price as well. So his view is for 1 to 2 years. It's seen that jump from the lows which we saw in April. But Nirav, on Fractal, do you track this counter? And while the overall tech and IT sector has largely been out of fray, is this one of the new age companies that you might like?
Yes, because I did catch up with the presentation and the results of Fractal Analytics, and seems to be a very exciting prospect. So the advice is not only to hold but even accumulate on dips.
Got that view. The next question also on Loris Labs. Now, this one is again a very interesting counter because Mallikarjuna has bought 30 shares at 365. So he's up almost 4x from that price, asking if he should continue to hold for the long term. Nirav, just basis of the cost price being so interesting and so low at this point of time, would you recommend him to continue holding?
Yes, definitely. Advice is to hold not just on the basis of the purchase price, but also on the basis of the prospects going forward, considering the prospects of the CDMO business.
View. The next question now coming in, this one's on Prime Focus, and Sumana from Delhi, from Dubai actually, is asking us this question. 225 shares bought at 341. Stocks currently locked into a lower circuit, but asking if it's a better time to hold this counter or exit. Jatin, I know today it's locked in lower circuit, but it was a stock that was in focus somewhere around September last year and then lost some of that rigor. Just on charts, what would you recommend in the near to medium term?
In the near to medium term, I am expecting a decline towards 235. The overall uptrend has been violated, and I am expecting a fall towards 235, which coincides with the long-term average of 200-day moving average. So currently, exit the trade.
The trade, got it. Well, Simant actually has picked up his phone, giving us a call now. And Simant, very good afternoon to you. What's your query?
Hey, good afternoon, Puneet. My query is regarding Zaggle Prepaid. I did ask that last week also. Results have been out. They have been considerably well. EPS has grown. Profit has been quite decent. But still, the market is punishing that stock like it has nothing. It has done so badly. It's down more than 16-17% today. Why is that? And what should be done?
Got well, Simant, your question is very pertinent today. I think it's the operational margins that has just disappointed the street a little bit. But Nirav, I'll like your expert opinion on this one, because Zaggle actually had hit that low of around 200 odds, started seeing some momentum, and then that fizzled out again today. Any view that you might have caught with the results? Anything on Zaggle right now?
Yeah, there was an expectation that things will improve, and the numbers were expected to be better in this particular quarter, but unfortunately that did not fructify, and the market is leaving little scope for error. Hence, we are seeing such a drastic correction in the stock. So, the advice will be to stay away from the stock for the time being, and then maybe it may warrant a look at lower levels.
Got that view, but let's also just take another caller, and Kunal is joining us for a stock query. Kunal, very good afternoon to you. What's your query?
Yeah, sorry. Good afternoon. So I would like to know any insight on Power Grid.
Okay.
Given that they have the results coming up and the future outlook in terms of projects and on those lines looks very positive. Thank you.
Thanks so much for calling in, Kunal, on Power Grid. But Kunal, do you want to hold it for the medium to long term, or is it a short term bet?
It's for the medium term. I would like to know if it's a good entry point.
Got it. Well, Nirav, let me stick with you then, because Power Grid, as Kunal highlighted, results on the anvil. What's your view on the stock?
Well, Power Grid has always been a very, very stable stock, not a very fast mover in the markets. But I think on the contrary, the areas where Power Grid makes its investments, that is Power T&D, is a space which is looking very exciting. So maybe he could consider shifting to some of the other names, transformer related names, companies like Transformers and Rectifiers, or a Siemens Energy or a GE Vernova.
Got it. Well, let's take another caller now, and Aruna is now dialing in for a stock query. Aruna, very good afternoon to you. What's your query?
Very good afternoon to all of you, sir. Thanks for taking my query. I'm having HAL, sir. I'm having HAL at 4,500 average, 50 shares. So the quarterly results are announced, right? So what is the view on the stock in the short term and long term?
Okay, got it. Well, for the results, actually, it's much, much better, Aruna, if you look at the long term. So, Nirav, let me stick with you yet again, because, and this is the part where doing afternoon shows is slightly more tricky, right? Because you just got the result an hour ago. What's your view on the stock, Nirav, if by any chance you caught the result?
I think from a long-term perspective, it is better to shift to the shipbuilding stocks, because I think there has been a lot of inconsistency in the numbers, and we've seen in the recent past that there has been certain inconsistency or delays in the procurement of engines, etc. So the advice is to shift to the shipbuilders. One of the shipbuilders could be Garden Reach Shipbuilders, which could be a better choice.
Got that view, and let's actually, Jatin, if you have any view on this particular counter as well on HL, just on the charts, because we saw buying actually from that 3,900, 4,000 odd levels, but is that momentum yet to continue?
Yeah, it's overall the trend is still positive until and unless the stock slips below 4,400 on the downside, the uptrend is likely to continue. So from a short-term perspective, one can expect a move towards say 5,150 in the short term, and overall the support is placed at 4,400.
Okay, got it. 4,400, got that view, Jatin. But another caller from Hyderabad now, and Kalyani is joining in for a stock-related query. Kalyani, good afternoon. What's your query?
Yeah, good afternoon to you all. This is regarding Interarc Builders. It's fallen very drastically today.
Yeah.
So since a long time, since its IPO time, it has climbed up vertically. And today it's fallen so much. So is it the right time to purchase that, or should I skip that? Any other instead of Interarc Builders?
Right. Well, Kalyani, I think today, of course, the reaction is coming in on the quarterly results. So it was down in this particular quarter. The profits were almost 5%, and I think streets not having too much of it at this point of time. The stock was almost down 15% actually at one point of time, and then seen some buying. But Nirav, we've also seen its other peer, right, which is EPAC, Prefab, also just fall out of favor actually at this point of time. But any view that you will be watching out for? Of course, the commentary on the con call will be very important. But any view on either of those stocks?
Well, I think what has happened is that market tends to have very high expectations from these companies. There is a very high expectation of revenue growth, of better quality margins. Unfortunately, if there is even a slight deviation from that, then the markets tend to punish these stocks. And one pertinent trend which we have been noting in case of a lot of companies is that they have been refraining from giving any guidance for FY27. So I think that is also making the markets nervous. So I think certain inconsistencies are going against a whole host of stocks.
Got that view, Nirav. But the other question coming in on Sandur Manganese, and Jatin, our viewer Sharna is holding shares at 170. So she's currently sitting on decent profits, holding 500 shares. Her question being if she should book out the profit right now, what would you recommend?
My suggestion would be to hold it with a trailing stop loss at 210. The reason being that the metal and mining space is looking very positive. And in this overall fall, the metals and mining space has relatively outperformed. So I'd expect the up move to continue. On the upside, I'm expecting levels of 270 in the short term. So continue to hold with a trailing stop loss at 210.
Got it. Another quick question as well on Kalyan Jewellers, bought at 386 by a viewer, and he's holding almost 380 shares as well. Nirav, the quarterly results are largely decent, but then we saw that rigor being taken out by the excise duty being revised to 15%. So would you recommend him to exit this counter now or continue holding for at least the next quarter?
I think taking into account the recent developments, it's better to shift to Titan.
But Nirav, wouldn't the concern be there as well, or is it that you're not seeing too much of a pressure right now on this excise duty being raised?
We feel that market leaders would be in a better position to weather the storm on the basis of their exchange programs or the recycling of gold, or strategies with respect to gold monetization scheme, etc. So I think Titan would be better placed.
Fair point, and we'll just slip into a very short break. Viewers, Nirav as well as Jatin, stay on. The rapid fire comes in after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jan Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Welcome back. You're watching Ask Profit, the afternoon edition, and it's now time for the rapid fire round in this edition of the show. But so Nirav as well as Jatin, keep your answers as short as possible. The first one coming in on studs accessories in the auto space. Our viewer wants a long-term view. Is if it's a good time to enter? Nirav?
Yes.
Next question coming in now on Persistent Systems, bought at 4927, holding 50 shares. What would you recommend here, Jatin?
Exit, the support level has been breached.
Got it. Tata Tech is the other one, bought at 772 by a viewer, Naz. He wants to know, Nirav, actually the recent quarter was strong in terms of the results. So is it a good time to average down?
No, it's advisable to hold.
Okay, advisable to hold. Got it. Next one's coming in on CDSL at the current range between 1280 and 1290. Jatin, is it a good time to buy, actually, to go to those levels? What would you recommend?
Current market price is a good level to enter.
Good level to enter. Got it. Well, the next question is from Sudarshan on RVNL, holding shares at 368. Should he continue to hold here, Jatin, or should he average down? What do the charts suggest?
I suggest to average down.
Okay. And any targets in Nirav that you're watching out for RVNL? Jatin, any targets for RVNL?
Yeah, on the stock RVNL, short to medium term, 325 to 330.
330, got it. Next one's from Yogesh from Jaipur. He's holding 100 shares of Hyundai at 1658. He's mentioning that he wanted to book his profit in the near term. On the charts, what does it suggest here, Jatin?
Yeah, suggest to book profit.
Book profit, got it. The next one coming in is from Prashant from Hyderabad on Jamna Auto. He wants a short-term view here, Jatin. He's bought it at 117.
Suggesting exit.
The next one's coming in on Tata Steel. Is it a good bet for the next 2 to 4 years? Actually, now Nirav, it's already run up quite a bit. Would you recommend that?
Definitely yes.
Next question coming in now on from Jaydeep. He's holding on to 2,000 shares of One Solutions. What would you recommend here, Nirav? I think the results yet again on One Source Specialty basically weren't the greatest. Any view?
Still, you should continue to hold.
What's the future outlook on Cupid? Jatin, any view?
Yeah, the overall short-term trend is positive. Continue to hold with a trailing stop loss at 115.
Got it. Well, on NMDC is the next question. A viewer wants to actually book some profits. What's your opinion in the next 3 months? Will there be a time, or right now it's a good time to book profits? What would you recommend here, Jatin?
Yeah, see, overall trend is positive. Continue to hold, ride the up move with a trailing stop loss at 89.
89, got it. The next question is coming in on Protein eGov. Viewer, Rimple from Chandigarh actually bought shares at 860. What's a 1 year view here, Nirav? Any view?
Well, I think it's advisable to exit.
Got it. Well, that was the last question for Rapid Fire as well as this edition of Ask Profit. Jatin as well as Nirav, thanks so much for joining in, helping us solve a whole host of queries across sectors and spaces. But viewers, that's all the time on this edition of the show. India Market Close comes up next. Thanks so much for watching.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jan Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew, and take a look at this screen. The Nifty 50 at the high point of the day, 23,750 on the charts and up about 1.5%. You're probably wondering what occurred between the start of trade and the more or less midpoint of the trade that caused this kind of an up move. And there is a news point that we have to talk about. It's source-based information that has come from agencies that talks about the possibility that the Indian government is contemplating lower taxes for India bonds for foreign investors. This is something that seemingly has come as a proposal from the Reserve Bank of India and that the ministry is taking very seriously. It's had a bearing on both the India rupee as well as what you see on the left, which is the bond yield. The 10-year bond yield currently at 7.03 or very close to that mark, having fallen about 2 basis points. But the move for the India rupee is actually more significant. So if you can pull up the intraday chart for the India rupee, you will see what I'm talking about. We did hit an all-time low in trade today, and we've actually recovered from that point. So this is more than anything else seemingly an acknowledgement that there need to be policy measures put in place to stem the decline or the depreciation of the Indian rupee. And this is aligning with the commentary that you've seen from the administration over the last few days, where there is a call for austerity measures, there's a call for protecting the Indian rupee. Let's talk about the internals of the Nifty 50 next, because the heat map for the Nifty 50 has changed quite dramatically from the start of trade. On the top of the screen, you have Cipla, which continues to rule the roost, but the Adani Group companies have actually been doing particularly well in trade today. Adani Enterprises now up as much as 7.6%. Bharti Airtel trading at the high point of the day on account of a pretty decent set of numbers, inline set of numbers, and a more beneficial share swap than was previously anticipated. HDFC Bank leading from the front as well, as Tamanna joins me to talk about some of these aspects, and financials once again coming to the fore. We look at the heat map for the Bank Nifty as well, because you will see a pretty dramatic shift. What isn't doing well continues to be the IT pack, Tamanna, and that's the one pocket of weakness that fails to go away.
Fortunately enough, the banks are more than making up today with HDFC Bank firing 3.5%. Should we pull up the Nifty contributors very quickly and look at really what is boosting up the markets? Then there you have it, HDFC Bank, top of the charts. What an interesting set of developments in Bharti Airtel with Sunil Bharti Mittal joining that conference call. It was not expected, I'm told. He comes in and he talks about the future of the company as well, hints at a succession plan. We're going to talk more about it. That's been an exciting one. ICICI Bank also running through. The tech pack really continuing to see that kind of pain, which I think happened a couple of days ago with the Anthropic's latest offering that came in. So they're consistently going from one week to another. I'm in trouble, I'm in more trouble, I'm in even more trouble. So that doesn't really seem to be changing. The advanced decline ratio chart will tell you what the breadth of the market is, and that's really where the story is. Just slightly above. So while the key index looks very robust, it's not all hunky-dory. It's very fragile right now, Alex, I would say.
You said it. In fact, I want to pull up the mid-cap index as well as the small-cap index, because the recovery, of course, is quite significant. For the mid-cap index, we're trading at the high point of the day, but the small-cap index less so from what I saw. There you go. And that's where the breadth gets affected. Of course, we've come back from the low point of the day. We were plumbing into the red, but we've more or less made it into the green. There are a few stocks from the broader markets that are reacting quite sharply as well, understandably, to the earnings in certain cases. Balaji Mines is in focus. Alkyl Mines, the mines manufacturers are in focus today. NLC on the back of earnings. Adani Enterprises, I did mention, and Cipla is trading at the high point of the day.
Yeah, on the losing side, KRBL, Polymed, and a few of the others. Data patterns also seeing a bit of heat. But here's what's happening in the market. There is recovery mode on Dalal Street. There are news reports that the government is considering reducing taxes on foreign-born investments. This is in fact a Bloomberg piece which has come through, and that's seen some kind of a boost in sentiment. The Nifty has posted its biggest move in a month. Strong support and buying is seen around 23,450. 23,450 now acts as a support, a strong support. Resistance seen around 23,750. If the Nifty crosses 23,800, then the next stop would be 24,000. Gains from the day's low, though, are led largely by banks. So it is banks that are moving the market in that sense. 53,200 is the level for the bank Nifty. Strong support at 54,400. Resistance is where a decisive move above 55,000 could be taking to 56,000. That's where the index could go. Rudamurthy BV, founder, director of Vajra Investments, with us this afternoon, as is Mayuresh Joshi, head of research, MarketSmith India. Welcome to both of you. Great to have you on. Rudra, let's start with the index call. How far can the Nifty go?
See, for me, Tamanna, this bounce, whatever we are getting, can still only be a dead cat bounce. I understand the source-based information and the reason for this pullback, but all these things generally come only on the expiry day of either Sensex or Nifty. But then 23,800, which was earlier the support on Nifty spot, is now acting as resistance. So for me, unless we break above 24,000 on Nifty, this market is still a sell on rise kind of a market for very short term. And for me, I will not be a buyer unless we decisively cross 24,000 and close above 24,000. No doubt today's move, if you see, it is definitely positive, but then we are now coming closer to that important resistance zone at 23,800. So let us close above 23,800 decisively, wait for at least another 200 point kind of a move, and only beyond 24,000 I'll be comfortable to say, yes, one can go long and market has just made a temporary bottom. But then you have to be very sector specific and stock specific in this market. So stocks like, for example, post result, look at Bharti Airtel, which is doing very good. Adani groups of stock for momentum looks very, very strong to me. Gold finance companies like Manappuram Muthoot also looks very strong to me. So you have to be very choosy in terms of the sectors and stock in this market, or else for me at index level, I will definitely wait before I take any aggressive long positions on index for Nifty to cross 24,000 on a closing basis.
Sure.
And similarly on Bank Nifty, we have to cross 55,100.
Okay.
Till then, I will definitely wait, and I will say this is a dead cat bounce.
Sure. Mayuresh, a lot of stocks to talk to you about, but before I come to you, let me just check with Rudra whether the stocks he mentioned were actually the individual stock calls that he has. Because Rudra, you've mentioned Bharti Airtel, which is up 5%. You've mentioned the Adani Group stocks, and I wonder which of those you like. But are these the stock calls for the afternoon?
Yeah, so those stocks definitely look very strong to me, Alex, but I will be picking Manappuram for a buy call at current market price, looking at targets of around 350 to come on Manappuram, and one can have a stop loss of around 300 for this long call. And a second buy call for me, again a very, very strong chart pattern is on AB Capital. AB Capital at current market price is a buy. I will keep a stop loss of 340 for AB Capital and look at targets of around 380 to 400 to come on AB Capital. And I am in general also bullish on metals. So stocks like Nalco, Hindalco, Vedanta, on any dips, it's a great buying opportunity for a positional long trade.
Okay, so a lot of options there, but I want to go straight away to the stock of the day, and in a sense that is Bharti Airtel, isn't it? The numbers were good. The kind of promoter interest that is being seen in its Africa unit was as a positive as well. But then during its conference call, the appearance of Sunil Bharti Mittal and what he came in and said made things a little more exciting. So Amit, why is Bharti the stock of the day?
Well, I'll give you 5 reasons why Bharti Airtel is stock of the day. Firstly, the stock moved nearly 5.3% on an intraday basis, which is the biggest move that we have seen for this counter in the last 1 year at least. Now, the 5 reasons. Firstly, the stock had underperformed from the start of April till now. From the start of April till now, the Nifty is up nearly 5 odd %, but Bharti Airtel share prices were largely flat. Now, this was because of one concern, and that was the capital allocation regarding the Africa reorganization. But now that has come in quite positive because there won't be any cash outflow, there won't be any leverage that will be taken in, and moreover, the share swap that has been done is favorable for minority shareholders, and it is also EPS accretive, nearly 4 to 5% as per analysts, and that is also one of the reasons why this counter is up. Apart from that, the 12-month forward valuations continue to remain quite cheap. The 12-month forward P stands at 27.4 times, while the 5-year average valuation for Bharti Airtel was around 34.5 times. And the entire analyst community continue to remain quite bullish on this counter. Nearly 87% of the analysts tracking the counter have a buy rating. The consensus target price stands at close to 2,348 rupees, and despite the 5% upside, there's a still 25% upside that analysts continue to see on this counter. Now, because of these 4 reasons, the stock was up nearly 3%. But the last one, the last 2% move largely came in because of the comments that Sunil Bharti Mittal made on the conference call. Now, he said that Bharti Telecom, his aim is to increase Bharti Telecom, which is the promoter holding of Bharti Airtel, to increase to 51% over the next few years. Now, do remember that the current holding stands at close to 39.5% after adjusting for the Africa share swap. Apart from that, they also said that Bharti Telecom will buy shares from ICIL. Now, there was a big concern that Indian Continent Investment, which is the another promoter entity owned by Mittal family, will look to sell stake in the open market, but that won't happen. It will be an interstate transfer is what Sunil Bharti Mittal has given commitment on the conference call. And moreover, they have also said that Singtel balance stake of 3.6%, which they might intend to sell going forward, will not happen at one go. It will happen over the next 3 to 4 years. So the supply overhang also moves out for Bharti Airtel. And the last one was where he clearly said that there would be more dividend and buyback to follow through, given the fact that the cash flow that Bharti Airtel is expected to generate over the next few years will be on the higher side. So that was also another positive reason because of which we have seen this move coming in the share prices.
Okay, let's listen in to what the Bharti Enterprises chairman and founder Sunil Bharti Mittal said during that conference call.
If you really ask me, my own wish is that in the next, I know it's hard to put in, years on it, and in the next decade, as I kind of come to a point where I hand over the reins to the next generation as shareholders, Bharti Telecom should get back to controlling shareholding, 51%. of just over 50%. So that's 10% more to go. And for a company of this magnitude and size, you can imagine that it's not a small task. So the principal, direction or vision of that I carry in my mind is all shares that we can from both ICIL or Bharti family entities and Singtel should go into Bharti Telecom as much as possible.
Okay, Mayuresh, just wanted to get your take on Bharti Airtel. So much to unpack, and Somit very beautifully put all the reasons why you're seeing that kind of a spike, stock spiking even more while we're having this conversation. What is working for you as far as Bharti is concerned?
Afternoon, Tamanna. I think the news itself, in terms of promoter buying back, that's the biggest trigger that any stock can probably have. And for a behemoth like Bharti Airtel, which probably has a key footprint now in the domestic ecosystem, both in terms of the domestic wireless business as well as the broadband business that they're expanding into as well. I think that really augurs well. So I think the buyback news and the expectations in terms of promoters actually looking at the stock takes a very positive one for the stock itself from an investor perspective. The second element is also that African operations. I think the huge swap that is probably expected to happen. Again, I think let's understand the model there itself. I think mobile data works as the second best revenue generator. Voice is obviously the biggest one. But the third one is obviously the payment services in Africa as well, which is growing exponentially at 30-35% on an annualized basis. Let's not forget, they run a very asset-light model. The fixed structural expenses are taken care by third parties. The network that they probably use in terms of the shared technological architecture is shared between local partners as well, which makes a base case scenario of margins actually improving going forward as well, in terms of mobile data and the Airtel Money business probably improving faster. Therefore, I think with ARPUs expected to go higher on the domestic side, it's firing on all cylinders for the market Airtel. It's a clear hold from us.
Okay, it's a hold for now. Just want to check with you, Mayuresh, 87% buy recommendations. What is your call in the stock at the current value? Is there a potential upside of 25% as consensus seems to believe?
Afternoon, Alex. So I think if you probably look at the market structure itself, and assuming that Vodafone probably stays with the service that they're operating on at this juncture, I think all the arguments that are probably put forth give a potential upside in terms of 20 to 25%. So if you go in and buy it aggressively at this point of time, I think we probably need to just average out in terms of tips on this.
Yeah, all right, so that's the strategy you should employ for Bharti Airtel. What are the other stocks that are buzzing and that are finding mention in the dealing rooms? Let's find out. Let's go across to Somit Sarkar for our regular feature Heard on the Street. Somit, good afternoon. And I'm sure Bharti Airtel and certain other large caps are being spoken about. What else?
Good afternoon, Alexis. One large cap that has appeared on the dealer desk after a very long time is Bajaj Finance. Now, what dealers are indicating is that there are some buy flows on the FI desk for Bajaj Finance, and delivery volumes are expected to be on the higher side. Earlier, a DI was a seller on this counter, and now they're indicating that the selling is largely over for Bajaj Finance. So keep an eye out for Bajaj Finance. Apart from that, couple of pharma names, Divi's Lab and Glenmark Pharma, buy flows on large HNI and PMS desk on both the counters. Divi's Lab is a technical call, while for Glenmark Pharma, buy flows are largely on the back of expectations of strong Q4 numbers. For Cochin Shipyard, there are some sell flows on the large HNI desk. Now, dealers are indicating that earlier Cochin Shipyard was a front runner for an order win, but the same has not been awarded to the company, and hence some sell flows coming in for Cochin Shipyard in trade today. And lastly, couple of cash names, Pondy Oxides and Skipper. There are buy flows on PMS desk on both the names. Pondy Oxides again buy flows on the back of expectations of strong Q4 numbers, and Skipper on the back of expectation of a big order win announcement that could come in soon for this counter.
Very interesting. All right, Somit, thanks so much for that. That statement on Bajaj Finance actually stands out to me because some of these financial names have been sold into pretty aggressively, seemingly according to what Somit has found out. There was a DII seller, volumes on the delivery side have been high, but that selling seems to be over. Rudra, on the charts, the stock trading very close to the high point of the day at 1.8% higher, 912. Is it a good price to enter, or would you hold if you currently hold it?
So, Alex, definitely Bajaj Finance, after a steep fall from levels closer to that 990 to 1000, it has just fallen one way down till those levels of around 890. And today is the first sign of reversal what the stock is giving. So, if you see today's low as well as the previous trading session's low, it has been at 890. So, you have to keep a strict stop loss on a closing basis below 890, and you can make a fresh entry expecting a reversal to happen, but stop loss at 890 is very crucial. Only if 890 holds, then yes, you can see some bounce in this stock back to those levels of around 950 960 on Bajaj Finance.
Very interesting. I want to pull up Cipla. While we're talking about frontline names that are making significant moves, the stock is currently trading at the high point of the day. Yesterday's up move was after a result that had a few gaps in it. Because while the revenue was in line, the EBITDA and the PAT missed. You had a North America decline that impacted growth. So that's on the earnings front, but seemingly the street seems to believe that the outlook is positive. Mayuresh, is that what is going on? And this is a stock that has borne the brunt of significant selling. It's coming up today and yesterday after quite a while. Would you say that this is a good entry point, or would you give it a miss for now?
So anybody holding should continue holding Cipla, Alex. And again, I think looking forward in terms of the forward-looking statements that the management probably give out, respiratory products has always been the backbone of Cipla. Post-Revlimid, I think a lot of these frontline pharma companies need substitute formulation, high generic, high branded products to probably get into the market as soon as they can to probably replenish the kind of revenue loss that will start coming from the Revlimid sales. And therefore, I think the announcements that they've probably done around albuterol and the respiratory products, which has a huge market size and wallet share as well when it comes to North America or the European markets itself, along with one peptide launch that the management probably alluded to. The expectation largely is that all these products are products with a good market size in the first place, good margins in the second place. And therefore, I think there is a significant amount of revenue visibility that starts coming through. Obviously, I think the hit in terms of numbers was more or less expected. The commentary was extremely optimistic from management itself. And therefore, I think anybody holding the stock should continue.
You know, beyond the stocks that we've spoken about from the broader markets, we did mark this at the start. Balaji Amines stands out. Both Balaji Amines and Alkyl Amines trading higher, but Balaji Amines hitting upper circuit and holding at that level. This is on the back of a strong Q4 results set. Let's bring in Varsha to give you some perspective on whether this was expected to take place and what has actually stood out with regard to Balaji Amines. Varsha, what is working?
Well, first of all, the Q4 numbers were very strong, and second of all, they are shifting their, from being a commodity player to specialty one. That is also playing out. But starting with the Q4 numbers, revenue was driven by higher commodity prices. There were pricing recovery, which was seen in chemicals, which lifted the realizations. Though there was a higher revenue per ton also, and higher utilization led to the strong margin expansion. Volumes were stable, not so strong, because there was only 6% of growth, no aggressive as such growth. Demand is stable, not booming. Talking about the mix improvement, there was a higher contribution from specialty chemicals. That means better margins versus base chemicals, and the shift towards value-added products lifted profitability. Now, what does this tell us about Balaji Amines? One is company is of course moving from commodity to specialty chemicals. Then you have electronic grade DMC and DMF ramp up underway, and the focus is on high margin segments. Talking about the capex and project pipeline, because that is the key highlight of this company. The DME plant, which is an LPG substitute, which will be commissioned in Q1 FY27. Then your NMM plant is under execution, and also ACN plant, that is acetonitrile plant, is commissioned in Q2 FY27. Now, overall, what this tells about the overall chemical sector, whether the cycle is turning. The one thing is, of course, we have seen the pricing recovery, early signs of upcycle, and the sector is coming out of the weak pricing and inventory correction phase that was the problem in the last 2 years. So overall, Balaji and Alkyl will, see a good growth, considering the inventory, gain also that the company has seen. But Q1 FY27 will also be in focus, considering the the production halt that all these companies saw because of the lower ammonia.
Absolutely an important point, Varsha. Thanks so much for that. You know, the thing about it is Q4 being strong is one thing, and a lot of stocks are reacting to that. But let's face it, a lot of these companies are going to be bearing the brunt of supply chain issues in the first quarter. How bad that is going to be will only be visible in just a short while. But let's listen into what the management of Balaji Mines had to tell us earlier today when we asked them about the margin outlook given all of these supply constraints.
Presently, because of this geopolitical situation, we have faced a lot of problems. Still, we were maintaining almost some of the plants 80% level and some of the plants 60 to 70% level. They are operating. Because of the perfect inventory management, we could manage these numbers. And as regards this margins, as I said earlier also, in our type of industry, specifically for the specialty chemical industry, 22% to 24% of the EBITDAs are the sustainable. And present this last quarter is about more than 25, 26. But I can say 22 to 24% is easily sustainable for the coming quarters.
Got it. Okay, so that's the management of Balaji Mines, pretty confident about maintaining margins. Mayuresh, the question is, upper circuit today, so there's no possibility of getting the stock even if you wanted to. The other thing is, should you be cautious? Because let's face it, the ammonia issue that Varsha highlighted, it could well have a bearing on Q1 results. So at the very least, you could have an impacted Q1. So would you get in right now? Would you wait for clarity on what the impact because of West Asia will be?
Obviously, one has to wait and then not go by the exuberance by the upper circuit that the stock is at. I'll give you 2-3 reasons, Alex. One, I think as Varsha was pointing out, it's not just ammonia, it's also methanol to a large extent that is imported from Saudi Arabia. And therefore, with the Middle Eastern crisis at play, you're obviously going to get supply chain issues as far as both these key raw materials are concerned. Second, as far as the product mix is concerned, if you look at the traditional setup for both Balaji and alkyl amines, I think the traditional base amines that they probably operate out of, whether it's methyl amines or acetate amines, I think the expectations in terms of specialty derivatives, specifically through amino hydrochlorides, that still is around 30% in terms of overall top-line growth. If you probably add in the specialty solvent thing with the acetonitrile plant expected to come up over the next few months, the next few quarters itself, I think that will have margins in the range of 18 to 20%, with amino hydrochlorides having margins of 25 to 30. So I think if they're able to pull this off over a longer period of time, yes, the 20 to 24% margin band is sustainable. However, I think in terms of what happens in terms of supply chain at the current juncture, makes Q1 numbers a little bit subjective as we speak. And therefore, I think wait and watch the discussion at this juncture. I think the exuberance largely.
You know, it's exuberance, Mayuresh, not just for Balaji Mines. And right here, you're seeing upper circuit, but pull up alkyl amines as well, which, by the way, Mayuresh did refer to. The stock is also up and about in trade, right? It's up as much as 8.5% off the high point of the day. So let me ask Rudra what he thinks. There's no opportunity, Rudra, in Balaji Mines. Is there an opportunity in alkyl, or would you hold off?
See, definitely if you see purely the chart patterns of both the stocks, they are making a cup and handle formation, and after a long base formation, Alex, they are giving this big move. And especially because I cannot buy into Balaji Amines at current price because it's in circuit, you can look at alkyl and if you see the chart pattern and today's volumes especially, it is very, very good and very supportive. So I will definitely be a buyer in alkyl amines, and it looks very strong to me. And if we can hold above levels of this 1750, the stock can further give an up move. So for me at current market price and on dips, I will be a definite buyer here, and one can keep a stop loss of around 1700 and look at targets of 2000 to come on this stock.
If you look at just today's move in the equity markets, then you might be forgiven for wondering whether there's anything to really worry about. But you broaden the scope and you listen to what people are saying, and Harsh Goenka actually put this pretty well in a social media post that he had, and he speaks about the fact that private capex in India is still weak despite good corporate profits. Why is that? So he's wondering about this, and he spoke to a few people, and this is what he concluded. There are a few points that he's making. He says there is policy and tax uncertainty. It's pointed out by a few people that particularly for outside in investors, foreign investors, the tax policies may not be the best when you compare it with certain other jurisdictions. This is something that is being contemplated. You saw the update from Bloomberg with regard to the possibility of a change in the taxation for foreign investors in Indian bonds. There's also a fear of unpredictable regulatory action. Certain pockets where that fear might exist. Many new age companies, including startups, want to invest in asset-light businesses over building factories, and that is the antithesis of setting up actual capacity. Weak demand visibility in some sectors is what he's also found out about. Long legal and approval delays, global diversification from a global investor standpoint seen as a safe hedge, and new generation in the family-run businesses are more interested in family office investments rather than working hard. All right, so this last one I don't really know about. Maybe we don't have enough actual evidence, it's more anecdotal, but I wonder what Mayuresh has to think has to say about some of the other aspects. Specifically, maybe the move by Mayuresh, possibly the government, and this is according to a Bloomberg source-based report, so I must put that as a caveat, the possibility of the government contemplating easing tax rules for foreign investors in bonds. Is that a good first step?
Well, absolutely, Alex. I think it's most welcome. And in times when you're seeing uncertainties when it comes to foreign flows and the pressure that has been put in terms of the currency, I think it's a very, very welcome move. But on the other two aspects, one, I think in terms of private capex, which has showed signs of green shoots as we exited Q3. I think there might be some hiccups as we speak, but I was just reading a news article a few minutes back. I think government capex and government spending on infrastructure and other allied activities is still expected to continue in spite of whatever is happening in the Middle East, which gives the private sector impetus in terms of government spending expected to continue quite significantly. And on the taxation issue, though it is contentious, I think investors still look out for what happens in terms of a review on long-term capital gains.
That's a good point. But if anything, Mayuresh, it might actually stem the flow downwards with regard to the rupee and then make it that much more attractive for a foreign institutional investor to consider investing in India. But by the way, news coming in right now, and I would like your opinion on this as well, Coal India, dealers are indicating that the government offer for sale is set to open soon. This is an interesting update. The stock is down about 1.6%. Let's pull up the intraday chart for Coal India just to talk about what has happened. And there you go. It's a significant drop. Why is this? Because an offer for sale, you're talking about supply coming into the market, the possibility that prices could correct. That in fact has taken place. Would you say, given what we know about the current scenario, Mayuresh, with regard to the utilization of coal, and once again we're talking about coal gasification, we're talking about certain other aspects, energy security is front and center. Is this an opportunity in your opinion?
It is, and again, I think let's be very honest. I think even when you're talking about renewables, I think it is going to take time, and therefore I think the normal capacities that Coal India probably runs through are extremely critical for an energy consuming nation like India. And again, if you're probably looking at a large part of our dependence will probably stay away in terms of whatever is happening in the Middle East, I think Coal India probably becomes critical in terms of the global growth, at least over the next 5 years as I see it. I think it's critical for India's growth story.
That's a fair point. You know, Rudra, I want to just very quickly check with you on Coal India. What are the key levels that you're watching out for? Are there opportunities? Do you think that there's a base formation at some point here?
So let this event of OFS come out and then it is good to buy. Definitely for medium to longer time frame, Alex, it's a good stock to own in one's portfolio. And I completely agree with my co-panelists that yes, this stock for a medium to longer time frame is a very good buy, and use that opportunity of OFS. And if you get this stock lower, one can definitely look at buying at that point of time. But before the news, I don't want to catch the falling knife and a short-term momentum which is on the downside. In fact, from levels of 485, we are seeing this fall in Coal India, and I don't know whether will it settle at strong support areas of around 435 to 440, or will it come down even as much as 425, 420 range. So my simple clear advice is wait for the OFS news to come out, and then definitely on the dip, buy Coal India for medium to longer time frame, and it's a portfolio stock.
Portfolio stock is the call from Rudra. All right, on that note, gentlemen, thank you so much for taking the time and speaking to us on India Market Close. Always a pleasure having you. All right, so we have to slip into a very quick break with the Nifty 50 just cooling off a tad bit, still holding on to 23,700. The question is, do we end strong or do we see a little bit of a cool off in the last half an hour of trade? Stay tuned to find out.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Award.
Welcome back. You're watching India Market Close, and we're trading with gains of 1.25% for the benchmark Nifty 50, holding above 23,700. And while there are a few stocks, the likes of Cipla, the likes of Bharti Airtel, the likes of Adani Enterprises, and a couple of the other Adani Group stocks that are doing particularly well, there are a few other stories that have played out where a big gain at the start of trade has been sold into. A couple of names for you. Metropolis Healthcare, which posted a pretty good set of numbers, has dropped from 8% plus higher at the start to just about treading water right now. Tata Motors CV, which also posted a decent set of numbers in the fourth quarter, has lost that ground that was initially found, and more so the concern about the outlook heading into the new financial year with the West Asia crisis is having a bearing on that stock. But speaking of the global situation, ultimately a lot of attention being paid to what is happening in Beijing, the meeting of Donald Trump and Xi Jinping. Donald Trump, of course, leaning into his personal rapport with Xi Jinping, with both the leaders sitting down alongside their teams to kick off bilateral talks earlier today. Even as Trump underscores relationship building, his counterpart is putting the spotlight on strengthening economic cooperation. Listen in.
So I really look very much forward to our discussion. It's a big discussion. There are those that say this is maybe the biggest summit ever. They can never remember anything like it. I can say in the United States, people aren't talking about anything else. But it's an honor to be with you. It's an honor to be your friend. And the relationship between China and the USA is going to be better than ever before. Thank you very much.
I always believe that our two countries have more common interests than differences. Success in one is an opportunity for the other, and a stable bilateral relationship is good for the world. China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals. We should help each other succeed and prosper together and find the right way for major countries to get along well with each other in the new era.
All right. Not much of a mention of the West Asia crisis as things stand right now, or Iran. The supposition is that it will come up. James Dorsey of the S. Rajaratnam School of International Studies joining me now to talk about some of these aspects. James, at the start, before we get into the West Asia crisis and possibly certain other contentious issues, what did you make of the tone of both of the leaders and the way that they were describing the relationship between their two respective countries?
I think from the outset, Xi Jinping has wanted to set a very positive tone to these talks. One just has to look at the pomp and circumstance that was rolled out for the welcoming of Donald Trump as he arrived in Beijing with the 21-gun salute, the children throwing balloons in the air. What I also saw in the opening statements of their first meeting was, on the one hand, Trump emphasizing his personal relationship with Xi Jinping and how honored and how he was and how well the two men could work together, while Xi Jinping stressed that this was a relationship between countries and that these countries should work towards a win-win situation rather than a situation of conflict. I think in both cases, what we've seen in those opening statements is that economics, alongside geopolitical issues, is playing a very important role.
James, there was a mention by Xi Jinping about the Taiwan issue. I wonder if you heard that comment and what you think about it. The fact that Xi is calling for resolution with regard to Taiwan before other things are dealt with.
Well, what we're looking at is the readout of their first 3-hour meeting, which was provided by Xinhua, the Chinese state news agency. And again, that statement was very heavily economically focused and very heavily focused on cooperation between the United States and China economically. The teaser, or the kicker, if you wish, was at the end of that statement, where the Chinese very clearly said that stable economic cooperation on other issues was contingent on Taiwan, saying basically that Taiwan was a red line and there was no compromise possible on China's stance on Taiwan. Interestingly enough, the US statement on the first round of talks did not mention Taiwan. And I think that is something that the Chinese may value, because it has the Taiwanese really worried. And they fear that Trump, being essentially someone who is transactional, could very well compromise on Taiwan in order to get what he wants economically and otherwise from China.
James, hi, Tamanna here. I think at the end of all of it, part of the question is whether the West Asia crisis in part can be solved during this Beijing conversation. Do you think it is in the backdrop of the conversation the two leaders are having, considering what China's role has been in supporting Iran?
There's no doubt that Iran will figure in the talks between Xi Jinping and Donald Trump. In fact, the Chinese readout referred to Iran and basically said that it favored the Strait of Hormuz being totally free and open to the passage of shipping, China wanted an end to the Iran war. But having said all of that, I think the chances that we're going to see either a resolution of the conflict while Trump is in China, or in fact some form of Chinese mediation, I would put the chances for that next to zero.
Okay, thank you so much, James, for speaking with us today and bringing that perspective. Meanwhile, we're speaking about Iran. At the BRICS foreign ministers meet, Iranian Foreign Minister Abbas Araghchi says that the country is open to diplomacy while defending their freedom. Listening.
Iran, therefore, calls upon BRICS member states and all responsible members of the international community to explicitly condemn violations of international law by the United States and Israel, including their illegal aggression against Iran, a member of BRICS, prevent the politicization of international institutions, and take concrete action to halt warmongering and to bring an end to the impunity of those who violate the UN Charter. Those who pursue reckless adventures may believe it furthers their geopolitical interests. But as consumers and governments around the world now sense and understand, regional instability is a lose-lose proposition for all sides, including the aggressors.
Okay, and of course, Abbas Araghchi was speaking at the BRICS meet in New Delhi, where it is ongoing. A lot of information and important statements coming in from there. But let's turn attention back to what's happening in the markets. Rajesh Palvia, SVP Technical and Derivatives Research at Axis Securities with us, as is Deven Choksi, MD, DR Choksi, FinServ. Welcome to both of you. Rajesh, markets seem to be holding strong. You know, at the start of the show, the technical expert we spoke to said that this was a dead cat bounce in his view. Are you feeling convinced with the strength you're seeing right now in the markets?
Yeah, good afternoon, Tamanna. So market was in oversold trajectory as we have broken the all important support area on the near term chart. Yes, Nifty was in oversold trajectory. So there is a pullback action. So yes, it's a dead cat bounce, but still looking at the broader market action, if we continues to trade about 23,600 for next couple of days, then I think Nifty will get some comfort zone on the buying side. But Bank Nifty is still struggling to cross major supply zone, which is placed at around 54,400, 500 zone, which is very important for Bank Nifty to cross. If at all Bank Nifty crosses 54,500, then we may see some short covering action to trigger in banking stocks as well as in Bank Nifty, which can give some support on the Nifty also to move further higher. But looking at the today's pullback action, still we believe that, you know, if Nifty not crosses above 23,800, I think that would be the major challenging level, as the major call writers are now active at 23,800, 24,000 strike. But on the other end, put writers are taking their bets on 23,500 strikes. So I think it's a tight range of 300 point from near-term perspective. Either side breakout or breakdown will decide the major course of action for Nifty. But we believe 23,600 one needs to keep as a stop loss. Maybe we could see another round of pullback in coming session also.
Pretty narrow range, as you pointed out. Devin Bhai, good afternoon, and thanks as always for taking the time. The question is, what do you do at this juncture? Do you deploy fresh funds, or the reason I'm asking is because there was a little bit of concern earlier in the week because of the Prime Minister's statement that things are actually worse than you might have imagined it.
Alex, good afternoon. Well, I wouldn't call it worst at this point of time, but yes, I think the industry is definitely, facing the good amount of pressure on the cost front. Commodity prices are definitely, not something which industry would like to absorb at this point of time, and neither they would like to give up the possibility of the growth that they are experiencing on the other side, because of the consumer is spending money, government is spending money on infrastructure, etc. So on one side, I think we are having a situation of uncertainty. On the other side, domestic economy is faring very well at this point of time. So I think the opportunity for investor would be that in a corrective downside in the market because of any result season or any kind of, the extraordinary disclosures, on the war side, probably could mean that there would be some good amount of opportunity to buy at low levels. So our approach has been to sit on cash. Maybe if the market gives opportunity in individual stocks in a given situation, deploy that money and invest. Because we believe that whatever the outcome possibly is now expected, on the Iran and US front, We believe that I think any fall in the market due to the quarter one working remaining slightly circumspect, I think would be a good opportunity to buy afresh into the portfolio.
Got it. Okay. Let's talk about individual counters that Rajesh likes. Rajesh, we spoke about your index view. Let's run through the stocks that you're liking right now.
So I think pharma is one space where buying interest is still there. Metal space is another where we believe that continuity of uptrend would be there. So on stocks front, I think one can focus on Zydus Life at this juncture. After a long consolidation, stock now managed to give breakout of this consolidation range. Looking at the weekly chart, this is the second consecutive week where stock is making higher high low formation. Sustained buying action is taking place. Long build-up is there in the data. So we expect that Zydus Life may extend its gain and possible upward towards 1,030, 1,040 we may see. So one can buy and accumulate on the downside. 955 needs to keep as a stop loss. The another stock where we are focusing is from the capital goods space. That is, Cummins India is looking attractive. Stock is now trading about 20-day moving average. In a corrective move, stock has, again managed to absorb all this supply pressure around 20-day moving average. And today's pullback action is clearly a sign of, continuity of uptrend. So we believe that, if it's hold above 52,000, 5250 level, then I think upward trajectory for this counter would be around 5,500 to 5,600.
All right. You've given up a little bit of ground even as we're speaking at the index level as well. We're down about 100 points from the high point of the day for the Nifty 50, now treading below that 23,700 mark. And the broader market's also giving up ground. The small cap index just about flat at this point. The mid cap index down about 1% higher. But Keynes Tech is a stock that is one of the contenders for the stock of the day right now at 20% lower. And this is on the back of a pretty bleak set of numbers in the fourth quarter, missing guidance on revenue as well as on cash flows. Let's go across to Puneet just to lay the case on whether or not there's a bull case and a bear case. What is it?
Well, right now, not too much of a bull case being formed in, and the stock price is reflecting that as well. But as you rightly said, Alex, you're seeing guidance miss on revenue, on cash flow as well. So that's the first bear case that we're putting in. On the other side, though, the company is expecting cash flow to reverse in the smart metering space by quarter 3 of FY27. So it's minus 600 crores now, expecting that to go to almost zero or at least slightly more positive. But it's uncertain at this point of time, given the conditions that the business is in, and it is struggling at this point of time. When you look at the second case as well, the growth has been lower. They are anticipating in the EMS business, which is almost 65% of the company's revenue, to grow at almost 30%. But that is much lower than the historical averages of around 40 to 50%, and hence we've seen a correction in terms of multiples also potentially when the brokerages come out tomorrow, and that is the case. So you might see industry growth of 15%, 2x of that is what they're expecting on the EMS side, but much lower than the historical averages. The third key one is the smart metering business. Now that was one of the major concerns of this FY26, because it was an acquisition done in September, and then hence a lot of cash flow getting stuck in terms of government orders. Now they are seeing that the growth will slightly be more uncertain for this year. They did 971 crores in FY26, but a lot of cash flow got stuck into that. Growth remains now uncertain because the management's focus is clearly on improving the cash position and the cash flow positions of the smart metering business. But finally, what you look at, of course, at this point of time is the OSAT business, expecting 2,500 crores in 5 years for this one. But I think the market will require more evidence of what they've, and probably walking the talk, because quarter 3 is when they revised the guidance, couldn't meet that in quarter 4 itself. So there's a lot of uncertainty, might need a little bit more at this point of time to restore investor confidence. But stocks down from that 7,000 odd to 3,300. But there are more questions than answers at this point of time.
I think that's definitely the case. Though we did ask a lot of questions to the management. We spoke earlier with Muthukumar Narayan Swamy, MD at Keynes Technology, on the company's growth guidance for the coming quarters. He spoke about a whole host of things, including demand trends and growth drivers. Listen in.
We are very confident with the products in the pipeline, with the very strong order board of 9,000 crore plus. We'll be doubling the market growth. I think that's an assurance that I can give at this point of time. There's a huge volatility post end of February, first week of March in terms of the materials, in terms of the incoming components, and of course, the consumptions of the customer. While the market is little stabilized in the first week of May, there is a high amount, the amount of prediction, particularly in the automobile market, has come down to single digit high in this year when compared to the mid double digit earlier.
Okay, I want to ask Rajesh whether is this the bottom on the charts for Keynes, or would you be hesitant right now?
No, I'll avoid at this juncture. The breakdown is clearly there on a weekly as well as on the daily chart. Stock is trading below to all its near-term, short-term moving averages. And looking at the intensity of supply pressure, especially in today's session, I think there is furthermore, follow-up selling we could see in this counter. Immediate, support, or what we can say level where, stock will try to, attract some buying action would be around 250. If it breaks 30 to 50, I think then we may see stock to slide further towards 3,000, even 2950 kind of zone also. So I think one should avoid at this juncture, wait for this supply pressure to settle down at certain level.
Okay, Devin Bhai, what are you making of some of the concerns that Keynes Tech is facing? Do you think that this is a case of something the whole industry is facing, external factors, or does this seem to be a company-specific problem in your view?
I think both Dixon as well as I think Keynes, definitely they are putting, they've quoted I think about the concerns, and for sure I think this is a real and genuine concern. Every one of them I think are basically trying to see how they can stabilize their performance in the current year, including Dixon. They made the same statement. They are talking about flattish growth. In case of Keynes, they're talking about growth, but I think not at the benefit of the margin, because I think the margin's definitely suffering on financial front. If you look at the numbers, probably those numbers are a little bit stretched because of the receivables going out as well. And at the same time, I think OSAT kind of facility, which is promising to deliver better, but also absorbing higher amount of cost of operations at this point of time. So all in all put together, I think when you are putting it a valuation of 60 times and above, even at a corrected price, I think it's not, I think, cheap. And probably even if 30% growth, but without support of margin, I would think that that kind of a valuation probably will come in the way. There is practically very less amount of margin of error that you have when the valuations are at peak level. So I would like to see, I think, some of the corrections in the price for many of the EMS companies in the current year. And that could be a good opportunity to enter again into those companies. No doubt about the business, but I think at a fair value, I think one would like to enter into.
Point that you're making, Devin Bhai. There are so many stocks out there right now, even as we speak, that have that margin of safety. So why venture where you don't have that margin of safety? We've got an interesting story that has come through source-based, and this is on TVS Holdings, which could acquire up to 9.9% stake in Jana Small Finance Bank. Piyush Shukla has more in this report.
Yeah, that is right. We are picking up from our sources that TVS Holdings is actually looking at buying up to 9.9% stake in Jana Small Finance Bank. We are aware that at the current market price, the deal size could be somewhere around 515 crore rupees. And for any investor to buy upwards of 4.9% stake in banks, it needs to have a RBI approval. So the TVS Holdings will have to apply to the RBI for getting up to 9.9% stake in Jana. Now Jana Small Finance Bank on its part has said that its board will meet next week to consider raising funds via pref issue, right issue, QIP. And the bank is yet to respond to NDTV Profit's question, but this is the information that we are picking up, and Jana is likely to get a new investor in the form of TVS Holdings very soon. Back to you.
Okay, so interesting developments there, but really what is catching my eye is what the Bank Nifty is doing today, 1.5% up. As we're going into the last few minutes of markets, just take a look at how we're closing, and we're closing pretty strong. Devin Bhai, what is the setup looking like for the last trading day of the week? You know, the Friday fear always comes in because you don't know what's going to happen over the weekend, but do you think things will sort of settle for now as results are coming in and some of them better than others?
So, Tamanna, the results for the March ended quarter definitely have been better, I think, as on expected lines. The major challenge in the reality check is the first quarter of the financial year 27, in which I think the results are likely to have its impact due to the high cost pressure that one has been seeing in various commodities and input costs, I think, accordingly. And at the same time, I think in some of the cases, we are also observing the amount of stress, I think, on the logistics side of the activity, which is coming in the way of dispatches as well. So I think the markets are not going to be driving in one direction. Probably, as we said before, I think the 23,100, 27,150 on a downside and 24,200, 24,600 on the upside is a likely range for Nifty, at least for some time, till I think we see the enough amount of fluidity happening on crude oil front and on the currency front. These two areas are definitely affecting the overall mood of the market in general, and in particular about the company's workings.
We're just about clawing back this week, still about 1% down when you look at it week on week. Today's been a strong day, but we really need to sustain, and results will be just one part of the story. Maybe it might be tough for the OEM side. Tata Motors PV is all set to report its Q4 numbers. Strong India passenger vehicle momentum could aid growth, while weakness at JLR could weigh on overall performance. Puneet joining in to set it all up for us. Puneet, what can we expect?
Well, thank you for that. It's expected to be a difficult quarter for the company. As you rightly mentioned, revenues are just about 1,09,000 crores expected, while the EBITDA will be at 8.2%, and you'll have to adjust on a YOY basis because the demerger has happened from quarter 2 onwards of this year. So you have to just look at the automotive part of the business. When you look at the volume picture, very, very varied. India volumes are up 48% in this quarter compared to the same time last year, and that will aid a very high revenue growth for the company as well. Nomura expects revenues for the India business to be up 48% subsequently because of volumes at 18,900 crores. But when you look at the JLR side of business, units at 95,000 on the wholesale, it's down 14%, and hence you will see an impact on the EBITDA. Nomura expects a 5% fall in revenues for the JLR business, but a 22% fall in the company's EBITDA for the JLR division, and hence a much wider impact on a consolidated basis as well. What we will be watching out for is some commentary, because the growth sustenance will be a little difficult at that 48% mark, but if double digit is something that they're targeting in FY27 will be strong. And just in terms of geopolitical concerns on the JLR business, those will be some things to watch out for.
Rajesh, any last calls before we wrap up?
I think to stock idea, BHAL is looking promising. One can buy this stock for 425 target. On the downside, 408 needs to keep as a stop loss. And another stock, Amber Enterprises, is looking attractive. Stock is closing near to day high. We believe that this stock has potential to extend again. 8600, 8700 we are projecting target. On the downside, 8200 needs to keep as a stop loss.
Okay, BHAL, Amber Enterprises are two calls from Rajesh Palvia. Only ideas over here. Thank you so much, Rajesh and Devin Bhai, for joining us today. Now, as we close up the markets, it's been a pretty decent day. 300-point uptick on the Nifty above the 23,700 mark. Have to say 24,000 still looking fairly far away because we've seen that kind of a pain point coming in. Advanced decline ratio narrower than one would have liked. Bank Nifty is the one where all the power is. I must say the Nifty mid-cap 100 has also recovered well, but the small cap index, has the small cap index also recovered? No, it's pretty flat, which is why you're seeing the breadth not that great. Let's pull up the Nifty heat map very quickly before we get into the broader markets and what's happening there. Adani End is the star of the show. Cipla, strong results, but even decent results, I would say, but the stronger forecast is what's got the stock powering. When the promoter comes in, the street likes it. That's what's happening with Bharti Airtel. Eternal also buzzing today, as is Hindalco. Not so much green on the screen, Alex, because look at what's happening to the entire tech pack. They're sulking. So I would say Infosys is still just about 2.5% down.
Yeah, at the index level, and I would like to pull up the IT index just to showcase this move, because while the rest of the pack has done reasonably well, this one has done not too well. It is off the low point of the day, but still seeing cuts of 1.9%. Pull up the sectoral indices and you will see what I'm talking about. It's primarily the IT index that has underperformed. In fact, it is the only index that ends in the red from the rest of the pack. In fact, strong gains for the Nifty Pharma as well as healthcare, metals continuing its red hot rally, and a few of those underlying commodities must be watched out for very, very closely. Where are we shutting shop? With the Nifty 50 up about 1.3% and certainly not at the high point of the day, but holding on to that 23,700 mark, very critical to watch out for. Powered by the private sector banks, the Nifty bank up as much as 1.4%. Good sight to see.
Yep, just as we wrap up the top gainers and losers very quickly before we bid you adieu on the markets coverage, at least for today. What strong movers we've had. You've had a Keynes Tech at one end, a Balaji Amines on another, 20% up, Alkyl Amines 7.5% up today, NLC. So good results are being rewarded well. There are some losers as well, KRBL, data patterns among them, which are seeing some pain point. Now for tomorrow, what to keep in mind, it's the last day of the week, the trading day of the week. Some Friday fears already and always come in because you're not sure if big announcements could happen over the week. And I reckon the big announcements we're talking about this time are not just geopolitical, they're domestic as well, because since the Prime Minister's appeal, one is waiting to see if there is a hike in prices in petrol, diesel, any other measures which are brought in. We don't know when that's going to happen. So there might be some nervousness. Pick wisely, and we'll have to wait and see if these gains are held onto. But that's pretty much all the time we have on this edition of India Market Close. From Alex, me and the team that put the show together, thank you so much for watching. Stay tuned. Market Express up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jan Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a snapshot of everything that has happened in today's trading session. Let's take a look at just that and start with taking a look at the markets first things first. And the Dalal Street, in fact, was in recovery mode. You do have the benchmarks that ended the day in green. Whether you talk about Nifty 50 that closed near 23,700, while the Sensex also ended about 800 odd points higher, about 1% higher as well. When you talk about broader markets, they in fact underperformed the benchmarks just a tad bit, but also managed to still close in the green as well. Let's also talk about the sectoral picture that was sharply tilted in the favor of green as well. Pharma and metal stocks led the gains, adding strength to the rally, while IT remained the lone laggard as well, dragging its feet against an otherwise green screen. Let's also talk about shares of Keynes Tech that slipped over 18%, 20% at close in fact, after the company posted a mixed set of numbers in the March quarter and missed the full year guidance as well, while revenue also grew strongly. When you talk about margins, they also came under pressure. Profits fell sharply, impacted by higher costs and geopolitical disruptions. And the company says that FY26 is a year of consolidation alongside a top management restructuring to drive the next phase of growth as well. The company is also adding that near-term volatility will not define its long-term outlook at all, with EMS cash flows seen turning positive in FY27. Moving on then, let's talk about Bharti Airtel that posted a steady set of numbers in the March quarter. 5.5% uptick is what you saw coming in for the stock as well, and modest revenue and EBITDA growth is something that you're looking at for the earnings fine print, and add to that a double-digit rise when it comes to profits. Margins, however, edge a little bit lower as the core India mobile business remains muted on softer ARPU as well as fewer billing days in the quarter. Now, when you talk about the broadband and enterprise, they continue to deliver strong traction as well. While DTH remains a drag on the performance, the company is also seeing rising data usage as well as lower net debt, even as Reliance Jio outperforms Airtel for the second straight quarter. Moving on then, let's talk about Sunil Bharti Mittal saying that the group is preparing for a generational transition with plans to hand over leadership to the next generation over the next decade. The Bharti Enterprises founder also hints at possible share buybacks over the coming years as well, signaling that confidence really in the group's cash position. Let's move on and talk about Hindustan Aeronautics. In terms of the profit, you saw a rise coming in despite softer operating numbers in the fourth quarter. Revenue edged up just a tad bit. EBITDA and margins also came under pressure compared with last year. So mixed set is what you're looking at largely. And the stock, of course, was not doing all that much. The lower margin print, when you talk about that as well, it's reflecting cost pressures even as execution remains stable. Overall, the quarter signals resilience in profits with limited traction at the operating level. Moving on then, let's talk about MTAR Tech that hit a record high after securing a 2,200 crore order from a global customer, boosting visibility on future growth. When you talk about the stock as well, about a 12% uptick is what you saw coming in. The order is almost as big as the company's existing order book. So that should tell you why, because you do have this really reinforcing the confidence when it comes to execution, and that's across clean energy, nuclear and defense businesses. Now, the strong March quarter results also support sentiment a little bit, pushing the stock sharply higher, just as you see on your screens as well with that 12% uptick. Moving on then, let's talk about India banning sugar exports till September 2026 as the government moves to cool local prices and safeguard domestic supply. The ban covers raw, white and refined sugar, marking a shift really from restricted exports to a complete prohibition. However, shipments to the US and the European Union under existing quotas remain exempt, and the impact on sugar companies is expected to be limited, in fact, as most players are currently focused on the domestic market. Moving on then, let's talk about Balaji Amines that surged almost 20% after a strong March quarter performance. Even at close, it managed to, hold on to those gains as well. And when you talk about the earnings fine print, that will tell you why the stock was really gaining in trade, because it was led by better pricing, higher utilization as well, and revenue growth is also coming from improved realizations rather than volumes as demand remains stable but not aggressive as well. Now, a richer mix of specialty chemicals is really supporting margin expansion, signaling that clear shift away from commodity products. With multiple projects lined up for FY27, the company also reflects early signs of a recovery in the chemical cycle. Let's also move on and talk about Vajayal Projects that was in focus and seen securing two major orders from Power Grid Corporation, each valued between 200 to 300 crore rupees. The projects include construction of a 765 kVs substation in Maharashtra's Pune and a 400 kV transmission line from Bellary to Devangere. Now, both are going to be executed within 21 months, and the management is saying that the projects will help ease transmission constraints in the Pune region and really strengthen Maharashtra's grid as well. With these wins, you do have this particular company that is now backed 3 orders this fiscal, and this also includes a 400 crore plus order. That was an international order that you were looking at for this particular company. Let's also move on and talk about HCL Tech that's reported to be in talks to invest in Sarvam AI as the Indian AI startup looks to raise between $300 to $350 million at a valuation of around $1.5 billion. Now, media reports are suggesting that NVIDIA and Excel are also part of the discussions, and Sarvam's valuation would mark more than a 7 times jump in just 2 years after its $41 million series. And this is a round that was back in 2003. But when you talk about the company, it's built large language models trained from scratch in India and across multiple Indian languages. HCL Tech has not commented yet on the development, but yes, that's what the reports are suggesting. Let's also move on and talk about PNC Infratech that has emerged as the L1 bidder for a 572 crore construction project floated by the Uttar Pradesh State Bridge Corporation. Now, the stock wasn't doing all that much, but when you talk about this particular project, it really adds to the company's order pipeline in the state's infrastructure space as well. While the contract is also subject to final award, you do have the L1 status positions PNC Infratech strongly for execution as well. And the development, of course, highlights continued momentum in public infrastructure spending and bidding activity in the state. Let's also talk about Babak that has signed an agreement with Peak Sustainability Ventures to develop its first bio-CNG plant in Uttar Pradesh as well. And the move marks Babak's entry into the bioenergy space, aligning with the push for cleaner fuels and circular waste to energy solutions. Moving on to talk about Lupin then, that has received US FDA's nod for an injection single-dose vial as well, used in the treatment of intractable ulcers. And the approval adds another injectable to the company's US portfolio, with the product estimated to clock annual sales of somewhere close to $8.7 million in the American market. And the stock was doing good for itself, about 1.9% uptick coming in on the back of this news. Let's also move on and talk about EasyTip planners as well. And the board has in fact cleared a 500 crore fundraise proposal as the company looks to strengthen its balance sheet, and the funds are going to be raised through a rights issue of equity shares, offering existing shareholders an opportunity to participate. The company in fact is saying that the record date for the rights issue is going to be finalized and announced at a later stage, with the capital raise aimed at supporting future growth plans. Moving on then, let's get you some business news. Government-backed non-banking financial companies are likely to seek exemption from the Reserve Bank of India's upper layer classification due to exposure norms. The move comes as several public sector-backed NBFCs face challenges in meeting the strict lending exposure limits applicable to upper layer NBFCs. In fact, industry sources are saying that the companies plan to request the RBI for relaxation, citing that their government ownership and role in supporting key sectors is something that should be looked at here. The upper layer framework imposes tighter regulations on the largest and most interconnected NBFCs. Moving on then, let's talk about the government considering allowing OMCs to borrow overseas in foreign currency to ease pressure on the rupee and the domestic forex market as well. And the move in fact aims to help OMCs manage their high working capital needs for crude oil imports amid elevated global prices that you've seen of late. By borrowing abroad, OMCs can reduce dependence on domestic banks and really ease forex demand in the local market. And when you talk about this particular proposal, it's still under discussion, and if approved, it could provide significant relief to public sector oil companies facing rising import bills. And the SEBI has proposed to simplify the derivatives rulebook and reduce compliance requirements for exchanges. The move, in fact, aims to make the regulatory framework more efficient while also maintaining market integrity at the same time. Now, when you talk about the key changes, that list really includes easing certain reporting obligations and streamlining processes for exchanges operating in the derivative segment. Now, the proposals are expected to lower operational burden on market infra institutions without compromising investor protection. SEBI, in fact, has invited public comments on the suggestion as part of the consultation process. Moving on, then, the Supreme Court today provided significant interim relief to Rani Kapoor in the ongoing Kapoor family inheritance dispute. Now, the top court has restrained RIPL from proceeding with agenda items relating to the appointment of independent directors and the change in authorized bank signatories. The court, in fact, observed that such steps could directly impact the court-appointed mediation process and further aggravate an already bitter dispute within the promoter family. RIPL's board meeting is scheduled for May 18th. Moving on, then, the government is considering reducing taxes on bond investments by foreign investors to stem FII outflows as well, and amid continued selling pressure by foreign portfolio investors, authorities are looking at measures to make Indian debt more attractive. The proposal includes lowering withholding tax or providing other incentives for foreign investors in government and corporate bonds. This comes as India aims to deepen the bond market and really attract stable foreign capital. On to macros then, India's wholesale inflation has seen a massive spike in the month of April, coming in at 8.3, the highest WPI reading in 42 months as well. So what's worrying is the sharp jump across almost every category. Fuel and power inflation surged to nearly 25% from just 1% earlier last month, showing the impact of rising energy costs. Primary articles inflation like vegetables, minerals, and crude materials also shot up to over 9%. Manufacturing inflation, that's the one that's moved higher as well, indicating that companies are facing increased input costs. Moving on then, let's talk about cryptos. Bitcoin has slipped below the $80,000 mark as markets price in higher for longer US interest rates. Persistent inflation risks is something that you're looking at that's linked to the Iran war and also keeping pressure on digital assets, the likes of cryptocurrency. Caution is building ahead of a key US Senate hearing on the Clarity Act as well. And that's a landmark crypto market structure bill that you're looking at here. Debate over restrictions on stablecoin rewards has also triggered industry pushback, and lawmakers warn that any delay, in fact, could push comprehensive regulation out until 2030. Moving on then, let's talk about India requesting the United States to extend the sanctions waiver that allows imports of Russian oil. The request, in fact, is coming in as the Iran war continues to disrupt global energy supplies. The waiver is critical when it comes to the country, which has significantly increased purchases of discounted Russian crude to meet its energy needs at a crucial juncture. Now, officials are saying that the extension would help maintain energy security, but also keep fuel prices stable, and the US is yet to respond formally, but the issue is being actively discussed at diplomatic levels. Moving on then, let's talk about Uber that is set to launch 2 new technology centers in India as part of its global expansion strategy. The CEO made the announcement during a town hall meeting in Bengaluru, and the new centers will focus on engineering, product development and innovation to support Uber's growing operations in the region as well. And this is a move that really underscores India's importance as a key talent hub for the company. The development is expected to create significant tech jobs as well as strengthen the company's presence when it comes to the world's fastest growing digital market. Moving on to WhatsApp, then, that has introduced a new incognito chat feature with Meta AI allowing users to have completely private conversations with the platform's AI assistant. The feature is designed for users who want to ask questions on sensitive topics like health, finances, or personal matters without leaving any record. Built on Meta's private processing technology, the incognito mode ensures that chats are not saved and disappear by default once the session ends. In fact, WhatsApp is saying that conversations are processed in a secure environment inaccessible to even the company. And moving on to Oracle, then, that has withdrawn placement offers made to students from IITs and NITs as part of its global layoffs and cost-cutting measures. The move, in fact, has affected several final-year engineering students who had received job offers earlier during campus recruitment drives. The decision is coming in amid Oracle's broader workforce reduction exercise being carried out worldwide. Now, students in campus placement cells have expressed disappointment over the sudden withdrawals. And on to South Korea's stock market that is showing clear signs of euphoria after a 200% surge in just the past year. A rally that has outpaced every major market globally. In fact, when you take a closer look, the frenzy has been driven largely by AI-linked chip makers, with retail investors borrowing record sums to increase exposure as well, and trading volumes are at an all-time high. You're looking at sharp daily swings to the tune of about 5% or more, and that have become much more frequent now, making the Kospi the most volatile major index worldwide. The report is also, in fact, flagging a rising FOMO culture and including a spike in stock accounts open for minors. Moving on then, let's talk about the Congress naming V.D. Satheesan as the Chief Minister of Kerala, ending 10 days of political suspense after the Assembly election results. And Satheesan, a senior Congress leader and current leader of opposition in the State Assembly, has been chosen to lead the party's government in the state. The decision is bringing clarity to the Congress-led alliance's plan to form the next government, and the development, of course, is coming in after intense deliberations within the party and its allies following their victory in the recent polls. And PM Modi met Iranian Foreign Minister Abbas Araghchi on the sidelines of the BRICS meeting, among other diplomats. The engagements took place amid heightened tensions in the Middle East, and the meetings are seen as part of India's diplomatic outreach to key players in the region. Now, when you talk about the discussions, they're believed to have focused on the ongoing conflict, energy security, as well as multilateral cooperation. An External Affairs Minister S. Jaishankar has called for stronger cooperation within BRICS, saying that the grouping must play a bigger role as the world becomes increasingly fragmented and uncertain. Speaking at the BRICS Foreign Ministers meeting, Jaishankar, in fact, said that the global landscape is witnessing geopolitical tensions, economic uncertainty, and supply chain disruptions, creating pressures on developing economies. He's also stressed that BRICS must act as a constructive and stabilizing force, especially for emerging markets. Moving on then, Maharashtra Chief Minister Devendra Fadnavis surprised many by ditching his official convoy and riding a bike to the Vidhan Bhavan amid PM Modi's austerity push. The CM was seen arriving on a motorcycle, highlighting a simple and approachable style of functioning. This move has drawn attention even on social media and been appreciated by netizens for its relatability. And at least 104 people have unfortunately been killed in heavy rains and thunderstorms across several districts in Uttar Pradesh. The deaths were reported due to lightning strikes, house collapses, and other rain-related incidents. The state government has announced compensation for the families of the deceased. Rescue and relief operations are currently underway in the affected areas. The IMD, in fact, had earlier issued warnings for thunderstorms and lightning in parts of the state as well. Moving on, then, the Central Bureau of Investigation has arrested 5 people in connection with the NEET UG 2026 paper leak case. The arrests were made during a crackdown across multiple states, and the CBI, in fact, is probing the alleged irregularities and leakage of the medical entrance exam question paper. This is part of a wider investigation, mind you, into the scandal that has raised serious concerns about the integrity of the examination process. The agency is expected to make more arrests as the probe continues. And on to some international news, then the Strait of Hormuz emerged as a key focus area during the high-stakes Trump-Xi bilateral meeting in Beijing as well, with the White House also saying that both leaders agreed that the critical global energy route must remain open to ensure the free flow of energy amid escalating tensions in the Middle East. Now, the meeting also signals a possible thaw in ties between the world's 2 largest economies, and Trump is saying that US-China relations would be better than ever now and called for totally reciprocal trade ties. You do have his Chinese counterpart who's striking a little bit of a conciliatory tone as well, and saying that China and the United States have more common interests than differences. And moving on, then, let's also go across and listen into the commentary coming in from the man of the moment, US President Donald Trump as well.
On this very historic state visit, we had extremely positive and productive conversations and meetings today with the Chinese delegation earlier. And this evening is another cherished opportunity to discuss among friends some of the things that we discussed today, all good for the United States and for China, and it was a great honor to be with you. Please.
感谢习近平主席。今天我们度过了非常美好的一天。首先要感谢习近平主席这一盛大的欢迎，那么也非常感谢在这一次历史性的国事访问当中非常慷慨地接待了我的代表团。那么今天早些时候，我们跟中方进行了富有成效以及具有建设性的对话。那今天晚上将是我们另外的一次机会，能够共同再次讨论我们今天早些时候已经讨论到的一些问题，以及我们的共同利益，以及我们如何能够为全人类塑造更好、更安全的未来。
The relationship between the American and Chinese people goes all the way back to America's founding. The first American consul to China, Samuel Shaw, arrived on the first American trading ship to reach these shores in 1784. The Chinese merchants had a name for the Americans. They called their visions the New People. 2.5 centuries later, that first connection has grown into one of the most consequential relationships in world history.
All right, then there you go. So that's the word coming in from US President Donald Trump. Let's also recap some of the commentary also coming in from him now. In terms of what he said, he's talked about how the meeting thus far has in fact been great. Let's also go across and listen into what else he has to say at this moment.
当时到来的美国访客称为一个崭新的民族， 250年后的今天，这一个当初的友谊已经慢慢的演变成为当今世界当中最举足轻重的关系之一。
From the beginning, our citizens have shared a deep sense of mutual respect. Benjamin Franklin published the sayings of Confucius in his colonial newspaper, and today's sculpture, recognizing that ancient Chinese sage, is carved into the face of the Supreme Court. Very.
从一开始，我们两国之间的人民就已经有深厚的相互的尊重。美国的国父本杰明·富兰克林曾经在他的殖民报纸当中刊登了孔子的《论语》，而今天在美国最高法院建筑物的门前，可以说有一个雕刻，这个雕刻就是为了向中国的这一名古代的圣人进行致敬。
The appreciation ran in both directions. Chinese admirers of President George Washington gifted a stone tablet honoring his memory to adorn the Washington Monument. It bears the words of a Chinese official who called the great general and statesman a hero among men.
这一种欣赏，那么中国乔治华，那么这些人当时就向美国捐赠了一个石碑，就是为了纪念华盛顿总统。目前这个石碑已经镶嵌在华盛顿纪念碑里面，石碑上刻有当时的一名中国官员形容这一名伟大的将军和政治家，他们把他称为人中豪杰。
And across the centuries, this mutual esteem grew into a relationship that reflected the tremendous talent and potential of our two people. Chinese workers helped lay the railroad tracks that connected our Atlantic coast to the Pacific. American travelers to China helped spread literacy and modern medicine. And at the request of China's ambassador, it was President Theodore Roosevelt who provided the funds to establish President Xi's alma mater, Tsinghua University.
在过去几百年当中，这种相互的尊敬已经成为了一段全新的关系。这段关系可以说反映出我们两国人民之间巨大的潜力以及我们的努力和智慧。中国工人当初帮助美国建设了我们的铁路路轨，连通了美国的大西岸和太平洋沿海地区。美国当时早期出访中国的美国人也帮助中国提升了识字率，并且引入了现代医学，并且应时任中国驻华大使的请求，罗斯福总统也专门提供了资金，成立了习主席的母校清华大学。
As allies in World War II, President Franklin Roosevelt's mentions of the brave people of China, that's what they were, drew loud cheers in his speeches in the United States, and everybody loved what he had to say, just as many Chinese now love basketball and blue jeans. Chinese restaurants in America today outnumber the 5 largest fast food chains in the United States, all combined. That's a pretty big statement.
那么作为二战期间的盟国，罗斯福总统在美国的多次演讲当中提到了勇敢的中国人民。正如当前许多中国人非常喜欢篮球和穿蓝色的牛仔裤，在美国目前的中餐厅的数量要比美国前5大快餐连锁店的总的店面还要多。
This bond of commerce and respect that stretches back 250 years is the foundation for a future that benefits both of our nations. The American and Chinese people share much in common. We value hard work. We value courage and achievement. We love our families and we love our countries. Together we have the chance to draw on these values to create a future of greater prosperity, cooperation, and happiness, and peace for our children. We love our children this region and the world. It's a special world with the two of us united and together.
那么至于商业当中的纽带以及我们的相互尊重，可以说追溯到250年前，是我们将要构建的未来的基础。至于未来将会惠及我们两国的人民，美国人民和中国人民有许多的共同点，我们都崇尚劳动，我们都崇尚勇气和成就，我们都非常爱我们的家庭，我们也爱我们的国家。我们两国一道，我们将有机会基于我们共同的价值观，创造出一个基于合作、幸福、和平的未来，为我们的子孙、为本地区以及全世界造福。
Thank you again, President Xi, for this beautiful welcome. And tonight it is my honor to extend an invitation to you and Madam Peng to the White House this September 24th. And we look forward to it. And I'd now like to raise a glass and propose a toast to the rich and enduring ties between the American and Chinese people. It's a very special relationship. And I want to thank you again. This has been an amazing period of time. Thank you, President Xi.
那么再一次感谢习主席，感谢这一美好的欢迎。那么今天晚上，我也想借此机会向您以及彭女士提出邀请，于9月24号邀请你们出访白宫。那我也希望，针对美国人民和中国人民之间深厚的以及持久的友谊，我提议我们进行举杯。那么我们这两国关系是非常独特的一项关系。
Thank you, everybody.
感谢。
Thank you, everybody, very much.
感谢。
All right, this is a historic event that we have been a witness to. The Strait of Hormuz emerged as a key focus area during the high-stakes Trump-Xi bilateral meeting in Beijing, with the White House saying both leaders agreed that the critical global energy route must really remain open to ensure that the free flow of energy amid escalating tension in West Asia is there. Now, the meeting between the US President Donald Trump as well as the Chinese President Xi Jinping also signaled a possible thaw in the ties between the world's two largest economies, remember, the US and China. Now, Trump said that US-China relations would be better than ever and called for a totally reciprocal trade ties, while also expressing optimism about expanding business engagement with China. Now, Xi Jinping, meanwhile, remember, struck a conciliatory tone, saying that China and the United States have more common interests than differences and should be partners, not rivals. Now, Xi added that a stable bilateral relationship would benefit the entire world. And now let's take it forward, what this particular historic event really means for politics as well as the global economies, also putting the spotlight on the Iran war and the Strait of Hormuz as a big checkpoint of the world. Let me welcome on the show Robinder Sachdeva, the foreign affairs expert. Robinder, good to speak to you yet again on NDTV Profit. Thank you so much for joining us. What do you make of a very, very animated and very, very open joint statement by both the US as well as China, and some of the big statements really coming out when it comes to the alignment between the two superpowers of the world on the Hormuz affair, on nukes for Iran, and on several other aspects which are really paining the geopolitical situation across the world. Robinder.
Thank you. A pleasure to be with you. One, as we were seeing the toast by both Xi and Trump, this is the highest level of, I would say, opto politics playing out. Optopolitics is when you have optics layered above geopolitics, right? I was especially struck, there have been discussions and all, but the toast which Xi Jinping raised and what Trump raised, I saw a difference. Xi was, in a way, quite blunt, saying that, we have to be partners in cooperation. A rivalry will not be good for either of us and for the world at large, right? That's what he was indicating. That's where he went. Trump, on the other hand, went back into history to highlight the ties between China and America. He went back to, Benjamin Franklin writing about Confucius. Then he talked about a gift of George Washington's bust. Then he talked about Chinese labor helping build railroads. Then he talked about US medicine helping China. So in a way, Trump was laying out a larger arc of history in terms of relations between the two countries, whereas Xi Jinping was much more clinical and much more in the present. So that's one big difference that I see. Now, as to what all has been going on in the background, we do not know, at least I don't know. But what we can see, Trump has a very high level delegation. All his cabinet ministers are there, defense secretary, state secretary, treasury secretary, commerce, Dupnik, I did not see, must be there, as well as 17 CEOs. And Trump made it clear. He said these are the number one, not number 2 or 3 of each of the companies. And the combined annual turnover of these companies who are coming with me is around, I think, $17 trillion, which is just less than China's GDP, about $21 trillion. So Trump administration and corporate America, it seems, is making a definite and, let's say, hard effort to engage deeply with China. In the background, your viewers may know, of course, what is driving Trump. I think the primary thing is trade. All others, Hormuz and Taiwan, of course, Taiwan for China, are secondary, because what is important for Trump is economy. If Trump is able to manage a good trade relationship with China, America's economy prospers. And if America's economy prospers, then America can handle all other geopolitical challenges. In terms of the economy, the key thing which I see, they're talking about, 5 Bs, which America wants. Boeing, that China should buy Boeing, beef and beans. Okay. But what is more important is a structural initiative. They are talking about setting up a board of trade and a board of investment. So what America is trying to do is, in a way, delineate or create a firewall between trade matters and trade disputes and the geopolitical disputes. So what America is signaling is that it wants to engage deeper with China in matters of trade. Yes. China opening its markets and all of those things, and sorting out the rare earth issue of rare earth supplies to America, etc., etc. Separate is then the matter of the geopolitics. And in geopolitics, from what we can see, what China wants, let's say. China apparently, with a term going around, it wants 3 Ts. Taiwan, technology, and tariffs.
Yes.
Now, regarding Taiwan, what I would love to see is that, does America throw Taiwan under the bus?
Yep.
And says to China that you throw Iran under the bus. Right? Essentially, that's what they're trying. That because
that's a very good point, Rabinder, that you made, that there has to be a much larger deal between these two economies, where each one has a pain point which is addressed by the others, and that's how they are negotiating. What, in your view, after this optopolitics, as you correctly named it, what will be the outcome of this big show of strength between the two largest economies?
The outcome we will see as it rolls out, but for the time being, it seems that the trade tensions, some of these may be lowered. Let us see how much China opens up or allows easier export of rare earth metals, because China is making it extremely difficult for European and American companies to be able to buy rare earth metals, earth magnets, by imposing several export controls. That's on the China side. We could see how it works out. On the American side, it would be important to see that how much America relaxes the technology restrictions. For example, America has prohibited or banned or sanctioned the Dutch company ASML, which manufactures the most advanced, UV machines for advanced nano chips of 2nm, etc. Does America allow that exports to China? Similarly, Japan has some of those sophisticated machines which are not being exported to China because of this prohibition by the Americans. So does America open up some of those restrictions on technology exports to China? And on the other hand, as a quid pro quo, does China open up the supplies of rare earth metals and minerals? That's one. Next is that, okay, how much of these beef and beans China will import? I think China will import. In the previous deal also they had promised, they did not fulfill the promise.
But Ravinder, I want to understand from the point of view of the geopolitical tension and the crisis. And of course, the US and China have been on two different sides on this particular matter, even though not openly is the understanding, and I would seek your guidance on that. So when we look at the construct, they coming together, does it at all signal that there will be some lowering of the intensity of this war, and probably also looking at a negotiation and a proposal between US and Iran? Can China influence that, and will this Trump's visit to China placate Iran indirectly?
Great point, Nishaji. I do not think that China will go the whole length or the whole walk to what Trump wants. Trump would want, China to arm twist Iran and push Iran into a corner where Iran says, okay, ceasefire, because China is the largest buyer of Iranian oil. I don't think China will do that. Yeah, sure, China could, play a statesman-like role with Iran. But the flip side, it will depend on the war. How much America backs away from Taiwan? Sure, let's see when the joint communique comes. They may mention about a one China policy, that will be fine. But if America gives more assurances or reassurances and signals that it will not come to the defense of Taiwan, let's say in the ultimate case, then China could do more with respect to Iran. So I don't see China doing much or exerting much pressure on Iran at present. Yes, it will, some, but not too much, because remember, if Iran falls under American influence, China has another big problem there. China's one assured supply, which was a friendly country, Venezuela, has been taken away. Right. Another friendly country, which was totally in the camp of China, Iran, if that is also taken away, then tomorrow, day after, in a year, 2, 3, when there is some crisis between the US and China, US could start to turn off the tap of Chinese energy. Venezuelan oil not available, Iranian not available, and Gulf, we don't know which way they're going, but it seems the Gulf is kind of aligning with America overall. Yeah. So China would suddenly face a huge energy crisis. So it will be in China's interest that Iran remains standing and Iran doesn't capitulate to America.
Right. All right, Ravinder, great points there and a lot of insights coming in from this historic event and optopolitics that Ravinder termed it as between Trump and Xi Jinping. Thank you so much. All right, moving on to another important development of the day, and the escalating crisis in West Asia really dominated the discussions at the BRICS foreign ministers meeting in New Delhi, with India calling for urgent reforms in global institutions and pushing for a ceasefire in Gaza. External Affairs Minister S. Jaishankar warned that the world is facing a convergence of challenges, from conflicts and supply chain disruptions to energy and food security concerns. Now, India also stressed the importance of keeping key maritime trade routes, including the Strait of Hormuz and the Red Sea, safe and open, amid rising fears over disruptions to global oil supplies. Now, let's listen in to what exactly did S. Jaishankar say.
We meet at a time of considerable flux in international relations. Ongoing conflicts, economic uncertainties, and challenges in trade and technology and climate are shaping the global landscape. There is a growing expectation, particularly from emerging markets and developing countries. Development issues remain central. Many countries face challenges on energy, food, fertilizer, and health security, as also access to finance. BRICS can help them respond more effectively.
All right, striking a mix of defiance and diplomacy at the BRICS, Iranian Foreign Minister Abbas Araghchi said that Tehran remains ready to defend itself while also pursuing diplomatic engagement. And he also asserted that there is no military solution to issues related to Iran. And here's exactly what the Iranian Foreign Minister had to say in the BRICS summit today.
Ready to fight with everything we have in defense of our freedom and our soil, we are equally ready to pursue and defend diplomacy. As I have repeatedly stated, there is no such thing as a military solution to anything related to Iran. We Iranians never bow to any pressure or threat, but we reciprocate the language of respect. As much as our powerful armed forces remain ready to exact devastating retribution on foreign aggressors, my people are peace-loving and do not seek war. We are not aggressor in this sordid situation, but the aggrieved.
All right, and another important development today connected to this war situation, India has condemned the attack on an Indian flagged ship off the coast of Oman, calling the targeting of commercial shipping and civilian mariners unacceptable. In an official statement, the Ministry of External Affairs said that all Indian crew members on board are safe and also thanked Omani authorities for carrying out the rescue operation. In fact, India also reiterated that attacks on commercial vessels and any attempts to really impede freedom of navigation and global commerce must be avoided amid rising tensions and growing security concerns in key maritime routes across West Asia. All right, let's take it straight across to also crude oil prices. Oil prices edged higher as really the market stayed on the edge amid the high-stakes Trump-Xi Jinping meeting, seen as, remember, a pivotal point for any progress on the Iran conflict. Now, Brent crude hovering between $105 to $107 per barrel, while WTI held above $100 per barrel. Now, the International Energy Agency has really warned of heightened volatility going forward, and OPEC has really trimmed its global demand outlook. Also moving on, remember, in a big development for today, India has extended the ban on sugar exports till September end or until further orders, as the government really moves to keep the domestic prices in check amid the rising global uncertainty. Now, the West Asia crisis and also growing supply chain concerns. So this is a very big move for really India to avert the inflation of prices and also deal with probable shortage and therefore a stoppage on the export of sugar. Now, the benchmarks, they inflated their gains from yesterday's flat close, and we are talking about the equity markets. It was a relatively strong day for trade for the Indian markets, with the Nifty 50 ending firmly in the green and also closing above the 23,600 mark. The India index gained more than 1.2%, that is Nifty 50, supported by the strong moves really coming in from the heavyweight stocks like Adani Enterprises and Cipla. And the broader markets, remember, they underperformed the benchmark indices today. Sectorially, almost all the indices ended in the green except IT. Pharma, in fact, was the best performing sector, gaining over 2% in trade. Also remember that it's the earnings season going on, and big earnings that came out yesterday. And of course, after Bharti Airtel reported an inline Q4, Sunil Bharti Mittal, the chairman and founder of Bharti Enterprises, spoke at length about succession plan during the con call. He also hinted at a possible share buyback in the years ahead. Listen in.
If you really ask me, my own wish is that in the next, I know it's hard to put in, years on it, and in the next decade, as I kind of come to a point where I hand over the reins to the next generation as shareholders, Bharti Telecom should get back to controlling shareholding, 51%, or just over 50%. So that's 10% more to go. And for a company of this magnitude and size, you can imagine that it's not a small task. So the principal, direction or vision of that I carry in my mind is all shares that we can from both ICIL or Bharti family entities and Singtel should go into Bharti Telecom as much as possible.
All right, so big statements coming in from Sunil Bharti Mittal there. Now, the Indian rupee has hit a fresh record, closing low, ending at 95 rupees 77 paise against the US dollar. The currency remained under pressure through the session due to the continued demand for dollars and also concerns, remember, around the external pressures on the economy. Now, however, the rupee did recover from its worst levels during the day after reports suggested that the government may be considering a cut in taxes on foreign investments in Indian bonds. All right, talking about the macro data coming in, India's wholesale inflation has seen a massive spike in April, coming in at 8.3%. In fact, this is the highest WPI reading in 42 months. And what's worrying is the sharp jump across almost every category. Fuel and power inflation surged to nearly 25%, showing the impact of rising energy costs. Even core inflation climbed to 5%, which is at a 43-month high. Now, higher wholesale inflation doesn't immediately hit the consumers the way retail inflation does, but it does signal the rising costs of businesses. So that's the macro data that we have been tracking. Now, in a big step to really boost the forex inflows, the government may allow OMCs to borrow more money from overseas markets in foreign currencies. As per sources, overseas borrowing may help the lower funding costs for OMCs, especially during a period of volatile crude oil prices. In fact, my colleague Shrimi joins in with all the details on what all is being deliberated in this particular direction. Shrimi, tell us.
Yeah, that's right. The government is actively considering a series of measures to boost foreign exchange inflows, something that reflecting in the decision making in past few days following the PM austerity appeal. And to go further, they are deliberating upon measures to improve forex flows and easing pressure on the reserve if the Iran crisis further intensified. And one of the key proposals actually under discussion is to allow oil marketing companies to raise more foreign currency loans directly from the overseas markets. Officials believe that such a move could bring in, additional dollar inflows at a time when crude oil related outflows remain elevated. And this move, if get a, of course, green signal, could also lower the borrowing cost for OMCs, as they are among the biggest buyer of the dollar in the domestic market. Now, another measure that could also being deliberated, upon is tightening of the liberalized remittance scheme. Essentially to curb forex outflows more efficiently. And the exact counter, however, of proposed tightening is something being looked into in terms of possible tweak, either in the form of threshold or eligibility criteria, etc. But they are very much on the table, is what top sources in the government indicating. Do note the fact that the policymaker keeping a close watch on the impact of the crisis and mulling all possible measure with, very balanced approach and actively evaluating its forex management strategy. And you may see perhaps a couple of such decisions very soon in the coming days.
All right. Thank you so much, Shrimi, for that. Now, after days of intense closed-door meetings and high-voltage political drama, well, the suspense over Kerala's next chief minister is finally over. The Congress legislature party has really officially elected V.D. Satheesan as its leader, clearing the way for him to really take oath as the state's new chief minister. Meanwhile, K.C. Venugopal, who was also in the race for top post, has publicly backed the high command's choice. So big development there, and we are out of time on this edition of Profit 360, but also leaving you some interesting footage on how Devendra Fadnavis really rises up to Prime Minister's call on energy conservation. Goodbye.
You're a Malad boy. You started by trying to do something with sweets, pivoted to chaat, then pivoted to vada pav, then you pivoted to vegetarian burgers.
When we started the Mithai brand, again it was a little too ahead of its time. Chaat never happened, we just called, Jumbo King was called the chaat factory for some reason. I love the name. I started with one store of 50 square feet. We are fully vegetarian, and my first reaction when we did vegetarian burgers, when we pivoted, they said burgers vegetarian kab se honge, right? A burger is basically...
It's like veg biryani.
Veg biryani.
Why is Jumbo King not only about vada pavs anymore?
Vada pav is a Mumbai product. Within Mumbai, this was like the poor man's food, or the my struggle ke days ka sathi. There is a problem in the name vada pav. The moment you call it vada pav, you can't charge more than 20 rupees. People will say that इसमें सोना चांदी थोड़ी डाला है. Why should I pay more than this?
How many people told you कि MBA करके आप vada pav बेच रहे हो?
My friends used to joke around, tell us the truth. You've been disowned by the family. You're not telling us that. We have a family business, and I told my dad I don't want to join the family business. When Jumbo King started, it was seed capital of only 2 lakh rupees, which I borrowed from my dad. I said I don't need money because I had burnt about 55 lakhs in the mithai business.
Ouch.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and this is one of the best KYC shows where we get you hidden gems, interesting stocks, anything which is trending, and if any alpha can be made or not. But before that, let me give you some hint. Try to guess the company. Of course, it will be a bit tough for you to guess. It's recently listed. It's a workforce and an infra support company. That's the first hint for you. दूसरा hint आपको देते हैं, कंपनी हाल ही में लिस्ट हुई है March 23rd, 2026. It's just been 1.5 odd months and the stock is still down 29% from its listing price. It's pretty much interesting for you to understand which company I'm talking about. The company's name is Innovision. Of course, this is a North India based company and this is the company which we'll be talking about. But why have we got this company in KYC? इस कंपनी में ऐसा क्या खासियत है या क्या न्यूज़ आया है जिससे हमने इन्हें KYC में बुलाया है? First question. Let's see why this company is coming in. Of course, right now a lot of order flows are coming in and that's where my interest came in for this counter. I checked that the company was recently listed also and it was not covered in KYC. So what's the exact business model? Is it a toll player? Is it a manpower service player, or is it both? And there's an angle of drone also in it. The recent order wins is something where my interest came. So we'll be understanding the order book status and the outlook going ahead. But also let's talk about the other key questions is the digitization of tolls. So we have heard about that news. How much does that benefit and that infra pick up? What does that happen? Of course, that this looks like partially like an IRB infra, and also the strategic growth outlook for the security manpower business. What's the growth looking like? We already have Quest Corp and Teamly, so you can understand a little bit of that business model as well. And overall, the long run growth, especially coming on the revenues and margins, because the first time the company came out with its numbers in Q3, but we need proper clarity on the future outlook. And to understand more, we'll have Lieutenant Colonel Randeep Hooda, the chairman and MD of Innovision, giving his views on the queries asked by us, and to discover this company, what's this all about. That's what the focus should be on, innovation. लेकिन ये company करती क्या है? I've given you 2 hints. Manpower is there. There is of course a toll infra at play. But let's just go a bit back. This company was founded in 2007 by defense veterans. That's an interesting company to feature in KYC. That deals with the workforce and toll infra solutions, but there is some more layers to it. I'll come to that. 14,000 plus workforce members across 23 states and 5 union territories. That means they have coverage. But what are the key services for this company? Manpower, toll plaza I spoke about. There is also skill development services and the emerging drone services. This is where a lot of interest is coming in the street. The company operates as a B2G dominant platform, यानी कि government को ज़्यादा services देते हैं. So there is of course a little bit of risk there. 80% of the revenue comes from NHAI, central and the state government. This is how the picture looks. Recently IPO आया था and the IPO proceeds are likely to support the bidding for the next 3 to 5 additional toll plazas in FY27. So that's something to talk about, and a 31 crore toll order win was there from NHAI. Recently the company announced post its listing. Apart from that, a couple of more orders were there. There was a manpower award coming in from Chhattisgarh State Marketing Corporation, and also if you look at it, there was a 13 crore NHI fee collection order as well. So a lot of order wins are coming in post the IPO. But let's look at the operational data, how things are panned out. We have taken the data from the toll management business. There's roughly 12 active businesses in this NHI segment, and the revenue which has gone up, that collection was roughly 281 crore rupees, and this is for the last 2 months, December 2025 to January 2026. This is where the collections data has come. But one thing which was very interesting was the drone service business. That's where my attraction came to this counter. The commercial ramp up is expected in FY27. The margin target as per the company estimates, that's roughly 40 to 50% versus 5 to 6% for manpower. And if they move towards this side, that is where the margin outlook starts improving. And FY27, the revenue target for this drone service business is set at 50 crore rupees. So very interesting and a very developing setup. But what are the positive triggers for this stock? That's what we need to understand. Improving operating leverage. We need to give it a little bit more time. If 3 quarter का ही number आया, 4th quarter numbers are expected to come in. The DI exposure remains strong for a company जिसका market cap is around 700 to 800 crore rupees. Around 5% of that stake DIs are having. 9,000 crore market opportunity for the drone service. So that is something we will definitely have a big conversation about. And a structural surge seeing in the toll outsourcing. So this is something which we are looking out for. It'll be pretty much interesting to speak about it. It's of course a little bit asset heavy play as well. Manpower demand for the infra space. That is where, if in case the infra push happens, that's where the momentum lies. And Street is expecting overall strong Q4 numbers as well for innovation. So we will be tracking this company and understanding the entire picture. But to understand a company in KYC, we have 8 parameters where we judge the company, how the company is doing and what's the future outlook looking like. So I'll just mention you: income statement, balance sheet, cash flow and return ratio. These are the 4 important ratios we track on terms of numbers. But apart from that, we also see the shareholding, what has moved. याद रखिए सिर्फ 1.5 महीना ही हुआ है. So the history is quite small. So we need to take our analysis with a pinch of salt, be it for street cred. And interestingly, valuations also, we'll try to figure it out with which business model does the company fit. Most importantly is the outlook. That is what the street wants to know. It's recently listed, untracked, and that is where we try to find any hidden gem if it's there and get you more details. And that's the speciality of KYC. Let's talk about the first parameter, and that's the income statement. Of course, a lot of data has come in from the RHP. H1 numbers, look at the revenue, that's around 510 crores, 893 in FY25. And even if you double this up, this comes to 960 crore. That's what the estimation is looking like. This is just the H1 numbers. I'll get to the Q3 numbers. But net, look at the strength coming in these numbers, and that is showing good. Margins also, you see it's holding up almost 6% odd. And looking at the Q3 numbers, largely, if you see the year-on-year basis, there has been a good improvement, especially in the bottom line operational numbers and the bottom line numbers. That is where a little bit of bullishness is coming. Is there an inflection there or not? And of course, from that 6.4 in FY23, it's back to its higher levels in H1 FY26 as well. So margin play is coming good. Operational numbers are improving. So net income statement, I'm going to give this a strong thumbs up. Let's talk about the balance sheet. What's happening here? They recently had in, the IPO also a little bit of borrowings reduced, but the way they are expanding, I explained to you this asset heavy model as well. So borrowings are definitely there. That's what we'll try to understand with the management. Are they reducing it, or is the focus going to some other businesses or not? The cash is pretty decent, as around 55 odd crore rupees, and it has increased each year, and comfortably it's sitting at the end of H1 FY26. So it's a kind of a neutral rating right now. Let's give it a little bit more time. Since it's in an expansion mode, there might be a little bit of pressure. So income statement was strong, balance sheet was neutral. Let's see what's there in cash flow. And always remember, whenever there's a company in the B2G segment, cash flows at times will be an issue because it's coming in from the government. There might be a delay in receivables, and that is what the reason is. Look at the cash flows, it is not very uniform. So this is a business model itself. It's not a flaw, it's the feature when you judge these companies. So largely it gives an infra company vibes, but manpower, of course, receivables is much stronger. So we need to get more time to understand that. But as of now, on this data, I'm going to give this a thumbs down when it comes to the cash flow segment. But interestingly, the return ratio is something which caught my eye. The ROC numbers we speak about, of course, this is before the listing. This is around 20 to 22% kind of a business, but after that there's been a good up move coming in. Of course, there are some capital adjustments from the IPO, but currently it's at 30 plus in the ROC number. So net a strong performance when it comes to the return ratio. So I'm going to give this a thumbs up as well. Apart from this, let's talk about shareholding. और shareholding में ज़्यादा समय नहीं हुआ है, बस एक ही बार का जो है shareholding pattern आया है. So right now net we see promoters are holding a decent 74% stake. 75% is of course the SEBI cutoff, so it's comfortably below that. But interestingly, what I liked is the DIs. They have done a good participation, and around 5% of that equity is amongst DIs, and almost 2% coming in for FIs. Roughly the remaining 19% float is with the retail. So it's a neutral rating. समय देते हैं. That's why we have just kept this a neutral one when it comes to shareholding. But let's talk about street cred. Company को 1.5 महीना हुआ है listing के. So we need to give it a little bit more time. Of course, market conditions are also, you could say, impacted. So from the IPO price and the listing price, there has been a big downtick coming in. Of course, the listing price itself was down 10%. After that, a little bit sell-off happened. And of course, stock is flattish, for the last 1 odd month. And of course, company is coming out with 3-4 important orders also. So the street is looking for the Q4 numbers. That's where the clarity comes in. And that's why I picked up this company in KYC to give you a first-hand view of any chance of alpha being made. So net, let's give it more time. So I have given this a benefit of doubt and a neutral rating when it comes to street cred. Let's talk about the valuations. Ki dhanda iska peer kaun hai? And that's where the confusion a little bit happens, because innovation has the toll management business also. Innovation also has the manpower business also. But let's see how the valuations stack up. We have taken the trailing P ratios. It's around 23 times. That's what the number is coming as per our calculations. You compare that with IRB Infra, it is cheaper at 31 times. But if you talk about the other players for the manpower segment, that's where TeamLease and Quest comes in. That's around 14 to 17 times. These businesses do have good cash flows also. Over here, that cash flow gets used in toll and asset heavy announcements as well. And companies, of course, doing other businesses also. So net, in our analysis, I'm going to give this a neutral rating as well. But let's talk about the outlook. What is there? Is there any change happening here? How's the things looking? There's a large order win expectations in the security surveillance theme. That is where everybody is talking about. We have seen companies like RNIT AI also in the small cap space doing well. The beneficiary of expansion of toll infra, that is where, some little bit of alpha is lying, and the government is pushing hard for that. Now they're growing advanced drone and smart monitoring solution. That's also one of the key takeaways which the management had mentioned in their IPO discussion. Deeper penetration across tier 2, tier 3 cities. That is where the movement is happening of the key products. So we'll be looking out for. So net, as of now, outlook looks strong. लेकिन आइए आपको पूरा KYC रेटिंग बताते हैं इनोविजन का. क्या आंकड़े हैं, what should you be focusing on, and the income statement has done really well, but a concern comes from the cash flow, and of course this the business model as such. Return ratios are improving, and if you look at the street cred and shareholding, that itself also, it's largely, you could say, a neutral rating. And The valuations also, the story remains the same. The one thing which is good is the outlook. That is where the outlook, it seems like there is some inflection in the business as well. So the final rating, do market, that's around 5 out of 8. We have given for innovation. It's largely in line to slight positive on the average ratings which we give in KYC. But we have an interesting conversation, and very rarely this management comes from the armed forces. We have Lieutenant Colonel Randeep Hundal. He's the promoter and chairman of MD at Innovision, and a very interesting snippet about him is he began his career as an officer in the Indian Army, and that's of course a matter of pride. Over 15 years of experience he has in manpower services, and interesting snippet about him is that he's also a DGCA certified remote pilot training instructor. So of course he's running a business and he's a qualified person as well. So it'll be a very interesting conversation about it. We are joined in by Lieutenant Colonel Randeep Hundal. He's the chairman and managing director at Innovation. Good afternoon, sir. It's always a pleasure to have you in our show, and it's a very new company, recently listed Innovision. Just wanted to understand a little bit more about your company and what's the exact motto of your company. ये आपकी company करती क्या है और अलग कैसे है?
Yeah, firstly, thank you for having me on your show, Sharad. So, Innovision Limited, we have 3 major verticals in the company. Though when we started, we being from the armed forces, I was a short service officer. So when I left, and I also, come from a 4th generation army background. So the first thing when we started the company, we started purely as a guarding company, and we started with 2 guards. And today, as we stand, we have more than 17,000 workforce across India. We are present in more than 23 states and 5 union territories. So that is what from 2007 till date we have been able to achieve. So starting from manpower, then we slowly graduated into skills development. When in 2014, then when the Ministry of Skill Development and Entrepreneurship came into being. So that was the time we saw this as an opportunity where we started, these programs, skills program was sponsored by the Ministry of Skill Development. So since we already have had an infrastructure in place, so we started training the security guards. And very quickly we realized that there is a lot of opportunity in the other sectors as well. Now, since there are more than 42 sector skill councils in the country, so we are affiliated with all sector skill councils, and we are carrying out skill development training in across the vertical, whether it is logistic, retail, security, BFSI, and so on. So this is how the skills development vertical started. In 2018, we were already providing manpower to these toll operators, and that was the time when we realized that since we are already doing the hard work of training the manpower who are managing the toll plazas, so as well understand the entire holistic business of toll management and get into this. So 2018 was the first toll plaza that we bid under the EPC model, which happened to be a very profitable toll plaza for us, and that's how the tolling journey for Innovision started. And from one plaza, so far we have more than 35 toll plazas across India.
Mr. Hundal, you explained us about the toll plaza entire ecosystem. So that is where the manpower is something which you are giving in the infra space. So that's an important clarity coming in. But there is also a digitization of toll plazas which is happening. Government is pushing. How does this benefit your company? And of course, if you could just give us a little bit about the order book regarding this.
Yeah, so see, the digitalization of toll plaza has already happened with the adoption of FASTags, and for an organized company like Innovision, it has stopped the pilferages, it has enhanced the collection efficiency of toll plazas. Now, in this financial year 26-27, we have already secured 125 crores of contract with us across Uttar Pradesh, Madhya Pradesh, Tamil Nadu, and Pondicherry. We have 25 existing toll plazas, so the revenue from these toll plazas is also going to be carried forward. And as far as digitalization is concerned, we ourselves have started now developing integrated traffic management system for smooth mobility of traffic. So I think another 2 or 3 months we will be able to bring out this technology, and we would start the validation of this technology on our existing toll plazas. So as far as the market is concerned, we typically operate, as of now, we are operating under EPC model with NHAI, and under this model, the market size is almost around 55,000 crores. Typically, there are more than 850 toll plazas across India. So there is a strong bidding pipeline already in place for this ecosystem.
Right, so there is a strong bidding pipeline coming in. Apart from this, of course, there is a lot of B2G exposure. You know, whenever the company is having a B2G exposure, of course, the questions arises on the receivable front. What are the payment cycles looking like in your business? What are the risks involved here?
So, if I talk about toll management, now here, the cash flow is very positive because we collect on a daily basis and we remit NHI on weekly basis. So there is no gestation period of cash as far as tolling business is concerned. There is a gestation of around 45 to 60 days in manpower business. But B2G, if you talk about tolling is cash positive. In manpower segment, I would not say that there is a problem from B2G, but generally, by the time you raise the invoices and the monies are realized, the gestation time is around anything between 30, 45, 50 days.
Right, but apart from these businesses, thank you very much, Mr. Hundal, to explain us the payment cycle. Like, Street was having a little bit of concern on the B2G segment. So just to put that in perspective, manpower business will have 40 to 60 days of gestation period, and mostly your cash flow collection. So the tolling business is on the same day itself. Of course, a 1 week lag might be there here and there, but trying to understand the drone solution also. And interestingly, you are a certified instructor also. Just wanted to understand drone solution as a service. How nascent is it right now, and how big of a market can it open for you? Because there seems to be, a move to a high margin product also. I was just trying to, connect the dots. It's a newly listed company, so we have less information. So I just wanted to know from you.
Yeah, so, this is a fairly new initiative. So we have a subsidiary by the name Aerodrone Robotics Private Limited. And when we started this company, we started purely as a training, company for pilots. So we are a DGCA certified remote pilot training organization, wherein we train pilots and issue them the remote pilot certificates, which is basically the license to fly the drones. Now, after, when Ops Sindoor happened, now that was the time we also realized that there is a lot of, the entire warfare of, the Indian Army has changed, and it has become a drone warfare now. And we also saw this as an opportunity, and we quickly gotten our new R&D team in place. And I'm very proud to, say that within a span of, 6 to 8 months, we were able to bring out the products, 4 good products, which are drones, which have already passed the trials, defense trials, and as we speak, we have already started supplying these drones to the armed forces. So other than, training the pilots, manufacturing drones, we also saw this as an opportunity with the drone as a service. So it also complements my security business. So we are providing drones for perimeter security. We are also, in talks with a lot of oil refineries where the drones can do perimeter security. So this is how, the Aerodrone Robotics, and it's a high margin business for us. As we speak, we have more than 24 crores pipeline in place. And by the end of the year, I am very, very bullish that we will be able to cross 50 crores.
Right. So that's the target coming in, 50 crores of revenue from this segment. But I just want to understand the IPO portion. There were some proceeds which are going to be used for the bidding for toll plaza. I just wanted to understand what are those numbers looking like if you have to bid for these toll plazas, and what's the timing of it?
So, since, now for the financial year 26-27, we are looking at high margin, businesses. Now, for us, toll plaza management is a high margin business. So, most of the IPO proceeds are going to go into tolling vertical. Manpower vertical is going to be a steady growth. And though we are with the new technology, which is the AI-enabled electronic surveillance system, which we have introduced along with the physical security, we are looking at improving the margins of physical security. And this electronic surveillance system itself is a very high margin vertical the technology for us. And drone, any which way is so going forward. These are the verticals in 26-27 that we are going to focus on these high margins.
Right. And Mr. Hundal, just wanted to talk about any numbers or the growth or margins, any aspirational numbers are there which you could share for the next 2 to 3 years. What's going to happen? I know the Q4 numbers are not out yet, but in case if you have to give, a range of what growth numbers are looking like, you mentioned 50 crores for revenue for drone as a service, but for the other businesses or as a combined business, any kind of a growth outlook?
So, see, if you look at my past deliverables, we have been able to deliver more than 50% of growth year on year. And going forward, and this was also when, the biggest problem we had, faced was the working capital problem. Yet with that, problem, we've been able to give this kind of growth. Now, after the IPO, after, raising the working capital, we will be able to give at least, if not more, 50 to 60% of the growth year on year. And now we are really looking forward, to scaling all our verticals, which we are very, very bullish about. And we are looking forward, to these exciting times, which is financial year 26-27.
Right. I just have a last question from you, Mr. Hundal. This surveillance theme, it's very much important, be it border or even oil segment. And also a lot of government schemes are also promoting it. We have some listed players also. How do you see this space going?
See, now this is for all the sectors, especially for defense. Now, drone is the futuristic thing. Even for I being part of the armed forces, I'm also serving with the territorial army. So I have myself been inducted in Ops Sindoor. So I have seen firsthand, where now the entire warfare has changed to drones. Even in security, we are looking at the requirement of our clients, wherein the manpower is being replaced by the drones. So this technology going forward is drone technology. If you look at it, is going to come into every sector and majorly, the defense, and that is where the most of the focus of aero drone robotics is.
Right, so that's important. Drone will be coming in defense. That's an interesting take and a very interesting company as well. It's always a pleasure to talk with you, Mr. Hundal, and best of luck for the future.
Thank you, Sir.
So that's the management of InnoVision. Interesting company, and just to give the clarity, most of the working capital issues are sorted in the toll road segment, and the management was bullish when it comes to the overall drone service and the defense segments. Of course, there are this industry has payment issues as well, but something to wonder and understand, and also stay tuned to NDTV Profit for these new companies getting discovered in KYC.
You're a Malad boy. You started by trying to do something with sweets, pivoted to chaat, then pivoted to vada pav, then you pivoted to vegetarian burgers.
When we started the Mithai brand, again it was a little too ahead of its time. Chaat never happened. We just called, Jumbo King was called the chaat factory for some reason. I love the name. I started with one store of 50 square feet. We are fully vegetarian, and my first reaction when we did vegetarian burgers, when we pivoted, they said burgers vegetarian kab se honge, right? A burger is basically...
It's like veg biryani.
Veg biryani.
Why is Jumbo King not only about vada pavs anymore?
Vada pav is a Mumbai problem. Within Mumbai, this was like the poor man's food, or the my struggle ke days ka sathi. There is a problem in the name vada pav. The moment you call it vada pav, you can't charge more than 20 rupees. People will say that इसमें सोना चांदी थोड़ी डाला है. Why should I pay more than this?
How many people told you कि MBA करके आप वड़ा पाव बेच रहे हो?
My friends used to joke around, tell us the truth. You've been disowned by the family. You're not telling us that. We have a family business, and I told my dad I don't want to join the family business. When Jumbo King started, it was seed capital of only 2 lakh rupees, which I borrowed from my dad. I said I don't need money because I had burnt about 55 lakhs in the mithai business.
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayan Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. When it comes to planning your finances, a large part is keeping your expenses under control. We speak about inflation, which, as you know, is the rate of rise of everything that you pay for, whether it's tomatoes or other vegetables or the price of fuel. And it's important to be talking about that, of course, because you could see fuel prices go up any time now. But today I don't want to talk about inflation. I want to talk about something else. I want to talk about something that usually goes unnoticed. It's called lifestyle creep. This is when, as you increase your earning power, you start spending on things that you could not spend on earlier. And before you know it, you're spending far more than you should. How do you control this? How do you measure it? And how do you plan for it? I'm joined today by Abhishek Kumar, who's the founder of Sahaj Money and a SEBI-registered investment advisor. Abhishek, thanks so much for taking the time. Let me start by asking you, how do you define lifestyle creep? Is it something that you speak about often?
Indeed, we do it on a day-to-day basis, and thanks for having me on this show. So lifestyle creep, as you also spoke about, is when your spending quietly rises in let's say step in step with your income, and sometimes it is faster, and that becomes a problem. So this usually means that when the income goes up but the bank balance doesn't, which could be, let's say, if someone was earning 50K a month and that person is now earning 1.5 lakh, but often they continue to save the same amount or less, because now what they started off with, because when they were earning, probably having a hatchback, now they're vying for a sedan, or when they were let's say were vying for a 1 BHK, it quickly became a 3 BHK, and so does your weekend brunches, which replaces your home meals. So end in end, net, it leads to a situation where lifestyle creep becomes a silent killer of your personal finance. So you feel richer, but you are actually more fragile than what you were before.
You know, I've read about this in numerous books, and I keep referring to Morgan Housel. Morgan Housel talks about this and the importance to live within your means, and the more frugal you are in your spending, the more you will end up saving. It sounds like a simple concept, but it's actually pretty complicated if you think about it. Because when you go and get that matcha latte, you go and buy a few coffees, or you eat out a couple of times, or you order in, and you don't count the number of times you do that, you end up spending quite a bit of money. So what are the major heads that you've discovered that lead to this lifestyle creep, Abhishek?
So you're right. There are multiple factors to it. First being the foremost, the kind of generation we are living in with the advent of social media. I call the major, let's say, factor which is responsible for this is something like a Instagram tax. You see what your peers are doing on social media, and then you vie for that, not knowing where they are starting from and where they themselves are currently placed. Then it also becomes a point where people don't have a plan, written financial plan that they can keep as a kind of a guiding document to know how much they should be saving and let's say increasing their saving on us when their income goes up. So I mean, they keep on adjusting their lifestyle even to the extent that they are saving less, as I said before. Third, I mean, we are getting into a era of frictionless credit, right? So we have UPI, we have BNPL, credit card, instant loan. All this leads to a situation where spending without having a income to support it becomes painless, and you feel the pain later on when you have the bills to pay. And finally, I mean, we are kind of normalizing it in terms of what was luxury 5 years ago. You spoke about having a cup of latte, right? Matcha latte. I mean, not just that, annual foreign trip becomes a kind of a normalization, premium gym membership, having upgrading your phone every year becomes.
But you're describing, Abhishek, you're describing everything. You're describing everything. I'm asking you, like, for example, okay, let me give you an example, right? And I've had this conversation myself in my own home. I live on rent. And so the question is, are we living in a locality that we like? Or do we want to live in a slightly more premium accommodation? And in Mumbai, you're talking about the difference being quite dramatic, right? So you spend a certain amount of money, and then you're actually talking about a 20 to 30% increase if you're talking about switching in the same 1 or 2 or 3 BHK in a different location, depending if you go to Bandra or if you go to certain other places. So that's a debate that you have. That rent is one big bulk of what could be a lifestyle creep. You could upgrade your car, you could do various other things. But how is this different, Abhishek, from inflation? Because inflation is on a variety of things that you can't not spend on, right?
Agreed, totally agree on that. So to put it mildly, like, inflation is something which is external to you, involuntary, you don't have a control of. So in the start of it, you said like your grocery costs more, so your atta and onion cost more, right? So you don't have a control over there. But lifestyle creep is something which is internal and voluntary. So nobody forced someone to upgrade their phone, right? Or shift to a bigger and gated society. That is a personal choice depending upon the need that they have to, let's say, stay closer to their workplace and such. What I'm trying to say is that when you do so, try to find, let's say, corners to cut. So that perhaps you eat more at home when you, let's say, are spending well over, let's say, to a point where you don't have anything to save. So do all those things. Like, I mean, let's talk about Mumbai is no very different than New York, right? People stay in 1 BHK in New York City, but let's say when they are trying to stay in a bigger apartment and such, they move to suburbs. So, I mean, something similar has to be done there, provided that you, I mean, if you don't have the income to support it, if you have income to support your lifestyle, I mean, be my guest and do that. So it's all about finding the right spot, Alex. Yeah.
So what is the fix here? Because you will keep on spending unless you decide to perhaps front load that saving, right? And there are a lot of hacks that people talk about and percentages that you should spend, but it's easier said than done, Abhishek.
Right.
How do you do this? So suppose you're earning, in your example, you're talking about 50,000 rupees, and if practically everything that you currently have to spend on, if it's rent, if it's stuff that you need to do to get to work or otherwise, transport, it's all expensive, right? So how do you ensure that you're saving and you're incrementing your saving, or you're increasing the percentage of your income that you're saving?
Yeah, so I mean, in my experience, the right way to look at it is to say what kind of expenses are unavoidable, like spending on kids' education. You want to give a best education possible to your kids. So that's non-negotiable, right? Like caring for your aging parents who spend their lifetime caring for you. So, I mean, that is something you can't avoid and should not. And then let's say housing is expensive city. You don't have a choice. If your job ask you to be in a particular spot, you have to be there living in that expensive city, right? You don't have a choice there. But the rest, like upgrading cars every 4 years instead of 8, or dining out 12 times a month instead of let's say fewer times, or premium versus mid-range phones for that example, or foreign versus domestic holidays. These are lifestyle choices, not compulsion.
Sure, but all of that is still, Abhishek, it's all, the saving is a retrospect then, na? It's happening after you spend. So my question to you is, you get 50,000 rupees in a month. Suppose you've decided to save 20%. You'll push whatever you can do and you'll save 20%. Is that the right approach, to say as soon as you've gotten your 50,000 rupees in hand, you've set 20% aside and you put it separately, you put it in a different account so that you don't touch it, and then whatever is left you spend on rent, on whatever you want, and then there's no guilt? Is it as simple as that?
Yeah, so I mean, paying yourself first and then spending what is left is the best thing possible, like you spoke about, right? So I mean, instead of overthinking about where to cut corners and all, first get to a point where you know how much you need to save for your future. Because I mean, whenever you earn an income, you have two choices: to spend it all or you to save for your future when you're not able to generate income. So when you have that future in mind, always pay yourself first and then spend what is left. So two tricks you also spoke about. One of them is like automating investment on salary day, right? So you never see the money coming into you that you have, let's say, option to splurge on something which is non-essential. Also doing something like an annual audit of what recurring expenses that you're incurring that you were probably not incurring 3 years back, which you can probably cancel and increase your savings. So small steps, I mean, bring habits, and those habits take you to much better position down the line.
The counter argument to that, Abhishek, and I've heard this very often, is how do you expect me to save 20% of my salary when I'm spending most of it just getting by? So do you have to identify, at least at the start, if you're not saving anything or you're saving whatever is left, which may be just 2 or 5% or 7% of your income, you identify a percentage which will pinch you a little bit, but you can still survive with. Is that the way to go about it? Because if you don't feel a slight pinch of setting aside money, then maybe you're not doing enough.
So, I mean, first thing, I'm not too much aligned with Western construct of saving 20%. I mean, for someone who's starting their career, that construct might work for, let's say, an advanced part of the world. But in India, in my experience, in most of the middle class family are somewhere spending close to 65% or 70% on essential, 25% on non-essential, and 10% on saving. So some of the saving is happening automatically, Alex. Like people in your office, they might have PF, right? So that saving is automatically happening, and it's good that it is hidden from the plain sight so that people don't touch that before their retirement and such. So even though you might not be realizing you're automatically saving, so start from there, continue that habit. Don't touch your PF for no reason, like small spends and such. So continue with that, build those habits, because that habit will take you from 10% of saving to next 15, then 20 and 25 and so on and so forth. And you will be able to, let's say, target your goals that way. So you don't have to start with that every month you have to start saving 20% or nothing at all. That kind of thing doesn't work in India. So we have to bring it, change the Western construct to tailor it to Indian needs and say, okay, 10% is also good enough to start. Do that and then go from there.
Yeah, there's no guilt in that sense. So you shouldn't be feeling bad about it. You do what you can do, and you start with 10%. It's better than not saving anything. But but if you can do 25%, you should do 25%. That's something to aspire to. Just a last point, Abhishek, in the tendency to swipe. And the tendency to, like you said, frictionless payments, but then that usually takes place on a credit card, which can be damaging. Is there, and I hate to say it, is there a thumb rule that you can follow to ensure that you don't fall into any traps?
So again, it might look too simple, but I have 4 rules with regard to this. Never use credit card for something that you cannot pay in cash next month. So the card is a convenience tool. Use it for your convenience, that you don't carry too much of cash and such while you're making a payment and thing. But don't consider it an extended credit line, because you only have to pay the bill down the line. Then comes that how much of your card bill you should pay every month. I would say do that to the full. Don't carry it forward, because you'll pay usurious kind of interest rate, and that will kill your entire let's say investment down the line. Then also BNPL, consider BNPL as a debt. It's not free money that you feel that it's might look like friendlier thing to get, that it's kind of a payment mode, but get the point, it is a debt that you have to pay in 15 days or whatever that payment cycle is. And finally, including your home loan, don't spend more than 40% of your take home pay, on EMIs. Because that will, put you in a very precarious position, and you won't have any cover for something like an emergency fund if you have any, let's say, emergency of sort. So these 3-4 rules, I would not say you have to hard code it, but if you even be cognizant of that, that will take you places.
Yeah, good point. All right, on that note, Abhishek, thanks so much for taking the time. Pleasure speaking with you.
Pleasure joining you and having a great discussion with you.
Okay, we've been talking about using credit cards, and I'm sure a lot of you have questions about what the best way is. So I thought, why don't we speak to that credit card guy? Joining me on the conversation is Ali Hajiani, the founder of Reward Points Club. Ali, thanks so much for taking the time. Pleasure speaking with you. Let me start by asking about, and there are so many things we could talk about, but I want to talk about a mistake that you think most people make with their credit card usage.
I think one of the biggest mistakes is undervaluing your credit card points. People don't believe that they can actually give you outsized value, and that they tend to expire, or they use them the wrong way. They redeem them for a voucher or towards statement credit, when travel can give them exponential benefits. It could be worth maybe 1,000 rupees in the form of cashback, but you can probably get 10,000 rupees in the form of a flight ticket.
Very interesting. So the tendency is to try and accumulate, Ali, and you're always trying to look at things that you can get, and you see the reward store, and you've got your eye on something, you just don't have enough credit card points, and then by the time you've accumulated, you think that you've accumulated enough, a portion of that is actually expired and it lapses. So how do you ensure that you're timely in the usage of these reward points?
So you should track firstly how long your credit cards take to expire. Different programs, for example, maybe in HDFC or ICICI might have a 2-year or a 3-year limit until they expire. But the best use case for your credit card points is to transfer them to an airline or hotel partner. So if you do have credit card points expiring, you can transfer them to an Accor Hotels, a Qatar Airways, an Air India Maharaja Club, and then they would then reinstate for another 2 years in that program. So there's always ways to keep your credit card points accumulating until you finally take that big redemption.
Yeah, there's just like there's a loss of energy when you move something, right? There is a loss of value when you're transferring from one to the other, kind of, right? You swipe your credit card, you're spending money, and you get reward points, but there's a conversion there. And those reward points transferring to air miles, there's a conversion there as well. So 2 conversions. How do you get the best possible value? Is there a difference depending on your service provider?
100%. So that is where we come in, and that's why it's become such a big, it's become such a fad in the last year or two, where people are now seeing that credit card points can give you outsized value when first you choose the right credit card that gives you 3%, 5%, or even 15% returns on whatever category of spend you're doing. And then you accumulate those reward points. On the other side, there is also the redemption part. So when you transfer your points, how do those, for example, 15,000 points translate to 30,000 rupees of value in a different program? How do I get 30,000 rupees of a stay at my next Novotel or my next Marriott hotel? Or how do I get that next Air India flight for 15,000 points, which is worth 30,000 rupees? So because you're able to optimize both sides of earning your points and redeeming your points, you can actually get really crazy returns if you use your credit cards the right way.
Is it true though, Ali, that you get the best conversions, both in terms of earning of points and in terms of the rewards, on the top ranked cards, the ones in which you have to have a certain amount of money, a certain amount of income to qualify for? So therefore it's out of reach for most people.
That is very true, where the biggest returns or the best credit cards that you can get usually have some sort of requirement where you have to have a relationship with the bank or a very high salary account. However, there are a few mid-range cards even today that can give you fairly decent returns. If let's say a top end premium credit card is a 10 on 10, then you can still get 8 on 10 credit cards without having banking relationships or lower salaries. But at the end of the day, your rewards will always be a subset of your spending. How much you spend is what you will get in return.
Off the top of your head, Ali, and obviously all of these have different use cases, these mid-range cards at this juncture, as I'm speaking to you, what stands out to you?
Two cards that I really like in the mid-range segment, or rather three. Number one is the HSBC Travel One. It's a mid-range card that you can get even with maybe 1 lakh per month salary. I think you have a 12 annual criteria of a salary. If you want something that's even lower end, Axis has a great card called the Axis Horizon. And you can spend on most categories, general, grocery, shopping, medicine, travel, and accumulate points on these cards and transfer to over 20 different partners. So these two cards are really nice mid-range cards you can look at. For people who don't want to get travel benefits, SBI has a very nice card co-branded with PhonePe. It's called the SBI Select Black. And that card gives you cash back on almost all categories, be it utilities, insurance, your groceries, your travel, and you get 5 to 10% direct cash back on these categories. So if you just want a no-brainer card with without having to worry about all these transfer partners and points and miles, just get a good cashback card. It's the SBI PhonePe Select Black. These three are my favorite range cards.
Very interesting. Okay. Now, here's the thing. A lot of these cards have, as you've pointed out, certain benefits and use cases, right? People go in for travel cards if they think they travel a lot. At what point do you feel, or should somebody be worried about having too many cards, Ali?
I think optimizing for every single expense that you have isn't required. You could probably have categories that you spend on: shopping, groceries, travel, utilities, insurance, school fees, so many other things. But you will probably have only 2 or 3 categories that make up a significant chunk of your expenses. So just focus on optimizing those, not the small ones, and stick to 2 or 3 cards that will give you the most benefit, where you can rack up the most amount of points in 1 or 2 card programs so that you can make that big redemption at the end of the year.
Very interesting. Okay, so suppose you start your card journey, or you did start your card journey maybe 5-7 years back, and your earning potential was a certain amount and you made certain choices. Your earning potential would have reached a different point at this stage, and you want to consolidate. The worry is that if you cancel a card, it will affect your credit score, right? Because you're closing out a line of credit. How do you ensure that you get through this process unscathed?
So, canceling your credit card and canceling a type of credit line you feel would affect your credit score. However, the main factors are credit utilization, credit length. So, for example, if you started a credit card 5 or 6 years ago and you already have a credit length of 6 years, even if you close that first card, CIBIL or Pref or Experian already track that your first credit card was gotten 5 or 6 years ago. You won't ideally lose a lot of credit points or like CIBIL points by canceling a credit card. Where you indirectly lose points is that your utilization skyrockets higher up. To give you an example, if you have 3 credit cards with 2 lakh limit each, right? And let's say that's an overall limit of 6 lakh rupees. But you cancel and you normally spend, let's say, 1 lakh, 2 lakhs, right? So your utilization is 2 lakhs out of 6. So your utilization is about 33%. But if you cancel 1 or 2 credit cards and you only have 1 credit card left, then you're spending 2 lakhs on a 2 lakh credit line. So now your utilization skyrockets. So you have to balance your utilization with your credit line when you're canceling a credit card. And also, just if you're above 5 or 6 years of credit, then it's okay if you're closing a card here and there, because it still tracks your old cards. But these are a few factors indirectly when you close a card that you should look at.
Very interesting. So it's a fallacy to think that it's automatically going to happen. It may not happen. If you cancel a credit card, you don't necessarily lose several points. Very interesting clarification. I do want to ask about that utilization point, because Ali, a lot of people tend to spend on big ticket items on their credit cards, because ultimately these are things that give you the reward. If you buy white goods, for example, buy a new television, buy a PlayStation, you might end up using a significant portion of your credit line. How do you keep it from happening? And why is it important to keep it at 30%?
So 30% is like a golden number, or just a fair estimate of what will keep your credit line healthy. The reason you want to have a lower utilization is that a CIBIL or a bank that looks at that CIBIL is looking at, hey, Ali has a 10 lakh credit line, but he is only spending 2 to 3 lakh rupees a month. Means he's somebody who doesn't necessarily need a lot of money. He is not a risky person for me. I don't have to worry about giving him a loan, because he has already 10 lakhs, but he's not using it. So that is why you get bonus points. Your CIBIL increases when your utilization is lower. When you have a 10 lakh limit and you're maxing out all of your credit cards, that's actually a red flag for a bank that, oh, we've given this guy 10 lakhs, but he's spending all of it. Maybe he needs more money, maybe he needs more cash. So it's a common misconception. People think that, oh, they should give me a higher limit. Don't they see that I'm already using it? No, you should never be using so much of your limit. And coming back to your question of how to stay safe, it's honestly consistency. If out of 12 months in the year, you're keeping it under 30%, 10 out of 12 months, in 1 or 2 months, you have higher expenses and you're maxing out, you're going 50, 60%, it's not a big deal. You don't really have to micro-analyze it to that level. Your CIBIL will keep going up and down, but in the long run, you just have to make sure it's going. You can also pay off that bill instantly. Like, let's say you swipe it for 5 lakhs, you want to pay off the 5 lakhs the next day itself to keep your CIBIL intact. But I don't really worry about it too much if I'm going over the limit just once or twice a year.
Ali, you've actually made this very simple to understand. So that's great. A lot of people tend to rotate credit. And I want you to explain why this is such a bad idea, because you're ultimately going to be paying interest on that, right? And that's a big no-no, isn't it?
Yeah, I think you're referring to revolvers in the sense being minimum due.
Yeah.
And that should never be the case in terms of, that's the wrong way of using a credit card. You should always be using the money that you have and using it for the rewards. The problem with paying minimum due is that you get charged interest on the pending amount. If you're not paying in full, let's say you pay 5% minimum due and 95% you rotate it to the next month, you have to pay approximately a 3.5% per month interest with GST, because a credit card is considered a good or like a service. So you pay 18% on that interest as well. And that compounds month on month on month. So it becomes 40, 50% of a loan that you're trying to service when you are paying minimum due. So that is where the bank makes the maximum amount of money, and you should never be paying your bill late.
Yeah, it's a good advice. Ali, as always, I'm actually in this case, the first time that we're speaking, but I look forward to another conversation as well. This has been very helpful. Thank you so much for taking the time.
Thank you so much.
That brings us to the end of this edition of Your Money Matters. Thanks so much for watching, and stay tuned. This is NDTV Profit.
You're a Malad boy. You started by trying to do something with sweets, pivoted to chaat, then pivoted to vada pav, then you pivoted to vegetarian burgers.
When we started the Mithai brand, again it was a little too ahead of its time. Chaat never happened. We just called, Jumbo King was called the Chaat Factory for some reason. I love the name. I started with one store of 50 square feet. We are fully vegetarian, and my first reaction when we did vegetarian burgers, when we pivoted, they said burgers vegetarian kab se hone lage, right? A burger is basically,
it's like veg biryani.
Veg biryani.
Why is Jumbo King not only about vada paos anymore?
Vada pav is a Mumbai problem. Within Mumbai, this was like the poor man's food or the my struggle ke days ka sathi. There is a problem in the name vada pav. The moment you call it vada pav, you can't charge more than 20 rupees. People will say that isme sona chandi thodi dala hai. Why should I pay more than this?
How many people told you कि MBA करके आप वड़ा पाव बेच रहे हो?
My friends used to joke around, tell us the truth. You've been disowned by the family. You're not telling us that. We have a family business. And I told my dad I don't want to join the family business. When Jumbo King started, it was seed capital of only 2 lakh rupees, which I borrowed from my dad. I said I don't need money because I had burnt about 55 lakhs in the mithai business.
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the
Joining us, Muthukumar Narayan Swamy, Managing Director of the company, is now joining in. Mr. Narayan Swamy, very good afternoon to you. Thanks so much for joining in. In terms of this is of course your first full quarter as the Managing Director, and it's a tough one to handle most certainly. So just some clarifications to start us off. Firstly, on what was promised essentially by your predecessors in that sense for the guidance for this year for FY26, and of 4,100 crores, you've done 3,600 crores. Largely, any particular delay in recognizing certain orders, has that been one of the reasons for not meeting the guidance, and is that penciled in for the next year as of now?
Thank you very much for taking the.
I think from what Puneet is saying as well, if we can just patch that audio glitch that's coming in right now. It's a severe guidance miss, Puneet, that we're talking about in terms of the fourth quarter, where they failed their revenue targets. The profitability has seen a drop as well this time around. There is margin compression. And if you heard the conference call as well, the management has come out and given a justification saying that, it's the geopolitical disruptions for logistic blockages and weak execution during the quarter which has led to all of this miss. The question is, from here on, if they're even giving a guidance, Puneet, when it comes to FY27 as a year, will they be able to deliver? Because that's where they've failed.
Well, most certainly, and I think those are some of the key aspects that we want to watch out for and also get some perspective on, because there was, a lot of expectations going into this quarter as well. Now, you had expected that, 1,700 crores, while a very tall target, you would get close to around that 1,600 crore mark. That was the estimate, but at 1284, there was that miss, and hence the pressure on the stock straight away as we started trading today.
And I think, a similar thing happened back then when you had their CEO resign, when the management was very confident that things will be in place. We had seen a similar crash happen as well. But from there on, I don't think so things have improved to any possible way. Now, one, will they be able to take a close look at what's happening in terms of the execution? Two, in terms of the kind of subsidy that they're going to get from the government, I think it's a catch-22 situation for them right now, because only in terms of a certain deliverables is when the government gives them a subsidy, right? Till the time they are not able to execute, they will not get the subsidy. And that is what is creating that mismatch in terms of cash flow as well. So that deteriorating working capital and that crunch when it comes to the subsidies not coming in, which is putting pressure on the capex, is a key concern, because how are they going to resolve for that?
Yeah.
That is the question. And apart from that, I mean, there are corporate governance and accounting red flags also that were raised in the past over here. So there is capitalization gap that is coming in. Puneet, I think we do have the management back with us.
Yes, Mr. Narayanaswamy, I hope I'm audible to you as well. And just, let me just repeat the question as well, because we saw that the target of 4,100 crores was just revised in the previous quarter. If you can give us some perspective of, there was some delay in certain recognition with a particular customer or an order, and is that revenue delayed or revenue lost?
Okay. Thank you for taking me in the call. Can you hear me well?
Yes, sir. You're audible. Please go ahead.
Two things. One is the missing the top line. For a full year, I think we have grown at 33% and it has grown at 39%. However, during the last quarter, against our guidance, we have dropped it mainly because of a delayed order, not a denied order. One of the two bids that we have done, and we were supposed to get the product, we were ready to execute the product, and the last minute, what we expected, the order could not come. That will be taken up in the first and second quarter of this year. So it is only a delayed order and not a denied order. And that is one of the reasons why we have lost the revenue target in the year.
So is it... sorry, Mr. Muthuswamy, just a clarification. Sorry, Narayanaswamy, just a clarification. So is it that order, basically, that you are supposed to deliver, so it's the product is ready with you, it's just that you have to deliver it to the client and recognize the revenue, that is the one key aspect that has not happened? Or is it that you didn't receive the order and hence that was already penciled in, which couldn't be turned around?
The product was, the proto sample submitted, the product approval is given. The first lot of schedules should have come and produced it, but the order was not released on time because it's a government order on two business. So it will be coming in the first week of April, first week of May, and we are likely to execute this. We are still waiting for this. The materials is available. The product is already approved and it is demonstrated. And that's the reason why we lost in that the last quarter, which is against our guidance that we are given.
Okay, Mr. Narayanaswamy, this is Hiral on this side. So my question to you is, let's break this up. You're saying the order that was lost will come in the current quarter. And if that is the kind of scenario, what is the kind of guidance that you have in terms of execution? Because with the current order book, how much of it will you deliver in terms of the next 12 months?
Okay, there are two things before I give a guidance. We have been reviewing this business, and which is one of the fast growing business in India. And while the country's growth is around 8 to 8.5% GDP growth, this market, very specifically on EMS business, grows at around 15%. So we are very confident with the products in the pipeline, with the very strong order board of 9,000 crore plus. We'll be doubling the market growth. I think that's an assurance that I can give at this point of time. There's a huge volatility post end of February, first week of March in terms of the materials, in terms of the incoming components, and of course, the consumptions of the customer. While the market is little stabilized in the first week of May, there is a high amount, the amount of prediction, particularly in the automobile market, has come down to single high digit single-digit high in this year when compared to the mid-double-digit earlier. So we want to be a little cautious on this because I know that the market is looking at us. We'll outgrow the market and we'll definitely make sure that our growth is double of what is the market growth. I think at this point of time, I want to cross with this. But as far as the missed target of last year is concerned, it's very clear that we will be executing that order for this year for sure with more values, but it is a delayed order. And
Okay. So what we want to understand is right now, there is a disconnect between execution versus the actual accrual that's happening as well. Your order pipeline is really growing and that's categorically seen from the numbers that you have. Now, the market is severely penalizing Keynes as well right now because it is unable to convert these orders into timely cash flow and revenue. And that is the concerning area over here. Please help us understand how much of your order book, apart from that delayed conversion, as you mentioned in terms of the order, is also because of a roadblock when it comes to supply chain issues or raw materials from a war crisis.
At this point of time, Keynes, if you see our numbers, we have quite good amount of stock that's available with us. That is one of the advantages why Keynes is able to convert the order into the business at the earliest. If you look at our market share last year, we have grown almost to double of what we had previous year in automotive business. In spite of one of our largest two-wheeler OEMs, which is using an EV business, has dropped their business substantially, we could be able to grow at 29% when compared to the previous year in automotive market. In terms of aerospace, our growth is 49%. In overall, we grew at 33%. Of course, our guidance was much higher at 50%. And when it came down, the market expectation was high. We take it with the complete responsibility of it. And but nevertheless, for this year, we will be definitely growing this business because we have a very strong pipeline. Our plant capacities are available. The plant is capable of doing. And also, we are migrating ourselves into an EMS product, into the product selling. 30% of our revenue is going to come from new product, which we already launched, and also into the product. These strategies will take us into expanding our margin and at the same time sustain our growth.
Got it. Well, Mr. Narayanaswamy, so basically just, as we go into the cash flow part, I just want to get a sense of what you said. So you're saying you'll be growing double of what the EMS market is suggesting. So 15% is what the industry estimate is. You will be growing at 30% for the EMS part. So that point is understood. But you also have, the other business basically, which is of smart meters, and that is where the cash flow is getting constrained. So what is the growth that you are seeing for that business? Because you can't put a 30% growth on your current revenue, right? So if you can give us some perspective of just to analyze, and I know that you don't want to put a number for revenue for FY27, so we'll respect that part, but how do you see that growth? Because we don't want to just put a 30% on 4,100, get you to 5,300 right now for the next year. So what is the estimate of growth for the smart meter business?
Last year, again, 3,600 crores of total revenue. Our metering revenue was 971 crores, which is 25% of the business. But the catch here is the entire EMS for the metering business, we have been supplying as a metering solution earlier, which means 50 to 60% of this is the growth in the EMS business, and we have started selling the product. The metering business is a strategic acquisition for us. We wanted to migrate ours from an EMS supplier to a product supplier. This has given us a great amount of strategy in terms of the going into the product, and this has grown. But unfortunately, the business model is completely different. This gives us a product company. This gives us a expanded margins on this product, but this has given us a long working capital management. Having understood this, we have done the course correction for this in terms of selling the meter, in terms of the installation, and of course, in terms of the operating and maintenance over a period of years. So we have done the course correction to see how we can do this.
So, I think but how much of your current receivables are stuck in this slow-moving smart meter projects, and when will this be collected? Because that is going to have a bearing on your, capital cycle.
You are right. See, that's what I was just coming. So the second question on the receivables, if you look at the pure EMS business, which is my 67% of the business, my number of days has come down to 55 days when compared to what it was earlier. So we have done a substantial progress in these areas, and we, as a standalone EMS business, we have standard cash flow at 255 crores against 65 crores of last year. I'm sure that you would have seen this. But in terms of the metering business, our receivables has gone to 1,365 crores, which is almost, we are working on the next 3 quarters to clear it up to about 1,000 crores is what we are planning to get it out. In the next year, when we are going to do the business, we have clearly strategized how much we are going to sell it as a meter and how much we are going to sell it as a metering. But as a strategy of Keynes, this is very, very important business of getting into the smart meter, because it is not only in EMS space, in our product space, and of course in the data in terms of the operating meter. And these data are going to bring in a lot more value for our business in Keynes, which is going to set us to grow in the days to come. The consumer pattern, the consumer consumption, all these data are going to strategically help Keynes in the days to come in penetrating into more and more markets. And you have also seen, that's the reason when compared to our guidance, our profitability has grown up over a full year. Of course, the last quarter, our profitability was a little less, but in terms of the full year, for a 32% growth in the revenue, our EBITDA growth is about 39%.
So, Mr. Narayanaswamy, as you highlighted, and thank you so much for giving us that number of 971 crores for the metering business, as you mentioned. Now, the only thing that I think the street is not understanding, or if you can give us some perspective on, is what could be the growth expected from this business, because you've given us what to expect from the EMS business. The reason I ask is your cash flow, you are saying, will over the next 3 quarters will come to a break-even kind of level from minus 600 from cash flow from operations right now, which is majorly dragged by your smart meter business. So how do both of those things come together for you in this year? Is it that you can expect at least market growth for the smart meter business?
We don't want that.
I think we'll just wait for the management to reconnect with us as well. But a couple of important points, Puneet, that they've already mentioned. I think 2 of the things that I want to still talk to them about is their negative cash flow, number 1, and the elongated cash conversion cycle. Because the question is, how will the management prove that they are able to bill these orders on time without inflating that current 125-day working capital cycle? Because if that gets elongated, it's going to be a concern. Yeah. If your receivables are already at 134 days, so that also is a concern. So that is one of the major mismatches happening over there. And if you're talking about the capital deployed, that is something which is concerning. Mr. Narayanaswamy, are you able to hear us?
Yeah, I can hear you very well.
Okay. If you could respond to what Puneet just asked you as well, and then we will go to our next set of questions.
Okay. We will continue to grow in every segment because we want to de-risk the business. We'll be growing in automotive, non-automotive, aerospace, and also we'll be getting into the defense and space. These are the areas. So metering is a business we'll go. But how much of meters we will do as a meter sales and metering sales, which is including the O&M and things, is what we will do. And that is the reason why we are telling we will grow in the metering business, but because of the business model in 3 quarters, we'll come back to the normalcy.
Okay. My question apart from this to you is with regards to where your orders is concerned. Now, how soon will you be able to bill them? Because the working capital cycle is already at 125 days. And if I'm looking at your receivables, that has worsened to 134 days. So there is a major mismatch happening on that front where money is locked up in inventory, unpaid client invoices. So how do you plan to fill in this gap? Because that's what the street is concerned about right now.
See, working capital. You are right, my collection days have gone up. But my in EMS business, which is 75% of the business, my net working capital has moved from 83 days to 55 days in the EMS business. The metering business with next 3 quarters of materials, receivables to be collected and converting into a direct sales of meters will be improving the cash flow. That's why I'm asking up to standalone EMS business is cash flow positive, but cumulatively at a consolidated level in 3 quarters we'll come back to normal. This will give us a good set of capabilities for improving on our working capital requirement and managing the supplies.
To add to this, out of the 3,300 crore project cost, if I have to look at the other part of the, capex, you've deployed close to what, 1450 odd crores as on March 2026. Correct me if I'm wrong. Now, under the ISM scheme, you qualify for a 50% fiscal support, which is a subsidy from the central government, and alongside a 20% capex subsidy from the Gujarat state government, right? Now, there is a cash flow catch over here because the subsidies cover up only 70% of your project costs and they are disbursed on reimbursement basis after hitting specific milestones. How do you plan to fill in this gap? Because currently you're on a 600 crore negative operating cash flow.
We've seen already we started hitting our subsidies, what we have spent on last year on end of March. That means this year, almost about 60 to 70% of the capital funding we'll be getting back into the subsidies in both the entities what we have made. Now, we are very, very confident and we have a clear pipeline to fund our projects. And also we are going to start generating the revenues from the new capex that we have started working in. That is going to add up either to our top line or to the bottom line, depending on strategy. We are saying that we are going to use it for our internal consumption or going to sell it outside. So both the things are going to really help us in terms of coming out of the cash flow issue.
So, Mr. Narayanaswamy, you've been very upfront with us, and I appreciate your gather of your first proper quarter as managing director. So, because you also have to invest quite a bit, and you mentioned some of the points, right? I mean, in your next line of capex, because you're managing both your smart meter cash flow as well as your capex for both OSAT and PCB. So, just one question on what is the capex number for FY27? And is that largely being funded through whatever cash you have on the books? Will you be raising any debt? Do you need, and I guess that you don't want to raise equity at such valuations. Sorry, sir, I think it's me. When I ask a question, I can't hear you, but if you can try once again.
I can hear you well. We have enough funds in our QIP.
I'm just going to come in over here to say that if you can respond to what Puneet has asked you right now, maybe that does the trick.
I'm sure that you can hear me well now. No. We have the funds available from our QIP residues, but more than that, this year the smart metering peaking has already gone. So now we are going to get the collections of the last 18 months before what we did the business. So the funds is going to come back into that. And more so, our subsidies will flow back. And with these two things, we are pretty confident of managing the working capital management and come out of the situation.
Okay, so I think lots we have to watch out for as well. But thank you so much for joining in. Always a pleasure to speak to you. In fact, we would love to come and see the facilities and actually do an on-ground interview with you as well and the management ahead to understand exactly, what is it that Keynes is doing to show the viewers as to what's the progression that's happening. But we shall connect back on that very soon. Thank you so much for joining in. Always a pleasure.
We are to host in our Sanand plant, which was inaugurated by Honorable Prime Minister on 31st of March. The plant has already started, the phase 1 has already started commercial production and phase 2 capex is in full swing. Our first samples have been approved by our customers at AO in the US. So we are all set to grow and the PCB plant is almost in the finishing stage. We are in Chennai today, seeing the progress of the plant. The plant will be up in operations by next quarter. And these two things are substantially, we are going to be the only EMS company, an end-to-end, from PCB to OSAT to EMS, and migrating from an EMS supplier to a product management company is going to give a substantial leverage for Keynes, which I'm sure that you will see that how we are progressing in this year going forward. Thank you very much. And thanks for giving us an opportunity to communicate back. Thank you very much.
Looking forward. Thank you so much for joining in. Always a pleasure to speak to you. LIC Housing Finance is in focus on the back of Q4 numbers. Mr. Tribhuwan Adhikari, MD and CEO at LIC Housing Finance, joins in. Mr. Adhikari, welcome to the show. Always a pleasure to speak to you. This is Hiral on the side. My first question coming to you is, let's talk about the net interest margins, a 2.8% number in the fourth quarter. Sequentially, there is growth, but compression on a year-on-year basis. What's the outlook then looking like in terms of FY27?
Well, it's going to be difficult to predict, actually, honestly, here at the moment now, with the West Asia crisis on, the economy under stress. You never know how these things are going to play out. Right now, what we are witnessing is an elevated cost of borrowing when compared to Feb and March. So honestly, going forward, we will have to see how the geopolitical and the economic scenario plays out, and then probably give you a fair idea. Yeah, for the quarter, I think I would hazard a guess and say that the margins would be between 2.6 to 2.7 for the quarter. we would try to retain it where they are. 2.68 is where we ended for the year, or 2.8 is for the quarter only. So 2.6 to 2.7 is the guidance I'd like to give you for the quarter. And then when we meet again in July, let's see what the situation, the West Asia situation and the overall economic situation stands at, and then probably give you a guidance for the entire financial year.
Okay, so that's with regards to where net interest margins go, and it's fair to actually understand that yes, there is impact of the West Asia crisis, and that's what industries are grappling with to ascertain what the impact could be. The other concerning area that I see is in terms of the loan growth. Now, the annual loan growth, if I see for FY26, 4.2%, which is contrasting with the high double-digit expansion that has been reported across the Indian housing sector. A 4% AUM growth is what you've seen on a year-on-year basis. I mean, analysts are saying that this could be a key overhang as well in terms of the stock. How are you looking at the annual loan growth rate and AUM?
Yes, honestly, 4.4% loan book growth, slightly disappointed. Beginning of the year, we had given a guidance of double-digit growth. But I had, at the beginning of the year, I had also said that the year is going to be very challenging in terms of competition, in terms of the rates at which we lend. And that is exactly how it played out. And in the beginning of the year, I had said that if I had to make a choice between book growth and protecting margins, I would prefer to protect the margins rather than going for a book growth. That I think we've been able to do that. Margins have been fairly, I would say, protected. Yes, slightly disappointing, was wanting more. Probably as a growth of around about 7 to 8% would have satisfied me. But in view of the intense competition in the market, you'll have to understand that LIC HFL, about 80% of the business 85% of the business we do is individual housing loans. And again, in individual housing loans, these are all prime customers with CIBIL scores of 750 and higher. And this is the exact segment which coincides with what the bank sell to. So our intention, competition is entirely with banks. Banks slightly advantaged with a lower cost of funds. And in fact, the other part of it is that we borrow from banks. So basically, we are competing with our borrowers, our lenders, so as to say. So it becomes a little bit tough. But yes, in the fourth quarter, quarter four, we have been able to ramp up our business, and we've been able to show a 10% growth in business. The same has continued in the April month also, where we are showing a 20% growth in business. So hopefully this year, we will be able to overcome the shortcoming of a low book growth and come to double-digit figures.
Okay, so FY27, what is your conservative loan growth guidance?
At the moment, I'd say, of course, we are aiming for higher. The budget given by the board is higher, but I would stick my neck out and say double digit.
Okay. And lower double digit, higher double digit?
At the moment, I'd say lower.
Okay. So lower double digit is what you're looking at least on the conservative side. Now, apart from that, we have you mentioned about the budget, that's 1.27 lakh crores is the borrowing budget for FY27. Will this be funneled into, expanding into affordable housing segment? And are there strategies in place to accelerate growth beyond the sequential pace?
Yes, we are looking at the affordable housing side of the chunk of the pie. Yeah, but again, we have taken a very, I would say, very conservative, a slow, a cautious approach of getting into the affordable housing segment. Yes, I do see opportunity for growth, opportunity for volumes. But again, this is a high-risk sector and something which we are, I would say, which we have not done in our 36-year-old history. So we are trying to trade cautiously and build on this sector. Yes, of previous year, not too much of business from this segment, but yes, it is improving, it is growing. This year, we will be looking at trying to build a separate vertical to look into the affordable housing segment, right? So this year onwards, I feel you will be able to see some traction in the affordable housing segment. Rest of this borrowing will be funneled into our normal course of business, which is the retail, IHL, the LAP, the LRD. LAP and LRD is something we are focusing on because of they are slightly margin accretive for us. and of course the construction finance also. So this will be these will be areas where this funding will go into.
Okay. My last question is the outcome of the organizational restructuring exercise where the consultant report could be expected by now. Anything that you can give us on that?
Well, the job is in progress. We have floated the thing, what you call RFPs. We have received expression of interest from 6 good big firms. Right now, the evaluation is in process. So by the end of this month, we would be onboarding the consultant. And then in 2 months' time, so probably by the entire exercise will be over by the end of this quarter or the first month of the next quarter. And then the board and the management would sit together and chalk out the comprehensive strategy plan going forward for what the company needs to do to grow.
Got it. All right, Mr. Adhikari, thank you so much for joining in. It's always a pleasure to speak to you and always happy to get candid responses from your side.
Thank you. Thank you, Hiralfa. Thank you for having me.
India's unshakable news habit. NDTV.com is India's #1 English news website.
You're a Malad boy. You started by trying to do something with sweets, pivoted to chaat, then pivoted to vada pav. Then you've pivoted to vegetarian burgers.
When we started the Mithai brand, again, it was a little too ahead of its time. Chaat never happened. We just called, Jumbo King was called the chaat factory for some reason. I love the name. I started with one store of 50 square feet. We are fully vegetarian, and my first reaction when we did vegetarian burgers, when we pivoted, they said, burgers vegetarian kab se honge? Right? A burger is basically...
It's like veg biryani.
Veg biryani.
Why is Jumbo King not only about vada pavs anymore?
Vada pav is a Mumbai product. Within Mumbai, this was like the poor man's food or the my struggle ke days ka sathi. There is a problem in the name vada pav. The moment you call it vada pav, you can't charge more than 20 rupees. People will say that इसमें सोना चांदी थोड़ी डाला है. Why should I pay more than this?
How many people told you कि MBA करके आप वड़ा पाव बेच रहे हो?
My friends used to joke around, tell us the truth. You've been disowned by the family. You're not telling us that. We have a family business, and I told my dad I don't want to join the family business. When Jumbo King started, it was seed capital of only 2 lakh rupees, which I borrowed from my dad. I said I don't need money because I had burnt about 55 lakhs in the mithai business.
Ouch.
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards.
Good evening, I'm Vikram Oza. This is The Big Question. Tonight, the 2 debates that together capture the moment that we are actually in, where geopolitics is reshaping trade and trade is increasingly driving geopolitical choices as well. So later on the show, we will get into the BRICS summit as well. It's happening in Delhi, and we're going to debate if India can keep the global south together. So that debate is coming up later on the show. But first, we keep the focus on that high-stakes summit in Beijing. On one side of this Trump-Xi summit, you see a clear attempt to steady that relationship. It's a more, in their words, a more constructive, stable relationship. You're seeing the toasts that are happening over there as well. Tariffs, trade, market access, rare earths, critical supply chains, all of these are on the table. Remember, Donald Trump is leading that heavyweight business delegation covering tech to finance, and Xi Jinping has met those business leaders as well, the American ones. But the tensions are far more combustible, because what China has done is this. They've issued a blunt warning on Taiwan, calling it the most important issue in US-China ties, And they're cautioning that mishandling Taiwan could create a very dangerous situation. And this is not just about geography, mind you. Taiwan is the country that produces 60% of the world's semiconductors. That's where it's produced, and nearly 90% of the most advanced chips are produced in Taiwan. So the island sits at the very heart of the global tech and AI race, which makes it both an economic prize and a strategic flashpoint, which it is. Then there's the widening Iran crisis. It casts this long shadow over the summit. Washington wants Beijing's help to keep the Strait of Hormuz open, even as the tension of sanctions simmer and oil supply risks are growing. Which brings us to the core question tonight, not just whether the two countries, the two superpowers can cooperate, but whether they can compartmentalize their conflicts. Hence the big question tonight. While we are looking at everything that's taking place beyond the bonhomie that is being exchanged by both sides, the real question is, now that the threat of Taiwan has been sounded by China, the Iran crisis is far from waning right now, then can the two countries still do business together? Can trade actually offset the tensions coming through geopolitics? Let's take that across to our panel that's joining us on the show this evening. Let me introduce you to them. On the show, from Palm Beach, Florida, we have Joseph M. Chalil joining us. He's author and publisher at Universal News Network. Good to have you with us. And with him, Shrikant Kondapalli, professor in Chinese Studies at the School of International Studies at JNU, the Jawaharlal Nehru University in New Delhi. Welcome, gentlemen. Thanks for making the time. Mr. Kondapalli, China having issued that very direct warning on Taiwan ahead of this summit, how seriously should the world take the kind of messaging that Beijing is putting out?
Thank you, Vikram, for having me on the show. I think the Chinese statement should be seen with a huge pinch of huge salt rather than at the face value, because China has been saying this since 1949. And they adopted several methods, diplomatic, military, strategic, economic, in order to incorporate Taiwan into China. But we need to take this with huge skepticism. We should not, of course, doubt the Chinese capacity to invade Taiwan, but we have to take this with some doubt about it, because as we saw the Gaza strikes, the Ukraine strikes, the Iranian conflict, this has led to long-term conflict in the region, in these regions. If China were to invade Taiwan, there is a Taiwanese study which said 100,000 Chinese casualties will be there in the invasion attempt. Number two, China's growth rates will fall from the current 4.5% to possibly even negative growth rates. For China, the next year, 2027, is also the 21st Communist Party Congress. And if Xi Jinping fails in incorporating Taiwan, this would be problematic for his own chair in terms of the Communist Party representation. So there are domestic issues for China as well that need to be addressed. So this is not an easy matter simply by stating that it's a core interest. It needs to be addressed quickly. The Taiwanese themselves have a lot of resilience in terms of their democracy. It's only 1.5 years ago that they have conducted their elections, and Mr. Lai Ching-te became the president after that. So China's attempt is not simply to invade Taiwan. That would be really costly for them, but possibly infiltrate Taiwan through opposition parties and others. Hong Kong was taken by China in 1997 after negotiations with the Margaret Thatcher government in UK.
Right.
It was not taken on military posture.
This is very true, but like you said, if you're going to take what the Chinese are saying with a pinch of salt, Mr. Chalil, the optics from Beijing are economic cooperation also. There is business delegation over there. The trade reset is on the table. But I'm wondering if the US and China are now fundamentally strategic rivals first before they become economic partners? Is that becoming secondary to what we are seeing through the optics?
Good morning from Palm Beach, Florida, near President Trump's house. Again, as Professor Kondapalli has said, this is what China is saying. I think it's grandstanding. So economically, I think we both are tied inseparably for a longer time, because I'm not sure we can be devoid of China because of the most manufacturing is currently still done in China, even with all the tariffs we've been Trump has been talking about. So again, my assumption is that nothing will happen other than grandstanding or saber rattling by China about Taiwan. But it's the first time I think they have threatened, or at least vocally mentioned this during a presidential visit. So that might be a first. So it gives guts, because it also shows that maybe we are a little bit vulnerable because we are stuck in two wars. Either it is the Iran conflict going on with the Strait of Hormuz, where China is not happy about it because they are the biggest buyer of Iranian crude. And also we took over Venezuela, which was also the single largest seller to Chinese from Venezuela. So now it's controlled by the U.S. energy forces. So that's happening. And while they were discussing, what was so interesting that they were discussing the book by the Harvard professor Graham Allison, Destined for War. So in the past 500 years, whenever a rising power threatened an established power, the war happened. 16 times it happened, and 12 times I was told the war happened. So, and very interesting is that whatever China can say, Chinese President Xi Jinping's daughter is still studying at Harvard. So he's still dependent on America in trying to send students here to train them.
Correct. No, very true. But at this juncture, Professor Kondapalli, perhaps you can tell us, China dominating rare earth processing, they remain central to global supply chains. So now has Beijing quietly built economic leverage that the Americans perhaps underestimated? Is that why we are probably in the situation that we are in right now, when the two sides are trying to mediate some kind of understanding, a partnership that would go past the rivalry that they share?
Indeed, I think that was a mistake the United States made by keeping all its eggs in the Chinese basket. And the current Trump's visit also reiterates that kind of a mistake by aligning with the Chinese on various issues. And remember, there was one US official who came for the Raisina dialogue and stated that we will not make another mistake like we made with China. So it is true that they were dependent on the rare earth metals. China is the largest producer. California used to produce rare earth metals in the 90s, early 90s, and they shut it down because the Chinese were offering at a cheaper rates. So most of these rare earth metal producing factories were shut down. Even in India in the 90s, we shut down a number of these and gave it up to the Chinese, and Chinese had a monopoly over this. Over 90% of these, 86 to be exact, are produced by the Chinese companies. It's a complicated process. There are a lot of environmental issues. You have to go to several extracting the raw material countries like in Africa, Ghana specifically, and produce these at very high costs, both financially, humanitarian, as well as environmental. China did it, and China monopolized, and China started exerting itself in terms of these rare earth metals. But not everything is lost because there is Pax Silica that has come about, and Trump administration signed an $85 billion agreement with Australia. So not everything is down on the rare earth metals.
Right, fair enough. But there is the Iranian angle as well. Even as we are talking about Taiwan, the bugbear for the American side is Iran. With the Middle East already volatile, Mr. Jalil, can the American side realistically afford another major geopolitical escalation that would work simultaneously in the Indo-Pacific? Is that a situation that the Americans will probably try to avoid?
Again, I don't believe that China will be sending warships to Taiwan next week. And the Iranian conflict, cannot be, logically should not last long because, the blockade is working. Iran has almost exhausted all its storage capacity with crude oil. So they are under, again, they can posture that we can survive, but their oil wells is another story, because they're gonna permanently cap the oil wells. You have to dig it. You have to dig another one. So that could be a week problem, or 2 week problem, or 3 week problem. Iran has to come in. I think the negotiations on the nuclear deal, whether it is a 5-year extension on centrifuge or 10-year or 15-year, so that's going to happen. But I don't think the China is going to invade Taiwan for it. But the most interesting thing I see is that we have business executives like CEO of Meta, CEO of Twitter or X, Elon Musk, and a team like that joining Trump in this visit. Remember, China doesn't allow Google, Gmail, or Facebook. There's no, Chinese people have no access to open information. Everything is controlled by them. So this is, still a controlled dictatorship, whatever you want to call it. So all pomp and nice and music. Yes. But if you are a Chinese citizen living there, you don't know what really happened without them knowing about it.
So is that something that is going to be discussed, Professor Kondapalli? How is Beijing reading the current global posture of America, whether it's to do with its business prospects in China, or it is to do with any military miscalculation that may have happened when it comes to Iran? But of course, it stretches across the Ukraine, it stretches across the Middle East, and now managing any kind of military tensions with China. How is China reading America's current global posture?
The Chinese have suggested that the United States is a declining power. Even though this year, 2026, IMF had estimated that the US GDP would be about $32 trillion, while the Chinese GDP will be about $20 trillion. That's about 50% of the American GDP. So this decline in United States has been trumpeted for over a long period of time by the Chinese leadership. In the 19th Communist Party Congress, they even mentioned that the Chinese are advancing towards the center stage, basically meaning hegemonic positions. Of course, the reality is different. We saw several of the Belt and Road Initiative projects in Iran have been bombed by Israel. We also saw in the rest of the other parts of the world, the BRI has taken some beating because of the dead diplomacy or on other counts. So there is a problem with the Chinese position that the United States is a declining power. Singaporean senior minister once mentioned, mentor minister Lee Kuan Yew mentioned that China is making a mistake if they think the United States is a declining power. So that's one assessment from the Chinese. Yes. The second assessment is that they want to also see China rise further and apply ancient Chinese Sun Tzu concept of winning without fighting. And we saw that the Chinese have supported the Iranian conflict by providing the Peto 3 satellite imageries of the positions of the United States and Israeli military assets. And also they have provided radar, the material to prepare the solid propellant. Yes. For the missile systems, ballistic missile systems. So they did what they could in Iran, but they also faced problem in terms of when Iran fired the UAE, Abu Dhabi, and Qatar.
Yes, Professor.
There was the problem of the GCC countries having opposition to China in the sense of these assets being bombed. So the second position is that they wish to see US decline by willy-nilly by supporting many countries.
So that's the Chinese position. But what this summit really shows is that the Americans and the Chinese cannot keep business and geopolitics separate. They cannot do that anymore. Trade may ease tensions for a while, but the bigger fight is now about technology, influence and power. And with Iran heating up and Taiwan on edge, at least in rhetoric, the real question is, can strong economic ties still stop things from spiraling into something far more serious? And perhaps we are in agreement that that's the way to go. Joseph Chalil, Shrikant Kondapalli, appreciate you joining us this evening. Many thanks for your insights. Great having you both with us on The Big Question. And then we quickly turn our attention to the BRICS summit that's taking place in Delhi. So this is the big one. Yes, this is the bloc that has been created for the global south to kind of boost trade, to ensure that the kind of hegemony that the West enjoyed for a very long time, now there is a pushback from the global south, and India turns out to be the voice of the global south as well. But now there are lots of tensions going on around the world. We were just talking about the US and China. There is the entire tariffs issue. There is the entire trade, which is coming under a shadow because of the Hormuz crisis. All of that is on the table, and there are sides that are being taken within the BRICS summit between the member states. And that's a bloc that is growing. So how do you manage all of that? Can India, as the voice of the global south, keep the bloc together? That's the question. Can unity be ensured? We have a panel to take this on as well. Let me bring up our panelists who are joining us on the show. We have Ambassador Dr. Deepak Vora with us, Special Advisor in Africa. And Pramit Pal Chaudhary is also with us, South Asia Practice Head for the Eurasia Group. Great to have you with us. Welcome, gentlemen. Ambassador Vora, let me begin with you, because now BRICS was meant to be an economic bloc, like I was saying, but today it's dealing with war. There are sanctions, there are geopolitical divisions. So has the bloc already drifted too far from that original purpose, you think?
Well, thank you very much. Always a pleasure to be with you. You can say happy birthday. I've turned 75 today.
Happy birthday.
Thank you. You have, thank you. You have Mr. Pramit Pal Chaudhary. You don't need anybody else. He's brilliant. Now, as far as this Ito Wali Sanstha, not stones, what's it called? BRICS.
BRICS.
Sorry, I thought it was stones. So these guys are... It was formed essentially as non-Western, not necessarily anti-Western. Then it has expanded. You know, we have all these figures. ChatGPT would tell you 40% of the global population, 40% of the global economy, that trade between them was 5 trillion, etc., etc. What I see happening, today we have countries like Egypt, Ethiopia, Iran, Saudi Arabia, UAE, and Indonesia that have joined. And we know what's going on between Iran and UAE. We know what's going on between Iran and Saudi Arabia. Now, BRICS wasn't intended for this. BRICS was meant to be a trade organization to facilitate non-Western, not anti-Western. At Kazan 2 years ago, there was much talk of some kind of BRICS currency that would replace the mighty US dollar. And Donald Trump said, I'll hang you guys if you do it. And then everybody ran away from that idea. My own feeling is that it's grown too large, sir. And again, I'm not being skeptical, because I've been familiar with this organization. I've participated in some of their meetings. There's been a lot of talk. At Brazil also, there was a huge document that was published. They talked of governance, they talked of climate change, they talked of trade, they talked of free and open seas, etc. But there are tensions between members. You know, China, India is well known. Brazil doesn't like, many people doesn't like the United States. So whatever they were trying to do was abuse the United States. This time, what's going to happen? Will there be a document that criticizes America and by extension the Gulf states? I don't know. I don't know how we're going to walk that tightrope. I don't see any future for this. It's there. It's a useful organization. The most prominent, the most successful multi-country organization in our century has been the European Union. Started off as something else.
So you're saying that this is nowhere close to it? You're
not at all. Not at all. And anybody who says that
Mr. Chaudhary, would you contest that Iran now openly calling on BRICS to unite against what it calls American coercion? Does that risk turning BRICS into an anti-West political bloc? Can that happen? Is that even a likelihood, rather than it being that economic platform it was created as?
Well, that's being a call for it to be anti-Western is not new. China and Russia both have been trying to convert it into an anti-Western organization for several years now. Not only did they propose a BRICS currency with the idea to support de-dollarization, they also supported the creation of of a different payment system, a digital payment system that would basically get around the SWIFT structure. And it was important to realize that in both cases, it was India and Brazil, of the founding members, who took up cudgels against this and saying, we are not an anti-Western organization. We are at best effectively a non-aligned organization in the sense that we don't want to be part of any geopolitical alignment in one way or the other. So therefore, that BRICS should now also be asking, that Iran should ask that India or the BRICS members should take up a statement against America is not a surprise that Iran has been looking at that. But you have UAE, you have Saudi Arabia as members. Plus India, I don't think it would be, or Brazil would be very enthusiastic at going down that rabbit hole, given that there are many other conflicts that they would end up having to comment on. So I don't expect the BRICS to do anything very much, but the game in diplomacy, as Ambassador Vora will know, is to find some kind of language that each side can interpret in a different way and sell back to their public as saying an accomplishment. But keep in mind, this is the foreign ministers meeting. It is not the summit.
Yes.
The summit will happen in September.
True.
So the foreign ministers meeting's job is not to come up with statements. If they do, fine, but it's not really important for them.
Absolutely. And talking about foreign ministers, our own Ambassador Vora has pushed back strongly against sanctions and unilateral coercion. He's saying dialogue must prevail. So is India, in a sense, trying to position itself as a bridge between the West and the global South? Do you think India can do that?
You know, many people have talked about this. There's been talk of India being Vishwaguru, etc., etc. We've never said we are leaders of the global South. It's the global South fellows who keep telling us that you take the lead. And global South, whatever that means, I presume that means 150 developing countries. But they're also, China claims to be one of those fellows. So do some other countries. Would they like to be led by India? I have no idea. What India can do, and there'll be probably some kind of anodyne document coming out of this meeting, will be that there should be world peace, there should be good geopolitics, good geoeconomics. We shouldn't fight with each other. We should respect sovereignty, territorial integrity, and the things we have been saying. And that we are going to say that we do not want any form of economic coercion, etc. And so, although I must tell you that Iran has shown that even without being a superpower, you can exercise tremendous economic coercion. They have shaken the economy of the whole world. I think there's some kind of thing that countries that have specific resources or specific possibilities should not hurt the whole world. That also may be put in. People will interpret that as a snub to Iran, whereas the Iranian will say, you see, America has all the power, and this document says America should not hurt the rest of the world. So as Mr. Chaudhary said, we are going to find some language that everybody is comfortable with, completely meaningless, but we'll find it.
Mr. Chaudhary, what do you say to that? Because BRICS members, they have very different relationships, whether it's with Washington, with Beijing, with Moscow. So can India genuinely build any kind of consensus over here, or is the fragmentation right now too deep, according to you?
See, right now, because the war is still on, the conflict is not in resolution. So in effect, the three members of the BRICS who are directly involved in the conflict are on three different pages. Because not only do you have Iran, even the UAE and Saudi Arabia are not looking eye to eye on the conflict or even how to handle Iran. So you cannot expect even a common position among the Gulf countries, especially at a time when Saudi Arabia and UAE have actually begun firing back at Iran, complaining that, if the battle is with Israel, why are we getting hit all the time? And that doesn't even bring in Egypt, which is kind of sort of halfway between UAE and Saudi Arabia on this, but also wants to maintain its relationship with Israel. And the fact that other countries like Ethiopia and stuff have their own positions, especially given they're very tightly aligned to the UAE, but hostile to Saudi Arabia. So you have a very fractured BRICS within this. So the game in the foreign ministers meeting is, well, first find a bunch of things that everybody can agree on, climate change, resilience, and so on. That's easy. Then say that, look, these are the areas we differ on, but the summit is in September. And with any luck, by September, this conflict will be over, at which point then we can do something a little bit more progressive, particularly on the Straits of Hormuz or on the move on freedom of navigation, something that everybody can agree on. And I think that's where we're going to be looking at. So in the foreign ministers meeting, it'll be more about get a bunch of places we can agree on, which have nothing to do with the conflict. Find the areas, the bracketed areas where we are clearly in difference. That everybody gets some fuzzy language. Everybody can go home and declare victory. But then really focus on what you're going to do in September.
Yes.
And trying to bring everybody here.
So indeed, we'll be watching out for what happens in September at the summit. But right now, of course, with all these tensions going around, what they're able to achieve is also on our radar. BRICS can no longer sidestep the contradictions within it, like Mr. Chaudhary is saying. This is a fractured BRICS. The longer the Iran conflict casts its shadow, the sharper those divisions become, whether on sanctions or energy or alignment with the West. Now, the bloc is getting bigger, but the balancing act is getting harder. And that's really India's challenge tonight, to keep the Global South conversation alive, to keep dialogue at the center without letting BRICS getting pulled apart by the very conflicts that it's trying to respond to. My thanks to Ambassador Deepak Vora. Happy birthday to you, sir. And Pramitpal Chaudhary, thank you indeed for joining us this evening. It's always a pleasure talking to you. So yes, viewers, we have that entire balancing act that's happening. You have trade, you have geopolitics, and one is taking away from the other, whether it's US and China, whether it's at the BRICS summit. But at the heart of it, world leaders will have to work on the balancing act, and that's where the focus is going to be. I'm Vikram Oza on The Big Question. Thank you for joining us.
You're a Malad boy. You started by trying to do something with sweets, pivoted to chaat, then pivoted to vada pav, then you pivoted to vegetarian burgers.
When we started the Mithai brand, again, it was a little too ahead of its time. Chaat never happened. We just called, Jumbo King was called the chaat factory for some reason. I love the name. I started with one store of 50 square feet. We are fully vegetarian, and my first reaction when we did vegetarian burgers, when we pivoted, they said burgers vegetarian kab se honge, right? A burger is basically...
It's like veg biryani.
Veg biryani.
Why is Jumbo King not only about vada pavs anymore?
Vada pav is a Mumbai problem. Within Mumbai, this was like the poor man's food, or the my struggle ke days ka sathi. There is a problem in the name vada pav. The moment you call it vada pav, you can't charge more than 20 rupees. People will say that isme sona chandi thodi dala hai. Why should I pay more than this?
How many people told you कि MBA करके आप vada pav बेच रहे हो?
My friends used to joke around, tell us the truth. You've been disowned by the family. You're not telling us that. We have a family business, and I told my dad I don't want to join the family business. When Jumbo King started, it was seed capital of only 2 lakh rupees, which I borrowed from my dad. I said I don't need money because I had burnt about 55 lakhs in the mithai business.
Excellence measured by those who built it. Presenting
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300 300 300.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a snapshot of everything that has happened in today's trading session. Let's take a look at just that and start with taking a look at the markets. First things first. And the Dalal Street, in fact, was in recovery mode. You do have the benchmarks that ended the day in green. Whether you talk about Nifty 50 that closed near 23,700, while the Sensex also ended about 800 odd points higher, about 1% higher as well. When you talk about broader markets, they in fact underperformed the benchmarks just a tad bit, but also managed to still close in the green as well. Let's also talk about the sectoral picture that was sharply tilted in the favor of green as well. Pharma and metal stocks led the gains, adding strength to the rally, while IT remained the lone laggard as well, dragging its feet against an otherwise green screen. Let's also talk about shares of Keynes Tech that slipped over 18%, 20% at close in fact, after the company posted a mixed set of numbers in the March quarter and missed the full year guidance as well, while revenue also grew strongly. When you talk about margins, they also came under pressure. Profits fell sharply, impacted by higher costs and geopolitical disruptions. And the company says that FY26 is a year of consolidation alongside the top management restructuring to drive the next phase of growth as well. The company is also adding that near-term volatility will not define its long-term outlook at all, with EMS cash flows seen turning positive in FY27. Moving on then, let's talk about Bharti Airtel that posted a steady set of numbers in the March quarter. 5.5% uptick is what you saw coming in for the stock as well, and modest revenue and EBITDA growth is something that you're looking at for the earnings fine print, and add to that a double-digit rise when it comes to profits. Margins, however, edge a little bit lower as the core India mobile business remains muted on softer ARPU as well as fewer billing days in the quarter. Now, when you talk about the broadband and enterprise, they continue to deliver strong traction as well. While DTH remains a drag on the performance, the company is also seeing rising data usage as well as lower net debt, even as Reliance Jio outperforms Airtel for the second straight quarter. Moving on then, let's talk about Sunil Bharti Mittal saying that the group is preparing for a generational transition with plans to hand over leadership to the next generation over the next decade. The Bharti Enterprises founder also hints at possible share buybacks over the coming years as well, signaling that confidence really in the group's cash position. Let's move on and talk about Hindustan Aeronautics. In terms of the profit, you saw a rise coming in despite softer operating numbers in the fourth quarter. Revenue edged up just a tad bit. EBITDA and margins also came under pressure compared with last year. So mixed set is what you're looking at largely. And the stock, of course, was not doing all that much. The lower margin print, when you talk about that as well, it's reflecting cost pressures even as execution remains stable. Overall, the quarter signals resilience in profits with limited traction at the operating level. Moving on then, let's talk about MTAR Tech that hit a record high after securing a 2,200 crore order from a global customer, boosting visibility on future growth. When you talk about the stock as well, about a 12% uptick is what you saw coming in. The order is almost as big as the company's existing order book. So that should tell you why, because you do have this really reinforcing the confidence when it comes to execution, and that's across clean energy, nuclear and defense businesses. Now, the strong March quarter results also support sentiment a little bit, pushing the stock sharply higher, just as you see on your screens as well with that 12% uptick. Moving on then, let's talk about India banning sugar exports till September 2026 as the government moves to cool local prices and safeguard domestic supply. The ban covers raw, white and refined sugar, marking a shift really from restricted exports to complete prohibition. However, shipments to the US and the European Union under existing quotas remain exempt, and the impact on sugar companies is expected to be limited, in fact, as most players are currently focused on the domestic market. Moving on then, let's talk about Balaji Amines that surged almost 20% after a strong March quarter performance. Even at close, it managed to, hold on to those gains as well. And when you talk about the earnings fine print, that will tell you why the stock was really gaining in trade, because it was led by better pricing, higher utilization as well, and revenue growth is also coming from improved realizations rather than volumes, as demand remains stable but not aggressive as well. Now, a richer mix of specialty chemicals is really supporting margin expansion, signaling that clear shift away from commodity products. With multiple projects lined up for FY27, the company also reflects early signs of a recovery in the chemical cycle. Let's also move on and talk about Bajaj projects that was in focus and seen securing two major orders from Power Grid Corporation, each valued between 200 to 300 crore rupees. The projects include construction of a 765 kVs substation in Maharashtra's Pune and a 400 kV transmission line from Bellary to Devangere. Now, both are going to be executed within 21 months, and the management is saying that the projects will help ease transmission constraints in the Pune region. and really strengthen Maharashtra's grid as well. With these wins, you do have this particular company that is now backed 3 orders this fiscal. And this also includes a 400 crore plus order. That was an international order that you were looking at for this particular company. Let's also move on and talk about HCL Tech that's reported to be in talks to invest in Sarvam AI as the Indian AI startup looks to raise between $300 to $350 million at a valuation of around $1.5 billion. Now, media reports are suggesting that Nvidia and Excel are also part of the discussions, and Sarvam's valuation would mark more than a 7 times jump in just 2 years after its $41 million series. And this is a round that was back in 2003. But when you talk about the company, it's built large language models trained from scratch in India and across multiple Indian languages. HCL Tech has not commented yet on the development, but yes, that's what the reports are suggesting. Let's also move on and talk about PNC Infratech that has emerged as the L1 bidder for a 572 crore construction project floated by the Uttar Pradesh State Bridge Corporation. Now, the stock wasn't doing all that much, but when you talk about this particular project, it really adds to the company's order pipeline in the state's infrastructure space as well. While the contract is also subject to final award, you do have the L1 status positions PNC Infratech strongly for execution as well. And the development, of course, highlights continued momentum in public infrastructure spending and bidding activity in the state. Let's also talk about Vabag that has signed an agreement with Peak Sustainability Ventures to develop its first bio-CNG plant in Uttar Pradesh as well. And the move marks Vabag's entry into the bioenergy space, aligning with the push for cleaner fuels and circular waste to energy solutions. Moving on to talk about Lupin then, that has received US FDA's nod for an injection single-dose vial as well, used in the treatment of intractable ulcers. And the approval adds another injectable to the company's US portfolio, with the product estimated to clock annual sales of somewhere close to $8.7 million in the American market. And the stock was doing good for itself, about 1.9% uptick coming in on the back of this news. Let's also move on and talk about EasyTip planners as well, and the board has in fact cleared a 500 crore fundraise proposal as the company looks to strengthen its balance sheet, and the funds are going to be raised through a rights issue of equity shares, offering existing shareholders an opportunity to participate. The company in fact is saying that the record date for the rights issue is going to be finalized and announced at a later stage, with the capital raise aimed at supporting future growth plans. Moving on then, let's get you some business news. Government-backed non-banking financial companies are likely to seek exemption from the Reserve Bank of India's upper layer classification due to exposure norms. The move comes as several public sector-backed NBFCs face challenges in meeting the strict lending exposure limits applicable to upper layer NBFCs. In fact, industry sources are saying that the companies plan to request the RBI for relaxation, citing that their government ownership and role in supporting key sectors is something that should be looked at here. The upper layer framework imposes tighter regulations on the largest and most interconnected NBFCs. Moving on then, let's talk about the government considering allowing OMCs to borrow overseas in foreign currency to ease pressure on the rupee and the domestic forex market as well. And the move in fact aims to help OMCs manage their high working capital needs for crude oil imports amid elevated global prices that you've seen of late. By borrowing abroad, OMCs can reduce dependence on domestic banks and really ease forex demand in the local market. And when you talk about this particular proposal, it's still under discussion, and if approved, it could provide significant relief to public sector oil companies facing rising import bills. And the SEBI has proposed to simplify the derivatives rulebook and reduce compliance requirements for exchanges. The move, in fact, aims to make the regulatory framework more efficient while also maintaining market integrity at the same time. Now, when you talk about the key changes, that list really includes easing certain reporting obligations and streamlining processes for exchanges operating in the derivatives segment. Now, the proposals are expected to lower operational burden on market infra institutions without compromising investor protection. SEBI, in fact, has invited public comments on the suggestion as part of the consultation process. Moving on, then, the Supreme Court today provided significant interim relief to Rani Kapoor in the ongoing Kapoor family inheritance dispute. Now, the top court has restrained RIPL from proceeding with agenda items relating to the appointment of independent directors and the change in authorized bank signatories. The court, in fact, observed that such steps could directly impact the court-appointed mediation process and further aggravate an already bitter dispute within the promoter family. Our IPL's board meeting is scheduled for May 18th. Moving on, the government is considering reducing taxes on bond investments by foreign investors to stem FII outflows as well, and amid continued selling pressure by foreign portfolio investors, authorities are looking at measures to make Indian debt more attractive. The proposal includes lowering withholding tax or providing other incentives for foreign investors in government and corporate bonds. This comes as India aims to deepen the bond market and really attract stable foreign capital. On to macros then, India's wholesale inflation has seen a massive spike in the month of April, coming in at 8.3, the highest WPI reading in 42 months as well. So what's worrying is the sharp jump across almost every category. Fuel and power inflation surged to nearly 25% from just 1% earlier last month, showing the impact of rising energy costs. Primary articles inflation like vegetables, minerals, and crude materials also shot up to over 9%. Manufacturing inflation, that's the one that's moved higher as well, indicating that companies are facing increased input costs. Moving on then, let's talk about cryptos. Bitcoin has slipped below the $80,000 mark as markets price in higher for longer US interest rates. Persistent inflation risks is something that you're looking at that's linked to the Iran war and also keeping pressure on digital assets, the likes of cryptocurrency. Caution is building ahead of a key US Senate hearing on the Clarity Act as well. And that's a landmark crypto market structure bill that you're looking at here. Debate over restrictions on stablecoin rewards has also triggered industry pushback, and lawmakers warn that any delay, in fact, could push comprehensive regulation out until 2030. Moving on then, let's talk about India requesting the United States to extend the sanctions waiver that allows imports of Russian oil. The request, in fact, is coming in as the Iran war continues to disrupt global energy supplies. The waiver is critical when it comes to the country, which has significantly increased purchases of discounted Russian crude to meet its energy needs at a crucial juncture. Now, officials are saying that the extension would help maintain energy security, but also keep fuel prices stable, and the US is yet to respond formally, but the issue is being actively discussed at diplomatic levels. Moving on then, let's talk about Uber that is set to launch 2 new technology centers in India as part of its global expansion strategy. The CEO made the announcement during a town hall meeting in Bengaluru, and the new centers will focus on engineering, product development and innovation to support Uber's growing operations in the region as well. And this is a move that really underscores India's importance as a key talent hub for the company. The development is expected to create significant tech jobs as well as strengthen the company's presence when it comes to the world's fastest growing digital market. Moving on to WhatsApp, then, that has introduced a new incognito chat feature with Meta AI, allowing users to have completely private conversations with the platform's AI assistant. The feature is designed for users who want to ask questions on sensitive topics like health, finances, or personal matters without leaving any record. Built on Meta's private processing technology, the incognito mode ensures that chats are not saved and disappear by default once the session ends. In fact, WhatsApp is saying that conversations are processed in a secure environment inaccessible to even the company. And moving on to Oracle, then, that has withdrawn placement offers made to students from IITs and NITs as part of its global layoffs and cost-cutting measures. The move, in fact, has affected several final-year engineering students who had received job offers earlier during campus recruitment drives. The decision is coming in amid Oracle's broader workforce reduction exercise being carried out worldwide. Now, students in campus placement cells have expressed disappointment over the sudden withdrawals. And on to South Korea's stock market that is showing clear signs of euphoria after a 200% surge in just the past year. A rally that has outpaced every major market globally. In fact, when you take a closer look, the frenzy has been driven largely by AI-linked chip makers, with retail investors borrowing record sums to increase exposure as well, and trading volumes are at an all-time high. You're looking at sharp daily swings to the tune of about 5% or more, and that have become much more frequent now making the Kospi the most volatile major index worldwide. The report is also in fact flagging a rising FOMO culture and including a spike in stock accounts open for minors. Moving on then, let's talk about the Congress naming V.D. Satheesan as the Chief Minister of Kerala, ending 10 days of political suspense after the assembly election results, and Satheesan, a senior Congress leader and current leader of opposition in the state assembly, has been chosen to lead the party's government in the state. The decision is bringing clarity to the Congress-led alliance's plan to form the next government, and the development, of course, is coming in after intense deliberations within the party and its allies following their victory in the recent polls. And PM Modi met Iranian Foreign Minister Abbas Araghchi on the sidelines of the BRICS meeting, among other diplomats. The engagements took place amid heightened tensions in Middle East, and the meetings are seen as part of India's diplomatic outreach to key players in the region. Now, when you talk about the discussions, they're believed to have focused on the ongoing conflict, energy security, as well as multilateral cooperation. An External Affairs Minister S. Jaishankar has called for stronger cooperation within BRICS, saying that the grouping must play a bigger role as the world becomes increasingly fragmented and uncertain. Speaking at the BRICS Foreign Ministers meeting, Jaishankar in fact said that the global landscape is witnessing geopolitical tensions, economic uncertainty, and supply chain disruptions, creating pressures on developing economies. He's also stressed that BRICS must act as a constructive and stabilizing force, especially for emerging markets. Moving on then, Maharashtra Chief Minister Devendra Fadnavis surprised many by ditching his official convoy and riding a bike to the Vidhan Bhavan amid PM Modi's austerity push. The CM was seen arriving on a motorcycle, highlighting a simple and approachable style of functioning. This move has drawn attention even on social media and been appreciated by netizens for its relatability. And at least 104 people have unfortunately been killed in heavy rains and thunderstorms across several districts in Uttar Pradesh. The deaths were reported due to lightning strikes, house collapses, and other rain-related incidents. The state government has announced compensation for the families of the deceased. Rescue and relief operations are currently underway in the affected areas. The IMD, in fact, had earlier issued warnings for thunderstorms and lightning in parts of the state as well. Moving on, then, the Central Bureau of Investigation has arrested 5 people in connection with the NEET UG 2026 paper leak case. The arrests were made during a crackdown across multiple states, and the CBI, in fact, is probing the alleged irregularities and leakage of the medical entrance exam question paper. This is part of a wider investigation, mind you, into the scandal that has raised serious concerns about the integrity of the examination process. The agency is expected to make more arrests as the probe continues. And on to some international news, then the Strait of Hormuz emerged as a key focus area during the high-stakes Trump-Xi bilateral meeting in Beijing as well, with the White House also saying that both leaders agreed that the critical global energy route must remain open to ensure the free flow of energy amid escalating tensions in the Middle East. Now, the meeting also signals a possible thaw in ties between the world's 2 largest economies, and Trump is saying that US-China relations would be better than ever now and called for totally reciprocal trade ties. You do have his Chinese counterpart who's striking a little bit of a conciliatory tone as well, and saying that China and the United States have more common interests than differences.
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring Excellence. Coming soon.
You're a Malad boy. You started by trying to
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Joining us, Muthukumar Narayan Swamy, Managing Director of the company, is now joining in. Mr. Narayan Swamy, very good afternoon to you. Thanks so much for joining in. In terms of this is of course your first full quarter as the Managing Director, and it's a tough one to handle most certainly. So just some clarifications to start us off. Firstly, on what was promised essentially by your predecessors in that sense for the guidance for this year for FY26, and of 4,100 crores, you've done 3,600 crores. Largely, any particular delay in recognizing certain orders, has that been one of the reasons for not meeting the guidance, and is that penciled in for the next year as of now?
Thank you very much for taking the.
I think from what Puneet is saying as well, if we can just patch that audio glitch that's coming in right now. It's a severe guidance miss, Puneet, that we're talking about in terms of the fourth quarter, where they failed their revenue targets. The profitability has seen a drop as well this time around. There is margin compression. And if you heard the conference call as well, the management has come out and given a justification saying that, it's the geopolitical disruptions for logistic blockages and weak execution during the quarter which has led to all of this miss. The question is, from here on, if they're even giving a guidance, Puneet, when it comes to FY27 as a year, will they be able to deliver? Because that's where they have failed.
Well, most certainly, and I think those are some of the key aspects that we want to watch out for and also get some perspective on, because there was a lot of expectations going into this quarter as well. Now you had expected that 1,700 crores, while a very tall target, you would get close to around that 1,500-1,600 crore mark. That was the estimate, but at 1284 there was that miss, and hence the pressure on the stock straight away as we started trading today.
And I think a similar thing happened back then when you had their CEO resign, when the management was very confident that things will be in place. We had seen a similar crash happen as well. But from there on, I don't think so things have improved to any possible way. Now, one, will they be able to take a close look at what's happening in terms of the execution? Two, in terms of the kind of subsidy that they're going to get from the government, I think it's a catch-22 situation for them right now, because only in terms of a certain deliverables is when the government gives them a subsidy, right? Till the time they are not able to execute, they will not get the subsidy. And that is what is creating that mismatch in terms of cash flow as well. So that deteriorating working capital and that crunch when it comes to the subsidies not coming in, which is putting pressure on the capex, is a key concern, because how are they going to resolve for that?
Yeah.
That is the question. And apart from that, I mean, there are corporate governance and accounting red flags also that were raised in the past over here. So there is capitalization gap that is coming in. Puneet, I think we do have the management back with us.
Yes, Mr. Narayan Swamy, I hope I'm audible to you as well. And just, let me just repeat the question as well, because we saw that the target of 4,100 crores was just revised in the previous quarter. If you can give us some perspective of, there was some delay in certain recognition with a particular customer or an order, and is that revenue delayed or revenue lost?
Okay. Thank you for taking me in the call. Can you hear me well?
Yes, sir. You're audible. Please go ahead.
Two things. One is the missing the top line. For a full year, I think we have grown at 33% and it has grown at 39%. However, during the last quarter, against our guidance, we have dropped it mainly because of a delayed order, not a denied order. One of the two bits that we have done, and we were supposed to get the product, we were ready to execute the product, and the last minute, what we expected, the order could not come. That will be taken up in the first and second quarter of this year. So it is only a delayed order and not a denied order. And that is one of the reasons why we have lost the revenue target in the year.
Sorry, Mr. Muthuswamy, just a clarification. Sorry, Narayanaswamy, just a clarification. So is it that order basically that you are supposed to deliver? So it's the product is ready with you. It's just that you have to deliver it to the client and recognize the revenue. That is the one key aspect that has not happened. Or is it that you didn't receive the order and hence that was already penciled in, which couldn't be turned around?
The proto sample submitted, the product approval is given. The first lot of schedules should have come and produced it, but the order was not released on time because it's a government order on to business. So it will be coming in the first week of April, first week of May, and we are likely to execute this. We are still waiting for this. The materials is available. The product is already approved and it is demonstrated. And that's the reason why we lost in that the last quarter, which is against our guidance that we are given.
You're a Malad boy. You started by trying to do something with sweets, pivoted to chaat, then pivoted to vada pav, then you pivoted to vegetarian burgers.
When we started the Mithai brand, again it was a little too ahead of its time. Chaat never happened. We just called, Jumbo King was called the chaat factory for some reason. I loved the name. I started with one store of 50 square feet. We are fully vegetarian, and my first reaction when we did vegetarian burgers, when we pivoted, they said burgers vegetarian kab se hoenge, right? A burger is basically...
It's like veg biryani.
Veg biryani.
Why is Jumbo King not only about vada pavs anymore?
Vada pav is a Mumbai product. Within Mumbai, this was like the poor man's food or the my struggle ke days ka sathi. There is a problem in the name vada pav. The moment you call it vada pav, you can't charge more than 20 rupees. People will say that isme sona chandi thodi dala hai. Why should I pay more than this?
How many people told you कि MBA करके आप वड़ा पाव बेच रहे हो?
My friends used to joke around, tell us the truth. You've been disowned by the family. You're not telling us that. We have a family business. And I told my dad I don't want to join the family business. When Jumbo King started, it was seed capital of only 2 lakh rupees, which I borrowed from my dad. I said I don't need money because I had burnt about 55 lakhs in the mithai business.
Ouch.
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand.
US President Donald Trump invites Chinese President Xi Jinping to the White House this September 24th, calling the talks great even as there was a warning over Taiwan. Meanwhile, Xi says the great rejuvenation of the Chinese nation and Make America Great Again can go hand in hand. PM Narendra Modi meets foreign ministers on the sidelines of BRICS summit. EAM Jaishankar flags energy, food and finance strains, urges BRICS to stabilize markets, deliver practical diversified solutions for emerging economies. India condemns the attack on Indian-flagged ship off Oman coast, calling the attack unacceptable. Ministry of External Affairs reiterates that targeting commercial shipping should be avoided. Power Ministry urges PSUs to allow work from home option 1 day a week to cut fuel costs. Up to 20% staff likely to be permitted to work from home. Move comes after PM's austerity appeal. Petroleum dealers flag push of Power Petrol to HPCL, allege pressure to upsell premium fuel, seek urgent intervention as margins strain. D Street ends near intraday high as Trump-Xi agree on opening the Strait of Hormuz. Nifty wraps above 23,600 with pharma stocks leading the rally. Rupee sinks to record closing low at 95.77 against dollar after a considerable recovery around optimism that government may mull cutting tax on foreign investment in bonds, while wholesale inflation surges 8.3% in the month of April, hitting 42-month high. Congress finally picks V.D. Satheesan as Kerala's CM over K.C. Venugopal to head the Kerala government. He is expected to be sworn in on May 18th. Hello and welcome viewers, this is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you the latest updates on the markets, national as well as international news. Let's begin with focusing on the high-profile Trump-Xi meeting. The Strait of Hormuz emerged as a key focus area during the high-stakes Trump-Xi bilateral meeting in Beijing, with the White House saying both leaders agreed that the critical global energy route must remain open to ensure the free flow of energy amid escalating tensions in West Asia. The meeting between US President Donald Trump and Chinese President Xi Jinping also signaled a possible thaw in ties between the world's two largest economies. In fact, US President Donald Trump emphasized that the 250 years old bond of commerce and respect between the United States and China remains the foundation for a prosperous future. To further solidify these ties, he extended a formal invitation to President Xi Jinping and Madam Peng to visit the White House this September 24th. Xi Jinping, meanwhile, struck a conciliatory tone, saying China and the United States have more common interests than differences and should be partners, not rivals. Xi also added that a stable bilateral relationship would benefit the entire world. And here's a glimpse of the mood and messaging from both sides during the high-profile Trump-Xi bilateral meeting in Beijing. Listen in.
This bond of commerce and respect that stretches back 250 years is the foundation for a future that benefits both of our nations. The American and Chinese people share much in common. We value hard work. We value courage and achievement. We love our families and we love our countries. Tonight, it is my honor to extend an invitation to you and Madam Peng to visit us at the White House this September 24th, and we look forward to it.
I always believe that our two countries have more common interests than differences. Success in one is an opportunity for the other, and a stable bilateral relationship is good for the world. China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals. We should help each other succeed and prosper together and find the right way for major countries to get along well with each other in the new era.
We should be partners, not rivals, and that's a key takeaway. But the high-profile Trump-Xi meet in China also coincides with BRICS foreign ministers meeting here in India as well. The two-day event that takes place under India's presidency in New Delhi is expected to revolve around the Iran war. PM Modi also met all the delegates this morning, and our country has called for urgent reforms in global institutions and pushing for a ceasefire in Gaza. Gaza. External Affairs Minister S. Jaishankar warned that the world is facing a convergence of challenges, in his words, from conflicts and supply chain disruptions to energy and food security concerns. There's no denying that the Iran war especially has affected energy supplies across the world and disturbed multiple economies. In this regard, Iranian Foreign Minister Abbas Araghchi called on fellow BRICS member states to condemn the US and Israel over what he described their unlawful aggression against Iran. Here's a glimpse of some of those important comments for you. Take a look.
We meet at a time of considerable flux in international relations, ongoing conflicts, economic uncertainties, and challenges in trade and technology and climate are shaping the global landscape. There is a growing expectation, particularly from emerging markets and developing countries. Development issues remain central. Many countries face challenges on energy, food, fertilizer, and health security, as also access to finance. BRICS can help them respond more effectively.
Ready to fight with everything we have in defense of our freedom and our soil, we are equally ready to pursue and defend diplomacy. As I have repeatedly stated, there is no such thing as a military solution to anything related to Iran. We Iranians never bow to any pressure or threat, but we reciprocate the language of respect. As much as our powerful armed forces remain ready to exact devastating retribution on foreign aggressors, my people are peace-loving and do not seek war. We are not aggressor in this sordid situation, but the aggrieved.
So while he's clear about an aggressive retribution, he's also said that Iran and its people do not want a war. While we will give you a lot of updates from the BRICS summit, and while we're actually also leading these consequential conversations, India has also secured a major relief from the European Union for its seafood export industry. The EU has now restored India to its approved list for seafood exports beyond the September 2026 deadline. This is important because India has had earlier been excluded from an October 2024 EU regulation related to animal origin imports. Now, the breakthrough came after India aligned its aquaculture practices with European norms on antimicrobial usage. The development is significant because the European Union is India's third largest seafood export market, and shipments to the region have already seen strong growth, rising 41% in FY26 to about $1.59 billion. And that's why this update is extremely crucial, especially for the seafood export industry of India. India, in the interim, has condemned the attack on an Indian-flagged ship off the coast of Oman, calling the targeting of commercial shipping and civilian mariners unacceptable. In an official statement, the Ministry of External Affairs said all Indian crew members on board are safe and thanked Omani authorities for carrying out the rescue operation. India also reiterated that attacks on commercial vessels and any attempts to impede freedom of navigation and global commerce must be avoided amid rising tensions and growing security concerns in key maritime routes across West Asia. Meanwhile, oil prices edged higher as markets stayed on edge amid the high-stakes Trump-Xi meeting, seen as pivotal for any progress on the Iran conflict. Brent crude is hovering anywhere between $104 to $107 per barrel, while WTI held above $100 per barrel. So you can see that international oil benchmarks are somewhere at the moment extremely volatile. The International Energy Agency, which is also referred to as the IEA, has warned of heightened volatility going forward, and OPEC has trimmed its global demand outlook. Investors, in fact, remain cautious, watching for diplomatic signals that could ease supply concerns and stabilize the energy market trajectory. Meanwhile, petroleum dealers have written to HPCL alleging they are being forced to sell higher-priced power petrol over regular fuel. NDTV Profit has accessed the letter where the consortium claims dealers are under pressure to push premium variants to customers, with regional offices reportedly restricting supply of normal petrol. Dealers warn this could violate the Essential Commodities Act and hurt consumers through higher fuel bills. Calling the practice coercive and unsustainable, the consortium has sought immediate intervention from HPCL, urging a fair supply mechanism and freedom to meet genuine consumer demand without undue pressure. The government's fuel conservation push is now gathering pace across both PSUs and corporate India. The Ministry of Power has advised its PSUs to evaluate work-from-home options for employees, with up to 20% staff potentially allowed to work remotely on any given day if feasible. Meanwhile, the RPG group has also urged employees to minimize travel, use public transport and embrace remote working in line with Prime Minister Narendra Modi's call for austerity and responsible resource use. My colleague Sessa now joins us on the phone line with more details on this story. Sessa, tell us more, please.
Right, so according to an advisory that, we have reviewed, so the Ministry of Power has advised all the CPUs under its ministry to evaluate the, work from home possibility, and they have asked the PSUs to see if the officers or officials may be allowed to work from home for one day in a week. And to ensure this, with respect to 18th May, the ministry had suggested that 20% of all the officials identified may be allowed to work from home on every working day.
Okay, thank you so much for that. So, one day a week work from home has been requested for. But meanwhile, Prime Minister Narendra Modi's appeal to conserve fuel and reduce dependence on imports appears to have reignited the conversation around carpooling in India. Industry players say there has been a noticeable rise in user interest, with startups now pushing for clearer policies and legal recognition for carpooling platforms. While Maharashtra has already formalized a carpooling policy, companies say several states still lack regulatory clarity, with confusion continuing around how carpooling differs from commercial taxi operations. Industry bodies are now calling for stronger policy support, awareness campaigns, and better safety and insurance frameworks to help scale adoption. Here's my colleague Danish Anand with this ground report on how India's carpooling system is responding to the fuel-saving push.
Well, just days after PM Modi appealed to the general public to promote carpooling, we are seeing that the industry is in full action mode right now. And just 4 days after that, we are seeing that the entire carpooling industry has made an initiative, and they're coming under one umbrella called the PVPSA. And to talk more about it, we have been joined by the president and the other members of this association. So many thanks for speaking to NDTV Profit. First of all, sir, please tell us that what is the main aim of this association, and if we look at the timing of the entire thing, what would you like to say on that?
Well, the aim of this association, Private Vehicle Pooling and Sharing Association, is to have a common platform for the industry to interact with the government at the central level and the state level, because this is something which is having the need of the hour, as also asked by the Honorable Prime Minister on 10th of May, but is having some kind of legal vacuum, some kind of ambiguity in terms of implementation. आज की डेट में अभी हमारे पास Zoom car, BlaBla car, Quick Ride, S Ride, and Green car. These are the founding members, I would say. और members धीरे धीरे join करेंगे.
Local authorities are still not aware about the differences between carpooling and taxi aggregation, or just a simple hire for reward taxi service. That awareness creation needs to be led by the government, so that people who are carpooling are not harassed or stopped on the roads. So that's a very critical aspect. There are 1 or 2 states and union territories where there are existing regulations which either make it very difficult for people to carpool or offer their personal vehicle for sharing purposes.
Maharashtra government has formalized a policy for carpooling, which is a welcome step, and this effort of forming this carpooling association, through which we can talk to central government and state government, has been going for last 3-4 months, and glad that our honorable minister has made a statement which has coincided with our launch of this association. So it is very positive news. We want to talk to all the Maharashtra has taken the step to formalize the carpooling guidelines. We expect we want to speak to all the state government along with central government to have it adopted at each level.
We can see a lot of jump in people registering on app to do carpool, and we can see a good numbers coming up. Yeah. So Green Car is working with corporates as a CSR initiative to make this happen across companies, across states. So it's a great thing which is happening, and there's a need of the day. Like less cars means less traffic, less pollution. It's good for economy, it's good for people, it's good for government. I don't think there is any negative part of it. It's all positive. Yeah.
I think 20 million people have been using the carpooling activity. So carpooling is happening informally and formally. Formally through the digital platforms which are now available, but carpooling traditionally also has been happening where people from same locality, same area, they were going together.
Clearly, viewers, day after day, we have seen the government come up with various measures to save fuel, and that's why it's so important for us to be mindful about our fuel usage. Meanwhile, let's take a look at how the benchmarks, meaning the D Street, performed today. The benchmarks inflated their gains from yesterday's flat close. It was a relatively strong day for the Indian markets, with the Nifty 50 ending firmly in the green and closing above the 23,600 mark. The index gained more than 1.2%, supported by strong moves in heavyweight stocks like Adani Enterprises and Cipla. The broader market, however, underperformed the benchmark indices. Let's get in my colleague Jasmeet for a detailed market roundup of the day. Jasmeet, tell us what stood out.
Well, a good day for markets today. Nifty ends in green, gains about 1.2% and closes above the 23,600 mark. In terms of top gainer, we have stocks like Adani Enterprise and Cipla gaining over 8%. If you look at the broader market, well, benchmark has outperformed the broader market with Nifty small cap 250 and mid cap 150 ending in green as well. Now, if you look at the other key top highlights for today's day, we do note that Nifty mid cap 150 gains about 1%. In terms of top gainer in mid cap 150, we have stocks like NCL and Godrej both gaining in trade. In terms of small cap, it ends on a flattish note but still ends in green. In terms of top gainers in small cap 250, we have stocks like Saregama and Kaplan Point gaining about 16 and 9.5% in today's trade. If we look at other sectorial trends, we do make a note that all sectors end in green barring Nifty IT. Nifty IT sees that consecutive pressure over last 4 days where we see Nifty IT was down about 2% even in today's trade. Now, when you look at the top gainers, we have Nifty Pharma gaining over 2%. In terms of top gainer in Nifty Pharma, we have stocks like Cipla and Zydus both gaining over 5%. While Nifty Pharma, Nifty Oil and Gas gains for the second consecutive day, and Nifty FMCG, Nifty Metals gains for the second consecutive day as well. Lastly, if we look at the key trends, Nifty Auto, Nifty Realty snaps its 4 days of gaining streak and gains in today's trade, while Nifty Bank and Nifty Financial Services snaps their movement in today's trade and again gains in today's trade. So all in all, we do see a good day for markets coming in, but barring the Nifty IT as a factor.
All right, so a good day for the markets, but not so much for the money market. The Indian rupee has hit a fresh record closing low, ending at 95.77 against the US dollar. The currency, in fact, remained under pressure through the session due to continued demand for dollars and concerns around external pressures on the economy. However, the rupee did recover from its worst levels during the day after reports suggested that the government may be considering a cut in taxes on foreign investments in Indian bonds. Let's take a look at India's wholesale inflation that has seen a massive spike in the month of April, coming in at 8.3%. In fact, this is the highest WPI reading, in 42 months. What's worrying is the sharp jump across almost every category. Fuel and power inflation surged to nearly 25%, showing the impact of rising energy costs. Even core inflation climbed to 5%, which is at a 43-month high. Now, higher wholesale inflation does not immediately hit consumers the way retail inflation does, but it does signal rising costs for businesses, and that's why it's important that we keep this number in mind as well. In a big step to boost forex inflows, the government may allow OMCs to borrow more money from overseas markets in foreign currencies. As per sources, overseas borrowing may help lower funding costs for OMCs, especially during a period of volatile crude oil prices. My colleague Shrimi Chaudhary joins us to tell us what all is being currently deliberated. Shrimi.
Yeah, that's right. The government is actively considering a series of measures to boost foreign exchange inflows, something that reflecting in the decision making in past few days following the PM austerity appeal. And to go further, they are deliberating upon measures to improve forex flows and easing pressure on the reserve if the Iran crisis further intensified. And one of the key proposals actually under discussion is to allow oil marketing companies to raise more foreign currency loans directly from the overseas markets. Officials believe that such a move could bring in, additional dollar inflows at a time when crude oil related outflows remain elevated. And this move, if get a, of course, green signal, could also lower the borrowing cost for OMCs, as they are among the biggest buyer of the dollar in the domestic market. Now, another measure that could also being deliberated, upon is tightening of the liberalized remittance scheme. Essentially to curb forex outflows more efficiently. And the exact counter, however, of